Hello and welcome to Moneycontrol's Budget Day coverage. You're watching Traders Checklist and I am Karunya Rao. Now, over the next 1 hour, we give you a holistic view of what are the big cues to watch out for, how the global handover and trends have been panning out, what the macro backdrop is, and of course, most importantly, the stocks and sectors to keep on your watch list on the big day. Let's get going and let's bring on board our first guest for the day. We have with us Mr. Ben Emmons joining us all the way from the USA. He's the MD of Source Capital LLC. So let's take it across to him and talk about the global setup. Ben, hi. Okay, I think the guest is not ready yet. But let's talk about the local and the domestic cues to watch out for. Rajesh Palvia is here with us, and thank you so much, Rajesh, for coming all the way and joining us in our studios today.
Yeah, good morning.
Let's talk about the important cues and levels to watch for the market today, for the benchmark. I know you're waiting for your laptop to come in and so you can do some number crunching for us. But let's talk about the benchmarks to start with.
So, if we look at the overall setup for the market, what has happened prior moving to the budget, we have seen, that market has corrected significantly and almost we have tested level of around 17,400, and we have seen, a smart recovery in especially in last two trading session from those lows. Some short covering action was there in both the indices, and now Nifty is comfortably trading above 17,500. So, if at all we hold this level throughout the day, then possibly some more short covering action we can witness in the market. As of now, 17,750, 17,800 are the key resistance area for today's session. If at all we able to cross the 17,800 level, then possibly we can see some call writers needs to unwind their position. Most of the call writers are writing the call at around 17,800 strikes. So that short covering action can lead furthermore up move in the market, and possibly we can head further higher towards 18,000 level also. On the other hand, if we look at the bank Nifty also, again bank Nifty is almost trading near to 41,000 level, and if at all we crosses those level, then the bank Nifty can also witness some short covering action from here onward, and possibly most of the banking stocks are also showing some short covering action in the previous trading session. So we feel that in till budget unfold, we are going to have a positive opening, and both the indices are likely to show some green tick in the opening, and we can see some up move from the current level also. So at this level, one should remain on the buying side with stop loss of 17,500, 550 is stop loss for Nifty, and for bank Nifty the stop loss is at around 40,200, 42,300 is the stop loss to remain long on the bank Nifty also, and upside target is 41,000, 41,300 for bank Nifty also.
All right, okay. But let's talk about the usual suspects. Typically on budget day, we see a lot of action in fertilizer and chemical stocks. Then you have, select names from the cap goods, manufacturing space, infrastructure companies. In fact, today, because being the first of the month, we also will have a lot of auto wholesale numbers coming by. So any specific pockets of the market, if not stock specific, if you can share with us that you would specifically watch out for in this budget?
So definitely fertilizer was the sector where we were seeing some buying action in the January month also, but because of market was under a significant selling pressure, so some pressure was there in the fertilizer stocks also. But in the previous session we have seen most of the fertilizer stocks have recovered from their recent low. So we are bullish on Chambal fertilizer at current level, and the kind of short covering we have witnessed in the previous session, we believe that this momentum is likely to continue further higher. Even you can look at GNFC, Coromandel International, these all stocks are looking very attractive at the current level. Even on the infrastructure or capital goods space also, we feel that some of the stocks are already trading above their 50-day moving average. So stock like L&T, ABB, Cummins India, these all stocks are positioned very well on the technical setup, and we believe that these stocks can do well in the today's session also. So fertilizer is one theme which clearly showing some sort of positivity, and some expectation is already built up in the prices for fertilizer space. And if at all some positive announcement comes from the in the budget, so we may see a good rally in fertilizer space. So we are bullish on Chambal Fertilizer, Coromandel International and GNFC. These three stocks we are keeping on our radar to go long in the today's session also.
Okay, all right. Well, there you have it. What about Bank Nifty? Any levels there that one should keep an eye on?
So if we talk about Bank Nifty spot level, 40,600, 40,700 is the key level to watch for today's session. If we able to hold and sustain above those level, then possibly one round of short covering we can witness in the Bank Nifty, and 41,300 is the first level to watch for on the higher side. If we able to cross those level, then possibly Bank Nifty can give good short covering move towards 42,000 level also. So Bank Nifty is looking little interesting at the current juncture. Most of the private and PSU bank have shown good short covering action in the previous session. So we are focusing the component of Bank Nifty. HDFC Bank is looking positive. SBI has also shown some recovery in the previous session. So SBI, HDFC and ICICI, these three banks are on our focus, and I hope that if they continues to open in the positive trajectory, so some traction we can see in the opening itself for the Bank Nifty, and possibly 41,300 could be the next target.
All right. Rajesh, stay on with us. We want to touch base with Ravi Krishnan as well. He will be giving us a heads up on what are the big macro figures, what are the numbers to watch, and what is exactly the macro backdrop as well. Ravi, good morning and thanks for joining in. Talk to us about the backdrop that we're working with right now. Of course, nominal GDP, fiscal deficit, these are the big numbers to watch out for as far as the FM speech is concerned. But the budget 2023 comes at a very interesting time. There is a lot that has happened and a lot that has changed in the last 1 year. So what is it that we're working with right now?
Okay, look, I mean, we are expecting, growth to slow down this year. That is given, not only in India, across the world. When we started the year, there was an expectation that, several developed economies were staring at a recession. But now, the probability of the US economy seeing a soft landing has also increased. At the same time, this does not mean that we will see the same growth as last year. There will be a slowdown of growth, and we will likely see the finance minister stick to fiscal consolidation because the glide path, is projecting 4.5% fiscal deficit to GDP ratio by FY26. Exports are unlikely to do well, because of the slowdown in the world economy. So it is a tough macroeconomic situation, but at the same time, as we have been reiterating over the past, few days, and as we see from data from the IMF and the World Bank also, India is one of the bright spots, in the world when it comes to economic growth. It is likely to be the fastest growing large economy in the world. And even if you see the economic survey yesterday, it has, it has painted quite an optimistic picture in terms of growth. It expects growth, real GDP growth to be 6.5%, in FY24, which is not a bad figure at all, because because that quite meets the potential, the potential growth number for the Indian economy also in the medium term.
Okay, all right. And Ravi, if we look at last year's budget, there were a lot of things talked about when it comes to world-class infrastructure, delivering inclusive development, productivity enhancement and investment in sunrise opportunity sectors, energy space, crowding in private investment through enabling policy environment. But, most strategists had projected high growth for the infra and cap goods as well. But a lot of that is yet to be fulfilled and yet to be achieved. So this time around as well, do you see the finance minister sort of draw on from last year's speech and last year's agenda, and perhaps further enhance it or extend it to this year?
Well, if you look at the cues from the survey, what does it tell us? A, it has presented an optimistic picture that growth is going to pick up, and then it has also talked about fiscal consolidation, and third, it is saying that asset monetization for one will be the biggest fiscal stimulus to the economy. So if the finance minister has to stick to fiscal consolidation, what we will actually see is that there will be a slight rejig of expenditure. There will be savings from things like the shift to the new food subsidy regime, for example, because the free food grain scheme was stopped in December, and we could see a shifting of this expenditure to the infrastructure sector. Even if you look at past pre-election budgets, you would have seen a similar trend where there is an increase, in capex allocations towards infrastructure, railways, roads, etc., and a cut in defense. Similarly, you would also see an increase in allocation towards rural spending and welfare measures, especially in education and healthcare. So in that sense, it will be a slight continuation from the previous year because the focus on infrastructure will continue, because it will be a medium-term growth multiplier also.
Ravi, even after 1 year, almost, we're a few hours away from the budget 2023-24. Benchmark Nifty is almost at the same level, and the promise of high growth made in the budget has also been sort of delayed. So talk to us about the key challenges right now that lie ahead in front of the finance minister to address from an economy standpoint and from a market standpoint.
See, from an economy standpoint, the biggest issue is that revenue growth might disappoint in the forthcoming financial year. This year, revenue growth has been pretty good, because the economy reopened fully after the pandemic. There was better tax compliance. The economy has formalized, after all these measures which they have taken over the past few years. Because of all this, there has been a big boost to revenues in financial year FY23. Because of which the government has been able to increase spending on things like subsidies. They have been able to cut excise duty on fuel, etc., and still they are on course to meet the fiscal deficit target for this year. But next year, revenues might disappoint because growth might disappoint. Nominal GDP growth, most economists are projecting at 10.5%. Even if we take an optimistic assessment from the economic survey, what it is saying, we are looking at 11.5%. This year, nominal GDP growth, according to the first advanced estimates, is 15.4%. So that is going to be a big difference. Revenues might not be that great, but at the same time, what are we going to see? There might be some pressure, on spending because the elections are coming up next year. Things will not, especially if things don't go that well, from the growth point of view, there will be some pressure on government on increasing the spending. The other challenges, of course, is that the private capital expenditure cycle is yet to take off. It is at an incipient stage, and so the government will have to continue to push its capital expenditure spending in the hope that it can crowd in private investment. So last year we saw that 7.5 lakh crore was a capex target, and the government seems on course to meet that target. This year we could again expect a much higher number. So in fact at Moneycontrol we had done a poll, and I think around 9 lakh crore is what most economists are predicting.
I was reading a few reports which followed the economic survey from different brokerages, and the key concern is the survey's reliance on growth optimism to deliver this fiscal consolidation and not delivering enough in terms of expenditure consolidation. Do you concur with that view? Because a lot of them seem to be sort of sounding it off.
Yeah, I mean, so that we have to see. So this year we have benefited from growth expansion. So why is the government able to meet the fiscal deficit target of 6.4% for FY23? Is because despite an increase in expenditure, the base has increased, as in the economy has expanded more than what we thought it would. So that is why the fiscal deficit to GDP ratio is on course for 6.4%. So next year, what are they saying? They are saying that if, let us suppose, the fiscal deficit target is 5.9%, because the base of the calculation, the denominator, the nominal GDP is expected to grow this much, the government might not pay that much attention to actually reining in expenditure. I think that concern is a little bit overblown at this point in time. Because even after the budget presentation, we do sometimes see that numbers can change quite dramatically. This year, for example, see what happened to fertilizer subsidies and food subsidies. They ballooned. I think it's a little bit premature at this point in time.
But what is it that is driving the government's optimism on growth? Is it primarily the reliance on private capex to sort of revive?
So see, optimism stems from multiple factors, I think. One is that we have left the pandemic is over. That is the government's belief. And so the economy has recovered fully. And then because of these factors like formalization of the economy, the increasing use of digital, which has led to an improvement in efficiency of several things, they are expecting that the economy will bounce back and it will accelerate from here on. So I think that is the reason for their optimism. It is not completely ungrounded. There is room for this optimism. Of course, downside risks are always there in terms of a global slowdown, which can lead to, which can crimp export demand, tighter monetary policy, not only in India, but, also across the world. So monetary policy acts with a lag, and we are yet to see that lagged effect. So higher interest rates, for example, can still be a dampener in the forthcoming year. But the optimism essentially is based on the fact that pandemic is over. We have seen private consumption, as a percentage of GDP increase to almost what I think almost a decadal high, if I'm not wrong. That's what the economic survey said. And the gains from the digital economy and the formalization of the economy and so on.
Right, and looks like it's going to be capex front and center as far as this budget is concerned. So Ravi, any particular sectors that we should be watching out for?
So I think especially in see if they increase spending, the thrust is on capital expenditure, then obviously the related sectors, infrastructure sectors, construction sectors, those would, I think, would do tend to do particularly well. Of course, we can never really say. And of course, if they increase allocation towards rural spending and welfare measures, etc., we could we could see those kind of consumer discretionary companies, etc., tending to do well.
All right, Ravi, thank you for joining us, but request you to stay on. We might want to get in some more perspective on the macros, but for now, let's focus once again on stocks to watch out for. Rajesh is here to help us understand the technicals of how different stocks and benchmark indices are placed, and I see that you've been closely checking out what's happening in different, on different charts. I see a lot of them open on your screen right now, but I want to talk about the sectors that Ravi was just talking about: consumer discretionary, more stocks that are reliant on rural spending and rural markets. So apart from, of course, the usual agri and FERT suspects. So let's talk about some of these consumer discretionary names and some of these FMCG names as well, the likes of Dabur, the likes of Imami, etc., which have a heavy reliance on rural demand.
Yeah, definitely. So some, we have seen significant corrective action in all these stocks, but especially if you talk about FMCG sector, most of the FMCG stocks are now in consolidation zone, and we believe that the buying action is there on the decline. So the stock like Dabur is looking attractive at this current market price. Almost it's trading near to its 20-day moving average. So if at all it's able to hold 540, 545 zone, then possibly some buying action we can see. Even if we look at the daily setup for the Dabur, it's almost on a verge of giving breakout of its up down sloping trend line level. So if Dabur manages to cross above 570 level, then possibly it may scale up further higher towards 600, 620 level on the higher side also. If we go with the same stock like HUL also, stock is almost trading near to its multiple support area of 2550, 2540, which is important support for the HUL also. And looking at the overall setup, stock is already corrected from its recent high, and looking at overall setup since last 4-5 week, we believe that some buying action is already done in the stock. Once the stock crosses about 2600, 2620 level, then possibly HUL can scale up further higher towards 2700 also. So both the stocks like Dabur and HUL is looking attractive from this FMCG space. So one can look at these both stocks.
Okay, all right. Let's also talk about some cap goods names, the likes of L&T and even the smaller companies, in infrastructure space, the likes of IRB, the Buildcon, PNC, Infratech. How are these smaller players also looking?
So definitely L&T is looking promising across all time frame. Stock is in bullish zone, and though we have seen some corrective action in line with market, stock has corrected since last 2 weeks, but still overall setup for L&T is bullish, and it's almost trading near to its 50-day moving average. So in this kind of volatile market, stock is holding about 50-day moving average, considered to be on the bullish side. And stock is poised for giving breakout on the higher side. Once L&T manages to cross about 2160, 2170 level, then it will resume its uptrend, and then possibly 2252, 2300 could be the possible target on the higher side. If we talk about IRB, yes, IRB is also looking promising, and since last 2 months we are seeing very tight range for the stock, and it's consolidating in a very tight range of 250 to 300. Once stock manages to cross above 300 level, then possibly IRB can scale up further higher towards 340, 360 level on the higher side. So IRB is looking little bit promising from this space also. DBL is very sideways, nothing happening despite of lot of news flow was there in terms of orders and all, but still stock is not reacting to those. So DBL is looking weak as of now. Until stock not crosses about 250 zone, it will remain under pressure only, as the structure is weak on the long term setup also. So we will avoid DBL, but yes, we will go on the long side for L&T as well as for IRB Infra also.
All right, we're getting some comments on our live feed asking why we've started the programming so early. Guys, hello, it's budget day. So please wake up, smell the coffee, have some coffee and get going. In fact, you all can send us your questions and queries also on our live feed. Rajesh is here and he'll be happy to help address your queries. If you have anything that you want to ask about, any stocks that could be active in trade, not just today, but in the coming weeks or months as well. Shifting gears once again, let's talk about railways, because typically a lot of interest comes by closer to the budget about what will be the whole host of announcements for railways sector, railways as a ministry, what will be the agenda or the different initiatives they will be announcing for the year. But railway stocks, they have seen a stupendous rally second half of last year, especially railway engineering companies. I mean, IRCTC, of course, has been a laggard here. It has been languishing quite a bit. But if we look at the likes of RVNL and Railtel and several other companies that have that are in the railways engineering space, any names that stand out right now and despite the run up are showing good promise and potential to sort of break out or see a good meaningful uptick from these levels?
So first stocks comes in mind is that is Titagarh Wagon Limited, because it's a beneficiary for this Vande Bharat railway. So again, Titagarh Wagon Limited is almost given a breakout in previous month, and it's holding its breakout about 200 level. So if it continues to trade about 200, then possibly TWL can move further higher towards 260, 280 zone. So overall structure for TWL is looking very promising on the short to medium term as well as on the long term setup also. So we believe that Titagarh Wagon can continue its upward momentum, and a lot of buying interest was there in the all railway stocks in last couple of months, and most of the positions are also intact in the system. And looking at the overall setup for most of the railway stocks, we believe that these stocks or this sector can continue further upward momentum from here onward also. So TWL is our first pick from this space. Second is RVNL. RVNL is also looking very promising. Stock corrected and taken the support from its 50-day moving average, and almost now stock is showing buying interest since last couple of trading session from lower level. Looking at the setup, we believe that RVNL can move further higher towards 90-95 level from the current level. So one can buy RVNL also with stop loss of 66. Railtel, as you mentioned, yes, stock is now on the support of its upsloping trend line on the weekly chart. So Railtel is also looking attractive from risk to reward point of view, though stock has corrected from its recent high, but almost it's trading near to its important support area on the weekly chart. So we believe that if stocks continues to hold above 118 level, then Railtel can also show some uptick from the here onward. Yes, on the higher side, 140 is the immediate hurdle for the stock. If at all stock crosses those level, then possibly Railtel can scale up towards 160 also. So again, after fertilizer, we believe that this railway stocks are positioned very well ahead of budget, and we believe that something is there for this space, and all stocks from the railway sector can do well in the today's session also, and from the coming weeks also we are bullish for all the stocks RVNL, TWL and Railtel.
Okay, so there you have it. Quite a few recommendations from the railways pack. Titagarh Wagons, RVNL and Railtel. Now, of course, I don't want to not talk about auto stocks. Today is the first of the month, and auto sector wholesale numbers for the month gone by will start trickling in. And there has been a bit of a, play and pause sort of mode for autos. There is a phase when they see a strong momentum come by. Of course, we've seen a very prolonged phase also of for many OEMs in 2022, when everything else was sort of witnessing a fair amount of selling pressure. But let's talk about how autos are positioned now, especially OEMs. If we look at Maruti, I mean, Maruti garnered a lot of interest, especially after the numbers came by a couple of weeks back. You have M&M, which has seen a phenomenal rally all of last year. It continues to be a favorite for many people on the street. So let's talk about the PV space first. M&M, Tata Motors and Maruti. How are they stacked up?
So definitely, Karanya, first we go with the Nifty Auto Index. Almost Nifty Auto Index is hovering near to its all-time high trajectory. So it clearly shows that this space is still intact on the bullish side, and despite of sell-off in the market, this automobile index is still showing the strength, and we believe that this auto space is likely to continue its uptrend from the here onward. M&M is almost trading near to its all-time high trajectory, a very strong setup across all time frame, and we believe that M&M can display furthermore upside momentum from the current level. And our positional target for M&M is around 1500, 1550 could be the possible target for short term on the M&M. So one can buy and accumulate this stock in any kind of dip during the volatility of market. One can keep stop loss of around 1250 and upside target is 1550 for Mahindra and Mahindra. Yes, definitely Maruti has shown some corrective action in previous week, but the strong recovery we have seen from the recent low, which was formed at around 8300 level. The kind of recovery which we have seen on the especially in last 3-4 trading session, it's showing now stock is poised for another breakout above 9000 level. If stock manages to cross above 9000 level, then possibly Maruti can scale up towards 9300, 9400 on the higher side. So overall now stock is trading about 20-day, 50-day moving average, which is also adding up the strength on the near term, short term basis. So we believe that Maruti can be another buy from the automobile space. One can keep a stop loss of 8550 for upside target of 9300 to 9400 in this continuation of uptrend. Another stock, that is Tata Motor. It's very interesting stock. Since last 8-9 months, stock was consolidating in very broad range. 380 to 440 was the broad range for the stock. But in the previous week, we have seen stock managed to cross this consolidation range. So it's almost 8-month consolidation breakout is already witnessed on the prices of Tata Motor, and looking at the short covering in the previous session, we believe that Tata Motor can continue its uptrend towards 490 to 500 in the continuation of this uptrend. So we are bullish on Tata Motor also at the current juncture. Our stop loss for going long is around 435. So Tata Motor is also buy from my side.
Okay. What about two-wheelers? I mean, they, in terms of numbers, also have been languishing a bit in terms of sales numbers, and even in terms of stock price, some of them have been a bit of an underperformer. So TVS, Hero MotoCorp, anything, or CVs. I mean, the likes of Eicher or Ashok Leyland, perhaps that could see some promise from here on.
Bajaj Auto has displayed some price action in previous trading session, but
Right.
still from higher side some supply was there. But still, if I compare with all two-wheeler space, Bajaj Auto is looking a little attractive as stock manages to give breakout above 3750 level. So if its stocks continues to hold above 3750 level, then possibly Bajaj Auto can scale up further higher. But still the multiple resistance area for Bajaj Auto is around 4050 to 4100, which is very important to cross in this up move. So any pullback towards 4100, one should review around those level. If at all stock crosses those level, then it may scale up further higher from those level. But as of now, we are projecting target of 4100 for Bajaj Auto. One can buy with stop loss of 3750. Another stock that you talked about, that is Hero Motor, but still stock is in consolidation since last 4-5 weeks, and now almost it's approaching to its multiple resistance area of around 2800 2820, which is very important for Hero Motor. If at all stock crosses those level, then possibly stock can move further higher towards 2950 to even 3000 level also. So almost consolidation is happening in the stock since last 4-5 weeks. Stock structure is positive on the near term. So we will wait for breakout about 2800 to buy Hero Motor also. If that breakouts comes, then we will buy with stop loss of 2760 for upside target of 2950 to 3000 also. From two-wheeler space, the one stock which is clearly showing strength, that is TVS Motor. Though we have seen some corrective action in last 2-3 months, but still if we analyze in compared to all other two-wheeler space, TVS Motor is looking very promising for the long-term setup also. And those who wants to add this stock for long-term portfolio, they can buy this stock in staggered manner in any volatility if it comes in the market. So we are very bullish on the TVS Motor, and we are projecting target of 1200 to 1300 on the higher side. Any dip towards 1980 is a buying opportunity in TVS Motor. Keep stop loss of 940 for upside target of 1200 to 1300.
Okay, I want to circle back to some of the sectors and stocks you've addressed, Rajesh, because we're getting some comments on our feed as well. You talked about a host of railway sector companies. IRFC, I think you've missed out. One of our viewers, Saurav, is asking us about IRFC. So since you've not mentioned, should I conclude that it's not looking as interesting?
So there is a traction in IRFC also, and now in recent past, like after corrective move since last 2 trading session, we have seen some buying action is happening in the stock also, and now stock is trading above 50-day moving average. So again, we have to watch like if stocks manage to hold 30 level, then possibly stock can scale up further higher towards 38 to 40 level also. So overall structure for IRFC is also positive. Since last 2 months, its stock is in consolidation. So we are waiting for breakout about 37, 38, which is very important for the stock to continue its uptrend on the medium term to long term perspective also. So 37, 38 is important level for this consolidation. If at all stock crosses those level, then possibly it will resume its uptrend, and then 45 to 50 could be the next target for IRFC also. If you are already holding the position, keep stop loss of 30 to remain long on the IRFC. Overall setup is bullish on the IRFC also.
Okay, and since we were talking about fertilizers, Paradeep Phosphate delivered its numbers recently. It's been a bumper Q3. Prabhu, another viewer, is asking us about Deepak Nitrite, if there's anything that you're seeing there which has potential to grow into something meaningful.
So, Deepak Nitrite, yes, we have seen some short covering action in last two trading session. Though stock is in oversold zone, structure is weak, but after a significant corrective action, some short covering is visible in Deepak Nitrite from lower level. So now if stocks continues to hold above 1820 level, then possibly some more upside we can see. Pullback, in pullback again stock can move towards 1950 to 2000, which is the next critical level on the higher side. So yes, you can hold Deepak Nitrite at current level with stop loss of 1830. Upside target is 1950 and 2000 in this continuation of pullback.
All right, let's bring on board our next guest as well and give Rajesh a bit of a breather till he, figures out some more stocks and their charts. I want to bring on board Prateek Pant of White Oak Capital to talk to us about the markets, the fundamentals, whether or not we can expect any big moves on the market during the budget speech and post that. So let's put things into perspective about what the markets want from Finance Minister Nirmala Sitharaman. Prateek, thank you so much and a very good morning to you. I want to talk about the key focal points of the budget, capex and fiscal consolidation. Now, if these two indeed are going to be the thrust or the focal areas of the budget speech and the budget overall this time around, what kind of a reaction do you expect from the markets, and especially select pockets like infra, construction, cement, cap goods, etc.? Prateek, I think you're on mute. Request you to,
Okay. Sorry. I said if you see last year, the budget announcements had actually laid out, good scope for both public spending as well as the right framework for, the private spending to also support the type of public spending which has been put into place. Now, we've also seen very encouraging, the data which came in yesterday from the economic survey actually shows, a very strong revival in terms of the whole public spending framework which was there. Now, that's, if there are announcements which actually continue on similar lines, I guess we don't really need anything big bang. But it's more around continuation of what was spoken about during the last budget and, the roadmap which is there around it. Other figures which are there on the revenue side, tax revenue side, are already supporting this type of headroom which is available at this juncture. I guess, private spending in our assessment is going to follow. You have a now stable tax regime in place. We are also seeing bank books, cleaned up to a certain extent. Probably they're looking best in the last decade or so, and that provides, credit offtake to also, come in conjunction. So I think a mix of the two things, is something which people will be watching very closely in the statements which are there from the finance minister.
But, not to diminish the enthusiasm, but I want to know, between the budget, the FOMC outcome, and of course the earnings that are trickling in, what do you think will be dominating the mood, not just today but this week? Because a lot of central bank comments and meeting outcomes are slated for this week, and followed by the OPEC meet as well. So talk to us about what will be the big driver.
See, I guess it's going to be a combination. It's not going to be one particular event or item which has been drawing some of these things even in the last 1 year. If you see, we know directionally FOMC could again indicate a rate hike, which is in a way priced into the market. Some of the even honestly, budget, while it's a great talking point, has not really been one of those factors, what we used to see a few decades back, which used to move the markets. Maybe in a day, in a week, it does have some sort of sanctity, or it gives direction for that short period. But we've seen over the next few weeks and a month, the markets tends to look out for more solid data around corporate earnings. It actually tends to look at directionally what type of flows are coming through. So, many of those other factors make a much larger difference, for the market, rather than what gets announced in the budget.
And do you and many of your peers who are market watchers like yourself, are you guys expecting any simplification in the capital gains tax regime?
See, there is a wish list which everybody, of course, is moving around. And I think there's, before always budgets, there is a lot of wish lists around what can happen to capital gains. It's just that, the whole capital gain regime has really been complicated in the last few years. We had, the three main asset classes around debt, equity, gold, used to have things which somewhere were easy to execute, from a filing returns, or even from a perspective of looking at longer term trends of what you should do with each asset class. But many of these things have been complicated, and there have been some sound bites which have been there, which give us hope that there'll be a little bit more rationalization and a lot more longer term outlook on what to expect, when you invest into each one of these asset classes.
All right. I want to circle back to what you were saying about the FOMC outcome and what's likely to happen. But in the backdrop of all of that's happening, not just in the rate hike regime, but also when it comes to the inflationary scenario, the macros, and of course at the same time you have China reopening. FIIs, of course, has been a bit of a pain point. I was, looking at the numbers as well for the month gone by. For January, close to $1.6 billion wiped out by the FIIs, sold by the FIIs. So talk to us about how, in the existing scheme of things, India could look as a market for FIIs, and will that pain continue now that other markets are also seem to be recovering, other EMs are seem to be recovering?
Sure. So, typically what happens is, just because a December becomes January doesn't mean that the whole cycle gets reset, right? This is more a longer term trend, which we've seen from 2022 into 23, and seems to continue out there. And I guess the number one point is equities as an asset class has suffered in the last, 15, 16 months because of various concerns, right? It started with the war, went up to really pressure which you found on the cost side because of supply side issues which were there in energy, commodities, which led to inflation, which has led to interest rate hike. So this is really a continued thing which you're seeing. Now, at some place, these things are going to pause and maybe will reverse. And maybe 2023 can be a very defining year for that to happen. Now, the flows which are coming into equities globally, right? When you have interest rates peaking out and hopefully inflation also peaking out, that's the time fixed income does tend to attract a lot more because you see the risk return equation a lot more favorable for that asset class. Now, we are around there. I won't say we are right at the peak at this point of time, but FIs have been selling out of equities around the world, more so in emerging markets, and India is a collateral damage out there, right? Our weightages today are almost 15% of the emerging market index. And that does make a significant impact when there are those type of outflows. I don't think India has really seen country-based outflows to that extent. In fact, we manage a large pool of foreign portfolio investors, and we continue to see a lot of inflows and interest in India at different points of time, and that interest continues even right now. So that's not something I'm not worried about short-term trends on flows on FIs, because longer term, when there will be a reversion back to risky asset classes, equities will see that type of inflows. On the on some of the other triggers which are there, I think you will FOMC will set some sort of a direction, and it'll be useful to see the narrative. That's more important than what the action is at this point of time, because it will signal that. I mean, the whole yesterday's economic data has been quite positive, right? It talks about India still growing at 11%. Again, one of the largest growth markets in a time when the world has gone through a lot of crisis. I think we should pat our back. I mean, maybe I'm wearing the pink t-shirt to reflect the health of the economy at this point of time. So we've actually navigated through some amazing tough regime, a tough environment, macro environment last year. And, to that extent, that also shows the outperformance of India versus a lot of the other markets, both emerging as well as developed markets.
Well, you're making me sound like the devil's advocate in red. But Prateek, what are the pockets in the market right now that you're liking? Because we've seen the earnings pan out for Q3. Most companies and sectors have already delivered their report card. Of course, budget will be a big event to watch today. Followed by FOMC, then of course our own central bank in a matter of few weeks. So talk to us about the sectors that look fairly insulated or fairly, uh, sturdy and resilient amid all of that, turbulence and challenges that are panning out.
Sure. So last year was a tough year, right, in terms of sectors, because some of the so-called, good quality sectors, strong sectors with cash flows, earnings, haven't done really well on the markets. And you've seen that in the area of, IT sector. You've seen that in some of the frontline consumer companies. Even some of the financial companies, which actually have cleaned up quite well on the private sector financials I'm talking about, have not really had a great year in terms of markets, and that actually makes them quite attractive, because when we look at last quarter's numbers, many of these companies continue to display very, very strong earnings, and more specifically, even the guidance continues to be fairly positive. At times, unfortunately, what happens in like a sector like IT sector, they get clouded by news which is heard in the US, but US technology is very different from what India technology is. And we like a lot of mid cap IT companies and some of the frontline IT companies, because they're looking quite attractive at this point of time. Similarly, some of the large consumer discretionary companies have also shown a lot of resilience. In fact, the earnings continue to be fairly strong out there. I think that's another area we're watching very closely, and increasing our bets out there. And finally, financials, private sector financials, I think are pretty much the flag bearer of what is what was the India story last year. So I guess these are areas where we will continue to increase our bets.
All right, Prateek, thank you so much for chatting with us ahead of the big day. I know you have a very, very busy schedule lined up, so I'll let you get back to that. Ravi is still standing by. Let's touch base with him. Ravi, want to also get in your 2 cents on the FOMC meet and how that could also be a key determinant for market mood and investor sentiment, not just today, but again, a lot of there's ECB, there is other central banks also that are lined up to give out their comments and their rate hike decisions later this week. So talk to us about how that could also play the sentiment out here in Indian markets.
Well, FOMC, I think nobody is expecting any huge surprises. Most people are looking at 25 basis point, rate hike. If the Fed does that, it'll take the Fed funds rate to 4.5 to 4.75, which is not very far from the terminal rate it has predicted of 5 to 5.5%. In fact, the Fed fund futures market is actually predicting 5%, which means that people are expecting the Federal Reserve to actually cut rates by the end of 2023. So, I mean, if Jerome Powell is much more hawkish than what, if the statement is hawkish, then that is probably on expected lines. Because also remember that now he'll have to just talk. There are no fresh economic forecasts that the Fed is going to make before its March meeting. So one good thing is that they have projected that there is going to be no recession. But on the other hand, if he sounds more dovish than that is expected, then we could see the developed markets see another rally. So that is how it could pan out.
So. Okay, so does it
another leg of the rally? Yeah.
Does it look like they are indeed poised for a soft landing then, or do we have to wait and watch for Jerome Powell's comments later today and in the subsequent weeks and months?
We have to watch for his comments, but increasingly the markets are expecting that the US central bank will be able to engineer a soft landing for the US economy. I mean, that's what I said earlier in the show also, and which will of course have implications for world economic growth also.
Okay, so fingers crossed. Thanks, Ravi, for joining in and sharing with us your insights and observations of the macros of the market and how they could pan out in the coming weeks and months. Rajesh is still with us here. Rajesh, a lot of questions coming in your way. One I want to flag off right now is on fertilizer stocks. One of our viewers, Prabhu, was asking us about GNFC. Did you answer that one?
Yeah,
You
surely.
were talking about Deepak Nitrite earlier, I think.
Deepak Nitrite, Chambor Fertilizer,
Yeah.
Coromandel and GNFC. These all
Right.
stocks are looking promising, and fertilizer space overall looking promising, and we believe that something is there in budget for this space. So most of the stocks are already positioned for a budget outcome, and we believe that GNFC is almost on a verge of giving breakout to its down sloping trend line on the weekly chart. So if at all stock crosses above 555, then possibly next target for the stock around 580 to 590 in very short period of time. You can remain long with stop loss of 535.
Okay. And any upside move you see on any of the defense sector stocks? Arun has posted a query as well.
So BEL is looking attractive. In the last session, we have seen a strong short covering action, and looking at the overall setup, stock almost taken the support from its important support area of 88, and if it continues to hold above now 92 level, then possibly BEL can be a stock where we can expect a target of 100 to 105 on the higher side. Another stock one can look at Bharat Forge is also looking very promising. And almost after giving multi-year breakout, stock is on a verge of giving breakout on the near-term chart also. If Bharat Forge manages to cross above 890 level, then possibly next target for Bharat Forge is at around 950 to 960 in the continuation of this pullback. One can go long in the Bharat Forge with stop loss of 840.
Okay, all right. Till we get some more comments and queries pertaining to budget plays, I want to also bring in earnings candidates. We cannot ignore them, and especially the outperformers. Indian hotels, bumper quarter, very strong demand, very resilient operating performance. Revenue has grown 54%. So clearly a healthy set of numbers there. Talking about the big winners, you also have Cholamandalam. Very strong numbers and very good growth seen as well. You had profit jumping 31%, their net income has risen 22%, AUM has crossed the 1 lakh crore milestone. Let's talk about these two. I mean, they're from very different universes, but let's talk about from an earnings standpoint, do you see any reaction today because the numbers have been so strong?
Yeah, so Indian hotel is looking very interesting at this moment, because since last two trading session we have seen a strong buying action at the lower level. Though stock has corrected from its recent high of around 350 zone, but looking at the last two trading session action, we believe that some short covering action can take this stock further higher towards 325 to 330 zone in this pullback. So if you are already bought this stock, remain invested with stop loss of 292. Fresh buying can be also done at the current price also with stop loss of 292. Upside target we are projecting 325 to 330 in this stock. Chola Finance is almost struggling to cross its 50-day moving average. So if stock crosses above 730 level, then possibly some more upside we can see towards 760, 770 on the higher side. So Chola Finance, we will wait after opening. If it crosses above 730 level, then we will buy this stock.
Okay, all right. I also want to focus on today's candidates. The big heavyweights are Britannia and Ashok Leyland. And of course, Ashok Leyland also, because of the sales numbers, will be in focus apart from its Q3 earnings. Anything exciting that you can observe on their respective charts?
So first we'll talk about Ashok Leyland. Since last 4-5 months, stock is struggling to cross a 150 to 154 zone, which is very stiff resistance for the stock since last 4-5 months. But looking at the price action in last, especially in last 3-4 trading session, this time we believe that stock is well positioned to give a breakout above 155 level. If these breakouts happens, then possibly Ashok Leyland can scale up towards 170, 175 also in the positional basis. So if you are holding position, you should hold position with stop loss of 145. If stock not breaches these level, then possibly this time we can witness a breakout above 155, and then positional target we can expect around 170-75. Britannia is also positioned bullish on the weekly as well as on the monthly chart. Stock has given a breakout of its surrounding bottom formation on the weekly chart, and stock is holding the strength on the near term setup also. If stock continues to hold above 40 to 30 level, then yes, we can see a uptick in the Britannia also. Upside target we are projecting around 4500 to 4550. So your stop loss for Britannia is 40 to 30.
Okay, all right. You know, you've already talked to us about Bank Nifty, but once again, we're getting a lot of comments on private sector banks, especially, and how they are poised. So, any action that you can project on any of these private sector, big or small banks?
So, our focus is on HDFC Bank, because in this volatile market, HDFC Bank is still able to absorb all the selling pressure which has seen in the last 2 weeks, and now stock is almost trading near to its 20-day, 50-day moving average. And looking at the overall setup, now risk to reward is favorable for HDFC Bank. One can buy with stop loss of 1570. And once stock crosses above 1660, then next target for HDFC Bank is around 1720 on the higher side. ICICI Bank is also looking attractive after this corrective move. Now stock is able to cross again 200-day moving average in the previous session, and now if stocks continues to trade above 815 level, then ICICI Bank can also show some pullback action. But again, in the pullback, 865 to 870 is the resistance area, so where one can book profit. So at this level, yes, one can buy with stop loss of 815.
Okay, all right. You know, one sector we've not discussed yet is power, and we're also getting questions on green energy and power sector, because even in the budget it could be one of the key focal points. So any names from that space?
So Tata Power comes in mind, and in previous session we have seen a strong recovery. Yes, there would be definitely for this green energy and green hydrogen. These all going to be there, the part of this budget also, and a lot of announcement we are going to have. So a lot of beneficiary for this segment. So Tata Power is clearly looking attractive. Now stock is managed to give breakout of its falling trend line on the daily chart, and looking at the setup, we believe that if stocks continues to hold about 205 level, then possibly this stock can move further higher towards 235 to 240 also. So Tata Power, one can look at current level. This can be a buy bet from this space.
All right, well, a host of stocks, sectors and pockets of the markets identified by Rajesh this morning. So guys, if you've been watching, I hope you've taken note because of the big budget day. All of these stocks, or many of them if not all, could be very, very much active on the back of news flow, on the back of budget speech, earnings, and of course the FOMC outcome that we're all waiting for later tonight. But for now, that's all from me and Rajesh as well. Thank you so much, Rajesh, for joining in. We'll take a quick break here, but don't go anywhere. Our budget coverage is going to continue all day today on Moneycontrol YouTube channel. After this break, my colleague Nikki will take it away and discuss more about the market fundamentals with our MC Pro team.
You know, the 1991 budget speech of Dr. Manmohan Singh is very often regarded as a watershed moment. Actually, it was a watershed speech, but it wasn't a watershed moment, because the most important policy changes which constituted 1991 had already been announced. The devaluation was done before the budget. The trade policy changes with which I was involved, Mr. Chidambaram was then the trade minister, I was Commerce Secretary, that was also announced before the budget. The industrial policy had been announced 5 hours before the budget. So frankly, the budget speech went to the public and said, look, we were in a crisis, we've done all these things.
Right.
And now I'm giving you the reason why we are doing it.
Right.
Since then, budget speeches have been converted into something that's going to announce a policy change. I think policy changes should be made independent of budget speeches.
Sure.
And the best budget speech would be one which says, you've already heard the policies we are going to follow. Here are the numbers that have to be fitted into the budget. And then the rather matter-of-fact presentation of revenues and expenditures.
Sure.
That's what we should do.
Sure.
By the way, if we get that, I think it will be a real breakthrough.
The Honourable Finance Minister and the Honourable Prime Minister have steered the ship really, really well through these very difficult times. So I think they just need to stay the course. And there are 3 or 4 areas which they have prioritized, and I think they should continue to do that. Number one, we have to continue to provide support to vulnerable populations.
Okay.
We've done that through the Pradhan Mantri Garib Kalyan Yojana. We've done that through the fertilizer subsidies. We've done that through a big support for Narega and so on. So support for vulnerable populations, which of course has driven up our fiscal deficit, but is still required given the commodity price shock that I spoke about earlier. So that's number one priority. Support for vulnerable populations. Second important priority is continuing on the reform measures and really putting in place a very forward-looking industrial policy. And that's coming through the PLI scheme, that's coming through our commitment to climate change and what we're trying to do to green our economy. So I think that's the second area, which is really a very forward-looking industrial policy. The third area, of course, that the government has been emphasizing, correctly so, has been significant capital expenditure. So capital expenditure over the last year or two has gone up by 1 or 2% points of GDP, which is a substantial number. And that, of course, has meant that many sectors of the economy, like construction, like steel, like cement, have done extremely well because of the infrastructure spending that the government has done. And then finally, what we've also tried to do through all of this is to ensure that we have a happy balance between growth and inflation, right? So it's the macroeconomic management, looking at the currency, looking at the fiscal deficit, looking at, of course, where we are with respect to inflation. So here again, we have to stay the course. And of course, the Honourable Finance Minister just mentioned in Parliament that she's committed to the fiscal glide path. We have really deftly and very, very, competently managed all of this so far. And I think that's what we should do coming up in this budget.
Ahead of budget, because it comes in the face of a lot of events, right? There is a fear of global recession, there's a fear of slowing economy, rate hikes. You put all together, and in between of that, we have budget. What are your expectations, and where do you think government will put its thrust in right now?
See, I don't know what all budgetary proposals will be, because her hands are also tied. There's not much, because indirect tax has gone to GST, and direct taxes where she can play with the rates here and there.
Right.
So some proposals can come there. Otherwise, GST, they keep tinkering through the year.
Right.
So I don't expect much out there. Indirect taxes, I think it will be not much of a, some proposals will be there, but I don't think it will be significant for the place, because they want to stabilize the economy, they want to grow the economy.
Right.
So what will be the growth boosters they will give, only time will tell. But I'm not expecting anything from the budget in terms of any major changes in any aspect. There's some tinkering here and there, yes, but not, because they want to have the growth continuing.
Right.
The government's intention is clearly to see that 7-8% growth comes.
Right.
We grow at 7-8%. So what they will do, maybe they can allocate the infra spend a lot more, because they can cut on subsidy now. Now
Right.
the economy is broadly out of COVID stress, broadly I would say. So you can cut at least 60-70% of the COVID spend by way of subsidy, food and all in 23-24, and put that money into the infra.
Fair enough. And also, Mr. Rajan, a lot has been spoken about the LTCG, right? Everybody has been spoken. There is a compelling case.
Every budget
Every budget we talk about it, and every budget we get disappointed because nothing comes on board. What do you think? This time around, it's going to be any different? Any tapering
I don't know
coming
what
around?
they'll do, but they should not do anything. That much I can tell you. On the shares and all, because people have sold things based on instability of rates and what is long term, what is short term and all. Now, if you keep playing with the duration or rates, I think it vitiates the investment environment. If I have present in my calculation 1 year long term capital gains and say 10% plus a charge as a tax rate on the long term. Now you say that it is going to be less than 2 years or 3 years is 3 years is going to be your long term, short term. Then that my tax rate goes from 10 to 15. So that vitiates the thing, They should do it only if it is necessary because they understand.
What is the market expectation at all with respect to the budget?
I think India is in a very good sweet spot in the world, which is hit by inflation as well as fear of recession. So market would expect that manufacture in India, theme which our Prime Minister Modi ji had initiated and now is gathering momentum, will get further impetus in this budget. Great opportunity for India for the first time. There have been lots of talks about India being alternative, but that was never feasible. But now most of the global companies that outsource, they're very serious about making an alternative to China. And in terms of scale in most of the manufactured products, China is way, way ahead. And therefore, even the slight increase also would be a significant delta for many manufacturing sectors. So I think one will be to continue the growth or to accelerate the growth in manufacturing with the PLI scheme and all those, whatever momentum has come. I think government will try and see that that is carried forward. Also, I think there will be, the election is 1 year ahead. And inflation has impacted the rural India as well as poor people in urban India. Therefore, budget will try to do something so that the real income is maintained. So might give them some incentives, some benefits to farmers as well as poor people. that is something which is typically every government tries to do as a populist thing. But here, I think there are more compulsions because of the inflationary impact that the lower income strata of population, whether it's agriculture or industrial, would have had. So I think that is the second thing that we'll see. The other thing, I think there will be a huge focus on capex and investment. Because investment cycle and private sector capex also is showing signs of revival after a very long time. So government would try to incentivize that. And capex cycle revival and growth is very important to maintain the economic growth. So I have a feeling that there will be good incentives and a layout, investment layout for those capex plans as well.
Good morning. All eyes and ears in the next 2 hours from now will be on the Union Finance Minister who will be presenting Budget 2023-2024, a budget that comes amidst the fear of recession, heightened inflation, 9th state election and general election in 2024. But don't you worry, we've got you covered with 14 exclusive gems which will help your portfolio shine. Hi there, I'm Nikki Mirchandani, and in conversation with the head of Moneycontrol Pro Research team, Mrs. Madhuchanda Dey. Thank you so much for taking out the time.
Hi, good morning.
So I'm going to straight up ask you about the strategies and the themes that have been deployed for picking up these 14 stocks.
Yeah, as you rightly pointed out, the global backdrop is slightly shaky and the market is not in the best of the mood as well. So, the thing that the markets are looking for from this budget is clearly adopting a fiscal consolidation roadmap. And we are assuming that this budget is likely to deliver on fiscal consolidation. But having said that, there are other things also which the markets are looking at. Like there has been a step up in capital expenditure in the past two budgets, and the markets are certainly looking at continuation of the same. Also, in the same breath, the markets are looking at some step up in consumption, because as you rightly pointed out, this is a very important budget. This is the last full budget before the general elections of 2024. So some kind of a boost to consumption is also expected. And last but not the least, the market is also looking at the budget to give a fillip to employment, to give a fillip to manufacturing, the China Plus strategy, etc. So these are the broad premises on the basis of which we have constructed this 14 stock portfolio.
Sure, Madhu. Let's address them one by one in detail. Let's first talk about the rural consumption theme, which has been marred to an extent by inflation. Do you think higher allocation in rural consumption this budget would help? A, and also which stocks will look attractive in this space, given both the perspective of earning as well as valuation?
Yeah, that's a very valid question. The markets are definitely looking up to the budget to allocate more to generate more employment in the rural areas, and to so-called whatever populism happens in the budget, they're expecting that will be directed towards the rural areas. Yeah. Having that in mind, of course, we need to mention that inflation is gradually cooling off, which is again a good news from the rural consumption perspective. With that backdrop, we have kind of broadly picked up 5 different stocks from 5 different baskets. The first stock that I would like to talk about is something which has always hogged the limelight in every budget, and that is housing finance. And here we have picked up the stock from the affordable housing finance space called Aavas Financiers. So they are pretty well entrenched in the self-employed category. This is not something which the big banks typically do. And close to 70% of their portfolio is housing loan. Obviously, their net interest margin is way higher than the competitors in the housing finance space. And they have a hawk eye on the non-performing assets, so they have very good asset quality. In fact, they have braved the pandemic also with flying colors. And they have a ROA of close to return on assets of close to 3.5%. Although the headline valuation looks a little expensive, but for the quality and for the earnings outlook, this is a great stock to own.
Sure.
So the other stocks we have are one from the discretionary and another from the non-discretionary consumption space. First, let me talk about the non-discretionary, and no price for guessing that. That's Dabur.
Right.
It has a very high exposure to rural areas, and what we like also about Dabur, in addition to the budget push, is the fact that Dabur is really cementing its position in all the categories that they are present. In fact, they are gaining market share in 90% of their product portfolio. And with the cooling off of commodity prices, we expect the gross margin and the operating margin also to get a boost. So again, Dabur, a good stock to own. Then the other stock, if you think rural in India, how can you not think about Hero MotoCorp?
Sure.
Yeah. So this pandemic-induced preference for personal mobility continues. So that is a theme that's going to stay. On the top of that, if the rural earnings are going to be even a tad better, that's going to give a fillip to demand. And as I have always spoken about this, the softening of the commodity prices giving a fillip to gross margin and operating margin, that's also a story which is going to play out beautifully for Dabur. The other stock that I would like to talk about linked to rural is Visakha Industries. Again, this asbestos player. So anything to do with rural, they definitely gain. And they are now getting into new businesses like solar rooftop.
Sure.
So again, good earnings traction is expected from there as well. And the last stock that I want to talk about, also I need to mention about Visakha. Visakha has corrected way too much, so the valuation is quite attractive and there's quite a bit of headroom ahead of us. And the last stock on this theme that I would like to talk about is Relaxo Footwear. Not a great going for this company, honestly, but few things makes us positive. This company was badly impacted because of a hike in the GST slab,
Right.
which impacted demand. On the top of that, this whole inflationary effect, which impacted urban as well as rural India.
Sure.
So it was not in a very comfortable position. But with demand normalization, and now if we expect that the budget is going to give a kind of a fillip to rural consumption, I think demand is going to come back gradually. This company is already benefiting from this trend of shift from the unorganized to the organized sector. We have seen across consumption categories that that's a shift which is happening,
Sure,
especially on the economy side of the business, on the entry-level products. This big shift is happening. So Relaxo stands to benefit from this long-term trend. And finally, last but not the least, there is a correction in rubber prices,
Sure.
which is going to be helping their gross margin and the EBITDA margin eventually. So again, the stock is very close to its 52-week low, and there's a headroom.
Fair enough. Looks like a value buy, not a recommendation of any sorts, but clearly independent research that the Pro Research team has conducted thus far. Just, shifting the focus a little bit from, the rural consumption theme to private capex and investments. Economic Survey also spoke enough and more about the private capex yesterday, which is yet to come in full swing. With that in the background, which are the stocks and the counters you think are attractive at this point of time, both, as usual, from the earnings as well as the valuation perspective?
So today is actually a good day to talk about capex, because for the next 8 hours, the word that we are going to hear the most is capex. Capex. Okay. So last year and the year before last was great as far as the budget's delivery on the capex front is concerned. Sure. And definitely hopes are high that that momentum is not going to reverse.
Right.
And if that momentum accelerates, that's really good news for a whole lot of companies. But even without budget giving a very overt push, we have picked up some capex-linked stocks which are going to deliver for investors for the next 1 year, given the kind of changes, given the kind of momentum that we see in the economy. I would just like to kind of draw your attention to what Larsen & Toubro said after its recent earnings.
Sure.
They have clearly indicated that they see green shoots in terms of capex, not only in terms of government expenditure, but also they see green shoot in terms of private capex, and that's really clearly good news.
Sure.
So the no guess for for the first stock in the investment theme, which is Larsen & Toubro.
Sure.
And the valuation is quite decent at 21 times FY24 expected earnings. And even in terms of sum of the parts valuation, we still see upside in the stock. So to start with, Larsen & Toubro, definitely if you think about India, investment capex, although they are venturing into information technology in a big way, but still 70% of their business is linked to investment in capex. So that stock is on the top of the radar.
Sure.
As we rightly were discussing about the possibility of private capex coming back, and we have already seen that some of these companies riding on private capex have started seeing very good traction in order books.
So Madhu, which are the other themes, counters in these themes that you're looking at?
Yeah, I'm just coming to the private capex theme. So on the private capex theme, the stock that we have picked up is Thermax.
Right.
Usually Thermax is a biggest beneficiary of the upturn in private capex, with both its businesses, energy, environment, especially in the current milieu, expected to do exceedingly well. While talking about capex, we cannot not discuss defense capex.
Sure.
In the current milieu especially, that is all the more important. The geopolitics has changed in the past 1 year. So everyone is expecting the budget to have higher allocation towards defense and more towards defense capital expenditure. We got to remember that, the government has an overt policy of encouraging more indigenous manufacturing of defense. Although defense stocks have done their bit, and we have also been recommending them from last February ever since that geopolitical tension broke out. But we have picked up a stock where there is great earnings visibility, that is Gardenrich Shipyard. The reason I'm telling you so is because this company is sitting on huge order book. They have visibility for the next 3 to 4 years. The good news is because of the pandemic, the execution suffered, but now the execution is picking up beautifully, and the commodity correction is also going to give them a fillip to their earnings. The other stock on the day of the budget we need to discuss, and we have put it also in our portfolio, is linked to railway capex, which is IRCON.
IRCON International, sure.
So, government has already, spelt out that they want to incur decent capital expenditure on the railway side, and on the most of these engineering companies linked to the railways are going to be a beneficiary. The reason why we have picked up IRCON is they have huge order book, they have visibility for the next 3-4 years, and as we spoke about in GRSE as well, post the pandemic, execution has picked up, gross margin pressure is waning, so yeah, a nice place to be. And the last stock, which is very interesting, something that we have recommended for a while, is a small construction company by the name of HG Infra.
Right.
This company is into mostly into the road space, and we know that of the investment that happens on the infrastructure space, a large part of it is in the road sector. But it is not road alone, because for the re-rating of the stock to happen, this company needs to diversify, and that has started happening. So now they are getting into metro orders, they are getting into railways, they are getting into irrigation, etc. And what is most important to remember about a construction company is the quality of the balance sheet.
Sure, Madhu. I would just like to cut in here and tell you that sure, HG Infra has clearly been one of the counters or the stocks that has clear balance sheet. But moving on the focus now to China plus one theme. You think India is now at the cusp of being a global manufacturer? With that in perspective, which are the themes, which are the counters you think that the viewers can now be looking at ahead of budget?
Yeah, China plus one is a big theme.
Sure.
But unfortunately, so far, we have not really made the most of it as a country. So definitely expectations are there that the budget will give some incremental push to this theme. So manufacturing as a theme is definitely in focus, and we also have some of the stocks, like we have picked up this stock called Amber Enterprises. So they are into air condition manufacturing, they are an OEM, and they are very well entrenched with all the leading players. So now they are getting into other businesses also, like components, etc. So we think, the last 1 year has not been great for this company, but the results came out a couple of days back. Execution has clearly started picking up, and I think, yes, Amber is again one stock that investors can look at seriously. With many other companies in the outsourced manufacturing space, either we are not comfortable with the valuation, or we are not comfortable with their margin profile or outlook. So, yeah, this is a good place to start, but I think there's a long way to go in terms of picking up companies from this particular theme. The other company I want to talk about, it's not strictly China plus, but it's kind of an import substitution. I think there will be a decent focus of the budget on this. That is a complex fertilizer player, and the stock that we are talking about here is Paradeep Phosphates.
Right.
Complex fertilizer is not something which is just a good theme to invest, but it's an imperative for India, because as we know that there's a nutrient imbalance in Indian agriculture,
right,
in favor of urea, and it's high time that that gets corrected.
Sure.
And we all know, because of the spike in international fertilizer prices, our fertilizer bill went through the roof last year, and with the cooling off of the prices, we expect the fertilizer subsidy to come down.
Sure.
And the government is definitely going to encourage use of more complex fertilizer to restore the nutrient balance. And Paradeep is in the right place. They have done an acquisition, so there is a capex, the capacity expansion story is there. And on the top of that, they are pretty well backwardly integrated, so they don't have much of an issue with respect to the raw materials. So all this puts Paradeep in a very strong place. The other stock which I want to talk about is a very interesting mid-cap. you can call it an auto ancillary, you can call it manufacturing China plus, whatever nomenclature you give, but at the end of the day, it's a good stock to talk about, and that is FIAM Industries.
Okay.
FIAM is a very strong player in the two-wheeler lighting space. But what is the the incremental fun about investing in this company is it's getting big into the LED. So LED adoption in India is going up by leaps and bounds. And in addition to this, this company is a strong play on the electric vehicle as well. They are very well entrenched with all the new electric vehicle manufacturers.
That's interesting.
And I'm sure this budget will also have a focus on electric vehicle, a focus on renewable.
Right.
So if you want to play that theme, FIAM is also a very interesting stock to look at. In fact, we feel that auto ancillary as a space is looking very interesting because last year, right after the pandemic, we saw there was a huge shortage of semiconductors.
Sure, Madhu. I think this one particularly looks really interesting out of the 3 stocks that you've laid out for us within China Plus strategy. But let's move on to our 4th theme in that case, which I think would be something that we'll speak enough and more during the course of the day, right? We're going to be talking more about the fiscal discipline and the gross borrowing number. With that in perspective, you think financials are still an attractive bet? Especially after the run-up that they've seen in the previous financial year.
But also the correction that we have seen in the recent times.
Sure.
Okay. So yeah, the mood has got completely upset in recent weeks as far as the financials are concerned. But one thing, if you say what is the prayer of the market at this point in time, I would say that is the government sticks to some kind of fiscal discipline and delivers a fiscal deficit in the vicinity of 5.9%. And should the government deliver on this, I think that is positive for the markets, that is positive for the bond markets, and that is positive for financials. So one stock which we want to talk about and something which has corrected and the valuation is looking extremely attractive is SBI.
Same old State Bank of India. The story still lasts for them.
But you look at the transformation that has taken place, in this giant. Credit growth is extremely robust, especially on the corporate side. They are way ahead of the competitors. Their credit cost has fallen to all-time low. Their slippage ratio in the last reported quarter was 33 basis points, coming from the largest lender in the country. And SBI has very decent subsidiaries also. I'm just talking from an investment case. Should the budget also not deliver on that magic fiscal deficit number?
That was exactly my question. What if the budget doesn't deliver on these themes? Will the stock, not a recommendation, but just the discussion that we've had, still hold true?
Yeah, I will first talk about SBI and then I will talk about the remaining stocks. So, the stock is trading at 0.9 times, and we need to remember that SBI has a very valuable franchise in the digital platform, which is YONO. And so that's a huge value unlocking potential that this India's largest lender has. And you're getting it at this kind of a very attractive valuation after the significant correction that it has seen in recent times. So again, SBI, a good stock to own from the long-term perspective. And your question is extremely valid. The budget might not deliver. Then are you saddled with these stocks? Not at all. These are absolutely high-quality investment companies, and you should actually add more should the market corrects meaningfully.
Sure. Let's cut into the finance minister and the pictures out there that have been coming in, just to give you a visual of how the big day is going to be shaping up. Looks like it's going to be a decent start, going to be with some enthusiasm out there. But let's actually get back to our discussion and figure out, if we could talk a little bit about how this has been moving out. There is a lot of chaos clearly, and I think all eyes now would be on the market's reaction, how that is going to be playing out, especially with the kind of valuations that we are looking at. You've done a piece giving a trend analysis of more than 10 budgets. Could you just take us through that?
Yeah, this is an empirical exercise that we did out of curiosity. Because as you know, from the highs of December, The headline Nifty has corrected by close to 7%, and the broader market even more, and some sectors have felt the heat even more. So we wanted to look at the valuation of the markets as we get into the budget in the last 10 years, and what has been the market's return 7 days post the budget. Interesting empirical observation again. I would like to reiterate the fact that it's just an empirical observation. Whenever the one-year forward earnings multiple of the market has been lower than 20 times, the markets have always given a positive return 7 days after the budget. In the, I mean, 1 week return after the budget.
What's the
and
valuation
the current
right
valuation
now?
is about 18.5 times 1 year forward earnings. But that's just an empirical observation. It all depends on what the budget delivers, which you will get to know in a couple of hours. And let's hope for the best.
All right, that's the chart up for you. Market valuation now sitting at a number less than 20 times. Good chance, given the history, that the market would be in positive for next 1 week. That's what at least the trend analysis say, at least on the face of it. But with this, it's a wrap. Thank you so much for tuning in. But don't go anywhere. Coming up next is Opening Bell.
You know, the 1991 budget speech of Dr. Manmohan Singh is very often regarded as a watershed moment. Actually, it was a watershed speech, but it wasn't a watershed moment, because the most important policy changes which constituted 1991 had already been announced. The devaluation was done before the budget. The trade policy changes with which I was involved, Mr. Chidambaram was then the trade minister, I was commerce secretary, that was also announced before the budget. The industrial policy had been announced 5 hours before the budget. So frankly, the budget speech went to the public and said, look, we were in a crisis, we've done all these things.
Right.
And now I'm giving you the reason why we are doing it.
Right.
Since then, budget speeches have been converted into something that's going to announce a policy change. I think policy changes should be made independent of budget speeches.
Sure.
And the best budget speech would be one which says, you've already heard the policies we are going to follow. Here are the numbers that have to be fitted into the budget. And then a rather matter-of-fact presentation of revenues and expenditures.
Sure.
That's what we should do.
Sure.
By the way, if we get that, I think it will be a real breakthrough.
The Honorable Finance Minister and the Honorable Prime Minister have steered the ship really, really well through these very difficult times. So I think they just need to stay the course. And there are 3 or 4 areas which they have prioritized, and I think they should continue to do that. Number one, we have to continue to provide support to vulnerable populations.
Okay.
We've done that through the Pradhan Mantri Garib Kalyan Yojana. We've done that through the fertilizer subsidies. We've done that through a big support for Narega and so on. So support for vulnerable populations, which of course has driven up our fiscal deficit, but is still required given the commodity price shock that I spoke about earlier. So that's number one priority. Support for vulnerable populations. Second important priority is continuing on the reform measures and really putting in place a very forward-looking industrial policy. And that's coming through the PLI scheme, that's coming through our commitment to climate change and what we're trying to do to green our economy. So I think that's the second area, which is really a very forward-looking industrial policy. The third area, of course, that the government has been emphasizing, correctly so, has been significant capital expenditure. So capital expenditure over the last year or two has gone up by 1 or 2% points of GDP, which is a substantial number. And that, of course, has meant that many sectors of the economy, like construction, like steel, like cement, have done extremely well because of the
Good morning and welcome to Moneycontrol live stream. Today is a big day. In less than 2 hours, the Finance Minister Nirmala Sitharaman will present the budget in the Parliament. We are here, I'm here with my colleague Santosh Nair and Rohit Srivatsav from India Charts to decode how the markets are poised ahead of the budget. And of course, later in the day, we will analyze the budget threadbare with a whole bunch of market experts. Welcome to Money Control. The first thing is I want to set the stage for the conversation today. The fact that we are entering this budget with very modest expectations. In fact, I should say we are actually entering the budget with a great deal of caution. And there are three defining things that have played out in the past 1 month when the Nifty has actually shed about 2.5 to 3%. The first part is that there is a huge India sell, China, buy China and cheaper markets across the world, especially emerging markets, that has been playing out. And that has been a reversal of sorts from last year when India was, despite meaningful outflows, we were still doing very well compared to rest of the emerging markets, barring 1 or 2 markets like Brazil and Indonesia. The second part is that in the past few days, especially the last 1 week, there was this big factor, the Adani effect, which was playing out in the market, which was a dampener of sorts for market sentiment. And the third part is that today, the financial event itself, we have not had too much in terms of expectations, but the expectations themselves are muted, and therefore the market is perhaps not factored in very much in this budget. Net, the first part perhaps is going to play out. We will talk to other people, Rohit and Devina Mehra, who will shortly join us to talk about that part. The second part has already got resolved because the Adani FPO went ahead yesterday. And the third part, which is the budget itself, we will know in a couple of hours whether the finance minister has something to surprise the market, or are we going to maintain status quo? Santosh, your take.
Well, clearly, typically what you see in the run-up to the budget is always upswing in prices, expectations, tax cuts and stuff like that. But this time, as you mentioned, the three key reasons all have led to traders taking a very, very cautious view. So I think that could cut both ways in the sense that if there are any kind of positive reactions or positive announcements in the budget, you could see a big up move simply because players are not holding any positions. But on the other hand, if, for instance, the budget doesn't deliver, you already have the sentiment which is very negative, and the cautious mood, it could further hurtle downhill.
Fair enough. Rohit, your take. How are we poised technically? The derivative setup, the charts, what are they telling you today?
So it's a very interesting setup, I think, ahead of this budget, because if we just study history, we have seen that markets tend to find key reversal points right around this event, especially when you've had a prolonged upward trend prior to the event, or you've had a prolonged decline, or else a consolidation where there's been little or no action. So when you've seen any of these phases, the post-budget scenario has always been the opposite of what it was prior to the event itself. So if you've had a substantial rally in the last 2 months into the budget, you've seen a top. If you see a decline, as is the case right now, we've often seen a bottom. Even if there's a consolidation or dullness in the market eventually realizes where there's nothing negative in the budget and then often rallies out of it. So the 1 month that follows the budget is very interesting in the sense that it relates very much with what has happened before. Now that's one part of it. Now how did we get here? We've had 2 months of decline. And in this 2 month period, you have a couple of extremes being reached. One is, of course, we've retraced 61% of or 66% of the entire rise that we saw from the October bottom, that is at around 16,747. Second, we've got one of the highest volume of puts to calls ratio since 2009, which means the pessimism on the street, which was already there at the start of the year, but got even more thanks to the most recent events around the Adani group, is sort of giving us an extreme negative sentiment point to start with, which also is a sign to take a contrarian stance on the market. And the third one, which has happened in just the last 3 days, which may have gone noticed or unnoticed by the street, is the FIs, which were sort of close to not having much of a short position a week ago, are now close to 94,000 contracts short at the end of yesterday. So that's we've seen that whenever they've had close to 100,000 contracts short, the last 3 to 4 occasions we ended up with a short covering rally. So the setup to me is very much one where you would expect a post-budget rally, unless there's something very, very negative. To keep that from happening, I think we are set up for a good move ahead.
Well, Rohit, you mentioned that the put to call ratio is at an all-time high. So what does this, if you look at it the other way, it means that the smart money clearly is already anyway betting on the market not going down further. That's what one would make out from that, right?
Not really, because there are two parts to the put call ratio. One is the open interest and one is the volume. The open interest is actual positions. So the open interest put call ratio is down, which means that there are more calls outstanding than puts in the market. But when you look at the volume, you're talking about trader sentiment. And if a lot of traders are trading in puts, it shows that there's a lot of pessimism on the street. So a similar number, there was a 3 or 4 year high in the US PCR as well at the end of December as the Indian PCR was rising. That has resulted in the US markets rallying from there. It's just not happened in India for the reasons that you mentioned earlier, that there's been some fund shifting away from China, towards China from India. That's been one of the pressure points, I think, for this month. So our markets actually not behaved like the rest of Asia or Europe. But I think that's probably coming close to an end, because most of the selling from active managers will end. And then it's only the passive money that, then continues to drive flows. So that's what we are waiting for. And I think this FII positioning sort of also indicates that sentiment, reaching an extreme.
Sure. We can probably get Devina Mehra, her thoughts. Today is not only a big day because of the budget, there is also another very important event, which is the FOMC, the outcome of the FOMC meeting, which has been actually a defining factor in how the markets have behaved over the last 1 year. This year too, I think the entire pain of, of inflation is really not behind us. The markets are factoring in something, and every time in the past, the markets have gone in with a little bit of strength. It has been disappointed because Jerome Powell has made it a point to talk down markets in every single FOMC meeting. So yesterday, S&P was up 1.5%. We have to really wait and watch what is the outcome, which is not going to be very surprising. Everybody is expecting, majority of market participants are expecting a 25 basis point hike. Perhaps what is more important is again the tone of what the Fed chair talks about, and we'll have to wait to see that. And obviously markets have a mind of their own, and they will figure out whether it is moving towards dovishness or hawkishness, and we'll have to wait for that event also to play out to see beyond today how the budget proposals impact the markets.
Well, very clearly, I think the one overhang on the market at this point still is the short-term, long-term capital gains and the tweak to that structure, because that is something that the market has been watching with bated breath. So in case of any negative surprise there, I think that really could lead to some kind of a big bearishness change in sentiment, because other than that, clearly, as even Rohit mentioned here, overall the factors clearly seem to be pointing towards a post-budget rally.
Sure. Anything in particular, Rohit, specific to the budget that will impact the markets?
Well, the budgets would really
negatively, because you seem to have a view that we are going to be we are going on the bullish territory now.
Well, the negative could be if you try to raise taxes, and that would not be good for stocks in general. There was some news around such possibilities at the start of the month. Will you touch LTCG? Will you raise taxes somewhere? I think
just hold that thought. Markets opening, so we go to Karunya to get a market opening check.
All right, so this is the time when the markets open, and there you have it, just in line with the SGX Nifty. The Nifty 50 has opened very firmly in the green, up more than 0.5% as we speak, 100-point gain coming in, just an hour to go for the budget, or actually 2 hours to go for the budget. So right now we're in very, very firm fettle. Sensex is also up. The quantum of the hike is the same, up about 0.6%. Mid-cap indices also looking fairly comfortable. Advance decline ratio clearly in favor of the advances and in favor of the gainers. So yeah, Nifty and Sensex both looking very firm. Let's pull up the Bank Nifty as well. Okay, there you have it, 426 points up for Bank Nifty. Of course, banking stocks also will be in focus, not just because of the budget, but in the anticipation of what the FOMC decision will be later today. So banking stocks is something that you should be watching out for. Even in the earlier show, we were talking about how several large cap lenders, even HDFC Bank, which has been a tad muted for all this time, looks very firm today in trade. Let's pull up some of these defense sector plays as well, because that is one core sector that could be in focus. I'll come to others as well, but let's start with some of the defense plays the likes of BEL, HAL, BEML, Bharat Forge and L&T, how they're doing, if we could see some of these stocks. Okay, data patterns. Good set of numbers as well delivered. So it's having a really good week, and today also looking okay. There you have it. There's Deccan Cement, okay. BEL up 0.8%. So even looks like most of the breadth of the market is looking pretty comfortable, pretty firm right now. Nothing to worry about, at least as of now. We'll see some reaction perhaps when the budget speech starts, and depending on how it goes, we could see some knee-jerk reactions then. But right now, we're pretty much sticking to the global cues, sticking to domestic cues as well. Earnings have trickled in, so you have the likes of Britannia and Ashok Leyland to focus on. Then last evening, you had a bumper set of numbers being delivered by IHCL, Chola Mandalam, Max Financial. These were some mid-caps that could be in focus today as well. And let's also pull up some FMCG names, especially the rural-centric ones, the likes of Dabur, the likes of Imami, because if indeed the finance minister will be boosting rural spending, these are some stocks that you might want to keep on your radar. Okay. A positive open for Dabur as well. ITC looking a tad bit lackluster, but I mean, ITC at 350, I don't think we can really complain right now. And even the quantum of decline right now is very, very muted, so nothing to worry about there. HUL again looking very comfortable. It's trying to find its feet. Just close to that 0.5% mark higher. Fertilizer stocks, another pack that could be pretty much in the limelight today. Fertilizer, power, green energy and renewables. Now these are some broad sectors that we should be keeping on our watch list today. There's Chambal Fertilizers. Deepak is looking pretty firm. In fact, our technical analyst also earlier in the day said Deepak is looking very, very resilient and is poised for a good run up from current levels, and that's exactly what's happening right now. Deepak Nitrite, I think Mahalakshmi largely we're looking at a very comfortable market right now. No extreme reactions on either side, but yeah, clearly the market is tilting towards the gainers, is tilting towards a buying sort of a momentum and a buying mood right now. So back to you. As and when we get more updates, as and when the budget speech gets over, we'll get more market updates live here on Money Control.
Fair enough. Thank you so much for that update, Karunya. It's things that business as usual, because usually on the budget day, before the budget, the market tends to be sort of, working in a very narrow range. It's just, waiting for the budget, and the real volatility begins as the budget speech begins and the key numbers are announced. We'll wait to see that and what happens for the rest of the day. But before that, Santosh, your take.
Well, clearly it's been a steady start for now, but at the same time, the chatter that one hears in the market at this point is that over the last couple of weeks, at least, a lot of people, a lot of traders have lost fair bit of money, which is why the overall mood of caution. So in that sense, it's still the market, I would say, at this point is fairly delicately poised. And you could, technical analysts are looking at some of the key support levels at this point in time. I just want to toss to Rohit here. Rohit, you'd been bearish for a while now, and now the change in sentiment. So if you were to look at key technical levels at this point, which are the levels that you would be looking at?
So I mentioned the 66% retracement of the entire up move that we got from the October low. So that level comes in at around 17,475. Ideally, it should hold on a closing basis. So we did see a slight intraday dip below that level, I think, in Friday's trade, but we didn't close there. So as long as we don't close below 17,475, I would think that the retracement is complete and, the risk reward is favorable.
Well, and in terms of on the higher side?
So on the upside, we start with, initial resistances close to say 18,200, 18,300. That's where it was not able to really cross that zone in all the up moves it attempted in the early part of January. So getting past 18,200, 18,300, I think would be the first hurdle. Once we do that, we can become open to testing the highs again.
Yes. Fair enough. We're just waiting for Devina Mehra, chairperson of First Global, to join us. Hi, Devina. Good morning.
Hi, Mahalakshmi. I've been waiting a long time.
I'm sorry about that. So, Devina, today is important not only because of the budget, but another event, the outcome of the FOMC meeting. What is your take? How are we poised?
As far as the Indian market is concerned, I don't think there's any point anticipating what the impact of the budget will be, which anyway is usually different on the day of the budget and the days that follow, because on the day of the budget, there's normally a knee-jerk reaction where people don't understand what's going on. And then only once they understand what's going on that the thing moves. And as far as the FOMC meeting is concerned, there is, I mean, the 25 basis point is what is built in. I'm sure Powell is going to again reiterate that they are not going to go easy till inflation comes down. Now, there are a lot of things where there has been signs of the markets, not the markets, but the economy slowing in the US, I'm talking about in terms of the PMI numbers, the industrial production numbers, inflation itself, housing. But the one thing which still remains very, very buoyant there, relatively speaking, is the labor market. So it depends on how much weight the Fed gives to that. So I don't expect any great surprise today. The real question will be that how long will they keep rates up? And that may or may not be so clear, because today I expect him to anyway reiterate that we'll do what is necessary, which has been the theme of his song. In the Indian market, I don't think it has a very direct impact. I don't think what the Fed does is going to very directly impact the market in the very short term. In India, we've been talking about the market not doing so well for a month or 2 months, but then you have to remember that last year, India was one of the best performing markets in the world. It was number 10 out of 42 countries, while it was down 4.7% in dollar terms. That is against global markets being down about 18.5%, S&P also being down 18 and odd percent. So relative to the global markets, it did very well. So this 1 month, 2 month kind of thing is not of great relevance. And I still expect India to continue outperforming.
Totally agree to that. But Devina, every time we went with some level of strength into the FOMC meeting, Jerome Powell managed to talk down the market, and the market usually reacted negatively. Do you think the markets are still so sensitive to what Powell says? How do you see that playing out in the stock prices?
Actually, I mean, often it happens that the markets react one way and then end the day another way. So that has happened. If you see the last FOMC meeting, right, that's often happened quite often, that the market immediately reacts one way and then ends up the other way. So now what you're seeing in the US is that a lot of the tech names are bouncing back from their from the great lows that they had hit of 40, 70, even 90% down. And last year, out of those 42 indices that I mentioned, NASDAQ was close to the bottom, I think 38 or 39 or something like that. So from there, even though we all know that theory that growth stocks get hit more when interest rates are high because their cash flows are further out, you're now seeing some bounce back in that. So that's for now, that appears to be the case. Let's see how long that lasts. That I mean, we are still not very clear that whether that's a very long-term trend or not. But for now, you are seeing that the higher risk bucket, you can say, of the market is actually giving the returns because it was so beaten down.
Sure. So, Devina, you've made two important points. One is that you are bullish in India. Last year, we had a great year, so it is only natural that we are starting this year with some level of, we are, if I may say, caution, and we shouldn't read too much into the first month's, 2.5% loss. The second point you're making is that increasingly, India's growth is going to define our trajectory. Am I right?
Yeah, I mean, last year, if you remember, in the beginning, I had said that India will outperform. So,
correct.
So I had said that at the beginning, or even the Diwali prior to that, because India had come out of a very long period of underperformance.
So you do expect this, this India-China, swap trade will quickly end?
I am not betting on whether FII money comes in or not, because that is not, as I've said plenty of times, or with you and with on other channels also, that I don't track it, because the data shows that there is really no correlation between the FII money coming in and the market, whichever direction the market goes. The biggest example of that is that when FII money came in first, which is 93, 94, 94 to 2003, 9 years, the market gave zero returns. The returns had come prior to that. And this is like fresh through one big source of money which didn't exist before. And there was no domestic mutual fund space to speak of. And yet it didn't move the market. So, there is no point trying to second guess what global asset allocators will do. Again, this is not what's going to drive the market. So you have to look at what's happening in the economy, in the companies, in earnings, as also, as I said, the history that you went through a very long period of underperformance, came out of it only in 2021, and that you're still away from the trend line, that Sensex compounding of 15-16% that we think of. You were far below that, so you're just doing some catch up.
Sure.
Hi, Devina. Santosh here. Now, I heard you mention recently that sentiment is always a contra-indicator. So what do you make of the current sentiment in the market? And what does it seem to indicate?
On your discussion, you were talking about sentiment being at a low or pessimism through various ratios that you are tracking on the derivative side. Yes, I mean, that is what academic studies also show, and not just in the US, across the world, Brazil, Portugal, wherever studies have been done, it shows that sentiment is a contraindicator. When sentiment is low, people are pessimistic, the next period returns are above average. And conversely, when people are very, very in a happy mood as far as markets are concerned, very buoyant, then the next period returns are below normal. And the biggest example of that, 2021, you had all these ETFs and funds being launched in India on the NASDAQ. And at that time, I used to tell people that just because NASDAQ has done brilliantly in the last 3 years, that is just recency bias. No theme lasts forever. This is not going to last forever. And then when NASDAQ crashed 40% thereafter, the same people wanted to head for the exit. So you are compounding a bad decision. So when coming back to your question, yes, sentiment is a contraindicator. So if there's pessimism, that's what data shows, that the likelihood is that the returns will be above average in the succeeding period, in the next period.
I have turned bullish on pharma, and you said that you've added some auto components also to your portfolio. What is the broad story on auto looking like at this point, Devina?
Auto components, and on autos, we would not be, auto components, we might be slightly overweight because the index has very little weight, but it's not a big story yet on autos because still a large part of the economy is hurting. Pharma was more that we were underweight and we had not liked it for a while, and this time our systems threw up a number of names. So we have added, and probably relative to the index, we might be a little overweight, but it's not like an outsized position otherwise. And as far as autos are concerned, we don't have many auto companies, and I don't think we'll be heavily overweight, but consumption in India still is not broad-based. That is my concern, that still a large part of the economy is hurting. If you look at, for example, two-wheeler sales, they are still, while they are up from the lows, they're still pretty much down in the dumps, even if you look at the 10-year history. And if you look at higher-end SUVs and cars, those are selling. Again, entry-level cars, not so much. And if you look at Narega numbers, still more people are in need of work compared to 2018-19, again up from the COVID lows, but still, down, the job requirement down from the COVID lows, but still very high. If you look at unemployment numbers, still not good, because whatever employment has been generated again shows up in agriculture. which shows that this is disguised unemployment because people have to move away from agriculture for the economy to progress. 80 crore Indians still need free rations. So that shows you that the consumption story is still very much only at the higher end. At the organized sector, employees have done well, the creamy layer has done well, but the broad-based thing is not there. So that is one thing where I hope this budget does something, particularly on unemployment, because the rest of it will really be driven by whether people are working or not.
So Devina, your take has always been, and I agree with you, that economy and stock markets are two different animals altogether. Do you expect anything in the budget, and I will exclude the short-term capital gains or any tinkering around capital gains, because that will definitely have a sentimental impact, and traders will react badly to any negative news there. Is there anything else in the budget that could actually impact or alter the complexion of any sector or pockets of stocks?
So capital gains, I doubt whether they're going to increase the rates or anything like that. That's very unlikely. They might do some rationalization because right now, which is what the finance ministry officials had been talking through the year also, because it's a very complex structure with each asset having different holding period to qualify for long term. There is different rates, different indexation. So there might be some rationalization, but I doubt whether the government would want to spook the markets, because anyway, to collect capital gains tax, people have to make capital gains. So if you kill the golden goose, that also is not going to help the exchequer in any case. Other than that, I suppose it is more the policy announcements, maybe on infrastructure, maybe on something else, which can have a direct impact on certain sectors. I doubt whether the taxation side you'll see anything. The PLI scheme is already there. Unfortunately, just a digression on what we were talking about earlier, the PLI scheme is availed of mostly by the larger organized sector listed type of companies. But those companies don't generate a lot of employment. And not just now, for 20 years, I have seen that companies really boast about that I have set up this new plant and it hardly has any labor. So they try to minimize rather than maximize employment. So that's the other thing. So while PLI might be good for the manufacturing sector and so on, but it need not necessarily generate employment.
Sure. Devina, first of all, you are not allowed to say you need to make capital gains to pay taxes because you are bullish. So the assumption is that we are going to make capital gains this year.
I said, like, if they change the capital gains tax, that's going to spook the market definitely for sure. So from the government's point of view, it doesn't make sense to potentially reduce the amount of capital gains the people at large make.
Good logic. Okay. So Devina, you're saying that, sorry, I'm blanking out. You were talking about unemployment, creating more jobs. Clearly, and in fact, we were talking about all these, PLI schemes being availed by larger companies. The fact is that, all of that doesn't really translate into earnings growth for our companies. The dynamics there are very, very different. So I'll ask this question again. Any pocket that you see where there could be actual earnings impact or the complexion of stocks and sectors change based on budget announcements?
So as I said, infrastructure is one area where if there are a lot of announcements. So depending on which particular sectors, at a broader level, you will say cement if overall infrastructure a boost is there. But let us see, because there's also constraints on the fiscal side. So I don't know how much actual spending you'd be able to do. Last year also the government capex has begun to, this year basically, there has also been slowing down after a couple of years when it was the main driver of not just of overall GDP growth. So that has been slowing. So I don't know how that balance will be there between what you want to spend and managing the fiscal deficit.
Sure. One last question.
Yeah, one last question, Devina, from my side. What are your quick thoughts on the banking sector? That's been one space you've been bullish on for a while.
Oh, I've not been particularly bullish on, in the sense that...
and for a person who is generally bearish on the financial...
coming out of like being totally underweight and having negligible weight from 2020, which is when we started our PMS. And it's a sector that I generally don't like. So from there, by my standards, I have turned positive somewhere in the middle of the last calendar year. And because it again came out of a long period, 2020, it was the only sector in the negative. 2021, it went up only half as much as the market. So again, once that trend changed, and also fundamentally things changed, the NPA cycle was behind them. The interest rates going up means their margins go up, at least in the short term, because the loans get repriced immediately, deposits don't get repriced immediately, and the credit growth was good. So all those factors, we went to about market weight. With which price action, it has become overweight. I still remain positive. That's definitely a sector I still like, even though I am always, as I say, a cautious investor in banks, because you don't know where the negative surprises are hiding. But like this last week's whole impact after this whole Adani report was clearly overdone, which is what I said even at that time, that even banks which had no exposure to the group got hit and so on. So I remain positive on the banks. Not that we are hugely overweight or anything, but that's definitely a sector that for now looks like it should do decently well.
Thank you so much, Devina. We'll let you go. We have with us now Pankaj Tibrewal, Senior Executive Vice President from Kotak Mutual Fund. Pankaj, thank you so much for joining in this morning. Okay, let him join. Rohit, in terms of sectors and stocks, is there any pocket that you see that is looking well poised either for a sharp bullish turn or a bearish turn? You're bullish, so maybe that first.
So on the bullish side, I think I look at the two sectors which were the weakest during the last year. One is, of course, technology, and the second is the metals pack, which is related to commodities. I think both of them have meaningfully bottomed out. You're seeing commodity prices rise again in terms of copper prices or aluminum prices. And similarly, the IT stocks have retraced, I think, almost 50% of the gains that they made from the 2020 lows, which is a pretty steep cut that the IT index has seen. I think we are done there. We've started to move up, and I think it'll continue in line with what the Nasdaq has already started to do. So I do think IT stocks should continue their recovery from here.
Also, Rohit, just wanted to pick your thoughts on how some of the key banking stocks are looking on the charts, starting with HDFC Bank.
Well, tricky spot, but I think HDFC Bank is actually held out better than some of the others recently. It's of course a slow mover, but consistent. So it's not really fallen, I think, both in the sell-offs that we saw in October or in December, and in that sense has been mildly outperforming. So I think there's strength there. Even recently in the last 2 days selling, it didn't make a lower low, so that really speaks well in terms of HDFC's position.
There's always been this debate on the ICICI Bank versus HDFC Bank. So looking at the charts, what are the charts saying on that fight?
So I always look at relative strength. I mean, who's doing better in terms of near-term performance versus the other, and then we try to chase that strength. I think if I do that, then actually ICICI Bank is a winner in the last couple of months. It has been doing better, and so I would give ICICI Bank the heads up right now.
Tell me about the PSU pack, because that has been the strongest pack over the last 1 year. But then you see, the performance in the last week. There seems to be fresh worries emerging, and that was evident in the stock prices. In one day, you see 5-10% moves on the downside after a huge outperformance. Is that symbolic, or is that like an inflection point, or we should ignore it?
A lot of the moves I think we saw recently were because of selling that emanated from the Adani problem. And I think, if I'm not wrong, whatever we saw on Friday would be related to margin square-ups, people who have made losses booking. So you saw some wild moves. I don't think we should take that as a trend. If we look at PSU stocks, they are still in the value bucket.
Right.
Even last year, when I was, before I turned bearish, I was bullish on the PSU stocks from that angle. I think sentiment at that time was that no, PSUs are a don't touch. Now at least that sentiment has changed, which is a huge beginning. And I think it's likely to stay. I think the trend in PSU stocks in general, because if the economy broadly performs, PSU stocks do tend to do a lot of business and do well. So I think we should have a positive view on them. They remain good dividend yield stocks as well. So in an environment where interest rates peak out or they do roll over, they provide that edge in terms of downside risk being capped because of the dividend yield.
So that's more a medium-term story, right?
Yes.
Immediately going into next 1 week, next 1 month, what do the charts tell you?
So the only thing I fear with PSU stocks is sometimes ahead of a budget, they do get bid up quite a bit, and there's always a case for a short-term pullback. I'm not sure that definitely happens, but because the market's been down, but we have seen PSU stocks get bid up ahead of budgets and then cool off after the budget. So from a pure 1 month point of view, I would be a little watchful on the structure, but remain constructive slightly medium to longer term.
Again, the point that Devina talked about, is the correlation between US stocks and India stocks really weakening now?
I think these things happen temporarily. I mean, we've seen deviations between Indian and US stocks for a couple of weeks, many times in the past, but eventually all the markets end up aligning. And the reason is very simple, that global liquidity is really flowing through all of these markets simultaneously.
Right.
And so I think the pattern will come back to alignment. It's just been a phase where we've seen this break between the two markets.
And Rohit, have you been tracking any of the Adani Group stocks?
I have, and I think while nobody would really want to comment after something like this, but I do think that at least near term, I would sense the worst is over. And why I say that is, again, if we look at simple indicators like the RSI, for the Adani Group and a lot of the large caps in the Nifty, the RSI actually dropped below 30, which means simultaneously all stocks went oversold on Friday. For the Adani Group, very, very low. So they went to single digit readings. You had an 8 or a 6 kind of RSI. That usually doesn't hold for very, very long. So, short term, you start feeling that, yeah, this is the worst you've reached, and, things need to pick up from here. So, but what you can't bet on is the pace, because when sentiment is poor, it takes some time for things to improve. Even if we go a year back, when there was a SEBI report related to the group, the stocks remained punished for a couple of months and then picked up from there. So you need to give it that time, but it does look like most of the negatives are priced in for now.
Sure. In fact, that's one question. Is there any historic, evidence that, when you have these sharp gyrations, either on the upside or on the downside, and I can only think of index levels, for example, before the subprime in August, how the markets fell, or before the real .com crash happened, how the markets fared, 6-8 months before the real crash happened. Those become pivotal points, at least in, I'm not a technical analyst, but when you look at movements, when you see such large gyrations, it's indicative of something to come. Is that generally the case, or you have to look at each one case to case?
So what you would want to see when you're trying to, make a prediction, like are we in a situation like year 2000 or year 2008? The sell-off in equities needs to become very, very broad-based. So one of the reasons for me changing my view is essentially that during the sell-off that we saw in India last year, the fall did not become broad-based and deep. Of course, there are some stocks that did fall quite a bit, but there are others that did not. But when we see 2000 or 2008, it's once you peaked, every stock or every sector fell, and there was no place really to hide. So if that doesn't happen, then that this is not the same market. And that's, I think, that's what we are really looking at. Sentiment is looking the same because everybody's turning bearish, but the market behavior is not reflecting previous bear markets. That's
sure. Fair enough. So Pankaj Tibrewal, Senior Executive Vice President from Kotak Mutual Fund is here. Pankaj, good morning. Thank you for joining us this morning.
Good morning, Malik. How are you?
Very good, very good. You seem to be in all smiles today. What is the positive news you're waiting for?
So the smile always has to be there because budget comes every year. And I think last couple of budgets have not been bad from market expectation perspective. And so we believe this year should be. And I think the government has walked a very good path and adjusted themselves according to the circumstances over the last 2 years. Last 2 years warranted increase on focus on growth, because we were coming from COVID, and that has done well. The tax collection estimates were very conservative last year, even we said. And when we are ending this year, it clearly shows that government is overshooting on the budget estimates. And clearly our view this time also, which will be known in next 1 to 1.5 hours, that the finance minister will keep focus on growth and walk the tightrope on the fiscal prudence as well. So let's see how's the borrowing program. What is the fiscal deficit number the government is targeting for 23-24? And hopefully there's no tinkering on the capital gains tax. And if that's the case, it will be a good news for the markets. So no big event will be a good news for the markets in our view.
Sure. So Pankaj, as you rightly pointed out, last 2 years we have seen huge surprises both on the GDP side, and tax buoyancy has been absolutely wonderful. And to government's credit, they have been very conservative in estimating, tax revenues, and that has been a very pleasant surprise. Of course, crude also did not go the other way, which is what we were probably fearing last year. Now, going into this year, what will be a positive surprise from a macro standpoint? Last year, Nirmala Sitharaman said that we will be on a path to fiscal consolidation. She'll bring down fiscal deficit to 4.5% in 3 years, which means that we should at least be expecting about 60-70 basis point cut to be seen as a credible path to fiscal consolidation. So 5.8, 5.9, what is your expectation on the deficit front?
So I think the number somewhere could be between 5.8 to 6.2. I'm keeping a spread of 40 basis points because there are too many moving parts in that. And I think that probably will be a good number where markets will not get disappointed at all. And our sense is that the tax collection and the structural reforms which have gone into the country over the last few years makes me believe that tax buoyancy will continue. And I always say that 100 crore bank account, 100 crore Aadhaar and 100 crore mobile connection is the deadliest cocktail India has got. And COVID has accelerated that. And in coming years, the way we have got surprised on GST, over a period of time, I won't be wrong in saying that the country would be surprised on the income tax collections as well. So our sense is that tax buoyancy is continuing. The only thing we will look for in the budget is that the bottom of the pyramid is suffering, and that impact now we are started to see on consumption. Even in last quarter, when we did the field survey across distribution, the thing which came across for the last 2 months that consumption has slowed down materially, except 3 sectors, jewelry, hotels, airlines. Everywhere on the consumption side, we were seeing some kind of a softness. And I think bottom of the pyramid is now getting impacted badly. And I think there needs to be some boost to consumption. And the impact should be visible over the course of next 12 months. Last 2 years, we have focused a lot on infra, which has a higher multiplier effect, no doubt. But this time, along with the infrastructure and capital formation, we need to see the bottom of the pyramid on the consumption side. And I think that's where the support is needed.
Fair enough. Thank you so much, Pankaj. We'll come back with A. Bala will join us next. But before that, some pictures coming in from the Finance Ministry, Finance Minister's pictures. You can watch them and catch us on the other side with A. Bala, CEO of Birla Mutual Fund.
When I ask economists what are the big numbers we should watch out for, they invariably say fiscal deficit. Why are economists and investors so keen on the fiscal deficit coming down to 5.8% of GDP or even lower? Well, they explain that this is because a higher deficit over the years has meant that a large chunk of the government's money is going to pay interest on past debt. Before COVID, the government had succeeded in bringing interest as a percentage of total expenditure down to below 20% from 25% in 2015. But the post-COVID rise in fiscal deficit has pulled interest payments back over 23% of total expenditure. It's important to bring deficit and interest outgo lower so that we have more money for development and for capital expenditure. Another achievement of the past 2 years has been the slow but steady rise in tax to GDP from less than 10% in 2015-16 to 11.5% last year. However, it is likely that this year, FY23, tax to GDP has fallen to 11.2% because of lower corporate profits. Indeed, tax to GDP may slip a little more in FY24 to maybe 11% if, as analysts expect, the tax revenue grows by only 10% in FY24. And what's important, even the high 11.5% tax to GDP which was achieved in FY22 is less than the 12% tax to GDP that was achieved way back in 2007-8. Well, as a country, we rank among the lowest in terms of tax to GDP. That's something we have to improve. The other big number to watch is, of course, capital expenditure. A steady rise in capex is one of the achievements of this government. Economists are expecting the capex to increase by at least 15% in FY24 over FY23. That will take the capex as a percentage of GDP to a record 2.9%. Hopefully, we achieve even 3% in FY24. This higher government capital expenditure is needed because private capex is still tentative and exports are falling due to the global slowdown. Government capex is actually the prime, if not the lone stimulus for growth today.
Well, I think given India's demographic dividend, employment and employment creation remains should be the key focus for policymakers, I think, from both not only the budget but an overall economic agenda perspective. And I think now if you take a step back and see what the government has been doing in the last, say 3-4 years odd, with the reduction in corporate tax rates and then the introduction of production-linked incentive schemes and pushing public capital expenditure higher through the budget and aggressively allocating for capital spending in the budget, it does show that their intent is to promote the investment-led growth model, and that bodes well for employment generation or creation in a country like India where there is surplus labor. So in our view, the budget, I think, will also focus on jobs and employment as one of the key themes, but and the way it will be delivered or the way jobs will be created will be through higher capital spending or public infrastructure led spending, and also probably some measures on the to promote private capex. So as it's incentivizing manufacturing through production linked incentive schemes, there could be possibility of, say, higher allocation for PLI, or maybe introduction of some new schemes, new sectors in the PLI scheme. So all of that can also happen outside of the budget, but obviously budget does provide you a good platform to announce those sort of measures. But bottom line, we think that for employment creation, the focus should be on capex and capex led growth, which then creates the virtuous cycle, and you get the job growths as well within it. So yeah, no, we don't expect any changes in tax rates, and you're right, this always comes up during the budget. So we definitely don't expect any tinkering of or lowering of the personal income tax rates to sustain consumption or demand. And in our view, the best way to actually create more demand or more sustainable demand for India will be jobs and employment creation. So as you create more jobs and employment, income growth will go up, and that in itself will create your virtuous cycle of more consumption and more investment.
Welcome back. We are now joined by A. Bala from Birla Sun Life AMC. First of all, let me give a little backdrop about how the last 2 years have been in the macro sense, which has been phenomenally good. Last year, GDP numbers were great. Tax buoyancy was great. One, because the GDP growth itself was good. We saw very good recovery in consumption also, investments also. Plus, there was, the effect of compliance in taxes because of GST. There is also a component of that. The third factor, of course, was inflation. So all these three combined, we had great tax buoyancy. This year, as we head in, first of all, do we build on the growth that we have seen in the last 1 year, or do we sort of see some level of moderation because last year there was a lot of revenge spending and so on? The second part is inflation comes off a bit this year, which means the nominal GDP numbers should also moderate a bit. And of course, the finance minister has the task of reining in the fiscal deficit, even if we were to see moderate growth going into the next 1 year. In that context, Bala, what is your expectation?
I think this budget expectation would be more to drive the growth further. I think having seen the last 2 years of success, every budget increased capital expenditure, which comes after every budget, has only been helping the economy to grow better. And this also resulted in, as you rightly put it, the tax buoyancy is also reflecting. It's purely the economic activities in general have been rising. So therefore, this budget also would focus more on the growth-oriented spending that they could do, and mainly through the public infrastructure spending, and that's why I think capital allocation could be there. Second, we also seen a huge success in terms of utilization of PLI schemes. The 40,000 crores limit that they set up for PLI schemes, everything has been utilized. Probably they will even double this number for PLI scheme to encourage more and more people actually to come into the new sectors. Therefore, the aim that they have, make India as a manufacturing hub, probably they will be given more focus in the budget by making higher provision for the PLI scheme also. Therefore, all in all, given the tax buoyancy which is coming in, the ability to spend is also equally high, and given the fact that we have seen after reaching almost 9.2% fiscal deficit in the year 2020, now we have been seeing a declining trend, which largely is coming from one, right level of spending, right level of cost management, at the same time focus on tax buoyancy. All put together, if you see, I think it's going well. Therefore, this budget, my own feeling is, will be more growth-oriented budget and less of any kind of populist measure they have to take. At the same time, they will also increase the focus on rural India, because at the end of the day, rural India has been doing pretty well compared to the urban India. And given the fact good monsoons leading to a better agriculture output and the income in the hands of people also rising, they may also give some bit of incentive for the manufacturing sectors to especially on increasing the penetration in the deeper parts of the country.
Sure. So in terms of number itself, is there a number you have in mind in terms of GDP and deficit? Anything that would be a surprise and anything that would be a disappointment?
So I think as long as what has been come out in the economic survey, I think more or less the GDP growth would be in the range of about 6.8 to 7.2% kind of GDP number. As far as the fiscal concerns, our own feeling is 5.9% they will be able to maintain, given the fact they have to take certain kind of bets on collections of taxes, whether it is GST or custom duty or even the direct tax collections have been actually month on month showing a progress, which essentially means they would probably take higher projections. And then the last thing which could come in this current budget, so far every budget we only hear about PSU divestment. And this year I think they will move away from PSU divestment to look at the overall asset monetization. The asset monetization, I think if you take various assets that the country as a whole has built up, whether it is NHA road assets, whether it is railway assets, all of them are monetizable. And today, if these investments are made through actually AIF kind of route, the kind of money that could be attracted from overseas investors into those kind of instruments, I think will be quite large. Asset monetization will be one of the area probably they will bring in high level of focus. And last but not the least, given the fact that the IDBI Bank is also up for sale, they already announced it. Maybe you'll have to just watch out whether they will bring in some new regulation in terms of ownership of government versus FDI and so on and so forth. But on overall basis, if you look at it, I think this budget will be enabling more growth to come into the country by way of taking few measures, as I mentioned earlier.
Right. You're absolutely right. On the disinvestment side, I think every time the market has always been expecting something, the number to go up or better delivery. But that is one point that the government has always disappointed in the last few years. So I guess our expectations are also very muted. We have come to accept that going into elections this year, we are not going to see a big number there.
There is one math also maybe you can take into account. The last 2 years, I think since the time within the public sector bank, they divided into the banks which are doing extremely well,
right?
The banks which are not doing well at all because of various reasons like NPS and so on and so forth. Now all the banks are not ready to turn around. So all of them will come on the dividend list. So the moment they also start declaring dividend as a whole for the March ending, then they will probably get increased receipts even coming as part of the revenue receipts which they can take.
Sure.
So what is the sense that you are getting on private capex spend, because that's been one area of concern for a while now?
I think there seems to be some silver lining. Where from it's coming? It's coming from the various manufacturing sectors if you look at it, whether it is cement or steel or aluminium or various other commodity sectors if you take manufacturing sectors. They all are operating about 75 to 76% capacity utilization. And historically, whenever the companies are operating about 76% capacity utilization, it actually follows with the private capex coming back. And as it is, we are seeing announcement of capex coming in paint industries, and capex is coming in the cement, capex is coming in the steel, because the price stability is good, the price realization is good. Last few years, cost reductions happened, therefore the margins have got better. And as long as there is a price stability is there, and capex is actually now running at about 75-76% kind of capex utilization, then probably we should see the private capex coming in. I think if the growth in the public sector spending is going to be significantly higher, then private sector has to catch up. We can't remain at the same capacity without increasing the capacity. You can't survive actually. Therefore,
Bala, just hold that thought. The FM is coming in inside. I mean, she's just walking into the parliament. We are getting live footage on that. Sorry, we lost that link. Sorry, continue.
Yeah, I think the lead indicator is coming from the way capex is now being utilized, so which essentially means private capex is not of far distance, I would say.
And any thoughts on interest rates? Because that is also something, like if you look at in the US, clearly the Fed has made it clear that higher rates will stay for longer. So how do you see the trend on interest rates playing out in India?
I think India, our own belief is one, as explained in the economic survey, there is a clear signal we are seeing as far as the inflation trajectory concerns. Inflation has been coming down, commodity prices are quite stable, oil price has not really had an impact as far as our inflation concerns. Therefore, that I think will give greater comfort for RBI to cap the interest rate cycles about 25 basis points higher. I think probably in the coming policy, we may say 25 basis point rate hike, which essentially means taking the terminal rate to 6.5%. Now, having seen G-Sec market somewhere hovering around 7.25 to 7.5%, and corporate bond yields already started going up, which is about 25-30 basis points that moved up. Broadly, in the interest rate environment, I think the policy rates will remain elevated level at 6.5%. Probably they will keep it for almost a period of 1 year. At the same time, the corporate bond spreads, given the fact that the demand for money is not very, very high, and the issuance of bonds in the market is also not very, very high. Yeah, in fact, even government of India is not competing with the private sector borrowing. Therefore, the bond yields in general has to remain somewhat below 9% from a 1 to 5 year kind of point of view. As long as it remains about 8.5-9% kind of range, I think the cost of capital for companies are not going to rise. And the cost of capital will still be in the range of about 12 to 13%, which is pretty decent. If somebody is looking at return on investments about 18-20%, easily they can actually borrow and expand. So therefore, interest rate environment I think is not going to be disruptive for the market growth, and probably will be supportive for the market growth.
Sure. So hold that thought. We're now being joined by Rajiv Radhakrishnan, Head of Fixed Income at SBI Mutual Fund. Rajiv, good morning. Rajiv, what is your expectation? The two key numbers, the deficit number, the market borrowing number, how do you expect the bond markets to react?
Yeah, expectations are very simple. So the two numbers that we would be keenly awaiting, not necessarily as the bond market would be looking at what is the targeted fiscal deficit and the net market borrowings for the coming financial year. The estimate is that on the fiscal deficit, the target would be about 580, which potentially translates to roughly about 12 trillion of net market borrowing. So that is a number which will broadly be acceptable based on market positioning as of today.
Sure. So hold that thought. FM is up on screen. Just show the budget document. In there is a lot of surprises, I hope, positive surprises. Continue, Rajiv.
Yeah, so I think compared to last year, when there were a lot of expectations built around potential enablers for bond index inclusion, today the bond market is not really looking at anything on that front. So if anything comes with respect to hastening the process of index inclusion, that could be a potential positive. But having said that, that's not really part of any market expectations at this point in time. The broader sense is a gross number of about under 16 should be okay from market perspective. That roughly translates to, as I mentioned earlier, about 12 trillion in net market borrowing. So these are the key, I would say, points that the markets would be looking at when it sees the union budget.
So, so you were talking about 5.8% deficit. So anything around 6, I mean, there is a huge range depending on who you speak to. Is 6 going to be a negative surprise?
Yeah, I would say so. So the number that the market would really be looking at is a gross number. A gross number of under 16 should be acceptable, should be okay from market angle, but any number in excess of 16 trillion could be a dampener for market in the near term.
Sure. So the market will be willing to accept a higher deficit number as long as they are able to show a plan that they will be able to manage with lesser borrowings. Is that what you're saying?
No, actually, from a slightly, beyond the numbers, I think what is really important to see is a glide path towards getting down to 4.5 on the fiscal deficit. So it's over a period of 3 years, which is what the government has committed to. So very clearly, beyond the gross borrowing number, which is definitely important from near-term perspective, on a slightly longer-term basis, the market would really be looking at a very credible fiscal consolidation glide path. I think that becomes even more important in the coming year because you don't want to be in a situation where the government crowds out the private sector from the market. Having said that, what we have seen is in the last this financial year especially, bank credit has actually started to pick up. To a large extent, it is again reflecting the fact that overseas borrowings have become very constrained for corporates given the way interest rates have moved globally. And that is unlikely to change in the near term. So you will still have adequate demand for domestic credit. So you don't want to be in a situation where the sovereign just crowds out the private sector. And that's not something that is really required or really, which is something that is very important that you avoid this crowding out effect. So a very credible consolidation glide path is very equally important from market angle on a medium term basis.
Rajiv, one quick question here. Now with the interest rates rising, how should a retail investor be positioning his fixed income portfolio? What are the kind of products that he should be looking for?
So in terms of interest rates, we are in a phase where the RBI is very clearly close to its terminal rate in this policy cycle. We do expect that they will move to 6.5 on the policy rate in the coming policy review. So from a broader, debt market outlook, fixed income as an asset class has become extremely attractive. Even if you look at on a forward estimate on where CPI is likely to turn out, after a long period in time on a forward basis, you are seeing real returns from fixed income products. And I think that should be the broader theme when people look at fixed income today. On a forward-looking basis, you are getting real positive returns. So from that angle, it's just a function of where your risk appetite lies, because I think across the curve, all fixed income products look extremely attractive. People who are conservative have the option of moving into target maturity funds or some of the closed-ended products where you have a very predictable yield and return expectations. At the same time, those having the duration risk appetite can look at actively managed long-term fixed income funds at this point.
Sure. Bala, so there has been this huge problem in the banking sector. While the asset quality is looking good, one of the pain points for the banking sector is deposit growth has been fairly muted, and now you're also seeing credit growth has been much better, and the gap is huge, and that's perhaps one reason this capital gains tax has become is making we're talking about that once again. Do you see that happening?
No, of course there has been.
Will the finance minister really look at equalizing the way equities and debt are treated in order to give a fillip to bank deposits?
I think there has been expectation that they will tinker around with the taxation. Definitely there is one expectation which is there. Right now the tax for equity is 1 year long-term capital gain tax. For real estate is 2 years and fixed income is 3 years. There is high probability that all will come in one. Say maybe all rates will be long-term capital gain tax for 2 years. That could probably could come. But otherwise from the bond market perspective, I think deposit growth is a function of what kind of interest rate you offer, how attractive it is, which has been the case the last 1.5 2 months. I think banks have been rising their deposit rates and same time rising a lot of money at this correspondingly. And one of the biggest liquidity provided in the market is Reserve Bank of India. I think they will always provide liquidity. At this point of time, liquidity condition in the system is quite comfortable. And despite deposit growth has been lower than the credit growth, banks are able to actually meet their credit demand. But as and when time is needed, probably the additional routes over and above the deposits could also come from Reserve Bank of India by way of CRR reductions, or it could be in the form of OMO and so on and so forth. Therefore, from the banking system liquidity point of view, I am not saying much worry about, one should not worry about it. But from a taxation point of view, given the fact that mutual funds have been the large player in the fixed income market development, and they play a very key role in terms of providing resources as we are giving in the case of equity today. Therefore, anything that they actually do in order to support the deposit growth at the cost of mutual fund fixed income schemes taxation increase, it could actually be a counterproductive from government point of view. I think if you want to build as big as the equity market in terms of corporate bond market development in a country, you need a larger role coming from mutual funds because they are the one who are channelizing money from retail investors and putting it into the capital market. Therefore, on the taxation side, I don't see anything would come as far as the fixed income scheme concerns.
At this point, are you seeing any shift of money moving away from equity to fixed income because of higher rates, bank deposits particularly?
No, I'm not saying there is a shift actually, but there is definitely greater realization that fixed income should also be considered as part of the investment allocations, which was missing for almost about 2.5 years when the equity markets had seen bull run. And experience on equity is pretty good, I think, post-pandemic. And a lot of people actually kept investing in equity. But now that the return on fixed income is actually far better, as Rajiv mentioned about the real rate of interest in fixed income is actually today higher, given the fact CPA is lower than the bond yields. And equity market has gone through a flat period. Therefore, some element of asset allocation coming towards the fixed income schemes. At the same time, we are also seeing increased traction coming on the asset allocation fund. Because if you have an asset allocation fund which invests about 40-50% in equity and rest is coming in fixed income instruments and gold, there we have seen increased participation coming in. At the end of the day, nobody wants to take a 100% risk in equity, given the fact that it may go through a consolidation period this year, because we are, on a relative basis, we are costly from a valuation perspective, and growth is, if it's going to be, say, 7%, then again you have to do a math on this adjusted growth to the market. Therefore, on the basis of which we believe that equity could be an accumulation here this year. Therefore, increased allocation towards fixed income now is being advocated, but investors will start realizing as they start seeing the experience.
Fair enough. Thank you so much, Bala. We are now joined by Ambarish Baliga. Ambarish, good morning.
Good morning, Mahalakshmi.
You also look to be in a fairly bullish mood. What's your expectation?
I would be very bullish. In fact, last couple of months, I've been quite cautious the way the markets had moved up. Although we have seen some time corrections, some correction in the market overall. But still, I would say that the markets, even at these levels, are decently expensive. And if you see from a budget perspective, what we have seen in the last couple of years is that budget finally becomes a non-event. It moves, based on the budget for a day or two, and then it's life back to normal. So I really don't expect a major difference in the sense, I don't think this budget will, take the markets up majorly. Or, it could possibly be a catalyst for a correction, but I really don't see the markets really shooting up. If the budget is better than what most of us have been expecting, we could see an upside for a while. Because we should always remember that the markets have been quite expensive and we have outperformed. And, international markets, especially the US markets, are, comparatively cheaper than the Indian markets, and even among the emerging ones, we are I think the most expensive. So I really don't see too much of money coming in a hurry out here, because most of the domestic investors who have been investing, and they have in fact lost a bit in the past few months. So they have also been cautious.
Well, and within sectors, which are particularly the ones which you see as being too expensive at this point?
No, I mean, at these levels, clearly I'm finding the metals, commodities to be, I mean, quite expensive. I mean, IT, I would say it is expensive, but I really don't see much of an upside from here. I think the only ones where one could look at investing on a correction would be possibly auto and pharma.
Ambrish, what you're saying is exactly opposite of what Rohit is saying here. Rohit is looking at the charts and saying that commodities and IT has lost a lot of steam and are looking to be bottoming out. Exactly the opposite of what you're saying. Rohit, are you saying fundamentally valuation-wise these sectors are not looking good? What's your logic?
Fundamentally, I think metals and commodities are looking expensive. In fact, I mean, especially metals, if you're talking of, we could possibly see a sort of a momentum in that from a short-term angle. But when you're talking of investing, you're looking at medium to long-term. And if you're talking of the next year and a half, 2 years, I mean, I see like metals underperforming compared to the rest of the market. IT has already underperformed, but this, I think, underperformance could continue for possibly the next 1 or 2 quarters more, and that could be the time to really look at buying IT.
Sure. What is the time when you are talking about bottoming out? What is your time frame?
My time frame is, I mean, for the market overall, I mean, I'm looking at around June, July for a bottoming out, and possibly we could see a December which may be better than where we are right now.
Sure. Rohit, when you are talking about commodities, IT already bottoming out and you're bullish, what is the time frame you're talking about?
So commodity stocks have actually been moving up since June itself. My sense is that as long as we now remain in a yields softening environment where the dollar is weakening, that typically supports commodity prices. So we have seen, for example, copper prices, aluminum prices all bouncing back. So that's supporting a rally. I think commodities, I'll give it at least till June, July for them to do well. Similarly, the tech sector tends to correlate a lot with the US NASDAQ or tech stock index. And so the improvement that we are seeing there also continues to help us. So I would give it till June, July, I think, for both sectors to at least do well for now.
Fair enough.
Ambrish, you mentioned that you're cautious on the market. So where do you stand in the...
Prime Minister is entering the parliament. We are getting footage of that. Sorry, we lost the feed. Sorry, Santosh.
Yeah, Ambrish, sorry. I just wanted to check where do you stand in the large cap versus mid cap, small cap debate? At this point in time, how should one be positioning your portfolio, given that the overall sentiment or overall outlook is cautious?
No, see, I mean, especially when the overall outlook is cautious, I mean, I would prefer to remain in cash to a decent extent. For example, I mean, last couple of months, I've been suggesting that we should be in cash to the extent of 25-30%. And that's what we are right now. And the balance 70%, it would be more on the large caps as compared to the mid caps, because when the markets are not going anywhere or they are correcting to a certain extent, you will see the mid cap and the small caps underperforming. So I would prefer to remain a bit light on that. And when the market again starts to move up, which I'm expecting from June, July onwards, one should be heavy on large caps in the initial phase of the up run. And post that, one should be buying into small cap and mid caps. And that's what we'll do. Possibly, we would look at buying into small cap and mid caps around September, October.
And within the small cap and mid cap space, which are the sectors that you that attract?
See, I would be looking at specialty chemicals, which had done extremely well in 2021. I mean, had underperformed in 22. I see that sector again bouncing back from possibly the third or fourth quarter. So, because of third or fourth quarter, when I say I'm talking of 24. So, I mean, I would look at buying to specialty chemicals, auto ancillaries to a decent extent. So, these are a couple of sectors which we are looking at.
Sure. Before we go further into equities, Rajiv, one last question for you. What is your expectation from the FOMC meeting today, and how do you think the bond markets will respond tomorrow?
So I think beyond the budget, it's something very important. We've got a heavy schedule of central bank meetings, including the RBI in a week's time. So our expectation on FOMC is that the Fed will start to push back against market expectation of premature easing, because effectively what is happening is even though the recent policy, data points have been favorable, but the markets have started factoring in rate cuts down the line. So effectively what you're seeing is a loosening of financial conditions, which probably is not what the Fed would want to be faced with at this point. So even, they would be hiking their policy rates by 25 basis points, but I think there could be some pushback with respect to these expectations on a premature easing of monetary policy. I think that's quite likely from the Fed. If that happens, I would say that there could be a reasonable retracement of bond yields overseas. But I guess from market impact in India, I think it will be limited, because to a large extent, the markets here have been quite stable. Our cues would be taken from where the union budget numbers come in today and the expectations on the RBI's policy review next week, where a 25 basis point hike is very clearly priced in. So I personally don't see any negative impact from the Fed actions in terms of domestic market in the near term.
Sure. One last question to you related to the budget. The government has, you also pointed out this tax for, foreign investors. This is one thing that the government has been pushing, and every year, at least in the last 2-3 years, it has come up and the government has not done that. How long do you think this decision can be pushed? Because right now you're already at a level where the interest differential between US and India is at a 10-15-year low.
Yeah.
Does that pose a risk on the for the rupee?
Yeah, on the first part, there are two angles on the taxation. One is of the capital gains treatment. So we do levy capital gains tax on bond investors, which a lot of other jurisdictions probably don't have. The second is the withholding tax. So the withholding tax, the statutory rate, I think, is 20%, but the government has been giving a concessional rate of 5% every year. So effectively, this is something that is a bit of an uncertain thing, that would they go back to the 20% level. The withholding tax, I believe, is an easier one to actually manage. But on the capital gains, I believe it's something that the government probably is, at least based on what we heard last year, that they were not really in favor of giving preferential taxation for offshore investors vis-a-vis domestic investors in fixed income. So probably the capital gain aspect might take some more time to get resolved, but the withholding tax is something that they could potentially manage easier. In terms of impact, very clearly we don't really have much of flows in the domestic market from offshore investors. Probably the outstanding is under 2%. I think it's around 1.5% in sovereign bonds. So it's not a large number that we are faced with. And on the other angle of interest rate differential, I really don't think that really matters in terms of portfolio flow. Debt flows into India, because the flows that come in are not that very sensitive, and we've always had quantitative limits in the past on debt flows. So I don't really see a situation where we need to actually match our interest rates to the extent that the Fed moves just to attract capital flows. I think capital flows into India are largely a function of domestic growth, and that's something that is completely disconnected from interest rate actions of the RBI.
Sure. Thank you so much for your thoughts, Rajiv. Now we have Madan Gopal Ramu from Sundaram. He manages the alternative investment funds. Madan, thank you so much. What is your expectation from the budget?
Good morning. Expectations are fairly that we should be moving in the direction of fiscal consolidation. In a year where interest rates are higher and we are looking at a much longer period of interest rates remaining higher and deposit growth rates being lower, I think fiscal consolidation is very important to keep the yields lower, because that can, one, crowd out the private sector investment, also negative for consumption also, particularly discretionary consumption. So I think moving in the path of fiscal consolidation without sacrificing too much on the investments in CapEx. Any support on the consumption side is welcome, but I think the primary target should be to keep the fiscal consolidation on target.
Sure.
Yep. Madan, you've been sounding quite cautious on the market. So what do you make of the quarterly numbers that have come in so far? And how do you see that as a trend?
Quarterly numbers, so far, I would say on the positive side, there has been increasing number of companies which are disappointing, unlike, say, so many quarters post-COVID, where we had many companies surprising on numbers. There have been some mixed sort of earnings, but there are quite a few positive surprises are also coming through. But I think next 2 quarters will be very critical in the way we are seeing this transition of high interest rates getting into the market, particularly the NBFC side. They have managed so far the show very well, but I think going forward it can get a little tricky. On the consumption side, numbers have been very strong. We have been seeing this, that the consumer discretionary spending continues to be very strong in India, despite high inflation, high interest rate, because of the very high wage growth that we have seen and job addition that we have seen in the urban centers, which has continued to do well even in this quarter. Probably there can be a short-term hiccup, but I think numbers are looking pretty good there as well. Other than this, banking sector have come out with numbers, and banks have delivered very good set of numbers. Again, because of lag in the deposit cost increase, there could be some NIM compression going forward, but I think that should be a short-term issue because the kind of numbers that names like ICICI, Axis have delivered in the in Q3. I think the expectation for FY24 is fairly intact. Is what we feel in banks and consumer discretionary. So we continue. So far from the results, I think numbers have been good for most of the companies. There have been some disappointments, but I think number of disappointments are still far lower than what we would have feared of.
So in one of your recent interviews, you also mentioned that over the next couple of quarters, probably one could even see earnings guidance cuts. Do you still stand by that view?
So sectors like IT, where we feel the current quarter has seen a bit of rebound in the contract wins, but next 2 quarters it's going to be difficult for them to get large orders. So that can kind of bring down growth expectation for FY24. Still the expectations are higher and valuations are little on the higher side. So there should be some realignment happening in the IT space is what we feel. Because when there is a slowdown globally, and then the stocks have already recovered from the bottom, we feel that there is some bit of a realignment should happen on the value front in the IT space. But otherwise, I think in companies which are export-oriented, companies which are the capital goods space, this is where some expectations have to be reset because last year was a good year because there was a pent-up sort of an private capex. But as we see right now, the order flowing momentum is sort of slowing down. Your numbers can still come through from an earnings point of view in the next 2-3 quarters, but these stocks generally react to the order flows. And I think there is a possibility some bit of a disappointment can start coming through. One is due to a global slowdown, as well as we had a very good pent-up private capex in the last say 2-3 quarters, which can get reset in our opinion in the next year. So when you talk about mid-cap space, I think you need to be prepared for some disappointment on companies which are in the industrial space and companies which are export-oriented.
Madan, you have big bets in the consumer sector. You know, in that sector, I mean, there is clear distinction emerging between the consumer staples segment and discretionary. Discretionary, you know, spends are kind of coming off, and staples is also seems to, compared to last year, obviously the margin pressure points are probably have eased off going into this year. So that is one headwind out of the way. But on the other side, the volume numbers have not been very encouraging. So on these 2 buckets, how are you placed?
See, it's been our long-term trend story that we have been playing for almost last 5 years. We feel that most of the staples companies are disappointing on growth numbers from a long-term perspective. You can play them from a very tactical perspective, say 1 to 2 quarters, depending upon margin improvement. But if you look at their volume growth, it's been very disappointing for the last, say, 4 or 5 years. And we don't see any change in that trend. Probably FY24, due to a better monsoon and the base being very comfortable and margins can improve, there could be a temporary play here. But we don't see really anything changing structurally for FMCG companies to start delivering a high single-digit volume growth also. But rather, it will be beneficial that investors play the long-term growth through the consumer discretionary space. Because given the lower penetration in majority of the segments in the consumer discretionary space, we still feel this growth is intact. And post-COVID, given the kind of wage growth and job addition in the urban centers, and most of the discretionary companies are focused on urban as the growth area, particularly in the mid and small cap space. I think that's where I think a lot of money to be made if we are looking at next 3 to 4 years sort of a time horizon. Yes, inflation had an impact on this space last year, but I feel inflation itself can come down quite sharply moving into 2024 calendar year from second half, 2023 calendar year from second half. These companies generally react to the inflation numbers in the consumer discretionary space. But honestly, if you look at the earnings growth of these companies in the last 3 quarters, it's been encouraging. So sentimentally, it was negative for this space. But getting into the next year, we feel that as inflation, we are almost nearing the peak of inflation noise, at least I would say. So when the inflation number starts coming down, I think people will shift more allocation towards discretionary companies. One is discretionary is a long-term play. Second is it got impacted last year and stocks have not gone anywhere, while the earnings growth has moved up for most of these companies that we hold. So they are looking very attractive from a valuation perspective, from a next 3 to 4 year perspective.
Sure. Thank you so much, Madan, for joining us this morning. We'll go over to Sonal Mehrotra Kapoor, who is going to bring us a surprise this morning.
All right, thank you, Mahalakshmi. Surprise indeed. Well, all of you have been very busy taking stock-by-stock updates, talking to everybody out there on how the markets are really going to be responding. We thought it's a good time to bring in some perspective and give you and tell you perhaps what is it that Janta is really looking for? What are the taxpayers really looking for this budget? And to talk to us more about that, we've got, hello and welcome, Pranjal Kamra. Welcome to Money Control.
Thank you so much for having me here. I'm really excited.
Yeah, Pranjal, if a lot of you don't know already, is not just a influencer, he's a registered RIA as well. That means he is the one who's giving in a lot of advice to people, and he's really got everybody's mind on and understood what people really are looking for in this budget. He will be here in the Money Control studios all day today to really decode and demystify a lot of things that will come out of the budget. The hashtag is very simple. It's called Ask Kamra. So urging all our viewers to immediately go to your social media handles, send us all your questions quickly, and we'll be taking a look at all of those as the day progresses. For now, over the next 10 minutes, Pranjal, we've put together a big slide on what is it that people really are looking at, right? 5 big changes that people want this budget. So let's quickly look at number 1, which is increasing the standard deduction. This is a long-standing demand every year. Every year we talk about it as well. One, of course, is going to be in the deduction allowed in the gross sort of salary income as well. Of course, it lowers the tax burden. We know about that. Salaried employees, we know 50,000 is allowed. But what exactly is the expectation this time?
See, I think this expectation is really justified for one reason, that if you're a self-employed professional or a businessman, any tools that you use, you actually get GST rebate on it and income tax benefit through depreciation on it. So if I use my mobile phone to actually record videos, it's my business tool, and I get GST rebate and also depreciation on my phone. I don't know if you add that up, my phone to me is actually 50% cheaper. No such deductions are actually available to a salaried individual. Whereas a phone, if he or she buys on his own, is actually a tool through which he or she performs her job duties. So I think instead of providing separate brackets and deductions for each category, what the government has done for simplicity is they assume that a certain amount of your expenses are for your job and provide a flat deduction on it.
Yeah.
Now, if that deduction is 50,000 for an year, I think that's less, and the realistic...
Keeping the current climate in mind, keeping inflation, keeping cost of living in mind as well. So this is demand number one that has really come up.
That's right.
Remember, the government has invited lots of demands from people as well. They've been wanting to understand and inviting comments from people. Some 8,000 of them were actually that poured in, and we've sort of culled out the top 5 for you from that 8,000. So that's really looking at a larger picture there. Increase in 80C, 80D. Again, something that we've been talking about for a very long time. Here, what do you think is going to be like one key thing that the government can look at?
You know, this is something that I have been listening to since I am tracking budget. So last a decade or so. But yeah, I mean, the expectation is that this could be increased by 50,000 to 1 lakh. So anywhere between 2 lakhs to 2.5 lakhs is the revised.
Yeah, currently 1.5 really. The expectation is it will go up to about 2.5 lakhs. So that's really what we are trying to look at. Again, a long-standing demand in that sector. Another key thing when it comes apart from 80C, 80D is also pension.
Oh, absolutely. You know, this is something that I hope the government becomes more sensitive. Someone who has no active source of earning and is dependent actually on pensions to be able to, you know, to have this needs to go away. Really.
This needs to go away. We have barely minutes to understand whether or not it will happen. And then comes the all-important bit that everybody is talking about. Make the new tax regime more attractive. Now, this bit has been talked about so much, as we know our viewers as well. Just to recap there for you, the new tax regime actually came into being in 2020, but there have been very few takers for it. And we are going to take you through why that's happening, because it's a very interesting statistic. Let's go to the next slide here to understand that. So on paper, an individual earning about, say for example, 15 lakh per annum, in the old tax regime, the tax liability would have come down from this 15 to about 2 lakh 73. Now, if you take the new tax regime in mind, it actually comes down to 1 lakh 84,600. Now, no-brainer here, you would say, ये तो कम हो रहा है, right? Like, why are there still no takers? There comes the tricky point, because here the catch is that there are a lot of exemptions under the old tax regime that you don't get in the new tax regime. For example,
you know, optically, before we move on,
yeah,
I think it's important for people to remember these two figures, how this regime optically looks great. And I remember the feeling in 2020 when this was launched that, wow, such a good tax regime. And when the details came in is when you realize that, you know, the villain is in the details actually. The devil is in the details.
The devil is in the details, and the details are right here. As you know, in the old tax regime, between 0 to 2 point, there is no tax. 2.5 to 5 lakh, it will come to about 12,500. An aggregate of all of this, you will end up paying this much. But there are deductions, and lots of them really. Reimbursements, children education and hostel allowance, standard deductions, professional tax, and also there are deductions under 80C, 80D, 80E that we are talking about, which again the demand is to actually increase that further. That brings down the total to about 1,41,000. Keep that number in mind as we move to the next one now, guys. Okay, now under the new tax regime, it's pretty simple. You know the cuts there, they're slightly different here, and you see how that progresses. It comes down to 1,84,600. Now, what does this mean? Pranjal, you want to explain? 1,84,000 over here versus how it's coming to 1,41,000 plus over here.
Right. Also, you know, one important thing is that we are talking here on a salary of 15 lakhs. So it's not that the difference is only theoretical and no one would actually be able to reduce their tax liability. So if you have a CTC take home something around 15 lakhs, you can actually take use of these deductions. So these are practical deductions that someone can actually benefit from. So if you are earning 15 lakhs, roughly 10% of it you can actually save. So this is practical. NPS you can actually do, and health insurance you can. So this is out of your total salary, only 15% you're required to actually save, and you will end up with this. So this is pretty practical. This is not theoretical, which is why we have found that there are hardly any takers for the new regime and people prefer the older tax regime.
And that is why the demand is that if you want the new tax regime to get more attractive, essentially people who do not seek rebates, people who are not applying in for a lot of them, it's essentially for them, it makes sense. But if there are to be more takers, it will be interesting to see what FM says on this front, right?
Absolutely.
It's been, yeah. So let's move to the next one now. and which is increased basic exemption limit. Again, every year we talk about this. Will she do it? Will she not do it? What's your hunch?
And this hasn't been done since a long time.
Yeah.
So I hope this is done. I'm not expecting it to directly double.
Yeah.
I'm not expecting that. But 3.54 should happen.
Should happen, or hopefully will happen. We'll know in a couple of minutes. The other big, and this is an interesting one, and I want our viewers to sort of focus on that, right? Income tax exemption for startups. Now, this entire ecosystem has been in the talks for so long. Essentially, just to take you through some couple of pointers here. Now, tax exemption is available at the moment under 81AC to organizations that have earned the recognition of a startup. Meaning startups can claim a tax holiday up to 3 consecutive years within the 10 years of their establishment. But that means they also have to be registered with the government. How many of them are registered? The department has currently registered and recognized some 80,000 plus startups. So you'll say, great, right? We should be looking at more of this. Wait, there's a catch right here, because out of these 80,000, only 61,400 are registered on the whole. That means, and out of these 61,400, only 400 have IMB certificates, and that makes them an IMB. Lot of numbers, lot of certifications required, but this is the key, because this certification makes you eligible for the tax. This is on how many now, Ranjan?
And again, we saw that the starting figure is 80,000 and startups actually eligible are 400. So we are down to 0.5% of startups who can actually get it. You know, the problem is not that you need an additional certification. The problem is that this is very vague. So it's like it tells you to explain your business model, your projections. So it's theoretical. It's like an open-ended answer. If you change the requirement to some sort of fixed requirement, say you need to show 20% growth, you need to employ these many employees, your turnover should be this, a fixed parameter, and you know, there will be no vagueness and there will be no waste of efforts, because for these 400 startups to actually get that certification, I'm sure 40,000 startups have tried. So 39,600 startups' efforts have gone down the drain. They wouldn't have tried if they were not eligible.
This is coming from a personal
Very
space.
personal, very personal.
And this is what a lot of the entire startup ecosystem is also looking at.
This is what the ecosystem feels.
All right, so that's pretty much what we're expecting to get from the budget, or the Janta is basically expecting to get from the budget. I'm going to toss it back to Mahalakshmi to take you through what's happening latest in the markets.
Thank you so much, Sonal. We'll take a short break, and after we come back, a quick market check.
About the most discussed topic as far as the budget expectations are concerned, which is the capital gains tax rationalization. Now, you've been in the business, Lakshmi, for a long time. And we know that this has been coming up regularly in the past few years. But as time goes by, this has been coming up even more and more. So, you know, as far as capital gains are concerned, yes, there is a lot of discrepancy between different instruments. So, you know, your listed debt instruments, your listed equity instruments, threshold is 1 year. Your real estate threshold is 2 years. Debt funds is 3 years. Whereas, you know, people say that, you know, debt funds are basically for shorter duration. Equity funds are meant for longer duration. So, what can be done, Lakshmi, and what would you like as far as capital gains is concerned?
So, you know, you hit the question right on the nail, because, you know, this is something which has been debated, and every time there is a recommendation list that needs to be sent, this kind of, you know, tops the list. So I would say two parts to it. One is there is an asset class wise, you know, categorization as far as capital gains are concerned. There also, if you see debt listed debt versus debt mutual fund, there is a divergent taxation, and of course equity and real estate, as you rightly alluded to. So what is coming across from industry feedback, or, you know, talking to investors, is that can we look at a regime of just a short-term capital gains and a long-term capital gain? So that is kind of rationalizing and simplifying the entire thing. It could be agnostic of the asset class. So that is one school of thought. The other school of thought is, at least within a cluster of say an asset class have a similar treatment. So these are the two ways to look at it. So you could probably retain a 1, 2, 3 kind of a tenor, but have a rational tax slab or a tax regime for a particular asset class. Now, I see merit in both. Honestly, if you ask me, I do see merit in the former also, that you have, and of course, they need to do the math to see where the exchequer can gain or, benefit or maximize. But
I think that's also a big.
It's important.
It's important.
Absolutely.
It's important.
Yeah. So I think that's where we are right now. So it'll be good to see at least one step in that direction. Maybe too ambitious to expect all in a day. I don't think that could be pragmatic. But yes, at least giving a consideration and saying that something of this sort, can see the light of the day.
So infrastructure bonds, I've been wanting to ask you, I mean, as a former fund manager, I mean, you've been tracking debt markets very closely. Do you think infrastructure bonds can be looked at in this budget?
So I would say the need of the hour today is to find ways and means to fund the capex related growth. I think that's been a long standing demand from an industry standpoint, especially from the markets. The last 2.5 years, specifically the pandemic phase, we actually saw a phase of increased spending, but not necessarily capex related. So I think it is time to reverse that equation right now, given that by and large normalcy is coming back to the industry, especially on the medical front, and given that bulk of the population is now vaccinated. So I think within that capex, obviously infrastructure is a key thrust.
Welcome back. You're still watching the live coverage of budget. We are an hour, or actually 15 minutes to go for the budget. And ahead of that, let's quickly bring you the market check and see what the markets are doing right now. Nifty 50, just above that 17,800 mark. The way it opened, it has sort of managed to hold on to those gains and build on to it. In fact, we saw Nifty make an intraday high and it has retreated a tad from there. But yeah, what we can definitely say is that it's firmly above 17,800. Now, Sensex also, as far as the quantum of uptick is concerned, it's pretty much the same. But what I want you to pull up is Nifty Bank, all guns blazing. All constituents, barring just PNB and BOB, all the other constituents on Bank Nifty are firmly in the green. In fact, if you look at the quantum of the uptake, 1.5%, top sectoral gainer right now as we speak in the markets, right? ICICI Bank, another one to watch out for, top gainer on the Nifty 50 index, and of course Bank Nifty index as well. But barring that, there are some heavyweights that I want to flag off. The first one being Britannia, ahead of its numbers, one of the top performers on the benchmark index today. So the street is looking forward to a healthy set, it seems. As far as other heavyweights are concerned, there's Hindalco, there's Tata Steel again in the top 5 gainers on the Nifty 50 index. Let's talk about some earnings reactions and earnings candidates as well. IHCL, record performance for the quarter gone by, and we're seeing that being reflected on the stock price as well, 6% up. So is Chola Investment actually. The AUM has crossed the 1 lakh milestone. Their profits have surged more than 30%. NII has seen net income has seen a healthy growth. So Chola Investment clearly one of the top performers from the mid-cap index, 7% higher. Then you have the likes of a Lemon Tree, not just IHCL, but Lemon Tree is also looking fairly firm in trade today. Of course, not an earnings candidate, but they are looking at more expansion in the state of Madhya Pradesh and they've signed more pacts. So Lemon Tree is another one to watch out for, 3.5% uptake there. Great Eastern Shipping, another name from the broader markets to watch out for, strong earnings reaction being witnessed there. Now I want to pull up some stocks that are witnessing positive action on back of budget speech and the anticipated slew of announcement from the finance minister. The first one I want to pull up is the defense pack, BEML, BEL, Bharat Dynamics, Hindustan Aeronautics, all of them anywhere between 1.5% to 3% up, all of these names from the defense pack. Then comes the fertilizer space, whether it's Chambal Fertilizers, National Fertilizers, RCF, Deepak Fertilizers, all of these names are also looking fairly upbeat right now. Just 15 minutes to go for the budget speech in Mahalakshmi. We have to wait and see really what exactly will finally be the outcome and be the big announcements. But right now, clearly a lot of energy, a lot of optimism being witnessed in many of these FMCG, fertilizer, defense, cap goods space. So back to you. Let's see what finally happens and how the markets react. We'll get an update right after the budget speech.
Thank you so much, Karunya. Thank you so much, Karunya. Rohit, banks are buzzing. What's the technical take?
So banks have seen a similar retracement like I spoke about in the Nifty, 66% of the entire rise that we saw from the October low to the peak in December. And so that's a fairly good level to really take off from. I think the first resistance that the bank Nifty is going to face is near the 20-day moving average, which is at 42,000. And we'll really be watching whether we get past that. Of course, we are still a little away from that right now at 41,289. But it's good to see the 66% retracement really hold.
Sure.
And Rohit, what's your take on the mid-cap index? That's also something that's seen a lot of volatility over the last few days. We saw a fairly good rebound yesterday, but over the last 1 week, this has been one space that's been really underperforming. So how is the index looking like on the chart?
So you were raising this question in terms of mid-cap to large-cap performance. If we actually look from September to date, the mid-caps have really been underperforming the large-cap indices meaningfully. But at the same time, the entire pattern is that it looks like a consolidation. And we've actually touched the 29,900 level for a third time. First time in October, second time in December, and now in January. So we almost have now a triple bottom at 29,900. So what I would think is that unless we really break this, it's a consolidation which is ongoing. And at some point of time, we will get out of this congestion zone for the mid caps and start moving higher meaningfully. At least we have a baseline to look at, which is 29,900. And unless that breaks, I think things should eventually look good for the mid caps as well.
Sure. Ambarish, sorry we've kept you waiting for a long time.
Yeah, Mahalakshmi.
So, what's your take on infrastructure? How is that? It's obvious that ahead of the budget, usually the cap goods sector infrastructure is always buzzing. This time is no exception. So how is that entire pack looking to you right now? The road space, railways, especially in the last few months, has been a fantastic rally. Defense, all of that today morning is all of them are up 0.5% to 1%, 1.5% today also. How is that entire pack looking to you right now?
No, I mean, this is one pack which is still looking good because of the sort of focus which is there of the government on infra and the way the projects have taken off. And at least for the foreseeable future, when I say foreseeable future, at least for the next 4-5 years, I see this whole space, including railways, actually buzzing. And I think one should remain invested in this space. So, clearly, I mean, government focus is there clearly on defense and infra. And these two spaces has a long-term vision of an uptrend.
Sure. Amrish, one of the things I think this morning also came up in discussions, I think earlier with you or someone else, that, usually with infrastructure, it is the order flow. It's not necessarily the revenue growth or the bottom line growth. Of course, they matter. But the market sensitivity is higher to order flows. And the last 1 year, you've seen, very good order book, building of order book in the past 1 year. But going into this year, there is some trepidation, especially, for example, roads. Will road capex really continue at the pace that we have seen? There is no doubt about railways because some of it is already announced and, we'll probably build on that. Do you see order flow for this year going into FY24 will be more muted? Will that be a sign of caution or worry? Or would you see some level of moderation thereof?
There could be a bit of a moderation, but I don't think it will come down sharply. Being an election year next year, I suppose the order flows will be decent. Like I said, could moderate a bit compared to earlier. But I think more important than order flows, order flows we have seen in the last couple of years has been great. But I think more important than order flows is the execution, which was not happening, say, 10 years back. But now what I'm seeing is the ease of execution is there. And clearly, the profitability, depends more on execution than on the order book. Because we've seen companies with huge orders not able to execute because of whatever reason, and the balance sheet got bloated with debt, and they've gone under. But now what we are seeing is the execution has become much easier, and that translates into profits for the infra companies.
Sure. How about the disinvestment pack, Ambarish? Because last, post-pandemic, that is one pack that is really done exceptionally well, also because of the nature of businesses for those companies. PSU Banks, of course, was the leader, but even the rest of it was not bad at all. Now that the narrative around disinvestment is completely gone, we are not even talking about it except for one or two which are already in the pipeline and are likely to go through. Do you see that pack becoming absolutely lackluster, flatlining from here on?
Absolutely. I think this has been one of the disappointments from this government was on the divestment. I mean, even for this year, I really don't see a major jump from what they had announced last year. Last year, I think it was about 65,000 crores. I think it'll be closer to that or maybe a bit lower because I suppose there are just two major ones which can happen. IDBI, I think, is like already on the way. So that should happen. And possibly BPCL, which was shelved about 2 years back, I think that could come back on the divestment board. Other than that, I don't see any major ones. So I think that will be muted.
Sure. Rohit, technical take on the PSU pack.
So the PSU stocks, they've, for a long time, I think almost 6 to 8 months of last year, if you just look at the PSU index, it was in a congestion. But the most recent rally that we saw in the last quarter of 2022 has helped the PSU index break out of that congestion. So it's a good sign long term. Short term, like we were talking earlier, sometimes the sentiment is very high, close to the budget. It is possible that there is profit booking in PSU stocks on a 1 month basis. But that long term breakout really points to the trend being higher for longer. And that's what we would really look for.
Sure.
Ambarish, you mentioned that you're cautious on the market and that you'd be sitting on cash. So what is a good time to actually to start deploying that cash? What are the signals that you would look for?
No, I mean, I would preferably wait to see a decent uptick in the quarterly numbers. And that clearly, I expect that to happen possibly from the Q1 FY24. So, I mean, those numbers should be coming out around July. So, I would really start looking to, reinvest this cash from about June onwards. But that doesn't mean that we'll be just sitting on cash and not doing anything because there are many a times you get decent opportunities where specific stocks which are there on your list, they crack decently well for not much of a reason. And you get a good buying opportunity. So we have been opportunistic in those cases. But typically, we've been sitting on the sidelines and waiting for the markets to correct decently well. And I suppose that has just about started because, Nifty-wise, like 17,800 was a good support that got broken, although we have moved beyond that right now. But like I said, I don't really expect that to sustain for too long. So Nifty-wise, 17,000 or below, I think could be a good time to enter the markets.
And Rohit, how would you play the rupee-dollar trade? How are they looking on the charts?
Yeah, so the currency and bond market, I think, are going to be the most watched over the next 2 days because of the impact of the net borrowing. The thing to really watch out for in terms of whether it poses any risk is will the USD-INR get past 83 or will bond yields really get past 7.5%? I think these are two data points because we've made a couple of attempts. 2 attempts for the USD-INR at 83 have actually failed, so it has fallen back from there. Similarly, bond yields also have made 2 attempts at hitting 7.5% and fallen back from there. So what I'd really want to see is that, even though the government should spend more to drive growth, that it doesn't drive the currency beyond 83 and it doesn't drive bond yields beyond 7.5%. That would then set us up for, a stronger currency or weaker yields in the months ahead, and then that would be good. So those are the things we'll really watch.
Yes.
I guess, how is the market doing?
Good strength. I think the PSU banking pack is still flat. Nifty showing strength about at 17,817. That's up close to 1% and close to the highest day. The PSU banking, however, that's not been able to sustain at higher levels, Rohit.
Probably. I mean, we are seeing a lot of interest going into the bank Nifty, meaning the private banks. It is possible that some of the weakness we see in PSU banks is more of that shift, one sector to the other. Of course, PSU banks were very heated up in December. If you look at the volume traded, it was almost an all-time record volume trading that we saw in the PSU banks. So they can take a while before picking up. There can be some consolidation because when there's so much activity in a particular sector, it needs time to make a comeback.
And clearly, the private bank sector is up by close to about 1.5%. I think that's where the money seems to be flowing ahead of the budget.
Again, technically, Rohit, how do the railway stocks look to you? Because that's been the strongest part of the market in the last 3-4 months.
Yeah, I haven't tracked the railway stocks closely, so.
Okay. Fair enough. I guess we are just, the budget speech is just about to start, so we will probably cut into the parliament.
आइटम नंबर 1 माननीय वित्त मंत्री श्रीमती निर्मला सीतारमण जी।
Honorable Speaker, I present the budget for 2023-2024. This is the first budget in Amrit Kal. This budget hopes to build on the foundation laid in the previous budget and the blueprint drawn for India at 100. We envision a prosperous and inclusive India in which the fruits of development will reach all sections and citizens, especially our youth, women, farmers, OBCs, scheduled castes and scheduled tribes. In the 75th year of our independence, the world has recognized the Indian economy as a bright star. Our current year's economic growth is estimated to be at 7%. It is notable that this is the highest among all the major economies. This is in spite of the massive slowdown globally caused by COVID-19 and the war. The Indian economy is therefore on the right track and despite a time of challenges, heading towards a bright future. Today, as Indians stand with their head held high and the world appreciates India's achievements and successes, we are sure that elders who had fought for India's independence will, with joy, bless us in our endeavors going forward as well. Our focus on wide-ranging reforms and sound policies implemented through Sabka Prayas, resulting in Jan Bhagidari and targeted support to those in need, helped us perform well in trying times. India's rising global profile is because of the several accomplishments. Unique world-class digital public infrastructure, example, Aadhaar, CoWIN and UPI. COVID vaccination drive in unparalleled scale and speed, proactive role in frontier areas such as achieving the climate-related goals, Mission Life, and National Hydrogen Mission. During the COVID-19 pandemic, we ensured that no one goes to bed hungry with a scheme to supply free food grains to over 80 crore persons for 28 months. Continuing our commitment to ensure food and nutritional security, we are implementing from 1st January 2023 a scheme to supply free food grain to all Antyodaya and households next 1 year. under PM Garib Kalyan Anna Yojana, the entire expenditure of about 2 lakh crore will be borne by the central government. In these times of global challenges, the G20 presidency gives us a unique opportunity to strengthen India's role in the world economic order. With the theme of Vasudhaiva Kutumbakam, we are steering an ambitious, people-centric agenda to address global challenges and to facilitate sustainable economic development. The government's efforts since 2014 have ensured for all citizens a better quality of life and life of dignity. The per capita income has more than doubled to 1.97 lakh rupees. In these 9 years, the Indian economy has increased in size from being 10th to 5th largest in the world. We have significantly improved our position as well as a well-governed and innovative country with a conducive environment for business as reflected in several global indices. We have made a significant progress in many sustainable development goals. The economy has become a lot more formalized as reflected in the EPFO membership, more than doubling to 27 crore and rupees 7,400 crore digital payments of 126 lakh crore rupees through UPI in 2022. The efficient implementation of many schemes with universalization of targeted benefits has resulted in inclusive development. Some of the schemes are 11.7 crore household toilets under Swachh Bharat mission, which is achieved, 9.6 crore LPG connections under Ujjwala, 220 crore COVID vaccination of 102 crore persons, 47.8 crore PM Jan Dhan bank accounts, insurance cover for 44.6 crore persons under PM Suraksha Bima and PM Jeevan Jyoti Yojana, and cash transfer of 2.2 lakh crores of rupees to 11.4 crore to over 11.4 crore farmers under PM Kisan Samman Nidhi. Our vision for the Amrit Kal includes technology-driven and knowledge-based economy with strong public finances and a robust financial sector. To achieve this, Jan Bhagidari through Sabka Saath, Sabka Prayas is essential. The economic agenda for achieving this vision focuses on 3 things. First, facilitating ample opportunities for citizens, especially the youth, to fulfill their aspirations. Second, providing strong impetus to growth and job creation. And third, strengthening macroeconomic stability. To service these focus areas in our journey to India at 100, we believe that the following 4 opportunities can be transformative during Amrit Kal. Economic empowerment of women. Deen Dayal Antyodaya Yojana National Rural Livelihood Mission has achieved remarkable success by mobilizing rural women into 81 lakh self-help groups. We will enable these groups to reach the next stage of economic empowerment through formation of large producer enterprises or collectives, with each having several thousand members and managed professionally. They will be helped with raw materials supply and for better design, quality, branding, and marketing of their products. Through supporting these policies, they will be enabled to scale up their operations to serve the large consumer markets, as has been the case with the several startups growing into unicorns. PM Vishwakarma Kaushal Samman, PM Vikas. For centuries, traditional artisans and craftspeople who work with their hands using tools have brought renown for India. They're generally referred to as Vishwakarma. The art and the handicraft created by them represents the true spirit of Atmanirbhar Bharat. For the first time, a package of assistance for them has been conceptualized. The new scheme will enable them to improve the quality, scale, and reach of their products, integrating them with the MSME value chain. The components of this scheme will include not only financial support, but also access to advanced skill training, knowledge of modern digital techniques, and efficient green technologies, brand promotion, linkage with local and global markets, digital payments, and social security. This will greatly benefit the scheduled castes, scheduled tribes, OBCs, women, and people belonging to the weaker sections. Tourism. The country offers immense attraction for domestic as well as foreign tourists. There is a large potential to be tapped in tourism. The sector holds huge opportunities for jobs and entrepreneurship for youth in particular. Promotion of tourism will be taken up on mission mode with active participation of states, convergence of government programs, and public-private partnerships. Green growth. We are implementing many programs for green fuel, green energy, green farming, green mobility, green buildings, and green equipment, and policies for efficient use of energy across various economic sectors. These green growth efforts help in reducing carbon intensity of the economy and provides for large-scale green job opportunities. Priorities of this budget. The budget adopts the following 7 priorities. They complement each other and act as the Saptarishi guiding us through the Amritkal. Inclusive development, reaching the last mile, infrastructure and investment, unleashing the potential, green growth, youth power, and financial sector. I now speak on the priority number 1, inclusive development. The government's philosophy of Sabka Saath, Sabka Vikas has facilitated inclusive development covering in specific farmers, women, youth, OBCs, scheduled castes, scheduled tribes, Divyangjan, and economically weaker sections, and overall priority for the underprivileged. Vanchiton ko variyata. There has also been a sustained focus on Jammu Kashmir, Ladakh, and the Northeast. This budget builds on those efforts. Digital public infrastructure for agriculture. Digital public infrastructure for agriculture will be built as an open source, open standard, and interoperable public good. This will enable inclusive farmer-centric solutions through relevant information services for crop planning and health, improved access to farm inputs, credit and insurance, help for crop estimation, market intelligence, and support for growth of agri-tech industry and startups. An agriculture accelerator fund an agriculture accelerator fund will be set up to encourage agri-startups by young entrepreneurs in rural areas. The fund will aim at bringing innovative and affordable solutions for challenges faced by farmers. It will also bring in modern technologies to transform agricultural practices, increase productivity and profitability. To enhance the productivity of extra long staple cotton, we will adopt a cluster-based and value chain approach through public-private partnerships. This will mean collaboration between farmers, state and industry for input supplies, extension services and market linkages. We will launch an Atmanirbhar Clean Plant program to boost availability of disease-free, quality planting material for high-value horticultural crops at an outlay of 2,200 crores. Global hub for millets, which are Sri Anna. India is the forefront. India's at the forefront of popularizing millets, whose consumption furthers nutrition, food security, and welfare of farmers, said the Honorable Prime Minister. We are the largest producer and second largest exporter of Sri Anna in the world. We grow several types of Sri Anna, such as Sri Anna Jowar, Sri Anna Ragi, Sri Anna Bajra, Sri Anna Kutu, Ramdana, Kangni, Kutni, Kutki, Kodo, China, and Sama. These have a number of health benefits and have been an integral part of our food for centuries. I acknowledge with pride the huge service done by small farmers in contributing to the health of fellow citizens by growing these Sri Anna. Now, to make India a global hub for Sri Anna, the Indian Institute of Millet Research, ideally Indian Institute of the Sri Anna Research, Hyderabad, will be supported as the center of excellence for sharing best practices, research and technologies at the international level. The agricultural credit target will be increased to 20 lakh crores with focus on animal husbandry, dairy and fisheries. We will launch a new sub-scheme of PM Matsya Sampada Yojana, which is an existing scheme, but we launch a new sub-scheme with targeted investment of 6,000 crores to further enable activities of fishermen, fish vendors, and micro and small entrepreneurs, improve value chain efficiencies, and expand the market. For farmers, especially small and marginal farmers, and other marginalized sections, the government is promoting cooperative-based economic development model. A new Ministry of Cooperation was formed with a mandate to realize the vision of Sahakar Se Samriddhi. To realize this vision, the government has already initiated computerization of 63,000 primary agricultural credit societies with an investment of 2,516 crores. In consultation with all the stakeholders and the states, model bylaws for PACS were formulated, enabling them to become multi-purpose PACS. A national cooperative database is being prepared for countrywide mapping of cooperative societies. With this backdrop, we will implement a plan to set up massive decentralized storage capacity. This will help farmers store their produce and realize remunerative prices through sale at appropriate times. The government will also facilitate setting up of a large number of multi-purpose cooperative societies, primary fisheries societies, and dairy cooperative societies in uncovered panchayat and villages in the next 5 years. Health, education, and skilling. 157 new nursing colleges will be established in co-location with the existing 157 medical colleges established since 2014. A mission to eliminate sickle cell anemia by 2047 will be launched. It will entail awareness creation, universal screening of 7 crore people in the age group of 0 to 40 years in affected tribal areas, and counseling through collaborative efforts of central ministries and state governments. Facilities in select ICMR labs, Indian Council for Medical Research Labs, will be made available for research by public and private medical college faculty and private sector R&D teams for encouraging collaborative research and innovation. A new program to promote research and innovation in pharmaceuticals will be taken up through centers of excellence. We shall also encourage industry to invest in research and development in specific priority areas. Dedicated multidisciplinary courses for medical devices will be supported in existing institutions to ensure availability of skilled manpower for futuristic medical technologies, high-end manufacturing, and research. Teachers' training. Teachers' training will be re-envisioned through innovative pedagogy, curriculum transaction, continuous professional development, dipstick surveys, and ICT implementation. The District Institute of Education and Training will be developed as vibrant institutes of excellence for this purpose. National Digital Library for Children and Adolescents. A National Digital Library for Children and Adolescents will be set up for facilitating availability of quality books across geographies, languages, genres, and levels, and device-agnostic accessibility. States will be encouraged to set up physical libraries for them at panchayat and ward levels and provide infrastructure for accessing the National Digital Library resources. Additionally, to build a culture of reading and to make up for pandemic time learning loss, the National Book Trust, the Children's Book Trust, and other sources will be encouraged to provide and replenish non-curricular titles in regional languages and in English to these physical libraries. Collaboration with NGOs that work in literacy will also be a part of this initiative to inculcate financial literacy. Financial sector regulators and organizations will be encouraged to provide age-appropriate reading material to these libraries. I move to priority 2, reaching the last mile. Prime Minister Vajpayee's government had formed the Ministry of Tribal Affairs and the Department of Development of Northeast Region To provide a sharper focus to the objective of reaching the last mile, our government has formed the ministries of Ayush, Fisheries, Animal Husbandry and Dairying, Skill Development, Jal Shakti and Cooperation. Building on the success of the Aspirational Districts program, the government has recently launched the Aspirational Blocks program, covering 500 blocks for saturation of essential government services across multiple domains such as health, nutrition, education, agriculture, water resources, financial inclusion, skill development, and basic infrastructure. Manya Speaker, sir, Pradhan Mantri PBTG, which is Primitive Vulnerable Tribal Groups Development Mission, is being launched. To improve socio-economic conditions of the particularly vulnerable tribal groups, the PBTGs as we refer them to, Pradhan Mantri PBTG Development Mission will be launched. This will saturate PBTG families and habitations with basic facilities such as safe housing, clean drinking water and sanitation, improved access to education, health, nutrition, road and telecom connectivity, and sustainable livelihood opportunities. An amount of 15,000 crores will be made available to implement the mission in the next 3 years under the Development Action Plan for the Scheduled Tribes. Ekalavya Model Residential Schools. In the next 3 years, Center will recruit 38,800 teachers and support staff for the 740 Ekalavya Model Residential Schools, which is serving 3.5 lakh tribal students. In the drought-prone central regions of Karnataka, central assistance of 5,300 crore will be given to Upper Bhadra project to provide sustainable micro-irrigation and filling up of surface tanks for drinking water. PM Awas Yojana. The outlay for PM Awas Yojana is being enhanced by 66% to over 79,000 crores. Bharat Shared Repository of Inscriptions will be set up in a digital epigraphy museum with digitization of 1 lakh ancient inscriptions in the first stage. Support for poor prisoners. For poor persons who are in prisons and unable to afford the penalty or the bail amount, required financial support will be provided. Priority number 3, infrastructure and investment. Investments in infrastructure and productive capacity have a large multiplier impact on growth and employment. After the subdued period of the pandemic, private investments are growing again. The budget takes the lead once again to ramp up the virtuous cycle of investment and job creation. Honorable Speaker, sir, the capital investment outlay is being increased steeply for the 3rd year in a row by 33% to 10 lakh crores, which would be which would be 3.3% of GDP. This will almost be 3 times the outlay made in 2019-20. This substantial increase in recent years is central to the government's efforts to enhance growth potential and job creation, crowd in private investments, and provide a cushion against global headwinds. The direct capital investment by the center is complemented by the provision made for creation of capital assets through grants and aids to state. The effective capital expenditure of the center is budgeted at 13.7 lakh crore rupees, which will be 4.5% of GDP. Support to state governments for capital investment. I have decided to continue the 50-year interest-free loan to state governments for 1 more year to spur investment in infrastructure and to incentivize them for complementary policies actions with a significantly enhanced outlay of 1.3 lakh crores. The newly established Infrastructure Finance Secretariat will assist all stakeholders for more private investment in infrastructure, including railways, roads, urban infrastructure, and power, which are predominantly depend on public resources. The harmonized master list of infrastructure will be reviewed by an expert committee for recommending the classification and financing framework suitable for Amrit Kal. A capital outlay, I'm talking about railways now, sir, Honorable Speaker, railways. A capital outlay of 2.40 lakh crores has been provided for the railways. This is the highest ever outlay this highest ever outlay is about 9 times the outlay made in 2013-14. 100 critical transport infrastructure projects for last and first mile connectivity for ports, coal, steel, fertilizer, and food grain sectors have been identified. They will be taken up on priority with investment of 75,000 crores, including 15,000 crore from private sources. 50 additional airports, heliports, water aerodromes, and advanced landing grounds will be revived for improving regional air connectivity. Sustainable cities for tomorrow. States and cities will be encouraged to undertake urban planning reforms and actions to transform our cities into sustainable cities of tomorrow. This means efficient use of land resources, adequate resources for urban infrastructure, transit-oriented development, enhanced availability and affordability of urban land, and opportunities for all. Through property tax governance reforms and ring-fencing user charges on urban infrastructure, cities will be incentivized to improve their creditworthiness for municipal bonds. Like the RIDF, an urban infrastructure development fund will be established through use of priority sector lending shortfall. This will be managed by the National Housing Bank and will be used by public agencies to create urban infrastructure in Tier 2 and Tier 3 cities. States will be encouraged to leverage resources from the grants of the 15th Finance Commission as well as existing schemes to adopt appropriate user charges while accessing the UIDF. We expect to make available 10,000 crore rupees per annum for this purpose. all cities and towns will be enabled for 100% mechanical desludging of septic tanks and sewers to transition from manhole to machine hole mode. Enhanced focus will be provided for scientific management of dry and wet waste. Honorable Speaker, sir, our Prime Minister had said, good governance is the key to a nation's progress. Our government is committed to providing a transparent and accountable administration which works for the betterment and welfare of common citizens. Mission Karma Yogi. Under Mission Karma Yogi, centre, states and the union territories are making and implementing capacity building plans for civil servants. The government has also launched an integrated online training platform, I Got Karma Yogi, to provide continuous learning opportunities for lakhs of government employees to upgrade their skills and facilitate people-centric approach. Sir, for enhancing ease of doing business, more than 39,000 compliances have been reduced and more than 3,400 legal provisions have been decriminalized. For furthering the trust-based governance, we have introduced the Jan Vishwas Bill to amend 42 central acts. This budget proposes a series of measures to unleash the potential of our economy. Centers of Excellence for Artificial Intelligence. For realizing the vision of Make AI in India and Make AI Work for India, 3 centers of excellence for artificial intelligence will be set up in top educational institutions. Leading industry players will partner in conducting interdisciplinary research, develop cutting-edge applications, and scalable problem solutions in the areas of agriculture, health, and sustainable cities. This will galvanize an effective AI ecosystem and nurture quality human resources in the field. National Data Governance Policy to unleash innovation and research by startups and academia. A national data governance policy will be brought out. This will enable access to anonymized data. The KYC process will be simplified, adopting a risk-based instead of one-size-fits-all approach. The financial sector regulators will also be encouraged to have a KYC system fully amenable to meet the needs of digital India. One-stop solution for identity and address updating. A one-stop solution for reconciliation and updating of identity and address of individuals maintained by various government agencies, regulators, and regulated entities will be established using DigiLocker service and Aadhaar as foundational identity. Speaker, sir, common business identifier. For the business establishments required to have a permanent account number, the PAN will be used as the common identifier for all digital systems of specified government agencies. This will bring ease of doing business, and it will be facilitated through a legal mandate. For obviating the need for separate submission of same information to different government agencies, a system of unified filing process will be set up. Such filing of information or return in simplified forms on a common portal will be shared with other agencies as per the filer's choice. Vivad Se Vishwas 1, relief for MSMEs. In cases of failure by MSMEs to execute contracts during the COVID period, 95% of the forfeited amount relating to the bid or performance security will be returned to them by government and government undertakings. This will provide relief to the MSMEs. Vivad Se Vishwas 2, settling contractual disputes. To settle contractual disputes of government and government undertakings, wherein arbitral award is under challenge in a court, a voluntary settlement scheme with standardized terms will be introduced. This will be done by offering graded settlement terms depending on pendency level of the dispute. The state support mission of Niti Aayog will be continued for 3 years for our collective efforts towards national priorities. Result-based financing. To better allocate scarce resources for competing development needs, the financing of select schemes will be changed on a pilot basis from input-based to result-based. E-courts. For efficient administration of justice, Phase 3 of e-courts projects Phase 3 of the e-courts project will be launched with an outlay of 7,000 crores. Fintech services in India have been facilitated by our digital public infrastructure, including Aadhaar, PM Jan Dhan Yojana, Video, KYC, India Stack, and UPI. To enable more fintech innovative services, the scope of documents available in DigiLocker for individuals will be expanded. An entity DigiLocker will be set up for the use by MSMEs, large businesses, and also charitable trusts. This will be towards storing and sharing documents online securely whenever needed with various authorities, regulators, banks, and other business entities. 5G services. 100 labs for developing applications using 5G services will be set up in engineering institutions. To realize a new range of opportunities, business models, and employment potential. The labs will cover, among others, applications such as smart classrooms, precision farming, intelligent transport systems, and healthcare applications. Lab-grown diamonds. Lab-grown diamonds is a technology and innovation-driven emerging sector with high employment potential. These environment-friendly diamonds, which have optically and chemically the same properties as natural diamonds. To encourage indigenous production of LGD, lab-grown diamond seeds and machines, and to reduce import dependency, a research and development grant will be provided to one of the IITs for 5 years. To reduce the cost of production, a proposal to review the custom duty on LGD seeds will be indicated in Part B of the speech. I come to the fifth priority, Honorable Speaker, sir, green growth. Honorable Prime Minister has given a vision for life or lifestyle for environment to spur a movement of environmentally conscious lifestyle. India is moving forward firmly for the Panchamrit, the net zero carbon emission by 2070 to usher in green industrial and economic transition. This budget builds on our focus on green growth. The recently launched National Green Hydrogen Mission, with an outlay of 19,700 crores, will facilitate transition of the economy to low carbon intensity, reduce dependence on fossil fuel imports, and make the country assume technology and market leadership in this sunrise sector. Our target is to reach an annual production of 5 MMT by 2030. Energy transition. This budget provides for 35,000 crores for priority capital investment towards energy transition and net zero objectives and energy security by Ministry of Petroleum and Natural Gas. To steer the economy on sustainable development path, battery energy storage systems with capacity of 4,000 MWH will be supported with viability gap funding. A detailed framework for pumped storage projects will also be formulated. Renewable energy evacuation. The interstate transmission system for evacuation and grid integration of 13 gigawatt renewable energy from Ladakh will be constructed with investment of 20,700 crore, including central support of 8,300 crores. Green credit program. For encouraging behavioral change, a green credit program will be notified under the Environment Protection Act. This will incentivize environmentally sustainable and responsive actions by companies, individuals, and local bodies, and help mobilize additional resources for such activities. PM Program for Restoration, Awareness, Nourishment, and Amelioration of Mother Earth, PM Pranam, will be launched to incentivize states and union territories to promote alternative fertilizers and balanced use of chemical fertilizers. Go Bardhan scheme. 500 new waste to wealth plants under Go Bardhan, galvanizing organic bio-agro resources done. Go Bardhan scheme will be established for promoting circular economy. These will include 200 compressed biogas plants, including 75 plants in urban areas, and 300 community or cluster-based plants at a total investment of 10,000 crores. I will refer to this in Part B also. In due course, a 5% CBG mandate will be introduced for all organizations marketing natural and biogas. For collection of biomass and distribution of biomanure, appropriate fiscal support will also be provided. Bharatiya Prakritik Kheti Bio Input Resource Centers. Over the next 3 years, we will facilitate 1 crore farmers to adopt natural farming. For this, Honorable Speaker, 10,000 bio input resource centers will be set up, creating a national level distributed micro fertilizer and pesticide manufacturing network. Mishti. Building on India's success in afforestation, mangrove initiative for shoreline habitats and tangible incomes, Mishti, will be taken up for mangrove plantation along the coastline and on salt pan lands wherever feasible through convergence between Manrega, Campa, Fund and other sources. Amrit Dharohar. Wetlands are vital ecosystems which sustain biological diversity. In his latest Mann Ki Baat, the Prime Minister said, now, I quote, now the total number of Ramsar sites in our country has increased to 75, whereas before 2014, there were only 26, unquote. Local communities have always been at the forefront of conservation efforts. The government will promote their unique conservation values through Amrit Dharohar, a scheme that will be implemented over the next 3 years to encourage optimal use of wetlands and enhance biodiversity, carbon stock, ecotourism opportunities, and income generation for local communities. Coastal shipping. Coastal shipping will be promoted as the energy efficient and lower cost mode of transport, both for passengers and freight, through PPP mode with viability gap funding. Vehicle replacement. Vehicle replacement is an important continuing policy, replacing the old political, replacing, absolutely, thank you. Replacing old polluting vehicles. Maybe applicable, right? Replacing old polluting vehicles is an important part of greening our economy. In furtherance of the vehicle scrapping policy mentioned in Budget 21-22, I have allocated adequate funds to scrap old vehicles of the central government. States will also be supported in replacing old vehicles and old state ambulances. Honorable Speaker, sir, I move to priority 6, youth power. To empower our youth and help the Amrit PD realize their dreams, we have formulated the National Education Policy, which is very wide in its scope, but one of the things is also to focus on skilling, adopted economic policies that facilitate job creation at scale and have supported business opportunities. Pradhan Mantri Kaushal Vikas Yojana. Pradhan Mantri Kaushal Vikas Yojana 4.0 will be launched to skill lakhs of youth within the next 3 years. On-job training, industry partnership, and alignment of courses with needs of industry will be emphasized. The scheme will also cover new age courses for Industry 4.0 like coding, AI, robotics, mechatronics, IoT, 3D printing, drones, and other soft skills. To skill youth for international opportunities, 30 Skill India International Centers will be set up across different states. The digital ecosystem for skilling will be further expanded with the launch of a unified Skill India digital platform for enabling demand-based formal skilling, linking with employers including MSMEs, and facilitating access to entrepreneurship schemes. To provide stipend support to 47 lakh youths in 3 years, direct benefit transfer under a pan-India national apprenticeship promotion scheme will be rolled out. Tourism. Honorable Speaker, sir, with an integrated and innovative approach, at least 50 destinations will be selected through challenge mode. In addition to aspects such as physical connectivity, virtual connectivity, tourist guides, high standards for food streets, and tourist security, all the relevant aspects would be made available on an app to enhance tourist experience. Every destination would be developed as a complete package. The focus of development of tourism would be on domestic as well as foreign tourists. Sector-specific skilling and entrepreneurship development will be dovetailed to achieve the objectives of Dekho Apna Desh initiative. This was launched as an appeal by the Honorable Prime Minister to the middle class to prefer domestic tourism over international tourism. The integrated development of theme-based tourist circuits, the Swadesh Darshan scheme, was also launched. Under the Vibrant Villages program, tourism infrastructure and amenities will be facilitated in border villages. Unity Mall. States will be encouraged to set up a Unity Mall in their state capital or most prominent tourism center or the financial capital for promotion and sale of their one district, one product and GI products and other handicraft products, and for providing space for such products of all other states as well. Sir, priority number 7, financial sector. Our reforms in the financial sector and innovative use of technology have led to financial inclusion at scale, better and faster service delivery, ease of access to credit, and participation in financial markets. This budget proposes to further these measures. Credit guarantee for MSMEs. Last year, I proposed revamping of the credit guarantee scheme for the MSMEs. I am happy to announce that the revamped scheme will take effect from 1st April 2023 through infusion of 9,000 crores in the corpus. This will enable additional collateral-free guaranteed credit of 2 lakh crores of rupees. Further, the cost of credit will be reduced by about 1%. A National Financial Information Registry will be set up to serve as the central repository of financial and ancillary information. This will facilitate efficient flow of credit, promote financial inclusion, and foster financial stability. A new legislative framework will govern this credit public infrastructure and will be designed in consultation with the RBI. To meet the needs of Amritkal and to facilitate optimum regulation in the financial sector, public consultation, as necessary and feasible, will be brought to the process of regulation making and issuing subsidiary directions. To simplify, to ease, and to reduce cost of compliance, financial sector regulators will be requested to carry out a comprehensive review of existing regulations. For this, they will consider suggestions from public and regulated entities. Time limits to decide the application under various regulations will also be laid down. Honorable Speaker, sir, to enhance business activities in GIFT IFSC, the following measures will be taken. Delegating powers under the SEZ Act to the IFSCA to avoid dual regulation. Setting up a single window IT system for registration and approval of IFSCA, SEZ authorities, GSTN, RBI, SEBI, and IRDAI. Permitting acquisition financing by IFSC banking units of foreign banks. Establishing a subsidiary of Exim Bank for trade refinancing. Amending IFSCA Act for statutory provisions for arbitration, ancillary services, and avoiding dual regulation under the SEZ Act, and recognizing offshore derivative instruments as valid contracts. Honorable Speaker, sir, data embassy. For countries looking for digital continuity solutions, we will facilitate setting up of their data embassies in GIFT IFSC. Improving governance and investor protection in banking sector. To improve bank governance and enhance investors' protection, certain amendments to the Banking Regulation Act, the Banking Companies Act, and the Reserve Bank of India Act are being proposed. Capacity building in securities market. Honorable Speaker, sir, to build capacity of functionaries and professionals in the securities market, SEBI will be empowered to develop, regulate, maintain, and enforce norms and standards for education in the National Institute of Securities Markets and to recognize award of degrees, diplomas, and certificates. A central processing center will be set up for faster response to companies through centralized handling of various forms filed with field officers under the Companies Act. Reclaiming of shares and dividends. For investors to reclaim unclaimed shares and unpaid dividends from the Investor Education and Protection Fund Authority with ease, from the Investor Education and Protection Fund Authority with ease, an integrated IT portal will be established. Digital payments continue to find wide acceptance. In 2022, they show an increase of 76% in transaction and 91% in value. Fiscal support for this digital public infrastructure will continue in 2023-2024. Azadi Ka Amrit Mahotsav, Mahila Samman Bachat Patra. For commemorating Azadi Ka Amrit Mahotsav, a one-time new small savings scheme, Mahila Samman Savings Patra or Savings Certificate, Mahila Samman Savings Certificate will be made available for a 2-year period up to March 2025. This will offer deposit facility up to 2 lakh in the name of a woman or girls for a tenure of 2 years at fixed interest rate of 7.5% with partial withdrawal option. Senior citizens. The maximum deposit limit for senior citizens savings scheme will be enhanced from 15 lakh to 30 lakhs of rupees. The maximum deposit limit for monthly income account scheme will be enhanced from 4.5 lakh to 9 lakh for single account and from 9 lakh to 15 lakh for joint account. Honorable Speaker, sir, fiscal management. 50 years interest-free loan to states. The entire 50-year loan to states has to be spent on capital expenditure within 2023-24. Most of this will be at the discretion of the states, but a part will be conditional on states increasing their actual capital expenditure. Parts of the outlay will also be linked to or allocated for the following purposes: scrapping old government vehicles, urban planning reforms and actions, financing reforms in urban local bodies to make them creditworthy for municipal bonds, housing for police personnel above or as part of the police station, constructing unity malls, children and adolescent libraries and digital infrastructure, and state share of capital expenditure of central schemes. Honorable Speaker, sir, Fiscal deficit of states. States will be allowed a fiscal deficit of 3.5% of GSDP, of which 0.5% will be tied to power sector reforms. Revised estimates 2022 to 2023. The revised estimate, Honorable Speaker, sir, of the total receipts other than borrowing is 24.3 lakh crores, of which the net tax receipts are 20.9 lakh crores. The revised estimate of the total expenditure is 41.9 lakh crores of rupees, of which the capital expenditure is about 7.3 lakh crores. The revised estimate of the fiscal deficit is 6.4% of GDP, adhering to the budget estimate. So budget estimates of 2023-24. Coming to 2023-24, the total receipts other than borrowings and the total expenditure are estimated at 27.2 lakh crores and 45 lakh crores respectively. The net tax receipts are estimated at 23.3 lakh crores. The fiscal deficit is estimated to be 5.9% of the GDP. In my budget speech for 21-22, I had announced that we plan to continue the path of fiscal consolidation, reaching a fiscal deficit of below 4.5% by 2025-26, with a fairly steady decline over the period. We have adhered to this path, and I reiterate my intention to bring the fiscal deficit below 4.5% of GDP by 2025-26. To finance the fiscal deficit in 2023-24, the net market borrowings from dated securities are estimated at 11.8 lakh crores. The balance financing is expected to come from small savings and other sources. The gross market borrowings are estimated at 15.43 lakh crores of rupees. Honorable Speaker, sir, I now move to Part B. Indirect taxes. My indirect tax proposals will aim to promote exports, boost domestic manufacturing, enhance domestic value addition, encourage green energy and mobility. A simplified tax structure with fewer tax rates helps in reducing compliance burden and improving tax administration. I propose to reduce the number of basic customs duty rates on goods other than textiles and agriculture from 21 to 13. As a result, there are minor changes in the basic custom duties, cesses and surcharges on some items including toys, bicycle, automobiles and naphtha. Green mobility. To avoid cascading of taxes on blended compressed natural gas, I propose to exempt excise duty on GST paid compressed biogas contained in it. To further provide impetus to green mobility, customs duty exemptions is being extended to import of capital goods and machinery required for manufacture of lithium-ion cells for batteries used in electrical vehicles as well. Electronics. As a result of various initiatives of the government, including phased manufacturing program, mobile phone production in India has increased from 5.8 crore units valued at about 18,900 crore in 2014-15 to 31 crore units valued at 2,75,000 crore in the last financial year. To further deepen domestic value addition in manufacturing of mobile phones, I propose to provide relief to customs duty. I propose to provide relief in customs duty on import of certain parts and inputs like camera lens and continue the concessional duty on lithium-ion cells for batteries for another year. Similarly, to promote value addition in manufacture of televisions, I propose to reduce the basic customs duty on parts of open cells of TV panels to 2.5%. Electrical, to rectify inversion of duty structure and encourage manufacturing of electric kitchen chimneys, the basic custom duty on electric kitchen chimney is being increased from 7.5% to 15%, and that on heat coils for these is proposed to be reduced from 20% to 15%. Chemicals and petrochemicals. Denatured ethyl alcohol is used in chemical industry. I propose to exempt basic customs duty on it. This will also support the ethanol blending program and facilitate an endeavor for energy transition. Basic customs duty is also being reduced on acid-grade fluorospar from 5% to 2.5% to make the domestic fluorochemicals industry competitive. Further, the basic customs duty on crude glycerin for use in manufacture of epichlorohydrin is proposed to be reduced from 7.5% to 2.5%. Marine products. In the last financial year, marine products recorded the highest export growth, benefiting farmers in the coastal states of the country. To further enhance the export competitiveness of marine products, particularly shrimps, duty is being reduced on key inputs for domestic manufacture of shrimp feed. India is a global leader, as I said in Part A, in cutting and polishing of natural diamonds, contributing about 3/4 of the global turnover by value. With the depletion of deposits of natural diamonds, the industry is moving towards lab-grown diamonds, and it holds huge promise. To seize this opportunity, I propose to reduce the basic customs duty on seeds used in their manufacture. Customs duties on door or dore and bars of gold and platinum were increased earlier this fiscal. I propose to increase the duties on articles made therefrom to enhance the duty differential. I also propose to increase the import duty on silver doors, bars and articles to align them with that on gold and platinum. To facilitate availability of raw materials for the steel sector, exemptions from basic custom duty on raw materials for manufacture of CRGO steel, ferrous scrap and nickel cathode is being continued. Similarly, the concessional BCD of 2.5% on copper scrap is also being continued to ensure the availability of raw materials for secondary copper producers who are mainly in the MSME sectors. Compounded rubber. The basic custom duty rate on compounded rubber is being increased from 10% to 25% or 30 kg, whichever is lower, at par with that of natural rubber other than latex, to curb circumvention of duty. Cigarettes. National calamity contingent duty on specified cigarettes was last revised 3 years ago. This is proposed to be revised upwards by about 16%. Direct taxes. I now come to my direct tax proposals. Honorable Speaker, these proposals aim to maintain continuity and stability of taxation, further simplify and rationalize various provisions to reduce the compliance burden, promote the entrepreneurial spirit, and provide tax relief to citizens. It has been constant endeavor of the Income Tax Department to improve taxpayers' services by making compliance easy and smooth. Our taxpayers portal received a maximum of 72 lakh returns in a day, processed more than 6.5 crore returns this year. Average processing period reduced from 93 days in financial year 13-14 to 16 days only now. And 45% of the returns were processed within 24 hours. We intend to further improve this, roll out the next generation common IT return form for taxpayer convenience, and also plan to strengthen the grievance redressal mechanism. MSMEs and professionals. MSMEs are growth engines of our economy. Micro enterprises with turnover up to 2 crore of rupees and certain professionals with turnover of up to 50 lakh rupees can avail the benefit of presumptive taxation. I propose to provide enhanced limits of 3 crore and 75 lakh respectively to the taxpayers whose cash receipts are no more than 5%. Whose cash receipts are no more than 5%. Moreover, to support MSMEs in timely receipt of payments, I propose to allow deduction for expenditure incurred on payments made to them only when payment is actually made. Cooperation. Cooperation is a value to be cherished. In realizing our Prime Minister's goal for Sehkar Se Samriddhi and his resolve to connect the spirit of cooperation with the spirit of Amrit Kal, in addition to the measures proposed in Part A, I have a slew of proposals for the cooperation sector. First, new cooperatives that commence manufacturing activities till 2024, 31st March, shall get the benefit of a lower tax rate of 15%, as is presently available to new manufacturing companies. Secondly, I propose to provide an opportunity to sugar cooperatives to claim payments made to sugarcane farmers for the period prior to the assessment year 2016-17 as expenditure. This is expected to provide them a relief of almost 10,000 crores. Thirdly, I am providing a higher limit of 2 lakh per member for cash deposits to loans in cash by primary agricultural cooperative societies and primary cooperative agriculture and rural development banks. I repeat that. Thirdly, I am providing a higher limit of 2 lakh per member for cash deposits to and loans in cash by primary agricultural cooperative societies and primary cooperative agricultural and rural development banks. Similarly, a higher limit of 3 crore for TDS on cash withdrawal is being provided to cooperative societies. Startups. Entrepreneurship is vital for a country's economic development. We have taken a number of measures for startups and they have borne results. India is now the third largest ecosystem for startups globally and ranks second in innovation quality among middle-income countries. I propose to extend the date of incorporation for income tax benefits to startups from 31/3/2023 to 31/3/2024. I further propose to provide the benefit of carry forward of losses on change of shareholding of startups from 7 years of incorporation to 10 years. To reduce the pendency of appeals at commissioner level, I propose to deploy about 100 joint commissioners for disposal of small appeals. We shall also be more selective in taking up cases for scrutiny of returns already received this year. Better targeting of tax concessions. For better targeting of tax concessions and exemptions, I propose to cap deduction from capital gains on investment in residential house under Section 54 and Section 54F to 10 crores. Another proposal with similar intent is to limit income tax exemption from proceeds of insurance policies with very high value. Rationalization. Honorable Speaker, sir, there are a number of proposals relating to rationalization and simplification. income of authorities, boards, and commissions set up by statutes of union or state for the purpose of housing, development of cities, towns, and villages, and regulating and developing an activity or matter is proposed to be exempted from income tax. Other major measures in this direction are removing the minimum threshold of 10,000 for TDS and clarifying taxability relating to online gaming, not treating conversion of gold into electronic gold receipts and vice versa as capital gains, reducing the TDS rate from 30% to 20% on taxable portion of EPF withdrawals in non-PAN cases, and taxation on income for market-linked debentures. Other major proposals in the finance bill relate to the following: extension of period of tax benefits to funds relocating to IFSC, GIFT City till 31/3/2025, decriminalization under Section 276A of the Income Tax Act, allowing carry forward of losses on strategic disinvestment, including that of IDBI Bank, and providing EEE status to Agnivir Fund. Personal income tax. Now I come to what everyone is waiting for. Personal income tax. I have 5 major announcements to make in this regard. These primarily benefit our hard-working middle class. The first one concerns rebate. Currently, those with income up to 5 lakh do not pay any income tax in both old and new regimes. I propose to increase the rebate limit to 7 lakhs in the I propose to increase the rebate limit to 7 lakh in the new tax regime. Thus, persons in the new tax regime with income up to 7 lakhs will not have to pay any tax at all. The second proposal relates to middle-class individuals. I had introduced in the year 2020 the new personal income tax regime with 6 income slabs starting from 2.5 lakh. I propose to change the tax structure in this regime by reducing the number of slabs to 5 and increasing the tax exemption limit to 3 lakhs. The new tax rates are 0 to 3 lakh, nil. 3 to 6 lakhs, 5%. 6 to 9 lakhs, 10%. 9 to 12 lakh, 15%. 12 to 15 lakhs, 20%. And above 15 lakhs, 30%. This will provide major relief to all taxpayers in the new regime. An individual with an annual income of 9 lakhs will be required to pay only 45,000 rupees. This is only 5% of his or her income. It is a reduction of 25% on what he or she is required to pay now. That is 60,000. So in the place of 60,000, it is now only 45,000. Similarly, an individual with an income of 15 lakh rupees would be required to pay only 1.5 lakh or 10% of his income or her income, a reduction of 20% from the existing liability of 1,87,500 rupees. My third proposal is for the salaried class and the pensioners, including family pensioners, for whom I propose to extend the benefit of standard deduction to the new tax regime. Each salaried person with an income of 15.5 lakh rupees or more will thus stand to benefit by 52,500 rupees. My fourth announcement in personal income tax is regarding the highest tax rate, which in our country is 42.74%. This is among the highest in the world. I propose to reduce the highest surcharge rate from 37% to 25% in the new tax regime. This would result in reduction of the maximum rate. This would result in the reduction of the maximum tax rate to 39%. Lastly, the limit of 3 lakh rupees for tax exemption on leave encashment on retirement of non-government salaried employees was last fixed in the year 2002, when the highest basic pay in the government was only 30,000 rupees per month. In line with the increase in the government salaries, I am proposing to increase this limit to 25 lakh rupees. We are also making the new income tax regime as the default tax regime. However, citizens will continue to have the option to avail the benefit of the old tax regime. Apart from these, I am also making some other changes as given in the annexure. As a result of these proposals, revenue of about 38,000 crore to 37,000 crore in direct taxes and rupees 1,000 crore in indirect taxes will be foregone, while revenue of about 3,000 crore will be additionally mobilized. Thus, the total revenue foregone is about 35,000 crores annually. Honorable Speaker, sir, with these words, I commend the budget to this August House. 1 hour, 25 minutes.
Item number 1, माननीय item number 2, Srimati Nirmala Sitharaman ji.
Sir, with your permission, I lay on the table of the following statements. Under Section 3(1) of the Fiscal Responsibility Budget Management Act 2003, 1. Medium-term fiscal policy cum fiscal policy strategy statement and macroeconomic framework statement.
माननीय सदस्यगण, जैसा कि आपको समाचार भाग 2 के माध्यम से पहले ही सूचित किया जा चुका है कि माननीय वित्त मंत्री जी के बजट भाषण की प्रतियां हार्ड कॉपी के रूप में उपलब्ध कराई गई है। आप बजट भाषण की अपनी अपनी प्रति प्रकाशन पलक से ले लें। आपको ये भी सूचित किया जाता है कि माननीय मंत्री द्वारा बजट प्रस्तुत किए जाने के पश्चात उसकी प्रतियां आपको मेंबर्स पोर्टल के माध्यम से उपलब्ध करा दी जाएगी। आइटम नंबर 3, माननीय मंत्री जी, वित्त मंत्री जी।
Sir, with your permission, I rise to move for leave to introduce the Finance Bill 2023.
प्रश्न ये कि विधेयक को पुनर्स्थापित करने की अनुमति प्रदान की जाए। जो सदस्य इसके पक्ष में हाँ कहें, जो सदस्य विरोध में ना कहें। मेरे विचार में निर्णय हाँ वालों के पक्ष में माननीय मंत्री जी विधेयक को पुनर्स्थापित करें।
Sir, I introduce the bill.
सभा की कार्रवाई कल गुरुवार दिनांक 2 फरवरी 2023 को प्राप्त 11 बजे तक के लिए स्थगित की जाती है।
right, the budget speech is over. We have a slew of announcements made by the Finance Minister Nirmala Sitharaman. Ravi Krishnan is here with me. Ravi, lots of interesting, data points, interesting announcements. We'll slice and dice each of them one by one. But let's first see the market reaction. Well, the market started on a firm fettle and we continued pretty much on those levels. Yes, there was a minor dip just when the budget speech had started. It seemed a bit lackluster and, it took some time for the FM to warm up and actually talk about the key points, which is the capex, the direct taxes, certain, push that she's talking about when it comes to digital payments, startups, AI, manufacturing, etc. But now the markets have recovered a fair bit. We're looking at Sensex and Nifty both higher, more than 1% each. So close to the day's high point. But let's talk about the big macroeconomic indicators and data points thrown up. Now, the Finance Minister did start by saying that the FY23 growth is estimated at 7%. As far as fiscal deficit target goes, that has been at 5.9%, and FY23 fiscal deficit target has been retained at 6.4%. Now, we also have some interesting data points lined up for our viewers. Talk to us about the growth targets, the growth estimates that have been revealed or unveiled by the Finance Minister.
Okay, let me first start by talking about the big themes from the budget. Okay, capex, 33% increase in capex to rupees 10 lakh crore. The big infrastructure push, which will provide a medium-term, impetus to growth. That is one of the big themes from the budget.
And it's much higher than expected.
Yes. People were expecting around 9.5 crore, so it is around 10 lakh crore now. Yeah. The second thing why the market is so happy is because, there is no populism. She has stuck to fiscal consolidation. Yeah. So not only is the fiscal deficit target for FY23 being retained at 6.4%, but for the next year it is, for FY24 it is at 5.9%. And she also reiterated that she will stick to the fiscal glide path and we will reach below 4.5% of GDP. Fiscal deficit target at below 4.5% of GDP by FY25-26. So another 60 bips of reduction over the next 2 years that will be achieved. So this is these are two major things that have come. And the third thing is, of course, those tweaks to those customs duties which has happened, the increase in the savings limit for senior citizens, those income tax tweaks, etc. Now that is going to put a little bit more money into the wallets of the people. So from there we can expect some kind of consumption push. So I think these three are like the key takeaways from the budget speech. We need to see the fine print. This is a caveat. But initially, from the speech itself, these are the three key takeaways.
But since you talked about certain tinkerings that have happened with customs duty, etc., we saw some knee-jerk reactions also coming by. Because if you look at some of these consumer discretionary products, electronics, etc., customs duty exemption has been given for manufacturing of CRGO steel, ferrous scrap. That will continue. However, they've extended customs duty on imports of parts of mobile phones by 1 year. There's been a reduction in customs duty on open sales of TV panels to 2.5 years. There was some revision in customs duty for lithium-ion batteries as well. Then you also had an announcement for a 16% increase in NCCD on certain cigarettes. Now, NCCD is National Calamity Contingent Duty. We saw some knee-jerk reaction coming there for ITC, for Godfrey Phillips, VST Industries, etc. So these are also some small revisions that have happened. Of course, we'll get you more updates on what gets expensive, what gets cheaper later on. But we're here to talk about the highlights of the budget. If we look at, the latter part of the budget where the Finance Minister has talked about revisions to personal tax, to direct tax. There's been a removal in the minimum threshold of 10% on TDS. Of course, that applies to a lot of individual contributors, gig workers, freelancers, etc. as well. Let's talk about the new tax regime. Now, there was a lot of discussion about how the government will look to promote this new tax regime and promote its acceptance and compliance as well. So the tax exemption for, the limit has been increased from 5 lakh rupees per annum earlier to 7 lakh rupees. Does that come in as a welcome move or a welcome surprise?
See, one thing was clear, and which she also made very clear, was that the new income tax regime will be the default tax regime as far as the government is concerned. what we have seen so far is since 1 or 2 years since the new income tax regime has been introduced, there have not been many takers for this new income tax regime. And they want to move on. See, when you talk about a simplified income tax system, you know, that is why they want to move to one where there is less exemption, where there is less scope for tax avoidance by people. When you look at all these factors, you know, that is the reason why they want to, you know, promote the new tax regime.
Okay.
And that's the reason why they have provided tweaks only to the new income tax regime while keeping the old one more or less untouched.
Yeah, because, and you know, it was very interesting. First she said we're raising the limit from 5 lakh to 7 lakh. Everybody in the newsroom also started cheering, and then she's like, this is for the new regime. So, but the old regime stays as is, right?
Yes, I mean, from the budget speech, that is
like
what is apparent.
But
we need to see the finance bill and to get a real sense of what else she has
But let's talk about some more macro numbers.
Yes.
Capex, market borrowing targets, fiscal deficit targets. Why don't you talk to us about a bit?
So initially, if you saw, the bond market reacted a little bit negatively when she made all the big spending announcements, including you know, the capex numbers. But if you look at the gross market borrowings, that is around 15.43 lakh crores, and the net market borrowing is around 11.8 lakh crores. These are roughly in line with what the market has been expecting. I mean, it has not come as a surprise.
Yeah.
So that is the reason why we saw that both the equity markets and the bond markets did not react negatively to the budget.
Okay.
And of course, you know, there is this push which is going to come from the capital expenditure growth. And if you also look at overall, you know, the net tax receipts, those are projected to increase by around 11.5%, which should be roughly in line with the nominal GDP growth. So even those assumptions right now seem to be, you know, on point. She has not made any extraordinary assumptions as far as, you know, receipts are going to increase and net tax revenues are going to increase. And overall expenditure is up only 7.5% over revised estimates. So all in all, it is a budget, you know, which has emphasized on fiscal consolidation, rejigging of expenditure. She has thrown a little bit of, you know, sweeteners here and there, you know, to businesses, to MSMEs. See, all the familiar ingredients are there, which I think we have got to see in Finance Minister Nirmala Sitharaman's budget over the past few years. So there is something on for startups. We saw there is an emphasis on the ease of doing business. And one thing which I don't know how many people noticed, but from yesterday's economic survey did provide a cue to this budget, because it talked about the kind of, you know, reforms which the government should do to take India to the next level of growth, etc. So it talked about, you know, the need for administration reforms, ease of doing business promotion, for example, improving contract enforcement, energy security, and improving education and skilling. All these we found there were certain, you know, announcements in the budget.
But let's talk about the borrowings as well, and the expenses that they've made for the year gone by, and what are the projections telling you? Are we on path to sort of you know, recovery as far as the state of the economy is concerned?
Well, if you go by the economic survey, the recovery is already done, and now we are looking at a phase of acceleration.
Yeah, but and capex is likely to be the key highlight, key focal area even from here on, right?
Exactly. I mean, see, look, so you look at this number, you know, 33% to 10 lakh crore, which is 3.3% of GDP. And I think if you take the last few years, not the last year, but the few years above that, that would be around 2.5% of GDP. So from that, it has increased to around 3.3% of GDP. And the effective capex is 13.7 lakh crores, which would also include things like, you know, the loan assistance given to states, the 50-year interest-free loan that is being given to states, then the outlay for railways, you know, which is around 2.4 lakh crore. So the effective capex is 13.7 lakh crore versus 10.7 lakh crore for the current financial year, which in itself is a huge jump. So clearly from among the 7 priorities, you know, this infrastructure and investment is a key priority, you know, for the government. Why? Because it has a multiplier effect, you know, over the medium term, right? Short-term push to growth you can give by, you know, cutting tax, you know, putting more money into the hands of the people. But then, you know, that will be fiscally imprudent. But this one, you know, they are looking to push India's growth, potential growth in the medium term, and this is what this can achieve.
What about unleashing the potential? Because this seemed a little vague, in my opinion. Yes, I mean, everything together will act towards a certain goal of perhaps potentially unleashing the potential. But do you think all the levers are in place, or were there any disappointments or any other sectors or pockets that you thought they could have done a bit more?
No. No, I don't think so.
She really kept it short and sweet this time.
Yeah, we just listened to the speech. So from the first go, I have not that.
What about the green growth? Because she did touch upon the focus on renewable energy and how, they are on track to sort of transition to alternate
fuels. 35,000 crore, I think, has been set for energy transition, and she's reiterated the net zero by 2070 target. So that is, again, one of the things highlighted by the economic survey: energy security, green growth, energy transition. These kind of things are important. We need to see how these allocations are, in comparison, say, with the previous year, whether those are adequate, etc. But those are second level of analysis, which we'll do after we get the budget documents.
And what about PM Awas Yojana? Do you think this augurs well for housing finance companies and the ones which have more exposure to tier 2, tier 3 markets?
Yes, part of the infrastructure push. That is the reason why she has, increased it by 66%.
And largely everybody thought this will be a populist budget. This is the last full year budget before the 2024 elections, central government elections. Do you think they've done enough for the rural sphere? Because that's something that was highly anticipated, that they will be, the push will be on rural and agri this time around.
See, some of those indirect tax tweaks, it will benefit everyone.
Yeah.
Then they want to push agricultural credit target. They have pushed to, 20 lakh crore. So I don't think the PSU bank index took very kindly to it when I saw when the announcement was made. But that should be helpful for the rural areas. And also, they have increased funding for agri-tech startups, etc.
Yeah.
So some of these schemes, will benefit
directly or indirectly.
Will directly or indirectly benefit the rural population. We also need to see what has been the allocation to MNREGA.
Yeah.
She also, so these are the key things which we'll need to see in the documents.
In fact, I was coming to that because now that the fine print will be out pretty soon on the website and everywhere else, what will be the few pointers that you will be quickly watching out for and you will want to know ASAP?
Well, I don't think she mentioned disinvestment figures in the speech, so I'll be curious to see.
She spoke about IDBI, which is on track, but beyond that.
Yeah, I want to see that. That I would say, I want to see the breakup of the receipts, and I want to see the nominal GDP growth assumption, what assumption they have made for oil prices, etc. These will be some of the things I'll take.
All right then. So more details awaited on divestment, nominal and real GDP projections, and more details about the receipts. So that's something that Ravi and all of us at Moneycontrol will be tracking for all of you, all our viewers and readers. So for now, that's it from both of us. We're taking a break here, but on the other side, there's a huge and very, very insightful panel lined up to slice and dice the budget speech for you.
Support to state governments for capital investment. I have decided to continue the 50-year interest-free loan to state governments for one more year to spur investment in infrastructure and to incentivize them for complementary policies actions with a significantly enhanced outlay of 1.3 lakh crores. The newly established Infrastructure Finance Secretariat will assist all stakeholders for more private investment in infrastructure, including railways, roads, urban infrastructure and power, which are predominantly depend on public resources. The harmonized master list of infrastructure will be reviewed by an expert committee for recommending the classification and financing framework suitable for Amrit Kal. A capital outlay, I'm talking about railways now, sir, Honorable Speaker, railways. A capital outlay of 2.40 lakh crores has been provided for the railways. This is the highest ever outlay this highest ever outlay is about 9 times the outlay made in 2013-14. 100 critical transport infrastructure projects for last and first mile connectivity for ports, coal, steel, fertilizer and food grain sectors have been identified. They will be taken up on priority with investment of 75,000 crores, including 15,000 crore from private sources. 50 additional airports, heliports, water aerodromes, and advanced landing grounds will be revived for improving regional air connectivity. Sustainable cities for tomorrow. States and cities will be encouraged to undertake urban planning reforms and actions to transform our cities into sustainable cities of tomorrow. This means efficient use of land resources, adequate resources for urban infrastructure, transit-oriented development, enhanced availability and affordability of urban land and opportunities for all. Through property tax governance reforms and ring-fencing user charges on urban infrastructure, cities will be incentivized to improve their creditworthiness for municipal bonds. Like the RIDF, an Urban Infrastructure Development Fund will be established through use of priority sector lending shortfall. This will be managed by the National Housing Bank and will be used by public agencies to create urban infrastructure in Tier 2 and Tier 3 cities. States will be encouraged to leverage resources from the grants of the 15th Finance Commission as well as existing schemes to adopt appropriate user charges while accessing the UIDF. We expect to make available 10,000 crore rupees per annum for this purpose. All cities and towns will be enabled for 100% mechanical desludging of septic tanks and sewers to transition from manhole to machine hole mode. Enhanced focus will be provided for scientific management of dry and wet waste. Honorable Speaker, sir, our Prime Minister had said, good governance is the key to a nation's progress. Our government is committed to providing a transparent and accountable administration which works for the betterment and welfare of common citizens. Mission Karma Yogi. Under Mission Karma Yogi, Centre, states and the union territories are making and implementing capacity building plans for civil servants. The government has also launched an integrated online training platform, I Got Karma Yogi, to provide continuous learning opportunities for lakhs of government employees to upgrade their skills and facilitate people-centric approach. Sir, for enhancing ease of doing business, more than 39,000 compliance more than 39,000 compliances have been reduced, and more than 3,400 legal provisions have been decriminalized. For furthering the trust-based governance, we have introduced the Jan Vishwas Bill to amend 42 central acts. This budget proposes a series of measures to unleash the potential of our economy. Centers of Excellence for Artificial
Welcome back, guys. You continue to watch our non-stop coverage right here on Money Control on how the budget is really unfolding. Now, lots to unpack from the budget at the moment, but I believe the biggest headline emerging right now is in the taxes regime. We kept talking all morning how this is the last budget before general election, and it has turned out to be a real populist one. There seems to be something for the lower income groups, there seems to be something which has emerged for the middle class, and then there is something for the ultra rich as well. We look at all those things one by one. First up, let me welcome back Pranjal on the program. Pranjal, we kept talking about taxes in the morning, and that's exactly what's happened. But the big headline at the moment, budget rebate up to 7 lakh, but that's under the new tax regime. Very important to underline that.
Oh, exactly. So as we talked about that, since the introduction of new tax regime, there's no sort of progress towards making people shift towards the new tax regime. So this year it's clear that the government is nudging everyone to shift to the new tax regime. And I think in the longer run, it's the right thing to do. It will simplify the tax regime for individuals.
This is supposed to be that one big gap that we talked about in the morning minutes before the budget, that there aren't enough takers for the new tax regime. This could actually push people towards that, is what you're saying.
Absolutely. For most people, now this starts to make sense.
This starts to make sense, especially in the lower strata, I believe. Wow. The people who are just starting out and in the lower income group. The next big headline, of course, is the new tax regime that has come out right now. We have the entire plate over here. Let's go through it one by one. Major changes in this sector?
Oh, definitely. So everyone stands to save. So someone who was earlier earning 3 lakhs was actually liable to pay 5% of tax in the last 50,000 of his income, will actually now pay nothing. So we'll save 5% in the 50,000 extra income that he earned. So effectively saving 2,500 rupees. Similarly, this tax bracket was earlier for 2.5 to 5 lakh people earning between. So someone who's earning 6 lakhs is actually now saving 5% in the incremental 1 lakh of his earnings. So again, someone earning between 5 to 6 lakh, this is a big change. Again, here, this bracket was earlier for 5 to 7.5. Now, anyone earning between 7.5 to 9 is actually paying 5% lesser taxes. So again, something here for them. This was previously for 7.5 to 10. So now, anyone who's earning between 10 to 12 is now paying 5% lesser taxes, and that compounds over previous brackets as well. And again, here, this bracket, there was previously additional bracket here that was 20% and 25%. That is completely removed. So this is simplified. One tax bracket is actually gone, and huge gain for these people, because someone earning 15 lakhs was earlier paying 25% instead of 20%. And above 15 lakhs, this is where I believe anyone who's earning between 15 lakhs to 5 crores, nothing extra special for them, no big incentives for them. So they would feel a little left out. So either you have to be middle class or ultra HNI.
You have to be either middle class or ultra HNI. You're basically saying that this 15 lakh and above until 5 crore, that is the unchanged bit. Let's take that for an example. Let's simplify that per se as well. And I want to specifically talk about the 5 CR plus as well. You spoke about that. Say 5 CR is what your income is. Why don't you break it down for us and tell us how exactly this is going to pan out now?
So this surcharge that has reduced, only people who are earning greater than 5 CR will be benefited. So for simplification, we take an example of an individual actually earning 10 CR. So now,
let me remove this and make it easier for you. Yeah.
Right. The change for this person is that his income that was between 5 crore to 10 crore. So 5 crores of incremental income above the 5 crore of base income. That is where 3% roughly of tax outgo has reduced, which means on anything that I earn between 5 CR to 10 CR, I'm now paying 3% lesser taxes effectively.
Okay.
Which means on 1 crore, I'm saving 3 lakhs of taxes. So on 5 crores, if I'm earning 10 CR, I'm saving 15 lakh rupees. So this is big. And as this figure rises, if someone is earning 15 crores, 20 crores, for every 1 crore of additional income, any HNI is saving 3 lakhs per crore.
That's huge.
That's huge, and I think this is very important because these were the people who would then, either try to avoid taxes through legal, illegal means, or would shift this income to a corporate and take advantage of 25% taxes. So when you rationalize these people, you incentivize that, flow of black money is reducing because now you can say that 3% lesser taxes. And I think this is the right step because this is where income tax comes from. These people are the ones who give income tax revenue to the government, and if you're reducing taxes for them, you're actually incentivizing them to stay compliant. So big step.
Big step there. So we spoke about HNIs. Let's get back to our lower income group as well and say what's happening there. Let's take a similar example. Let's take about 10 lakh or so. What happens then?
Right. So if someone is earning, I would say 10 lakhs.
Correct.
Earlier, the bracket was simple. Anyone earning 10 lakhs has to pay 20%. Now, if this reduces, let's go back. If this reduces to 15%.
15%, which is 5% down.
Which is 5% down.
Yeah.
Then, so it gets a little complicated because the steps, because every time on your first 0 to 3 lakhs, it's nil. On the next, it's 5, and taxes are, attached that way. But roughly saying, on the last 2.5 lakhs, so the change is between 7.5 to 10. That is where the reduction has happened. So in the last 2.5 lakhs, if you reduce it by 5%, that's a gain of 12,500 rupees.
That's again a gain over there that you're seeing. What about these 15 lakh above then? I'm still sort of caught up with what are these people thinking at this point?
Again, I mean, per se, nothing is directed towards them. So no direct impact, but because slabs on the previous segments have reduced, they will be benefited. So earlier, on the first, say, 12 lakhs of their income, the slab was more than this. It was 20%. And on anything that earned between 12.5 to 15, they paid 25%. So between 12.5 to 15, that's 2.5 lakh rupees. Now they are paying 20% instead of 25%. So 5% savings there. Again, 12,500 there. Probably similar amount here and here. So something for them, but that's incidental. That's not directed towards them. And considering how much benefits people earning above 5 crores have got, I think it's fair that they would have expected more.
They would have expected more. They've gotten squeezed in between the two slabs over there. So clearly one can say that the writing is on the wall. The government was very clear last year before the budget. One has to give relief. One has to give relief with the cost of living going up. One has to give relief with inflation costs as well. So that's been kept in mind.
I think in terms of principle, I really like this, that, you want the richest of the country to actually pay you more taxes and stay compliant and reduce the flow of black money. So I'm not, if you look at the impact, it might not sound really great in terms of mathematics, but in terms of rationale and way we are taking this economy, it's a big step and a very rational step. Because, everyone compares countries by highest tax slabs. What's the highest tax slab in India? We say 43%. In US, it's something else. That's how you get compared. So in comparison, now we look a little less, expensive.
We look a little less expensive.
As an economy.
Can we also talk a little bit about what she mentioned, and that's a bit of a clarity we need. She said that now by default, the new tax regime becomes the tax regime by default. What exactly did that mean?
So if you don't choose specifically the old tax regime, and some people self-file, some people don't give a clear directive to their CA. So if you don't actually choose which tax regime you are complying with, the government will assume that you are paying as per the new tax regime, and any computation on the government side, whether you are in default or not, will actually be calculated as per the new tax regime. So either you mention you are following old tax regime, or just pay taxes as per the new tax regime.
That's a very important point. People are going to miss that right away, and please take a note of that with your CAs as well. So I think that's largely it. There's a reason to smile. Just to sort of wrap up, this segment. It's a reason to smile for people who in the lower, income bracket, those in the higher income bracket as well. Some relatively half a smirk over there for those who are caught up with 15 lakh plus. But there seems to be more, that the fine print. She did say that Annexi has more bits involved. So we need to see what exactly is going to go on. You can log on to moneycontrol.com as we speak to you and take a look at all that data and as and when it is emerging. For now, it's back to Mahalakshmi in the studios.
Welcome back. Phenomenal budget. I mean, everything that one was expecting for GDP nominal growth rate has come in at 10.5%, fiscal deficit of 5.9%, just under 6%, which is very good news. Huge capital spending. It is better than anybody would have expected. 10 lakh crores. The best assumption was 9 to 9.5 lakh crores, but it has come in at 10 lakh crores. Plus, the state, the interest-free loans to states has also come in at 1.3 lakh crores. So that means the overall 30% hike over last year. One little caveat, we have to look at the public sector spending also. That number can kind of skew the growth numbers, but in itself, these numbers look great. It's quite heartening that this kind of capital spending she's been able to orchestrate, despite the fact that she's been able to orchestrate this capital spending while keeping 5.9% as the deficit number, and that has been possible because of some kind of rationalization in subsidies. Fertilizer subsidy comes down to 1.75 lakh crore from 2.25 lakh crore this year. Food subsidy is cut down to 1.97 lakh crore from 2.87 this year. Again, petroleum subsidy comes down to 2,500 crores from 9,000 crores this year. And Prime Minister Kisan is also at 60,000 crores. So overall, I would say a good budget. And of course, the last thing, but an important thing, we are moving away from the exemption regime, and the new tax slabs have been now recast in a way that it becomes more attractive for people. So we are moving away from the exemption regime. Of course, the biggest pockets of winners out here, spending. It's almost like the question paper was leaked. So exactly on expected lines, railway spending has gone up. Overall infrastructure has gone up. So there's some good news for PSU stocks. Pretty much on expected lines, I would say, with a tinge of positive surprise, plus no negative surprise on the capital gains front. Santosh.
Well, clearly, yes, it's a big sigh of relief for the market as well. The biggest being that there's no change in the capital gains tax structure. But other than that, the fact that the market was quite light in the run-up to the budget, that also seemed to be helping. But Mahalakshmi, I would be a little skeptical here in each of these cases. So for instance, be they rail stocks, infra stocks, all of them had seen a good run-up and they had actually been flagging. So probably what you are seeing, maybe Rohit would be in a better position to speak on that. Probably we could be seeing some kind of short covering of positions here, the fact that market is quite light. But after that, once again, the focus will shift to fundamentals, and that is where I think the key challenge arises.
Fair enough. Rohit, what are technicals looking like for the market now?
So we're at a very, very good point. The Nifty is close to crossing its 20-day average, which was 17,942. The Bank Nifty, we spoke in the morning. I said the next major hurdle is going to be near 42,000. We have now come close to that, but we haven't crossed it yet. So if we do close above the 20 DMA for both these key indices, I think that will be a very positive sign. And like we said earlier, that this is coming on the back of poor sentiment and the short positioning by FIs. It definitely creates a situation which will result in short covering by people who got too negative on the market, and that should add to the rally on the upside.
Sure. We go on to Rashesh Shah from Edelweiss. Rashesh, your take on the budget?
Yeah, hi Mahalakshmi. I think hearing the sound of your voice and the excitement from all of you, and I think what is going on in the market, I think it is actually a very good budget. I was, in order to prepare for this, I was trying to figure out what could be the things which are bad in the budget, and it's honestly a very few, hardly anything you can find which is bad. I think the ones I like are obviously reduction in tax, no tinkering with capital gains, the spending on infrastructure, both the physical. I think the other part on the digital infrastructure, the DigiLocker and the entire financial information registry being set up, all these are very big enablers. So I've been very bullish. I think the drivers for India going forward is going to be the setting up of the physical and the digital infrastructure. And I think both were fairly big things in the budget. Obviously, reduction in the fiscal deficit, reduction in spending on the subsidies, all this is ideal. I mean, for anybody in business, they would say government should spend on subsidies slightly less by being more efficient. They should cut on income tax, which they have done. They should invest more, which they have done. So almost everything is as per the playbook, I would say.
So, Rashesh, I'm also thinking about, what could go wrong, because that is a natural question. Every time you're exuberant about something, and this does look like everything that we asked for has come through. And if history tells us that every time on the budget day, we are exuberant and everything looks like good news, the year doesn't really pan out like that. There are always surprises in store. But that apart, what is the risk in the sense that, do you see to these numbers, the risk is of overshooting or undershooting? Last 2 years, if you would recall, the finance minister has been fairly conservative in estimating both on the revenue side and on the tax side. Both growth was understated, tax buoyancy was understated, and we overshot on the upside. This year, what is your bet?
I think if you go by the track record, the FM has consistently focusing on what we in corporate call, under promise and overachieve. And I think she continues. So I would think it will be the same. I also want to clarify that I think this is a very good budget for the economy. For the stock market, I think there are many other factors like liquidity and foreign investors and corporate earnings growth quarter to quarter will get affected. So I don't think we should automatically extrapolate that in the immediate future, a good budget is equal to a good stock market. I think a good budget is very good for the economy. I think India's economic growth is getting restarted after COVID and all. And I think on that count, I would say this is a very good budget. Inflation is coming down. There is still capex required. Government continues to invest. For the last almost 3 years, government investment has been what has been driving the economy. So that continues, which is good news. I do think as interest rates stabilize, the corporate, the private sector capital investment will also start picking up, and that will become momentum for further growth after that. So I think they have done almost everything by the playbook. I think, one of the first things when you do things like this is you should not do any harm. And I think this is the one budget that follows that. There is no, I don't think anything in the budget that will cause any harm to the economy. So overall, I think very good budget, very balanced, very stable. And actually that is what we need. We don't want this annual bouts of instability coming in.
Fair enough. Shankar, good to see you. What's your take?
Likewise.
What's your take on the budget? The best that we could have asked for?
Can you hear me, Mahalakshmi? Loud and clear?
Yes.
Okay, fantastic. Yes, exactly. I mean, the thing from a stock market perspective, all of us were apprehensive about was tinkering. This favorite Indian finance ministry term called tinkering. Everything is always tinkered with permanently. So we were expecting some tinkering with the LTCG, always in a bad way, never in a good way. So just hold on 1 second. Hello? I'm on a call. Please speak later. Bye. Fortunately, I think the market sentiment wasn't too great going into the budget, and I think that may have weighed on the finance ministry's desire to tinker with the LTCG or in terms of period or the actual quantum. So that being out of the way, I mean, for the stock market, there is nothing to, complain about. And for the economy, as Rashesh was saying, there is everything to feel joyous about. I just think it was a fantastic budget by all means, very short, very crisp. And, one's blood pressure actually never went up, and I had a blood pressure machine next to me.
Hi, Shankar, Santosh here. So are you tracking the flows? Because at this point, we are still seeing that foreign investors seem pretty much negative on India. Do you think this budget will change that perception?
Yeah, that's a very good point, and I want to spend like 2 minutes over this. So my view is this, that the elephant in the room for India are the twin deficits, which are now into double digit, based on whatever estimate you want to take, 6% or so of fiscal deficit, and around 4, maybe even more. We'll see how the year goes. But looking at export situation, I think it's extremely worrisome. So we are looking at a 10, maybe 10.5% twin deficit problem. And more importantly, we have a balance of payment deficit. We had it last year. We are going to have it in FY24 also. Looking at the overall CID and the fact that, to fund the CID, we needed foreign capital. But on the FPI side, there is a one-way avalanche of selling. And I would have wanted, if I were a reactive finance minister, I would want the country to get dollars, because we really need dollars. We cannot be complacent. And the way to get dollars is to make it extremely attractive for foreigners to invest in India, which means reducing or removing the long-term capital gains, on FPIs. I would have done that if I were the finance minister. But we need foreign investors to feel confident about India, and they don't seem very confident based on the pace of selling. And that's a problem area.
Shankar, is that really to do with India, or is it just global sentiment? The fact that we went up so much last year, there had to be some element of moderation because we have become expensive as a market. Can that equation really be changed by way of policy?
I don't think India has gone up. India is flat for a year. We have only done well, relatively speaking, and the selling has been throughout the last, I think, 1.5 years. Throughout the good period that India has been outperforming. It's not like a recent 1 month selling bout. I think policy does make a difference. Even at the margin, I would have at least done my bit as a finance minister to encourage foreign investors to stay in India and put money in India. Most emerging markets don't have taxation on foreign investors. I don't think it's a good idea at all. I think of the many good things this government has done, probably the worst thing it has done is to impose tax on FPIs. I don't think that's a wise thing at all. We are still a dollar deficient country, and our so-called FX reserves are not earned. They are hot money reserves. It's not that we have a trade surplus like China. So their 2 trillion is actually earned surpluses. Ours is really short-term surpluses, which we call it as $500 billion. That can evaporate in no time. Also, if we continue to run the kind of BOP deficit, at least my math tells me, coming up in the coming year. So I think that is one area. But there will always be quibbles. But otherwise, I think we are all sitting back, fat and well-fed because of the lower tax rates and the higher stock markets.
Rashesh, do you agree to this point of view? And why do you think the finance minister would not consider doing this? Is this just a decision that is being pushed to a point where it becomes necessary? If it becomes absolutely necessary, if there is that kind of risk perception, then we will do it. Till that point in time, we don't need to do it. Is that the thinking?
I think partly, but I think in the last couple of years, India, as earlier Shankar said, we need to get more investment. But I think for the last couple of years, the government inclination is to get it more by FDI. So if you look at this entire, the China plus one strategy that is going on, there are more and more global investors wanting to come to India to invest via FDI. So I think between FDI versus FII, I think the government is more inclined to give any concessions for FDI investments. For FII, I think, as you know, the money comes and goes. It's part of the global allocation. India has been more stable. But what is happening is, as other emerging markets are coming back, there is a reallocation, currently going on between foreign investors. And in a way, I think it's a good thing. The amount of selling foreign investors have done in India for the last couple of years, and still our markets are where they are, is actually a very, very plus thing, because they will increase allocations to India. But that is not just a function of Indian economy. That is a function of how Indian markets are doing relative to other markets. So I think we should keep that in mind. And the finance minister can't be catering to that, because there are so many factors that go into global investors investing in India in the stock market, that I also believe the FDI investment is a good one. And I think if we can get about $100+ billion of FDI investment, that will be very solid for India.
Rashish, you just mentioned that there are many factors that go into making market sentiment, and not necessarily that based on this budget alone we could see the markets going up. So what would your major concerns be at this point in time?
I think inflation obviously continues to remain a concern because, we all know it is coming down. We know it should come down. But India has always been very inflation prone. I think the second is in the coming year with the global recession around the corner, it will affect our growth a little bit. I think India has a core growth which is very stable. It is not dependent on global growth, but there is an incremental growth that gets affected. So I think if there is any slippage on growth from current estimates of approximately 6.5 to lower, it could result in government, collections being lower and all that. So I think slippage is because of lower global growth, and the other would be inflation. Other than that, I don't think there is a lot more to really worry about in the coming years for India.
We also have KVS Manian, whole-time director, Kotak Mahindra Bank. Manian, welcome. Is it the best that you were hoping for?
I think it's a fairly decent budget. I heard one of your panelists say, I think it was Rasesh who was saying that, I think no bad news is good news in budgets, and it was a fairly well-articulated, the well-articulated priorities over 7 issues. So I think there was a fair amount of detailing in that budget on those 7 priorities. Overall, if I look at something that specifically you might ask a banker, it also talked about reviewing regulations to make them simpler. While at 5.9, it was a tad higher than what markets were probably expecting, but overall, the market borrowings are not exactly higher than what the markets were expecting at about 11.8 lakh crores. So I think bond markets will be okay. On the personal taxation side, it seems to be, have done good for the middle class, as the finance minister said, and hopefully that will spur consumer demand. On the capital gains, a lot was said in the pre-budget discourse where there was expectation that something will change in capital gains and tax will come in. The fact that it didn't is a positive, while there were some details about higher value insurance policies and some higher value housing sale and all that. So maybe there was some fine print there, but broadly it is okay on personal tax level as well. And, Mahalakshmi, I had written in Moneycontrol about the 4 priorities that I would have liked the finance minister to focus on: fiscal deficit, current account deficit, sustainability, and ease of doing business. All 4, I would say, the finance minister has done a great job.
One specific question, Manian, on this capital gains tax, because you talked about it. It's great for the equity markets that is not tinkered, but the articulation of that idea this year at least was the fact that the gap between deposit growth and credit growth is now fairly huge. And unless you sort of, brought in that with some level of parity, deposit growth cannot be augmented. So you need to sort of at least dynamically, try to fix that in the, medium term, 1 or 2 years. Is that a dampener for you as a bank?
So, yes, of course, as a banker, I keep thinking about competition to bank deposits, and, even increase in limits on, small savings is a competition for bank deposits. Yes, just now, in general, the expectation is that the banks will have a war for deposits, and therefore, if it had come, I would have probably liked it as a banker. But looking at the overall context of things, I think it's okay. I think with some improved liquidity, and if the government spending goes back to normal, which I think there is some curtailment of that, I think if the system liquidity increases, banks will still be able to garner deposits. So I am not that unhappy about overall outcome in the budget.
Manian, one of the key concerns of the market also has been the rural slowdown. So in this budget, do you think the government has announced measures, adequate measures enough to address this problem? What are your key readings on that front?
Yeah, so if you see the first point of our priority was inclusive, and there were a lot of things there which were for the small, the lower end of the economy, right? So I do think that some of it is, of course, only one has heard it in the speech, and of course one has to see the fine print and the execution of that. But there did seem some focus in the point number 1 on inclusivity, where they did cover a lot of schemes, small schemes, addressing many small segments. So I'm hoping that things will look better. Yeah.
We also have Prashant Jain right here at the studio. Prashant, capital spending hiked to 10 lakh crores, better than any estimate that anybody had on the street. Are you surprised?
Yes, pleasantly surprised. I think this is good because private capex, I think it will kick in, but still might take some time, and I think the demand conditions in the economy were not very strong, and so I think this is a step in the right direction, and to do this along with the moderation in fiscal deficit, I think is win-win, and I think what is making that possible is the very high base of fertilizer subsidy last year.
Prashant, PSU banks, they have been one of your favorites. Now, that seems to be the only segment in today's market that is not doing all that well. What are the concerns there? What do you think could be the concerns there?
So, I mean, I don't know. I mean, day to day it's extremely hard to forecast, but I think the trade between banks that were offering a lot of value and the ones that were not offering a lot of value, basically the ones that were saddled with corporate NPAs, both few banks in the private space and almost all the banks in the public space, I think that trade has played out pretty well, and so that low hanging fruit is gone. So I would not expect any sharp outperformance by the PSU banks going forward.
Coming back to you, Rashesh, do you think this budget has enough by way of you creating an environment that can actually accelerate the pace of private capex? Because that is something, like Prashant also pointed out right now, the demand conditions for last year, of course, in certain pockets we have driven spending, consumption was better and all of that, but they were also accompanied by other pressure points, for example, for staples companies, etc. Now, do you think there is a case for a faster recovery in private capex?
I would think so. Actually, contrary to what all of us believe, there has been private capex going on for the last couple of years. A lot of that has been not greenfield, but more brownfield and M&A and acquisitions. We've seen a lot of NCLT, almost every asset in NCLT have got a lot of bidders. So what a lot of corporates are doing is, instead of doing greenfield, because we had this entire stressed asset and NPAs and all which had accumulated over the years. So I think the first phase of the private capex has already started, but it is happening more in brownfield and through M&A. I do think, this kind of assets are slowly getting over, and maybe by the next year, if we have stable interest rates and I think the same kind of growth continues, the private capex into greenfield will start. So I just differentiate between the two. The other thing, I do believe that government has the enablers for our economy are going to be infrastructure, both the physical infrastructure and the digital infrastructure. We have seen the growth of Aadhaar, UPI, now they are talking about DG Locker, and then, we have seen FASTag, and now we are talking about OCND, OKIN, Health Stack. I think this, I do believe in the next 3 to 4 years, India will become one of the best countries in terms of the digital infrastructure we have. And with UPI and Aadhaar, we have seen that we can do it at scale. So if we can keep on replicating that, along with the investment in the physical infrastructure, I think it will be the biggest enabler for growth. And I think this particular budget does, on a structural basis, speak about that also.
Fair enough. We'll stay on this private capex for a few more minutes. So back to you, Manian. Do you see, last year, of course, our credit growth has jumped up to now about 14% to the industry. And last year, that number was perhaps also a little exaggerated because of, escalation in raw material prices, working capital requirements and all of that. Do you see that number going up any higher in the next 6 to 8 months?
So, Mahalakshmi, the way I look at it is, I think the credit growth looks robust just now, especially the retail side. And I expect the momentum on the retail credit growth to continue. And on the corporate side, like we have been discussing on this panel as well, if the consumption goes up and generally if all these initiatives lead to better consumption and demand, and therefore over a period of time the private capital expenditure will happen. And when that happens is when it is needed to spur credit growth. Just the working capital requirements may not be enough to spur growth. But I see a trickle-down effect of the capital expenditure by the government down, as well as the push to the demand that will happen through these measures to eventually result in private capex and leading to credit growth. So I would say I'm reasonably optimistic about credit growth from here on. It may not accelerate much further, but it will sustain, is the way I look at it.
Fair enough. From a stock market perspective, Prashant, how do you see the core industries pack right now? Because a lot of growth and recovery has already been priced in. I mean, that's what we have seen in the last 2 years, the way stock performance has happened. Now, going into this year, are we going to be able to build on that growth to ensure that we are able to sustain the stock prices also?
Mahalakshmi, I think, while it's very hard to forecast stock prices near term, I think markets should sustain. These are markets that are fairly valued. I think the economic outlook is very robust, but a lot of that seems to be priced in. Indian multiples are slightly above longer term averages. So I would expect returns that are in line with the nominal GDP growth of the country, around 11-12% CAGR. I think that kind of returns are sustainable over medium to long periods. But higher than those returns, I think, look less likely to me.
Sure.
Sorry. So at this point, which are the sectors particular? I know you're mostly on the top-down thing, but you always talk about valuations.
See, I think to my mind, basically the consumer space looks quite expensive. And other than that, I think most of the other sectors seem to be fairly valued. I do see some value in banking because, as Mr. Mandian was saying, credit growth is sustaining, corporate balance sheets, leverage is extremely low, NPAs have been virtually cleaned out. As Mr. Rasesh also said, that all the legacy assets are close to being sold out. That tells you that NPAs have been cleaned out. I think banking should continue to experience above nominal GDP growth. I think that is where one is seeing some value. But as I said earlier, there are no low-hanging fruits in this market.
You always say, Prashant, that above a certain P of Sensex, sell it, and when it comes to a reasonable level, buy it. So what is that level of Sensex right now where you feel it's an appropriate?
No, I think these are markets that are fairly valued. We are neither in the excess zone nor in the undervalued zone. So I think these are markets that are fairly valued.
We'll go back to Manian. Manian, there was this announcement on National Financial Information Registry to be set up for efficient flow of credit. How do you read into this? I mean, does this sort of blunt the proposition for some of the fintech companies?
So 2-3 things on that, Mahalakshmi. I don't know the full details. Of course, I have only heard her speech. But number one, on principle basis, I think any central information about clients that get set up and information asymmetry reduces, it helps clients, right? And it also helps the lenders, because if you see in all other initiatives like that earlier, whether it was the credit bureaus or initiatives of that kind, acrylic in corporate side. All these always help both sides, the lenders as well as the borrowers. So in general, I am supportive of initiatives of this kind, number one. Number two, what this does is democratizes information, and I think it increases competition. The information asymmetry otherwise a particular lender may hold goes away, and therefore it usually helps the borrower. So I don't know the details of the initiative, but in principle, I am supportive of any initiative.
Manian, I'm surprised you say that, because information asymmetry is definitely an edge, whether it is banking or stock markets. And one of... I'm saying information asymmetry is for sure an edge, whether it is stock markets or banking.
Yes. No, I know that. From a lender's perspective, it could be that, but from a borrower's perspective, it is not, right? So I think the objective of this initiative is to reduce that asymmetry and make it make lending more democratized, right?
So my question is, for fintech, what does it mean? What does it mean for some of the lending fintechs? Because the proposition there is that they have the data edge and they have proprietary information, and that gives them edge in terms of reducing or minimizing credit losses.
No, so Mahalakshmi, there again, my view is it is not about the data. It is about what you can do with the data. And the skill people have to bring in is what they do with that data and how they use that data. And that's where people have to differentiate. Your skill cannot be in information asymmetry. It has to be in what you do with that information. And that's what, and second is customer experience. So fintechs will have to find ways of better intelligence, AI and ML and other analytics on that data. They'll have to do and find better ways of using data, and second, provide better customer experience. And that's what they'll have to work on. So yes, to some extent that paradigm changes, but that's the right thing to do.
Okay, fair enough. So we also have S. Naren from Prudential ICICI AMC. Welcome, Naren. Any disappointments from the budget, or are you super excited?
Actually, we have converted the budget into an excitement event, but there isn't much scope for excitement beyond a point at this point of time, because how can you reduce taxes beyond a point? There is no excise duty changes that has gone into GST bill. So, I think there is nothing much that you can do. And if you're sitting at 6.4% central government fiscal deficit, how can you increase it from there? There is no scope to give some tax concession and increase it from 6.4% to 7%. So I think there wasn't any big scope for excitement. So things are good. The economy has been managed well over the last 3 years. So I think they did what was possible, and that is where we are seeing it's a growth budget, but with very limited scope for them to give tax concessions at this point.
Sure. So, in the last 2 years, the finance minister has been fairly conservative in terms of growth assumptions, whether it came to GDP or tax buoyancy. Do you think the risks this year is more towards overshooting the numbers she has presented, or undershooting?
No, I think the last few years were very different, and the next 1 year will be very different. Next 1 year, the nominal GDP growth will be much lower than what you saw in the last 2 years. In the last 2 years, you had the benefit of a very high wholesale price index movement, and therefore the nominal GDP was shooting up like a rocket. Whereas if you look at the next 1 year, you're going to see a situation where nominal GDP growth will be much, much lower. And you're not going to see, I don't think you're going to see asset price inflation, particularly in equity markets on the scale that we have seen in 2021 and 22. We are going to be in a much more difficult environment for revenues to zoom up the way it did in the last 2 years. So I don't think there is any scope for revenue underestimation on the part of the government at this point of time. And that's why the last year and the year before, and the government did some fantastic job in computerization on the direct taxes side. And prior to that, on the GST side, that benefit, at least a good part of it has already been realized. Maybe they'll realize some more out of it. but there isn't scope for that kind of computerization increase in either direct taxes or GST in the next year. So I would say that it's a much more difficult environment for revenue growth, but the revenue growth over the last 2 years has been fantastic.
Fair enough. We also have Prashant Kemka from White Oak. Prashant, what's your take on the budget?
Certainly. First of all, I want to say hello to all the fellow participants and to you, Mahalakshmi, and thanks for having me here. While I appreciate what Naren is saying in terms of the scope for excitement is lower these years than it used to, let's say, a few decades ago, because there used to be so many more tinkerings then. What we look for from budget is, in terms of excitement, is whether there is any forward movement, which has been there for the last several years on aspects like, say, ease of doing business. First and foremost, that's most critical. I think the reason India's per capita GDP is still 2,000 some dollars compared to other countries. I think if you distill it down, in my view, to one factor, it is ease of or difficulty of doing business. And then, Prashant Jain there on the panel, first of all, congratulate him for starting his entrepreneurial journey. But I am sure as he started his journey, it's a lot easier now to start a business and do business than a few years ago, and that's something that this budget carries forward further. There were many small initiatives that were announced, which can go unnoticed because they're not so quantifiable. But I think they're very significant when taken together. First and foremost, what the FM announced about reducing the compliance burden on 39,000 compliance laws. Yeah, obviously the fine print has to be seen. But if indeed these are, material and meaningful, and no reason to doubt that, then that's a very positive step towards easing the, burden of doing business. Then there are 3,400 legal provisions that have been decriminalized. One of the biggest issues in or worries that businessmen have in doing business in India is there are so many laws where the punishment or where the any non-compliance with those laws is treated as criminal violation. So decriminalizing these laws, these are all very positive steps towards ease of doing business. Besides what the announcements the FM made related to the GIFT IFSC, as well as the, mitigating the tax disadvantage that startups have in India compared to most other parts of the world by increasing the carry forward status of the losses from 7 years to 10 years. So there's so many of these, and besides all this, the entire initiative, continuing the initiative on digitization of a lot of the procedures. These are all small in and of themselves, but taken collectively, continue
Sure, point
further.
taken, Prashant. The question is, all of these factors are, of course, are facilitators, ease of doing business, changes in the legal approach and all of that stuff. But in terms of concrete measures, do you see, what elements do you see that can actually play out and alter the complexion of growth, if at all it could, in the next 6 to 12 months? Is it the consumption piece? Is it, the rural piece? The investment piece, private capex? What could be the drivers, and have they been do you see them getting altered in any way in the next 6 to 12 months?
So the other big major push in the budget is the huge increase in capital outlay, the 33% increase, the 10 lakh crore that FM again pointed out at the start of the budget. Within that, obviously, infrastructure, particularly railways, where the FM pointed out 9x jump in outlay for railways compared to 10 years ago. So this is definitely a boost to job creation. And that's a very positive for sectors, all the domestic facing sectors. The banking sector obviously gets benefited whenever there is a boost to growth, and capital expenditure is boost to the growth trajectory of the country. So that is job creating boost, and it's a positive. While it is a single act, it's a very sizable positive increase of 33% to $125 billion is a very big positive to multiple sectors across the economy.
Fair enough. We're also joined by Saurabh Mukherjee. Welcome, Saurabh.
Thanks, Manashwi.
Lots of positive surprises. Anything that disappointed you?
I think the only missing piece, right? I think I agree with Prashant Khemka that it's a good budget. By and large, middle class gets money. A big jump in capex, 5.9% fiscal deficit target. What's there to complain? The only missing piece I thought was I didn't see enough of blue-collar job creation initiatives. It is clear from looking at corporate results over the last couple of years that COVID has pulverized people earning less than 2 lakhs per annum. COVID has pulverized them, their income earning potential has been hammered, and it wasn't clear to me exactly what the budget does. The FM did mention 47 lakh youth will be positively impacted, but it's not clear to me how that will happen.
Right.
And similarly linked to that is the whole skilling piece. 30 skilling centers were mentioned, but we remain to see can the country create jobs for blue collar workers. But overall very similar to what Ronald Reagan and Margaret Thatcher did in the 80s. The last 3 budgets in difficult circumstances have been very Reaganomics type budgets. You squeeze, you show degree of fiscal rectitude, and you give relief to the middle class, you give relief to businesses, and you create a pro-business environment, a pro-middle class environment, very similar to Margaret Thatcher and Ronald Reagan through the 1980s.
Any piece that will actually spur consumption in this
I think consumption will rocket after this, Manakshmi. If you look at that, right, people earning anywhere between, say, 2 lakhs to 10 lakhs, they're getting a 20 to 25% jump in income. Practical terms, post-tax income jumps 20 to 25% for people earning 2 lakhs to 10 lakhs. That's the category where savings rates tends to be relatively low.
Yeah.
And you're basically in a high propensity to consume class. You're giving them 25% extra cash. I think we will see very tangible jumps in low-income housing spend, motor cars, consumer durables, and so on and so forth. It's also interesting that the PM Awas piece has been pumped up so much. So low-income housing gets the supply side benefit and a demand side benefit. The demand side is through PM Awas. Supply side, you're giving that strata of society, people earning 2, 3, 4, 5 lakhs, a 25% income jump. Small town, low-income housing, I think, will absolutely roar after this budget.
Sure. Prashant, so from here on, how do you play this, core industries versus consumer from a stock market perspective? Does this you boost to consumption? Do you first of all agree that this change in the tax structure or incentivizing this exemption-free tax regime and these cuts should be enough to actually boost consumption?
See, I think clearly, the tax cuts are a positive, but I will need to recheck the maths, but I think it is basically 2 to 4% of the income, because tax rates have been cut. Effective taxation goes down by 15, 20, 25%. But as percentage of income, which is more relevant, it is just 2 to 4%.
Right. Okay.
So I don't think it's that big a boost to consumption. And she said it's 30 to 40,000 crores, which is 5 billion US, which is 0.15% of GDP or thereabouts. So I don't think it is material to move the needle. And consumption is more a function of the penetration levels of the category, and also a lot of consumption is taking place on EMIs. So I think interest rates, availability of credit, penetration levels are more important. Job creation is a far more important driver of consumption than personal income tax tinkering per se. I think the budget clearly is positive for capex. I would say it is by and large neutral for consumption, and capex, credit growth, I think that is what gets a clear support from the budget.
Sure. Naren, how do...
Just to quickly clarify the maths, the way I did it was if you're earning 15 lakhs under the new slab that the FM announced, you end up paying 5 lakhs. Right, you end up paying 5 lakhs if you're earning 50 lakhs. That's a 20% drop. So you pay at least a lakh less than what you used to. So on a 15 lakh income base, that person takes home 1 lakh extra.
About 6-7%.
Yeah. So that was the maths I was doing, and I was saying that. And if you go down to the 5 lakh strata, it's a little bit more. At that strata of society, giving people, every person, a lakh extra is a meaningful kicker, I thought.
Sure.
Fair enough. Naren, do you see the complexion of growth for the core sector and consumption piece? Which of the two would you pay from a stock market perspective? Okay, maybe that question can go to Prashant Khemka. I can't see Naren on the link. Prashant?
Mahalakshmi,
Yeah.
what was the question?
The complexion of growth, if you compare core industries versus consumers, where would you put your money?
So see the budget, at least so there's an, even without the budget, there are certain pace at which core consumption is growing and the capital expenditure is growing. So if you look at the budget per se, I think other commentators also agree, the boost is through the medium of capital expenditure. The capital outlay is heightened, but at the same time, it is, I see it as a more job creating budget. It's a boost to job creation as well, which does then spill into income generation, higher incomes, and tax. Obviously, tax is one element, but tax outgoes to individuals may reduce, but at the same time, I think the incomes also it provides a boost. Pre-tax incomes, it also provides a boost at an aggregate level, as it is more of a job creation budget. Also, I would say the absence of any major negative in itself is a huge positive for any budget. And this budget does not have any material negative on personal income tax or on corporate income tax or on capital markets income tax. So that itself is a positive boost from the budget.
Fair enough. Manian, one question for you. We've been talking about this, with interest rates where they are right now and probably rising a little more. There is this notion that a lot of money could actually move away from stock markets, which have been really buoyant over the last 2-3 years, especially post-pandemic, back into debt. Do you see that trend actually playing out? At least if you look at the mutual fund flows, the discretionary part of investments have come down, although the SIPs are holding up. It's, probably slightly some very tiny moderation there also. But the discretionary capital that was coming in, which was quite robust even last year, has started to fade. So do you see this trend actually becoming a threat to equity market flows?
Mahalakshmi, it is natural when interest rates get back to, from the lows, they move up and then they start an upward journey and there is some stability at the upper end. It's very natural for allocators to allocate more money into debt than equity, than they have done in the past, right? So in that sense, going forward at the slightly elevated rates, which I think remains for a while. It will remain there for a while. I think allocations to debt are likely to increase, and I don't see it as a threat to equity, but it is just that in cycles people allocate capital differently, and in the past when interest rates were very low, extraordinary amount of money people allocated also to equity because the differential returns were probably much higher. As the differential returns drop, like Prashant was saying, if you expect the markets to give nominal GDP growth kind of returns, say something around 10-12%, and if debt starts yielding 7-8%, the differential gets that much narrower, and therefore there is tendency to allocate more to debt.
Fair enough. Saurabh, what's your sense on the domestic flows?
I think this will be fine. So think about it, right? The RBI has really no strong ground to now hike. They might do a 25 bips hike if they want to keep up with the Fed. But the budget doesn't look to be rapidly inflationary. Once the FM says 5.9% FY24 fiscal deficit, the RBI has no great reason to hike. And provided global inflation cools off, rates over the next 12 months are more likely to go down than to go up. Typically, when rates start going down, basically as you lower the discount rate, equities start reviving again. And in that sort of circumstance, given that we are a very young country, median age of an Indian is 28, given that we are a young country, the government is cutting tax rates, the typical Indian saver is likely to tilt towards equities. Yes, there might be some tactical movements from equities to debt, debt to equities, but the broader story of the next 10 years, 20 years will be financialization of savings. The RBI says even today 95% of household wealth is in physical assets. And I think the big story of the next decade is the gradual financialization of those physical assets. My estimate is we have something like $9 to $10 trillion in India of household wealth and physical assets. So you can see even a 10% shift brings in $1 trillion into the financial markets. Some of it will go to debt, but I suspect the overwhelming majority will go into equities.
Fair enough. What is your sense, Prashant, on domestic flows? Because that is one factor that has really played out in our favor in the face of foreign selling all of last year. You know, there is something that was really heartening, which was very steady flows from domestic institutions.
I think, Lakshmi, this is very hard to forecast to my mind, but I think it's fair to say that equities have become core. But I think they still remain cyclical. So there is the secular base has gone up for sure. And that is where I would agree with what Saurabh said. But I think we need to be mindful of what banks are beginning to offer. And banks are now beginning to offer close to 9%. And I have seen in the past that whenever they start offering this kind of returns, there is some impact on equity flows. So 9% high single digit in fixed income, I think does pull away some amount of money.
Sure.
The credit growth and deposit growth has to converge for bank deposit rates to stabilize. I think we are moving in that direction, but we are not quite there yet.
Sure. Sort of pockets of opportunity from anything that changes from today. Of course, from medium-term perspective, obviously, stock trajectories are very different and probably totally disconnected from what happens in the budget. But I'm just looking at some of these value plays. I don't know whether you have ITC, for example, ITC. Immense strength today, down 6%, and then it sort of bounced back. Public sector banks, had a great run, but I think that question I'll pose to Prashant. But from your perspective, in the entire consumption basket, which you tend to invest in, how are you placing?
So I think the consumption benefits are obvious, right? As you give relief to middle classes and you create a more connected India, you join up the country. There's a lot in the budget which will benefit larger companies, right? Larger companies which need pan-India infrastructure, better roads, better airports, come out of the smelling of roses. But I think the big beneficiary, right, where both capex and consumption spend come together is private sector lenders. Private sector lenders will benefit both from the capex initiatives in the budget, from what I could see, 3 lakh crores of extra capex from the government, and the extra consumption, around 35 crores of tax relief, which will become extra consumption. And the other constituency which I think we should look out for at carefully is the FII constituency. Given the events of the last 12 months around the US Fed hiking by 4.5%, right? 4%. The US Fed has hiked by 4%. Then the recent events over the last 10 days, the FIIs had got spooked. In light of inflation coming off globally, in light of this budget not giving the RBI reasons to complain, I think the return of the FII with a vengeance over the next 12 months is something that is more likely than not after the budget. The budget improves the probability of significant FII flows, and at a time when China still faces daily hostile action from the Western governments, a reallocation of some of the $3.5 trillion of FII money to China, a reallocation of some of that towards India, I think over the next 12 months becomes more likely than not after this budget.
Sure. I'll thank Manian and Prashant Khemka. Thank you so much for your time today. We'll take a short break and come back to discuss more about how the various sectors are poised from a medium-term perspective.
Personal income tax. now I come to what everyone is waiting for. Personal income tax. I have 5 major announcements to make in this regard. These primarily benefit our hard-working middle class. The first one concerns rebate. Currently, those with income up to 5 lakh do not pay any income tax in both old and new regimes. I propose to increase the rebate limit to 7 lakhs in the I propose to increase the rebate limit to 7 lakh in the new tax regime. Thus, persons in the new tax regime with income up to 7 lakhs will not have to pay any tax at all. The second proposal relates to middle class individuals. I had introduced in the year 2020 the new personal income tax regime with 6 income slabs starting from 2.5 lakh. I propose to change the tax structure in this regime by reducing the number of slabs to 5 and increasing the tax exemption limit to 3 lakhs. The new tax rates are 0 to 3 lakh, nil. 3 to 6 lakhs, 5%. 6 to 9 lakhs, 10%. 9 to 12 lakh, 15%. 12 to 15 lakhs, 20%. And above 15 lakhs, 30%. This will provide major relief to all taxpayers in the new regime. An individual with an annual income of 9 lakhs will be required to pay only 45,000 rupees. This is only 5% of his or her income. It is a reduction of 25% on what he or she is required to pay now. That is 60,000. So in the place of 60,000, it is now only 45,000. Similarly, an individual with an income of 15 lakh rupees would be required to pay only 1.5 lakh or 10% of his income or her income, a reduction of 20% from the existing liability of 1,87,500 rupees. My third proposal is for the salaried class and the pensioners, including family pensioners, for whom I propose to extend the benefit of standard deduction to the new tax regime. Each salaried person with an income of 15.5 lakh rupees or more will thus stand to benefit by 52,500 rupees. My fourth announcement in personal income tax is regarding the highest tax rate, which in our country is 42.74%. This is among the highest in the world. I propose to reduce the highest surcharge. Rate from 37%.
Welcome back. We'll continue the conversation around sectors. So 4 pockets we want to focus on right now. Prashant, I'll come to you. PSU banks, railway stocks, affordable housing, insurance companies, huge negative news, this, tinkering with tax slabs and doing away with exemption, at least making that the new tax regime more attractive. That is one big pocket. So these four or five pockets, how do you see them? First, PSU banks.
Well, Lakshmi, I think we have moved past that NPA cycle. So that whole divide between corporate and retail banks, which I think is a better way to describe this, I think we have moved past that. So I don't think we should experience the kind of gap in returns what we experienced in the last cycle. If you recall, some private banks and all PSU banks had large corporate books, large NPAs. They got undervalued and valuations have now caught up. So I don't think one should focus on that divide anymore. Even the balance sheets of erstwhile retail-focused banks and erstwhile corporate-focused banks in many cases have converged in terms of the retail and corporate loan mix. So I think that
trade has played out now.
Yes, it has.
It's done its course. Yes. Okay. Affordable. We're also joined by Jigar Mistry now. Welcome, Jigar. Your quick take on the budget, and then we will talk about sectors.
No, I think looking at what we had sort of expected going into it, the fiscal deficit like to like is not that big a number. The revenue expenditure is a little bit surprising because, from 15.8 lakh crore, if you remove the interest subsidy and the defense payments, is going up to just 16.2. So they might have reallocated a lot of it to capital expenditure to make it that big bang 10 lakh crore number. But other than that, it's just a bit of tinkering. They're assuming about 10.5% on corporation taxes, 10.5% on income, 12% on GST. So it looks like a very credible set of numbers to start with.
So coming to pockets, the news flow from the budget. Railway stocks. Do you invest in railway stocks at all? How does that pocket look to you?
No, that's broadly okay. I think the real big piece of shift that's happening is in the insurance space. Because most of the stocks are down, and I think it's not so much to do with the sub 5 or the more than 5 lakh ticket size that people are expecting. I think it's much more to do with the willingness of the current incumbent to shift away from the old scheme and into the new scheme, right? So a couple of months will still be bumper because everybody will start to pile on until the exemption ends by March 2023.
Yeah.
But after that, I think you will have to take a call on whether the insurance can live with this scheme. HDFC Life, I think, is the highest impacted here. Their average ticket is 1.8 lakh. Max is 1.5. So maybe sub 5% of policies for Max, 8-9% for HDFC Life, I would presume. But difficult to calculate unless the company comes out and announces themselves.
Sure. So, Saurabh, how big a negative really is this insurance thing? Because we are obviously consciously moving away from this exemption regime to a non-exemption kind of framework, and traditionally insurance have been bought primarily for tax reasons. Maybe it has got somewhat changed in the recent few years. People also feel the need for insurance a little more, but it's largely an exemption driven kind of business, especially when you look at the fourth quarter sales versus the rest of the year. How big a shift is this?
So I agree that HDFC Life, because it sells the biggest ticket policies, gets hit. But I'm not so sure it's going to be that big a hit if I take a 2-3 year view. I'm sure they'll readjust their pricing policies. Just by way of disclosure, we have a fairly large holding in HDFC Life. But more generally, right, the whole point of view around insurance will increasingly become protection rather than tax relief. I agree with you. The insurance sector, for whatever reason, had positioned themselves at a bit of a tax arbitrage for many years. That whole tax arbitrage piece gradually will go out of the window as the government will push people, incentivize people, nudge people into the new regime. So whether it's in the mutual fund, this whole ELSS piece, or in the insurance community, making investments to get a tax break will gradually become yesterday's story. The government will give a neater, simpler tax regime, and people will make investments because they want to financialize their wealth and save for retirement. Firms like HDFC Life are already built those policies, and as I said, as we financialize wealth over the next 10 years, I think there'll be an enormous growth runway for well-run mutual funds, life insurers and wealth managers.
Fair enough. Prashant, how do you think the growth trajectory for insurance companies will sort of get altered by this move? Do you think there will be a significant difference?
So Mahalakshmi, to be honest, I mean, one will have to dig into the individual composition of these companies. And I mean, I am not current with that. So maybe if you allow, I'll pass this.
Okay, fair enough. The rest of the pack, the infrastructure pack, your take on the infrastructure pack, does anything change? So one of the context is that over the last 1 or 2 years, order book positions have been, growing fairly strongly. Now, do you see, as you know, these stocks are more sensitive to order book than, revenue growth or, of course, margins play a role. But order book growth is a far more important factor. Do you see that happening over the next 12 months?
I think, Mahalakshmi, yes, we are moving in the right direction. In last few years, the capex has improved, and I think this budget is very supportive of continuing in that direction, further progress in that direction. So this is a large increase that government has done, and I think capacity utilization has been steadily inching up. Corporate leverage is at a 15-year low. Corporate profits have revived to almost 5% of GDP. So I think by and large all the variables are in place, and I think at some point of time we should start seeing meaningful private capex as well, meaningful growth in private capex. So I would continue to remain optimistic on that space, though I must say that market adequately realizes what I am saying and also discounts, and you can see that in the multiples of most of these companies, which are pretty high.
Sure, fair enough. We have with us Navneet Munot from CEO of HDFC AMC. Navneet, welcome. What are you surprised about? What are you disappointed about?
No, I think positively surprised by the focus on fiscal consolidation, and within that improving the quality of expenditure. We don't realize that in just 4 or 5 years, our capex has gone up. Government capex has gone up from 3 lakh crores to 10 lakh crores as a percentage of GDP, from like 1.5% to 3.3%. And if you add to what they are trying to promote states to also do a lot more expenditure next year, I think put together is very good. So I think if you look at budget, 2 parts. One is all the reform agenda, which includes the economic and social and cultural agenda, and the other is a pure income and expenditure. The quality of income and expenditure is surely improving. Tax to GDP close to 11.5% has been inching up over a period of time. And on the expenditure side, a bigger focus is on capex, which increases the productive capacity of the economy and your potential to increase tax revenues over a period of time, which can be spent on the physical and social infrastructure, which in turn promotes the economic efficiency as well as the growth potential and productivity of the economy. So that way, I feel very positive about it. I don't think there are major negative surprises within the budget, and even I think some people who thought that pre-election budget, I think they forgot to look back on 2018 and 19, where the size of government budget was one of the, as a percentage of GDP, was lowest in a decade. So I think if history was any guide, nobody should have expected the budget to really look at from a different perspective, but rather laying the agenda for higher growth over the next several years.
Sure, fair enough. So Prashant, your top 3 bets in the market right now?
As I said, these are fairly valued markets, and I would not expect above nominal GDP kind of returns over the medium to long periods. I would avoid the consumer space, both discretionary, non-discretionary. And I think relatively, I think the banks are looking better. I think capex still, despite the valuations, I think there is merit in keeping some allocation there. And I think the power utility space, which has re-rated, but I think there could be still some more opportunity out there.
Fair enough. Saurabh, your top bets remain the same?
I think lenders look tasty. We actually have an entire fund around lenders, so hopefully that will continue to benefit from these announcements. Beyond that, as I was saying, the consumption at the 3, 4, 5, 6 lakh strata, the consumption kicker is meaningful. If I combine that with the fact that the budget does not give RBI reason to hike, I think consumption, both in the sense of say whether it's consumer durables, jewelry, or indeed auto. We don't have that much in the auto sector, but I think even the auto sector comes out of the smelling of roses. And the final piece where I think we need to sort of look at it more constructively is the structural story. China has 3.5 trillion of FII investments. We have a mere 0.6 trillion. Budgets like this, sensible budgets, conservative budgets, non-populist budgets, enhance the country's credibility, makes it that much more likely that we will take away from China over the next 10 years the mantle of the fast.
विकसित भारत के विराट संकल्प को पूरा करने के लिए एक मजबूत नींव का निर्माण करेगा। ये बजट वंचितों को वरीयता देता है। ये बजट आज की एस्पिरेशनल सोसाइटी गांव, गरीब, किसान, मध्यम वर्ग सभी के सपनों को पूरा करेगा। मैं वित्त मंत्री निर्मला जी और उनकी टीम को इस ऐतिहासिक बजट के लिए बधाई देता हूं। साथियों, परंपरागत रूप से अपने हाथ से औजारों और टूल्स से कड़ी मेहनत कर कुछ न कुछ सृजन करने वाले करोड़ों विश्वकर्मा इस देश के निर्माता है। लोहार, सुनार, कुम्हार, सुथार, मूर्तिकार, कारीगर, मिस्त्री, अनगिनत लोगों की बहुत बड़ी लंबी लिस्ट है। इन सभी विश्वकर्माओं की मेहनत और सृजन को देश इस बजट में पहली बार अनेक प्रोत्साहन योजना लेकर के आया है। ऐसे लोगों के लिए ट्रेनिंग, टेक्नोलॉजी, क्रेडिट और मार्केट सपोर्ट की व्यवस्था की गई है। पीएम विश्वकर्मा कौशल सम्मान यानी पीएम विकास करोड़ों विश्वकर्माओं के जीवन में बहुत बड़ा बदलाव लाएगा। साथियों, शहरी महिलाओं से लेकर गांव में रहने वाली महिलाएं हो, कारोबार, रोजगार में व्यस्त महिलाएं हो या घर काम में व्यस्त महिलाएं हो, उनके जीवन को आसान बनाने के लिए बीते वर्षों में सरकार ने अनेक विविध कदम उठाए हैं। जल जीवन मिशन हो, उज्ज्वला योजना हो, पीएम आवास योजना हो, ऐसे अनेक कदम। इन सबको बहुत बड़ी ताकत के साथ आगे बढ़ाया जाएगा। उसके साथ साथ महिला सेल्फ हेल्प ग्रुप एक बहुत बड़ा सामर्थ्यवान क्षेत्र आज भारत में बहुत बड़ी जगह अपने हाथ एक्वायर कर चुका है। उनको अगर थोड़ा सा बल मिल जाए तो मिरेकल कर सकते हैं। और इसलिए विमेन सेल्फ हेल्प ग्रुप उनके सर्वांगीण के विकास के लिए नई पहल इस बजट में एक नया आयाम जोड़ेगी। महिलाओं के लिए एक विशेष बचत योजना भी शुरू की जा रही है और जनधन अकाउंट के बाद ये विशेष बचत योजना सामान्य परिवार की गृहिणी माताओं बहनों को बहुत बड़ी ताकत देने वाली है। ये बजट सहकारिता को ग्रामीण अर्थव्यवस्था के विकास की धुरी बनाएगा। सरकार ने कोऑपरेटिव सेक्टर में दुनिया की सबसे बड़ी अन्न भंडारण योजना बनाई है, स्टोरेज कैपेसिटी। बजट में नए प्राइमरी कोऑपरेटिव्स बनाने के लिए एक महत्वाकांक्षी योजना का भी ऐलान हुआ है। इससे खेती के साथ साथ दूध और मछली उत्पादन के क्षेत्र का विस्तार होगा। किसानों, पशुपालकों और मछुआरों को अपने उत्पाद की बेहतर कीमत मिलेगी। साथियों, अब हमें डिजिटल पेमेंट्स की सफलता को एग्रीकल्चर सेक्टर में दोहराना है। इसलिए इस बजट में हम डिजिटल एग्रीकल्चर इंफ्रास्ट्रक्चर की एक बहुत बड़ी योजना लेकर आए हैं। आज दुनिया इंटरनेशनल मिलेट ईयर मना रही है। भारत में मिलेट्स के अनेक प्रकार हैं, अनेक नाम है। आज जब मिलेट्स घर घर में पहुंच रहा है, पूरी दुनिया में पॉपुलर हो रहा है, तो उसका सर्वाधिक लाभ भारत के छोटे किसानों के नसीब में है। और इसलिए आवश्यक है कि नए तरीके से उसको आगे ले जाया जाए। इसकी एक नई पहचान, विशेष पहचान आवश्यक है। इसलिए अब इस सुपर फूड को श्री अन्न की नई पहचान दी गई है। उसके प्रोत्साहन के लिए भी अनेकविध योजनाएं बनाई गई हैं। श्री अन्न को दी गई प्राथमिकता से देश के छोटे किसानों, हमारे आदिवासी भाई बहन जो किसानी करते हैं, उनको आर्थिक संबल मिलेगा और देशवासियों को एक स्वस्थ जीवन मिलेगा। साथियों, ये बजट सस्टेनेबल फ्यूचर के लिए ग्रीन ग्रोथ, ग्रीन इकोनॉमी, ग्रीन एनर्जी, ग्रीन इंफ्रास्ट्रक्चर और ग्रीन जॉब्स को एक अभूतपूर्व विस्तार देगा। बजट में हमने टेक्नोलॉजी और न्यू इकोनॉमी पर बहुत अधिक बल दिया है। एस्पिरेशनल भारत आज रोड, रेल, मेट्रो, पोर्ट, वाटरवेज, हर क्षेत्र में आधुनिक इंफ्रास्ट्रक्चर चाहता है। नेक्स्ट जनरेशन इंफ्रास्ट्रक्चर चाहिए। 2014 की तुलना में इंफ्रास्ट्रक्चर में निवेश पर 400% से ज्यादा की वृद्धि की गई है। इस बार इंफ्रास्ट्रक्चर पर 10 लाख करोड़ रुपए का अभूतपूर्व इन्वेस्टमेंट भारत के विकास को नई ऊर्जा और तेज गति देगा। ये निवेश युवाओं के लिए रोजगार के नए अवसर पैदा करेगा, एक बहुत बड़ी आबादी को आय के नए अवसर उपलब्ध कराएगा। इस बजट में ईज ऑफ डूइंग बिजनेस के साथ साथ हमारे उद्योगों के लिए क्रेडिट सपोर्ट और रिफॉर्म्स के अभियान को आगे बढ़ाया गया है। एमएसएमई के लिए 2 लाख करोड़ रुपए के अतिरिक्त ऋण की गारंटी की व्यवस्था की गई है। अब प्रिजम्पटिव टैक्स की लिमिट बढ़ने से एमएसएमई को ग्रो करने में मदद मिलेगी। बड़ी कंपनियां द्वारा एमएसएमई को समय पर पेमेंट मिले, इसके लिए नई व्यवस्था बनाई गई है। साथियों, बहुत तेजी से बदलते भारत में मध्यम वर्ग, विकास हो या व्यवस्था हो, साहस हो या संकल्प लेने का सामर्थ्य हो, जीवन के हर क्षेत्र में आज भारत का मध्यम वर्ग एक प्रमुख धारा बना हुआ है। समृद्ध और विकसित भारत के सपनों को पूरा करने के लिए मध्यम वर्ग एक बहुत बड़ी ताकत है। जैसे भारत की युवा शक्ति ये भारत का विशेष सामर्थ्य है, वैसे ही बढ़ता हुआ भारत का मध्यम वर्ग भी एक बहुत बड़ी शक्ति है। मध्यम वर्ग को सशक्त बनाने के लिए हमारी सरकार ने बीते वर्षों में अनेकों निर्णय लिए और ईज ऑफ लिविंग को सुनिश्चित किया है। हमने टैक्स रेट को कम किया है, साथ ही प्रोसेस को सिंप्लीफाई, ट्रांसपेरेंट और फास्ट किया है। हमेशा मध्यम वर्ग के साथ खड़ी रहने वाली हमारी सरकार ने मध्यम वर्ग को टैक्स में बड़ी राहत दी है। इस सर्वस्पर्शी और विकसित भारत के निर्माण को गति देने वाले बजट के लिए मैं फिर एक बार निर्मला जी और उनकी पूरी टीम को बहुत बहुत बधाई देता हूं और देशवासियों को भी बहुत बधाई के साथ साथ मैं आह्वान करता हूं, आइए अब नया बजट आपके सामने है, नए संकल्पों को लेकर के चल पड़े। 2047 में समृद्ध भारत, समर्थ भारत, हर प्रकार से संपन्न भारत हम बना के रहेंगे। आइए इस यात्रा को हम आगे बढ़ाएं। बहुत बहुत धन्यवाद।
Welcome back. We'll pick up the conversation from where we left. Go back to Navneet Munot. Navneet, what do you see as the risks this time, overshooting or undershooting on the deficit number?
Now, I think we have to give it to the finance minister. Over the last couple of years, we have seen improved fiscal transparency. I think overall improved budget management. I think the government has been very candid in terms of disclosing the budget math. I think both the targets on the revenue side as well as on the expenditure side, I would say, are realistic, and I'm sure government's focus is to do more on the capex side rather than revenue expenditure. And over a period of time, I think relying on tax buoyancy and a higher growth leading to higher tax to GDP. So I think I would say that if you are talking about overshooting or undershooting, I think it will be more realized the way it has been presented.
Fair enough. I see Ajit Isaac has joined in, a founder of Quest Corp. Ajit, good news for you in the budget. Do you see the job scene getting altered significantly over the next few months?
I think so. I think it's a solid and well thought out budget. To sort of use a cricketing analogy, it's a bit like a Rahul Dravid type effort. No playing and missing. It's a long term in nature. We see capex investment that's significant. There is also ease of doing business that's going up, so there will spur entrepreneurship and how you run organizations. Specific sectors will, of course, be impacted. Construction specifically, infrastructure, all for sure, definitely. So I think it's a all-in-all good budget for job creation. And more than anything else, it brings positivity in the business environment. And that, I think, will draw private investment, private capital to come into to business as well. So on all counts, I think it's a good effort by the government.
Fair enough. So, Ajit, where do you see this happening? You know, one of the stress points for the economy over the last year has been that rural has seen a bit of stress. Of course, in the last quarter, we were seeing some kind of revival. At least the latest numbers are looking up a bit. Do you see that getting resolved in the next 2 quarters? Or is that going to be addressed rather slowly?
I think there will be a lag effect in terms of what you do in the farm sector and its results showing up. One. Second is that there is a distinct movement from farm jobs, non-farm jobs taking place in India. And that process, I think, will get accelerated by the capex that will follow through right now. And the third aspect is that technology, as in the 5G labs, etc., that are being set up right now, will spur new technology, new application of 5G, etc., that will also lead to more people coming out to be employed in the internet-related sector, which I think will draw people out of the farm sector. Lastly, there's also an innovation fund being set up for the farm sectors, which I think will lead to more productization of produce, and hopefully that will also create more jobs. But I think the key message coming out of this is that the government wants to create new jobs through expenditure, wants to create a better environment for investments, and wants to create a better take home for people through reduction of income taxes, etc., which will also spur consumption.
Sure, we will continue that conversation in a little while, but we'll take a short break, go over to Sonal, who is with Pranjal Kamra.
All right, thanks Mahalakshmi for that. So we just heard the Prime Minister speak at this point, and one big takeaway that he's really been talking about has been budget sabka bhala karega. We've been speaking about this all morning. He said Garib, Kisan, middle class, women and older people. There is something in this budget for all of them, and he's rightly really put it, like we've been underlining from morning, that this is a budget which has come, the last full budget which has come before the elections, and there is really something for everybody in this. We've got now some live examples for you. We'll go through people's personal income tax and look at 10 lakh bracket, 15 lakh bracket and the 5 lakh bracket, and break it down to you on what difference and how much money you've actually ended up saving, which is very interesting. So Pranjal, let's get started. We've got budget 2020, the big tax relief over here. Let's first look at the 10 lakh bit, right? Now, in the old regime, it was about a lakh. In the new regime, before the budget, you were paying about 78,000. And after the budget, you're now paying 62,400. significant relief, but remember, this is not really significant. Why? Because we've not accounted for the deductions just yet, right? So let's go to the next screen where you actually look at deductions. With the deductions, under the old scheme, if you were earning 10 lakh per annum, you were paying 75,400. Now, the big number. Under the new regime, you will end up paying only 62,400. This is the first time the new regime actually trumps the old one.
Absolutely. So, you see these two figures here. This was the reason why people were reluctant to shift to actually the new regime. This was the reason. Now there is incentive enough for people to actually shift to the new regime. So yes, this makes new regime not just de facto government-wise, but de facto good for people as well.
Good for people, because this is a significant cut down, right? Now, that is 10 lakh. Let's look at 15 lakh. Again, without taking any deductions under the old regime, if you were earning about 15 lakh per annum, you were paying a tax of 2,57,400. Under the new regime now, after the budget, there is of course a deduction. It's 156. But again, even after accounting the deductions, if you are earning 15 lakh rupees per annum, you will pay much less under the new regime, which is 1,56,000, much lower, Pranjal, from 2,10,000 over
So
here.
PM sir was definitely right when he said that this will benefit everyone, specifically the middle class, the lower income. This budget with the new tax regime is going to benefit maximum amount of people. So yes.
Right. So now let's look at the next one as well. And this is under 5 lakh. These are the people who were very happy till now. We were talking about how they want it to be raised. Of course, before the budget and even now, if you've been earning about 5 lakh rupees or so, you pay 0 income tax. Now, if you're earning 7 lakh as well, the old regime, you would have paid 54,600. Now, 0, no tax for you. That doesn't mean you don't have to file your taxes, by the way. You still have to file your taxes. You get a rebate back.
And there's this big confusion here that if the slab says 6 to 9 lakhs, 10% tax, then how come 7 lakh people who are earning 7 lakh are actually paying 0 tax? It's because it's rebate. So only if you earn below or till 7 lakhs is when you are eligible for the rebate. So if you earn 7 lakhs 1,000, then you don't get any rebate at all, and your taxes are as per the slabs. So you will be charged 5% between 3 to 6 and 10% between 6 to 7, and you are not eligible for rebates because your income exceeds 7 lakhs. So this is 0 only if it's below or till 7 lakhs.
Only if it's below or till 7 lakhs. Okay, let's move on to the next one. The big theme that he's spoken about, 2 other themes emerging. One about women. There is a new scheme that has been launched. We'll decode that, and also on pensioners, which is a huge relief. I'm so happy. Everything we discussed in expectations right in the morning before budget has actually now come out. But let's talk about this Mahila Samman Saving Certificate a bit in detail, because there's a lot of confusion about that. Currently, the certificate that has been launched, it has 7.5% interest, 2 years tenure, 2 lakh. Now, this means that you can invest up to 2 lakh rupees
in this account.
In the course of 2 years.
Correct.
And the interest that you gain out of that is 7.5.
That's right. That's right.
Okay, so that means about 4 lakh rupees in 2 years.
No, this is the total limit.
This is the total limit. Okay.
Across 2 years.
Okay,
Yes.
right. So total limit of 2 lakh rupees across 2 years, the return that you get is now 7.5. Compared to FD, it would be?
Slightly higher. I mean, some banks are offering 7%, the safer banks. Slightly smaller banks are also offering 7.5%, but this scheme is safer than smaller banks. But SBI, HDFC offer 7% interest. So yeah, 0.5% of benefit.
0.5% from, say, your FD
from the
figures.
safest of banks.
Yeah, considering how the inflationary environment is, how the returns are going, so this at least locks it at 7.5.
Yes.
Definitely does that,
Yes.
right? Now the second one is on the senior citizen savings scheme as well. Now this is slightly tricky. Now the deposit has been increased from 15 lakhs to 30, but give me details on the tenure and the interest on this one.
So the tenure as such is 5 years. But once the 5 years expire, you can file a form again and increase it to 3 years. That's optional. How do you deposit? You can deposit once every year. The amount is flexible. Minimum is 1,000, and you can use the entire quota in 1 year itself, or you can split it across 5 years. So you can invest now with this change all 30 lakhs at one go, or you can split it the way you want. Minimum is 1,000. The problem here is the interest rates that these senior citizens will get is actually 7.4%.
Okay.
And on FDs, usually banks offer from 0.25% to 5% extra returns to senior citizens. So we mentioned how the safest of banks are offering actually 7% interest. So for women it's great because they don't get extra returns. But for senior citizens, even SBI and HDFC would offer somewhere close to 7.2 or 7.3, 7.4. This is similar to that. So the increase...
So not really again, frankly, over there, if you were taking a couple of other schemes also into account.
Absolutely.
That's an interesting bit. Let's go to the same point related to this is that maximum deposit for monthly income account scheme is also enhanced. Tell us, talk us through this, please.
Again, the limit is being enhanced, but the problem here is the interest on this is actually 6.7, whereas most FDs or recurring deposits are also giving anywhere between 6.5 to 7.2. So it's again similar or inferior to some of the safer schemes. The point here is because it's done mostly through post offices, it gives that extra reach and people who are underbanked or non-banked to be actually able to benefit from this.
So this is primarily for rural India then?
Correct.
Yeah.
Correct.
Right? All right. But let's come to this one. And this is a huge one, right? The limit of 3 lakh for tax exemption on leave encashment on retirement of non-government salaried employees now increased to 25. So far you were getting a rebate.
Exemption.
Complete exemption, beg your pardon, of 3 lakh of non-government salaried employees, and now it's gone up to 25. This is going to make a lot of...
This is what you call change. This is big because you know, if we go by the new tax regime, 15 lakh and above, there's 30% of tax. If I only consider between 15 lakhs to 25 lakhs, those 10 lakh rupees, you're saving 30% on that. So 3 lakh rupees on those incremental 10 lakhs, you're clearly saving. And that's just from 15 to 25. If we do the calculation between 3 to 15, there will be additional savings. So I am expecting anywhere close to 5 lakhs of additional savings in terms of tax outflow.
All right, so the middle class, that's what we started by saying, the middle class ended up gaining a lot. Women have got a slight edge, 0.5 we discussed compared to the FDs that are there currently. And the senior citizens, though on the schemes it doesn't seem like much, it's almost at par or perhaps in certain cases lower than what they're getting in safe government banks. But the exemption that they've got, that itself is a huge, huge one. And senior citizens are going to get very happy on that front. On that note, I'm going to toss it back to the studios. ML, tell us how the markets are doing now.
Thanks, Sonal. First, I will go back to the guests who have been waiting. Extremely sorry, Navneet. So one question back to you. How do you see this, move away to exemption-free regime? Obviously, in terms of stocks, the insurance companies have reacted. Stocks are down. Mutual funds also have that ELSS pie. Is it a significant pie?
So I think overall penetration of investments is so low that while the tax will play a lesser part in inducing people to invest into equities, but the structural underallocation to equities, I think that stays. And that's why I think a large part of the population is yet to invest. If people have more money in their pocket by paying less taxes, I think that leads to either higher consumption or higher investments. And I think overall we'll be a beneficiary of that. Of course, I think we would have liked more incentives for people to invest into equities from the fiscal side. But notwithstanding, I think we'll continue our efforts to encourage more and more people to invest into equities for creating long-term wealth.
Okay, one last question for you, and then we'll let you go. How do you see flows shaping up going into the next few months, Navneet? Does this already you see that the discretionary part of the fund flows from the domestic investors has really faded? The SIPs are still robust, but somewhat getting blunted as well. How do you see over the next few months flows shaping up on domestic front?
So you are absolutely right. Flows have moderated relative to where they were a few months back. But the most heartening feature of the flows has been the robustness in the SIP flows. And I think industry will continue to put its best efforts to ensure that we continue to grow that part of the book. But you are absolutely right. I think otherwise the flows in equities have slowed down. And I think all of us need to work together to ensure that we get more flows given the global environment. We have seen the outflows from the FPIs, and I think all of us including the policymakers, need to ensure that domestic flows remain robust for government to realize its vision and mission.
Absolutely. Thank you so much, Navneet. I go to Kapil Sharma, CFO of Lemon Tree. Kapil, thank you so much for joining. Last year, I remember Patu Keswani was there and he was thoroughly disappointed with the fact that there was nothing for the tourism sector or hospitality sector, especially as we were coming off the pandemic, and this was one of the worst hit sectors. This year you are all smiles, I guess.
Yeah, you are absolutely right. Actually, it's a very growth-oriented budget, and it has focused all the sector actually. If you look at it, from agriculture to manufacturing to boost infrastructure, and also focus on completely creating employment. And above all, this budget, what it has done is that there is a huge tax relief which is coming now, obviously under the new regime, and that would leave a lot of money in the hands of the people, especially the middle class Indians, which would definitely flow partly to the savings and partly to the consumption, and which will definitely have some allocation towards the discretionary spending of the middle class Indians, especially the hotels. So from that perspective, it is a good budget for even the hotel industry. Further, beyond this, the budget specifically focuses on the travel and tourism. And there is a
she said tourism sector holds huge potential for jobs and entrepreneurship. Promotion of tourism sector will be taken up on a mission mode with active participation of states, convergence of government programs and public-private partnership. So how do you really see this translate into more growth for hotels?
Yeah, so it's a clear vision that now the focus on the travel and tourism is going to be on a mission mode, and even the state governments are being encouraged to develop new destinations because India has a lot of potential from that perspective. And even if you look at the contribution of travel and tourism in the GDP, is still very low as compared to the global benchmark. So we have to go a long way, and these kind of focus by the budget and special attention will definitely give a lot of boost to the hotel industry, creation of the new destination, bringing in new investment, which will further create the employment opportunity. As you rightly mentioned, that the hotel industry is, or the tourism industry is a very high generator of the employment, and also the tax revenue for the government as well.
Fair enough. Thank you so much, Kapil. Coming back to you, Jigar, what are your biggest takeaways and how do they alter your investment strategy for the near and medium term?
Yeah, Mahalakshmi. So I think continuing with what they have announced they would do is a step in the right direction, although I doubt market is hardly reacting to budget anymore. I think there is news in the media about how some investment bank has stopped accepting Adani bonds, and I suspect a lot of market reaction today is following that. But to come back to your question, market I think likes announcements that are likely to be held for longer, right? So 2019 they come ahead and say corporation taxes, this is our glide path, right? I don't tinker with it, all good. Now they are saying income tax, all of you want you to move to the new regime because that's where the comfort lies. And I think the market is to some extent reacting to that now, given where the insurance company shares find themselves in. But from an investment standpoint, that brings in clarity, helps a lot. They've rejigged the expenditures, as I was telling previously. Revenue expenditure is slightly lower than what I thought it would be, excluding subsidies, pensions and interest payments. But capex is almost 1,25,000 crore higher than what I thought it would be. And this is not, remember this, the IEBR was done away with last year itself. So this is all clean. So from that standpoint, I think if they are clear, your nominal GDP 10.5% growth assumed, tax at 10.5%, so you're not building in incremental buoyancy. Although this is the second year in a row where government will end up, taking in more taxes than they already have. Right. So I think all those are signs what one looks at in the budget, and from that standpoint, there is more like a status quo that will likely to continue from a framework and policy standpoint.
Fair enough. Rohit, What's your take? We started off on a fairly bullish note in the morning. The budget is as expected or better, but the market's giving up all the gains.
Yeah, so if I purely had to look at technical levels, we spoke of the 20-day average. I think we hit that, touched it, and then sold off from there. Both the Bank Nifty and Nifty have done that. And of course, as he pointed out, that it's mostly on this Credit Suisse news that they're not going to accept Adani bonds. So the biggest losers, if you see, actually the Adani stocks in the lower circuit. But then if you go back to the budget, you'll find private banks are still running positive. The steel stocks which moved up on the infra spend are also still positive. And so the market's really not giving up on the budget. What I would really look for is give it a day, because usually budget day volatility is also driven by a lot of day traders getting long and then exiting and buying and selling. And the actual funds only decide what they want to do after they've sort of read and discounted the news. And you actually see price action very different on the following day. So going simply by today's moves won't be sufficient. Given that, I'll still watch the key level on the downside, which is the 66% retracement both in the Nifty and Bank Nifty, which is at 17,475 on a closing basis.
Sure. One number I completely missed because there was no expectation at all related to disinvestment. But surprise, surprise, FY23 number revised estimate is at 50,000. 31,000 we were, last year we were saying, such a come down from 1,75,000 to 30,000, but it's revised to 50,000. FY24 also come in at 50,000. Yeah. What do you think? Will those stocks really react? Do you see some action actually happening over the next year?
I think, Mahalakshmi, they are planning to sort of take this as it comes, right? Because even if you plan a 175K number and you have to end with 50K, it's better to expect 50K, and if you manage to get something done, then so be it. But if the idea is to eventually bring in more credibility, right? There was otherwise no reason why an extra budgetary borrowing that say FCI was doing or NHAI was doing. They brought it in last year, although optically that's the negative news, right? But they're planning to project that, look, there is a lot of sort of positives that we can draw from the budgeting exercise. So if we have to climb down from 175K to 30K, and even BPCL, I think, which was highly anticipated, that couldn't go through. So then this, I think, my estimate, they want to say that we want to play it as it goes. And if we end up getting 50-60,000 crore more, then we will talk about a positive surprise rather than start with a very high number, because that would then put the every other effort, which is a lot more credible, into questions again. Because if you want to then summarize the budget in one part, you'd say, oh, fiscal deficit is way too off by 1 lakh crore, so bond would sell off, etc. I think this is more towards under promising and over delivering, rather than a reflection on what the government thinks it could achieve next year.
Sure. That brings me to the point that, the subsidies, petroleum subsidy has also been cut. So is the implicit assumption that, somewhere as inflation moderates, we should be able to sort of realign these oil marketing companies to go towards market pricing and then bring in some surprise, like you said, BPCL could still come under play?
It could. So it all started with the APM. And once the APM was sort of instituted and oil prices shot through the roof, that was when, they had to come in and force these companies to take an unofficial no price hike. Because we import, as a country, we import 1.7 billion barrels of oil, right? If you plan a $50 higher price, you're talking of an impact of 6 lakh crores. We sell 14,000 liters of petrol and diesel. A 6 lakh crore impact would mean you have to hike prices by $40. What we did was 8 rupees and 8.5. So that needed to be absorbed. Even with the Russia discount, you could manage to, soften the impact a little bit, but not eliminate it. I think if you're looking at the subsidies number, the other two numbers are making a lot more sense, right? Fertilizer. Now, fertilizer, international urea prices went up to almost $850 a ton from $250. And the urea price per bag in India didn't increase, right? So even with the new scheme, the NPK is a nutrient-based subsidy, but the urea prices didn't increase. And that led to, I think, I was expecting 2.5 lakh crore, but we are still at some 2,25,000 or 2,20,000 crore, which we are now expecting will come down. The urea prices have come up from 825 to 570 odd. So it could ideally be a lot lower. And food subsidy, because of the free ration to this 80 crore families, that had shot through the roof. and now they've stopped, they've sort of recalibrated it so that it would not come to the national exchequer. So I think they're still overestimating as far as subsidy goes. I think they could end up almost a 40,000-50,000 crore lower than what they are projecting in the budget estimates for 24.
Fair enough. Rohit, what's your take? Technically, how is the disinvestment pack really looking? Oil marketing companies, for instance.
So the OMCs, after almost, I think, more than a year, 2 years of consolidation, because they've not been performing, they did start showing some momentum recently in the month of January. So I've actually turned slightly bullish on the OMCs last month because of that pickup. And I would look at, dips as being, opportunities to buy into them as they move along. You've also seen, oil prices come off. And so somewhere there's a comfort for the sector. So I think they're coming out of the long, 1.5 year consolidation zone.
Fair enough. How about the others? I mean, those that are immediate, for example, Concor. I want to know even about LIC, because one of the things about LIC that has kept it subdued, amongst other things, is also that every year there will be some amount of flow that will come into the market. So with constant supply, will there really be, will that be a headwind in itself?
So well, based on charts, we usually avoid looking at something which is newly listed because it gives us insufficient information to really make any kind of projection. So LIC actually falls in that bucket, and that is why I wouldn't really be able to have any strong view on that.
Fair enough. Jigar, do you have a fundamental view on LIC? Which is especially, LIC is the real culprit in this, exemption thing, because they have created this whole perception of, insurance.
Sanjay and all that.
Yeah, the incentive being, tax is the biggest, tax or returns is the biggest motivator for buying insurance. Do you see, from a stock perspective, how do you see it? But to be fair to them, last quarter was phenomenal results. Nobody was expecting the way they delivered growth, in non-par policies and so on. What's your take?
So insurance, life insurance in particular, Mahalakshmi, we are fairly sort of confident on how they could go about delivering. If you look at the new chairman's speech, I think he was also very particular about how they want to increase the penetration.
Yeah.
Now, with sort of, they always say, two policies. Normally, we talk of fiscal and monetary policy has to go hand in hand to deliver the overall number. Here, with what has been delivered on the fiscal policy front, it doesn't look like it is going to do a lot of help for the life insurance companies in general. Now, how it will impact, we were discussing in your previous segment that HDFC Life with the highest ticket size get impacted a lot more vis-a-vis a Max vis-a-vis SBI. SBI Life gets the least impacted. I'm not very sure about LIC's numbers, but when HDFC Life and Max are falling 10 and 12% in the market, given what's been announced, I'm sure people would then, and knowing what's going on in the other side of the market, I think the people would want to wait it out. Although a price to embedded value now for LIC is in the quite attractive trajectory. The ones that we own in our fund has been Max Financial. You're owning for more than, I think, 4.5, 5 years. Because the space is very interesting, and this thing settled down after a week or so. So I think if you want to buy, I would still prefer, say, a Max Financial versus something else.
Fair enough. Technically, how does this pack look to you, Rohit, the insurance pack?
They've been through pretty deep cuts in the last year itself. So apart from the fall that we are only seeing intraday, I would think that they are somewhere close to the lower end of their broader range, because some of them have actually retraced maybe 61% of the gains they made last year. So it's been an underperforming sector for quite a while, and I think they should be getting to a point where they do bottom out and start participating on the upside with the market again.
Okay, fair enough. I'm just seeing what else we are missing. Any other takeaway, Jigar? Any pockets that that get recast from the budget takeaways? I think affordable housing is one thing we missed. So,
right.
Prime Minister.
I think, yeah, so if you look at the whole capex spend, and I think the government is trying this, the nudge approach. I think they've read Richard Thaler now, and they're trying to do this nudge approach where, look, we want you in the new scheme, so we are nudging you to take these exemptions and come to this scheme. I think they've done a similar thing with the states as well, where they have said that, we'll give you 3.5% borrowing limit, the other 0.5% subject to you do something else on the utilities front. Right now, I've been a utilities analyst almost 15 years of my life before we started this fund. And we were very excited when the Uday scheme came in, and then Uday 2 came in. And everybody realizes that, power is a state subject. It's a politically hot wire subject that most politicians don't want to deal with. And therefore, I think you end up doing things that otherwise might sound commonsensical, but they don't end up getting done. So I think even here, the sort of government is urging them and pushing them to do something on the capex side, which we are hoping, something does pan out. Besides capex, affordable housing, yes, I think, within the lender space, that's one segment which has continued to make a lot of sense, that has not seen the cycles we have otherwise seen in the non-performing level, etc. So I think that's one space that can attract reasonable traction as we go. These companies are smaller, you get to pick and choose on what management and what sub-segment or what geographical sub-segment you're more comfortable with. But yeah, that's a very interesting space to go around.
Also NBFCs, because there was this, announcement on market-linked debentures.
Yes.
So that seems to be a huge negative. How does that alter the complexion of the NBFC sector?
That creates some part of the issue. It also creates some part of issue for the few wealth managers who are specializing in the selling of MLDs. And there was also a very large leverage that got played out. So you could lock in, borrow, and then make sure your ROE is much higher. I think with that being brought to the maximum marginal rate, I think that creates a bit of a dysfunction. I'm not entirely sure on which companies get impacted more vis-a-vis others, but that definitely creates some amount of dysfunction for both those lenders as well, or those people who are issuing those securities, as well as the wealth managers who specialize in them.
Sure. How do technicals look, Rohit, for the NBFC pack?
So if I look at even the most popular names like Bajaj Finance or Bajaj Finserv, they've almost given back a significant portion of the gains they made through last year, which is where the risk reward should become meaningfully favorable towards them. Almost I think it's an 80% retracement in these stocks. So I don't think there should be too much downside. We in fact did start seeing positive momentum in the last couple of days in the NBFC stocks. So I think there will be a pickup in that sector.
Sure. We'll go over to Mr. Bangur from Shree Cement. Mr. Bangur, exciting budget for you, as you wished for?
Yes, it is better than our wish. Now we can increase our wishes, but it was really good.
So how do you see, I mean, cement obviously is the centerpiece of everything that is related to capital spending, construction, economy picks up, cement picks up. How do you see this, how do you see growth playing out over the next 6 to 8 months?
The growth will be good, and the capital expenditure is not a one-year phenomena. If the capital expenditure of 10 lakh crore rupees has been planned for this year, it automatically says that next year it will be much higher, because that it grows on itself. So it is a long-term benefit, and the country, because of it has some fiscal space, if they are spending on capital expenditure, future GDP will also increase. Not only capital expenditure on this, apart from that, the railways and the housing, in fact, anywhere they want to spend money, cement will be utilized.
Fair enough. So, so that's what I'm asking. So how do you see the demand scenario panning out over the next 2-3 years? And if you juxtapose it, how do you see the supply side? I mean, in conjunction with supply, do you feel optimistic about profitabilities of companies?
Profitability of companies will always be there. Short-term mismatch was there. About 9 to 10% growth in demand is expected because of this budget. Earlier we were thinking of 7 to 8 because one budget will not change dramatically the thing, but it has definitely increased our expectation. Supply side, enough money, enough material is there, and new capacities which we are supposed to come may slow down a little. That's all I can say a bit.
You're saying new capacities will slow down a bit.
Slow down.
So that should improve the pricing environment?
That should improve the pricing environment maybe after a year or so.
Okay, fair enough. We'll take a short break right now and more conversation about the market in a few minutes.
Continuing our commitment to ensure food and nutritional security, we are implementing from 1st January 2023 a scheme to supply free food grain to all Antyodaya and priority households for the next 1 year. Under PM Garib Kalyan Anna Yojana, the entire expenditure of about 2 lakh crore will be borne by the central government. For farmers, especially small and marginal farmers and other marginalized sections, the government is promoting cooperative-based economic development model. A new Ministry of Cooperation was formed with a mandate to realize the vision of Sahkar Se Samriddhi. To realize this vision, the government has already initiated computerization of 63,000 primary agricultural credit societies with an investment of 2,516 crores. In consultation with all the stakeholders and the states, model bylaws for PACS were formulated, enabling them to become multi-purpose PACS. A national cooperative database is being prepared for countrywide mapping of cooperative societies. With this backdrop, we will implement a plan to set up massive decentralized storage capacity. This will help farmers store their produce and realize remunerative prices through sale at appropriate times. The government will also facilitate setting up of a large number of multi-purpose cooperative societies, primary fisheries societies, and dairy cooperative societies in uncovered panchayat and villages in the next 5 years. 75th year of our independence. The world has recognized the Indian economy as a bright star. Our current year's economic growth is estimated to be at 7%. It is notable that this is the highest among all the major economies. This is in spite of the massive slowdown globally caused by COVID-19 and the war. The Indian economy is therefore on the right track, and despite a time of challenges, heading towards a bright future. An agriculture accelerator fund will be set up to encourage agri-startups by young entrepreneurs in rural areas. The fund will aim at bringing innovative and affordable solutions for challenges faced by farmers. It will also bring in modern technologies to transform agricultural practices, increase productivity and profitability. To enhance the productivity of extra long staple cotton, we will adopt a cluster-based and value chain approach through public-private partnerships. This will mean collaboration between farmers, state and industry for input supplies, extension services and market linkages. The government's efforts since 2014 have ensured for all citizens a better quality of life and life of dignity. The per capita income has more than doubled to 1.97 lakh rupees. In these 9 years, the Indian economy has increased in size from being 10th to 5th largest in the world. Continuing our commitment to ensure food and nutritional security, we are implementing from 1st January 2023 a scheme to supply free food grain to all Antyodaya and priority households for the next 1 year. Under PM Garib Kalyan Anna Yojana, the entire expenditure of about 2 lakh crore will be borne by the central government. For farmers, especially small and marginal farmers and other marginalized sections, the government is promoting cooperative-based economic development model. A new Ministry of Cooperation was formed with a mandate to realize the vision of Sahkar Se Samriddhi. To realize this vision, the government has already initiated computerization of 63,000 primary agricultural credit societies with an investment of 2,516 crores. In consultation with all the stakeholders and the states, model bylaws for PACS were formulated, enabling them to become multi-purpose PACS. A national cooperative database is being prepared for countrywide mapping of cooperative societies. With this backdrop, we will implement a plan to set up massive decentralized storage capacity. This will help farmers store their produce and realize remunerative prices through sale at appropriate times. The government will also facilitate setting up of a large number of multi-purpose cooperative societies, primary fisheries societies, and dairy cooperative societies in uncovered panchayat and villages in the next 5 years. 75th year of our independence. The world has recognized the Indian economy as a bright star. Our current year's economic growth is estimated to be at 7%. It is notable that this is the highest among all the major economies. This is in spite of the massive slowdown globally caused by COVID-19 and the war. The Indian economy is therefore on the right track, and despite a time of challenges, heading towards a bright future. An agriculture accelerator fund will be set up to encourage agri-startups by young entrepreneurs in rural areas. The fund will aim at bringing innovative and affordable solutions for challenges faced by farmers. It will also bring in modern technologies to transform agricultural practices, increase productivity and profitability. To enhance the productivity of extra long staple cotton, we will adopt a cluster-based and value chain approach through public-private partnerships. This will mean collaboration between farmers, state, and industry for input supplies, extension services, and market linkages. The government's efforts since 2014
Welcome back. We are going to go and get some opposition bites on the budget, and then we continue with the market conversation.
Whether the budget is addressing the current economical issues, including price rise, unemployment, these all the issues. People are in a distress mood. They did not have, there is no income for the people. Then how can you how can they benefit by hiring this taxes limit? For example, farmers ke liye issue. They promise allotment program, but nothing is fulfilled. This government's track record on fulfilling area is very low. Therefore, they may announce something in the budget, they may announce something in the president address only for like a manifesto.
वो इलेक्शन के लिए इनकम टैक्स का रिलीफ मिला है, बाकी कुछ नहीं है. अभी चुनाव को सामने रखते हुए दूर है मिडिल क्लास इन सारे सरकार से, तो उसको थोड़ा प्रलोभन दिया है. तुम्हारा भाई इनकम टैक्स का स्लैब बढ़ा दिया है.
Look, some of those things are good. I'm not going to be completely negative, but I have still some questions. There was no mention of Manrega. What are we going to do about the poor rural labor? There was no mention of unemployment. There was no mention of inflation. So there are a number of questions still. There's some good things in the budget, I don't deny that, and I certainly found myself applauding when they created a new digital library for children around the country. All these are good things, but there are still some fundamental questions that remain to be answered.
फाइनेंस मिनिस्टर ने पूरे बजट में कहा है कि ये 3 साल का बजट है, तो आने वाले 3 सालों के बारे में उन्होंने बात करी है, लेकिन उन्होंने आज की बात नहीं करी है. मेरा मानना है कि ये चुनावी बजट है और पूरी तरह चुनावी है. मिडिल क्लास को थोड़ी रियायत दी गई है, लेकिन जिस तरह महंगाई बढ़ रही है, जिस तरह पेट्रोल के दाम बढ़ रहे हैं और हर सेक्शन और हर स्टेप में महंगाई जहाँ बढ़ रही है, तो फाइनेंस मिनिस्टर ने किसानों का बिल्कुल ध्यान नहीं रखा है. जहां एमआरपी की बात होनी चाहिए थी, मिनिमम सपोर्ट प्राइस जो किसान मांग कर रहे हैं लगातार, इस बारे में कुछ नहीं कहा गया है. जहां रोजगार देने की बात होनी चाहिए थी. हम जानते हैं कि भारत युवाओं का देश है, तो युवाओं के बारे में, रोजगार के बारे में कुछ नहीं कहा गया है और रेलवे को पूरी तरह से निगलेक्ट किया गया इस बजट में.
Okay, those were quotes coming in from the opposition party. Jigar, one huge surprise, or should I say a shock, Adani stocks down humongously. You know, Adani Enterprises down 30%, Adani Green down, Adani Ports, the entire, I mean, it seems like, you know, you had fantastic feel good about the budget and now we are in super worrisome mode again. What's your take? What's happening?
It's difficult to have a take, Mahalakshmi, on this. You know, we are seeing what's transpiring. There is a buzz around, I think Live Mint reported that Credit Suisse has stopped taking the banks, the bonds as a collateral. Is this a fallout of that or something else? It's very difficult to say. As a fund, we don't own Adani, but I think the fallout is a lot more out on the market generally rather than just the Adani. So, you know, look at, say, a few PSU banks, right? If you look at just the budget, then there is very little reason for the PSU banks to fall. Even if you sort of are compounding some of the worries that could eventually transpire, that is still a lot of a very negative reaction on the PSU banks. So within that space, one business that we have owned and like is SBI. I think it's a reasonably decent priced bank now. So I think that's the only comment one can offer. Beyond that, it's difficult to have a
No,
view.
it is perplexing also because, you know, if the FPO had not gone through, then one would have, you know, obviously worried about it because, you know, your at least 10,000 crores was into new investments, 5,000 crores was supposed to be reduction in debt. But now you have secured that 20,000 crores. There is no immediate cash crunch or anything like that. How do you explain a 30% fall? What does it tell you?
I think the only thing I can say is market can be funny at times. So, you know, I think from what I have read, the bond repayment doesn't start until the second half of calendar year 24. And if the FPO has done anything, it's sort of provided a cushion for them to take care, assuming there is a problem, which, you know, I independently don't know if there is one or not. But, you know, assuming if there is still a problem, we're still addressing it. For the actions over the last 2 or 3 days have gone on in favor of at least sort of stabilizing the market vis-a-vis the lender standpoint. And if you look at the exposures, I think in total we saw some 80,000 crores, 88,000 crores from Indian banks, funded exposure. And you look at a few of these banks, say for example SBI, I could put the number at say 28,000-30,000 crores. That is less than 1% of its loan book. So for a bank to correct 5-6% basis this is a little perplexing. But if markets didn't overreact either sides, none of us would have jobs. So we have to be grateful on occasions like this.
All right, fair enough. We will come back and take a technical check on Adani stocks. But before that, for the big budget numbers, we'll go to Aparna Iyer. Thanks so much.
Hello. So let's have a lowdown of what the the big budget numbers that came out today. So the first thing is nominal GDP growth. So this is the number on which the entire math of the budget is placed, is worked out. So the the Union Budget has pegged assumed the nominal GDP growth to be about 10.5%, which is very conservative and it is good. And this is what the markets have liked. Any nominal GDP growth assumption of above 11% would have meant that the budget could have other surprises as we go into the year. So that is one. Remember that nominal GDP growth for FY23 was 15.3%, which was significantly higher than the assumption made in the last budget, which was 11%. So the government has got an extra legroom to spend this year, but next year India's GDP growth is going to have a lot of headwinds from global slowdown, the recession in advanced economies. So assuming a higher nominal GDP growth will have to be would have been foolhardy. So 10.5% is a reasonable assumption as far as nominal GDP growth concerned. Now let's come to the main budget number, which is the fiscal deficit, which was anticipated by the markets. Fiscal deficit for FY24 has been pegged at 5.9% of GDP. The markets largely expected it to be 5.8, so there is not a big surprise over there. This fiscal deficit means the market borrowing, the gross market borrowing through which the government finances the gap will be 15.43 lakh crore. That also has come in line with the market expectations. So essentially, if there are no surprises on fiscal deficit, on market borrowing, that means that there is no crowding out for private sector capex, there is no crowding out of private credit. So these are numbers that were liked by the market. And the fact that the government has pegged fiscal deficit at 5.9% of GDP also means that it is on path to achieve 4.5% of fiscal deficit by FY26, which the FM had said even in the last budget document. So the fiscal consolidation path is on, and the government is expected to achieve its fiscal consolidation figures and the targets that it has spelled out earlier as well.
Thank you so much, Aparna, for those insights. Coming back to Adani stocks, Rohit, how are they looking technically? 30% down on Adani Enterprises. How does it even look?
Yeah, so I just did a quick check, and what we are really seeing is, if I look at retracements, Adani Ports from the bottom of 2020 to the high that it made in 2022, it's done a 66% retracement at around 470. So that's going to be the next support that we would probably watch for. Does it hold that? Doesn't hold that? Similarly, for Adani Enterprises, from last year March, where it actually started this last rally, all the way to the top in November, 78% retracement coming in at around 2140, which is what it has touched intraday today. So these are two levels I think we'll watch and see if they hold. They could provide support to the stock, and that's what we'll watch.
How about the other stocks, Adani Green, Adani Transmission, Gujarat Ambuja, because that's, there is no concern really around that stock. We're talking about pledge and margin funding, but those numbers also don't hold out. I mean, there is no pledge as of December. How does that look technically?
So what Ambuja has done is, if I look at what it's done from March all the way to the high in December, it's given back 80%. The next low point is at around 288. In terms of, well, would it be exactly? It's more than 78%. So I would actually have to look at its previous lows as the next set of supports, which is at around 275 to 297.
Fair enough. Adani Transmission.
So Adani Transmission, again, I'm considering the lows of March 2020 and the highs that they made in September. We did 61% in the last few days. It's not, so this hasn't really fallen so much today as the others. And so 61% was at 1657. And it's sort of trying to hold that level for the last 2-3 days.
Sure. So what would be your suggestion as a trader? I mean, how would you look at these counters? You will avoid them?
So definitely we don't jump into them because, as a trader, I would, when something has so much news flow around it, you want to see it stabilize. You want the negativity to really go away. So for that reason, yes, I wouldn't touch it. I'll definitely look at other places because, there's so much excitement around what is happening at an India level. And shifting our focus towards one group and the happenings and the news flow, we don't even know what's the fight there, is to focus on what we understand. And I think what the budget has done is created that optimism to search for now ideas that will work. So why spend time on something that's not working for the time being?
Fair enough, fair enough. So that is our take on Adani's technicals. We started off on a bullish note in the morning. The budget, the finance minister obviously ticked all the boxes, everything that the markets really wanted in terms of growth. It wanted to hear in terms of income tax tinkering, in terms of capital expenditure. All of those things pretty much fell in place with a positive surprise. But the markets still struggling, 0.5% up. We were thinking that we will probably end up in the green today, of course, but with substantial gains. But Adani stocks is obviously playing on the sentiment. With that, it's a wrap from me. On the other side, Karunya Rao, my colleague, will come and do a closing bell. Thank you so much.
Continuing our commitment to ensure food and nutritional security, we are implementing from 1st January 2023 a scheme to supply free food grain to all Antyodaya and priority households for the next 1 year. Under PM Garib Kalyan Anna Yojana, the entire expenditure of about 2 lakh crore will be borne by the central government. For farmers, especially small and marginal farmers and other marginalized sections, the government is promoting cooperative-based economic development model. A new Ministry of Cooperation was formed with a mandate to realize the vision of Sahkar Se Samriddhi. To realize this vision, the government has already initiated computerization of 63,000 primary agricultural credit societies with an investment of 2,516 crores. In consultation with all the stakeholders and the states, model bylaws for PACS were formulated, enabling them to become multi-purpose PACS. A national cooperative database is being prepared for countrywide mapping of cooperative societies. With this backdrop, we will implement a plan to set up massive decentralized storage capacity. This will help farmers store their produce and realize remunerative prices through sale at appropriate times. The government will also facilitate setting up of a large number of multi-purpose cooperative societies, primary fishery societies, and dairy cooperative societies in uncovered panchayat and villages in the next 5 years. 75th year of our independence, the world has recognized the Indian economy as a bright star. Our current year's economic growth is estimated to be at 7%. It is notable that this is the highest among all the major economies. This is in spite of the massive slowdown globally caused by COVID-19 and the war. The Indian economy is therefore on the right track, and despite a time of challenges, heading towards a bright future. An agriculture accelerator fund will be set up to encourage agri-startups by young entrepreneurs in rural areas. The fund will aim at bringing innovative and affordable solutions for challenges faced by farmers. It will also bring in modern technologies to transform agricultural practices, increase productivity and profitability. To enhance the productivity of extra long staple cotton, we will adopt a cluster-based and value chain approach through public-private partnerships. This will mean collaboration between farmers, state, and industry for input supplies, extension services, and market linkages. The government's efforts since 2014
Welcome back. You're still watching Money Control's budget coverage, and just ahead of market close, we're looking at some recovery or some breather coming by because the markets were in a free fall last 1 hour or so. It's been quite a turbulent ride. I mean, we started on the positive note. We inched up higher after the budget speech got over, but then there was severe and massive profit taking of sorts which happened, and yeah, but then the good news or the silver lining here is that we have sort of recovered from that low point of the day. Right now trading along the flat line with a marginal negative bias for both the indices Nifty as well as Sensex. But let's talk about the big movers of the market right now. What's capping the downside or what's aiding this recovery from the day's low primarily has been FMCG and IT pack, and these two names incidentally have been one of the underperformers if we look at the larger trend of the market, whether it's IT heavyweights or if it's FMCG. Now today, of course, we've seen a good relief coming by and some positive momentum building up in both these packs. So let's talk about the IT index first. How are you reading into the index, and if there are any individual names that stand out right now? And not only today, sorry to interrupt, but not only today, but in the next few days, which could meaningfully revive.
So the IT index actually has been the worst performer of the year, and the reason for that is its close linkages to the global economy or to the US tech index itself, which was down a lot. Now what we are seeing is already a recovery in the US tech index that seems to have started. Of course, there are a lot of eyes on what the Fed does tonight, but my sense is that the worst may be over as far as the US tech index is, at least from a 3 or 6 month time period perspective, because a lot of the negatives have gotten priced in for now. Unless you get a further weakening of the US economy, that won't happen. Now put that in perspective to the IT index. We have retraced 50% of the gains that we had made 2020 to 2022, and 50% is significant. Now to bet that that will go to 61, it's a tough one. I sense that this is it. We've bottomed along with the US tech index. There should be a good rally in IT in stocks if we take a 3-month or 6-month time period with us. And in that sense, it will be broad-based. You need to get participation from all the tech stocks. But of course, the better performers of the previous period will always come to light, which means if you end up looking at mid-cap IT stocks like Tech Mahindra, Mphasis, and so on, or HCL Tech, or in the large caps, you'll end up again looking at Infosys, TCS. So that combo, it's like a whole. I wouldn't say it's this stock or that stock, but I think all of them benefit from any improvement or stability in the global markets. And so they are tending to show that, they're holding out better than
and with the talks of a soft landing actually becoming a reality, perhaps that's what's lending support, and the FOMC meet outcome is only a few hours away from now.
That's right.
So perhaps that's something that's providing resilience to IT stocks. TCS, Infosys, both up more than 1.5%. You have TechM up more than 1%. HCL Technologies, Wipro, all gaining more than 1%. So very, very firm rally being witnessed, especially among the heavyweights in the IT pack. What about FMCG? Now, as far as the budget announcement go, directly there's no impact as such on many of these FMCG companies, barring cigarettes, which of course are set to be become slightly more costlier. But if we look at FMCG, what do you think? I mean, which are the names that are standing out on the technicals which look strong?
So the FMCG sector has not been my top pick. When I look at a longer term chart, it looks more like a ending structure, what we call it, which means that slowly the performance is waning. And so it's not a sector we really want to allocate to. It may be holding out today because typically on bad days, money does some shifting towards FMCG and defense. Even if you think of it from a budget perspective, retail is spread out. FMCG is just one segment, but there's also, cars and, autos, there's housing, there's so many places where excess flow or excess savings can go into. And I think if you look at the major gainers percentage-wise, I can actually see still at the end of the day, ICICI Bank, HDFC Bank still in the positive list. And so those really reflect, the positivity from other segments that can really come along. So FMCG is not a place I want to allocate to. I would look at other parts of, retail to go with.
The discretionary plays, are you referring to those, or pure play retail like a V-Mart or D-Mart, etc.?
I would think like autos, for example. So if bond yields come down, say for example, if US is going to slow down on raising rates, and if we can get our bond yields down, which are struggling at around 7.3%, which is probably why we've kept the budget tight, at the same time spending more, which means we want growth, but we don't want interest rates to go out of control, which is very good. So the play out of that should be that bond yields in India should start falling with the rest of the world. And at that point of time, it spurs, borrowing and spending, buying of cars, houses, and that entire segment.
So not FMCG, but more consumer-centric, consumer-oriented stocks is something that you'd like to watch out for. And now I want to talk about the biggest dampener of the market, which is metal stock. Of course, following PSU banking index, metals have been one of the worst hit sectors or sectoral indices in today's trading session. It's down almost 4.5% as we
speak.
So
what I'll really highlight is you're looking at the NSE metal index.
Yeah.
If you actually look at the BSE metal index, it might look much better because within the metals, you are seeing Jindal Steel up 4%, Tata Steel is up, Hindalco is up. The NSE metal index has Adani stocks in it. The BSE metal index has none of the Adani stocks in it. And so that's the differentiator.
We're seeing the Adani impact.
Yes.
Yeah.
And so all the infra spend again announced today is rubbing off on metal stocks, which is why the metal stocks are actually positive. Tisco, GSW, Hindalco, they're all positive. And so the NSE metal index is just not reflecting that because of the Adani inclusion.
And I just want to understand, I mean, what is it that, you are making of the markets right now? Because intraday, look at the kind of volatility. Of course, today was an exceptional event and series of events that we've seen where we were, keeping our fingers crossed and hoping that 18K will once again be reclaimed by Nifty. That did not only that didn't happen, but we've also come off very significantly right now, close to 17,600. What is going on in the markets, and in the next couple of days, how do you see things playing out?
So we've seen, 300 points up in the morning, 300 points down intraday, and now we are sort of at 50 points minus. What does it all mean? I think yesterday, once the Adani Group FPO went through, all eyes were that the budget would, take us through, and the budget had everything that, anybody would have hoped for. So the dampener's really been just the news flow around the Adani
2 seconds
Group.
to go for the market close. I want to just quickly highlight that as well. Okay, so Nifty has closed just above that 17,600 mark. with a loss of 0.3%, not something that one had expected right after the budget speech got over and the market started soaring. Nobody would have thought, I mean, this is where we would end. The Sensex, meanwhile, is looking okay. It's up about 0.3%. Bank Nifty has also sort of gotten hit because of the overall PSU banking index, which is, weighed heavy quite a bit. PSU banking index down almost 6%. What a bloodbath scene there, of course. Nifty metal index, which we were just discussing about because of the Adani impact, again taking it on the chin, down more than 4% in trade. What has really capped the downside? Two packs really come to mind: Nifty IT and Nifty FMCG. Now, these two indices together showed a fair amount of resilience, because of which the downside was capped to an extent. Of course, we've still ended in the red, but the quantum of loss or the losses have been cut by a fair bit, and we've seen some amount of recovery in the market in the last hours. So yeah, there you have it. Nifty mid-cap, meanwhile, is worse off, down 1%. Want to also see the small-cap index as well, how those stocks have fared, and where is it that small-cap index, similar to mid-cap, down about 1.3% in trade. I want to flag off individual losers in trade as well from the heavyweight index. What has suffered the most, of course, without any second guesses, are Adani stocks, Adani Ports and Adani Enterprises. Massive carnage seen across both of these stocks, single-handedly pulling the index lower. HDFC Life was down more than 11%. You had SBI Life taking it, on the chin today as well, down 9%. Bajaj Finserv was down 5.5%. SBI was down 5%. Of course, banking and financial, especially public sector lenders, were the ones which suffered the most. On the flip side, among the handful of gainers that we had today, which were sort of the saving grace for the day, you have an ITC. What a U-turn ITC made, intraday again. It tanked a fair bit after the announcement of that duty, 16% duty on cigarettes, but what a revival it saw from those levels, up 2% in trade. ICICI Bank is also up more than 2%. Steel, Hindalco, Tata Steel have been sort of the top gainers pretty much all throughout the day. Very, very consistent. Both of them among the top gainers. You also have a TCS, which rallied more than 1.5%. Tata Consumer, so a lot of Tata names actually. TCS, Tata Consumer, Tata Steel. Lots of Tata Group names. Any of these that you want to flag off, particularly if we look at the technicals?
So tech, we've already spoken of IT, so TCS comes in there. The metal pack is very interesting because it works well when the dollar is down, yields are down, and commodity prices are rising, which is sort of been the pattern. And so Tata Steel is one of the big names within the sector. So definitely that stands out for sure.
All right. Thank you so much for talking to us in great detail for most part of the day today, and talking to us about a host of stocks, sharing your picks, your views, and your readings of a host of charts as well as individual names. With that, we're going to take a break again. We'll be back again soon with more coverage on budget and more analysis on the budget fine print.
The 75th year of our independence. The world has recognized the Indian economy as a bright star. Our current year's economic growth is estimated to be at 7%. It is notable that this is the highest among all the major economies. This is in spite of the massive slowdown globally caused by COVID-19 and the war. The Indian economy is therefore on the right track, and despite a time of challenges, heading towards a bright future. An agriculture accelerator fund will be set up to encourage agri-startups by young entrepreneurs in rural areas. The fund will aim at bringing innovative and affordable solutions for challenges faced by farmers. It will also bring in modern technologies to transform agricultural practices, increase productivity and profitability. To enhance the productivity of extra long staple cotton, we will adopt a cluster-based and value chain approach through public-private partnerships. This will mean collaboration between farmers, state, and industry for input supplies, extension services, and market linkages. The government's efforts since 2014 have ensured for all citizens a better quality of life and life of dignity. The per capita income has more than doubled to 1.97 lakh rupees. In these 9 years, the Indian economy has increased in size from being 10th to 5th largest in the world. Continuing our commitment to ensure food and nutritional security, we are implementing from 1st January 2023 a scheme to supply free food grain to all Antyodaya and priority households for the next 1 year. Under PM Garib Kalyan Anna Yojana, the entire expenditure of about 2 lakh crore will be borne by the central government. For farmers, especially small and marginal farmers and other marginalized sections, the government is promoting cooperative-based economic development model. A new Ministry of Cooperation was formed with a mandate to realize the vision of Sahkar Se Samriddhi. To realize this vision, the government has already initiated computerization of 63,000 primary agricultural credit societies with an investment of 2,516 crores. In consultation with all the stakeholders and the states, model bylaws for PACS were formulated, enabling them to become multi-purpose PACS. A national cooperative database is being prepared for countrywide mapping of cooperative societies. With this backdrop, we will implement a plan to set up massive decentralized storage capacity. This will help farmers store their produce and realize remunerative prices through sale at appropriate times. The government will also facilitate setting up of a large number of multi-purpose cooperative societies, primary fisheries societies, and dairy cooperative societies in uncovered panchayat and villages in the next 5 years. 75th year of our independence. The world has recognized the Indian economy as a bright star. Our current year's economic growth is estimated to be at 7%. It is notable that this is the highest among all the major economies. This is in spite of the massive slowdown globally caused by COVID-19 and the war. The Indian economy is therefore on the right track, and despite a time of challenges, heading towards a bright future. An agriculture accelerator fund will be set up to encourage agri-startups by young entrepreneurs in rural areas. The fund will aim at
Hello and welcome to this budget special from Moneycontrol. We are looking at budget and the economy in the next half hour. We are going to be joined by top-notch economists and bankers to decode what the budget means to the economy and to the financial sector. I'm joined by Soumya Ghosh, the Chief Economic Advisor at State Bank of India, Mridul Sagar, who is former member of the Monetary Policy Council, former Executive Director of the Reserve Bank, and in a bit we'll also be joined by Aditi Nair, Chief Economist from ICRA, to give us the banking perspective. Neeraj Gambhir, the Group Executive and Head of Treasury, Markets and Wholesale Banking Products at Axis Bank, will also be joining us. Soumya, let me start with you. From the looks of it, everything you economists asked seems to be there in the budget. The deficit is down below 6%. The assumed GDP at 10.5% is not all that ambitious. I mean, when I did a poll, I got 10%. So would you say this is a good budget, prudent budget based on realistic assumptions?
No, I think, Lata, thank you. I think this is a prudent, pragmatic budget. The numbers are actually possibly underestimated because with a 10.5% nominal GDP growth rate, the tax finance is actually coming just below 1, and which is actually lower than the historical average of 1.1. And at 1, this tax buoyancy is lower than the for the decade ending 2000. So it is actually estimated at the lowest level from the 1999-2000. So in all sense, these numbers is likely to be achieved. This is point number 1. The point number 2 is that the borrowing numbers are also lower than the market expectations. The market was expecting any number at between over 16 trillion. Now the net borrowing is at 12 trillion, and the overall gross borrowing is around 15.4 trillion, so which is lower than the market expectations. And finally, the most important thing is that if you look at the capital expenditure, which is there in the budget, plus the creation of the capital assets, plus the capital expenditure of the central public sector undertakings, that number comes at 18 trillion, which is basically a 14% jump over last year. So all said and done, it's a budget with a thirst on capital expenditure. It's a budget with numbers which are reasonable and pragmatic and will be mostly achieved. So my sense, it's a good budget, and that, if you look through the numbers.
I take your point. I will come to the capex part and the stimulus that it may provide in just a bit. Soumya, let me get initial comments from the other guests as well. Mridul Sagar, your contribution to Moneycontrol, your excellent piece. Mridul, you can hear me? Okay, I think we'll get to Mridul in just a minute. Let me get the banking perspective. Neeraj Gambhir is with us. Neeraj, Soumya ended his analysis by saying that the borrowing number is below what the market was expecting. Market would have been prepared even for 15.8 perhaps, maybe even 16, but 15.43 trillion rupees to be borrowed is something the market can take with both hands. You agree?
Yeah, I tend to agree that the borrowing number is in line, broadly in line with the market, not below, I would say. But in line is also a bit of a relief because the worry was that this being a full budget ahead of the election, there could be tendency to sort of spend a little bit and maybe compromise on the fiscal deficit. But the fact that the finance minister has continued with the glide path on fiscal deficit, stuck to 5.9, reiterated the fact that we will get down to 4.5 by 24-25. I think these are all assurances being given to the market that the borrowings will be well controlled and the fiscal deficit numbers will be maintained. And coupled with the fact that states have borrowed less last year and we need to still see what state numbers are going to look like for this year, I think there is a bit of a relief rally in the market to say that it is not all that bad.
Okay, Neeraj, let me just play the devil's advocate. Last year, or I should be saying this year, the states did not borrow as much as you correctly pointed out, and that gave more elbow room for you bankers to gobble up on central government bonds. Now, it's quite possible that in the coming year, the states will exhaust their full borrowing. Last year, for a better part, they have been maimed by the Omicron backlash as well. It's possible that there is more elbow room now and more bandwidth to go in for capex. If the states were to borrow their full length, and now they've been given a 3.5% fiscal deficit room, and if insurance doesn't come in, that's the big one. there are a lot of negatives for insurance companies. Premium over 5 lakh will not get tax benefits. So, it's quite possible that the guaranteed products, which led to a lot of buying of bonds, may not be that sumptuous this time. Do you see a problem?
Well, there are obviously a number of assumptions and there are a number of variables at play. The two of them you counted. I can count one more negative, which is basically that if the small savings increase that the government has budgeted for next year, if that doesn't play out, then also we will have a challenge. On the flip side, I think that is, and this is something that will play out through the rest of the year, is that if liquidity in the system continues to remain so tight, and there is a need for Reserve Bank to then do OMOs to support the liquidity in the system, right? That is something that we need to be also mindful of. There is obviously this whole question of at what point in time we will see FPI's return to the domestic bond market and whether there is going to be an index inclusion. So I think there is a bit of a variability at play here. We need to take one variable at a time. I think the main important variable for today's conversation was whether the fiscal deficit number and the intended central borrowing number is in line with what the market is asking for. And I think it was indeed the case, which is why there is a sigh of relief.
Okay. Well, actually, I was preparing for this discussion with Soumya, and he was also pointing out about the small savings expectation that they can take, what, 4.8, is it? 4.8 trillion rupees from the small savings. Soumya, would you agree that is difficult? See, the thing to say on behalf of the government is that there is this Mahila Samman Bachat Patra, which is a 2-year period with a deposit facility of up to 2 lakh for women. I intend to take benefit of that. And then there is also a senior citizens enhancement of maximum deposit limit. Won't all this help the government in getting more money from small savings? Soumya?
There are two parts to this discussion. The first part is the assumption in the current year. If you actually look into the numbers of the small saving collections till November, the government had budgeted, I think, around 4.2 trillion. I think around less than 50% of that has been achieved till November. But the target has been actually hiked to 4.3 trillion for this year. So I think there could be some, struggle in achieving that numbers. For next year, the 4.7 trillion numbers, however, is achievable because I think that will come on the back of that scheme for the women which the government has announced. So my overall sense is that given the fact that government has the small saving collection numbers have actually been revised significantly upwards, even as the collection till November are less than 50% of the earlier budgeted estimates, my sense is that the tax numbers could see a further revision upwards given the traction. So whatever you were saying seeing in the budget in terms of the revised numbers, that could see a further upgradation when the final numbers are announced.
Why do you say that? Actually, I was looking at the tax collections in November and December.
Yes.
Both these months, the tax revenue is lower than what it was in the November and December of 21. So why are you assuming that the revised estimates could be revised further up?
See, I'm not assuming that. This is basically based on the small saving number collections.
Okay.
If the saving collection is significantly lower than 50% today and that has been increased in the current budget, that means there has to be, this gap has to be fulfilled from somewhere. So if the market is able to give out this number in the next 3 months from January to March, it's fine.
Fair enough.
Otherwise, the tax numbers could come as handy as has been anticipated in the budget today.
Fair enough. No, but I'm just asking you whether next year this getting from small savings 4.8 trillion, as Neeraj says, could be a tall ask?
No, I agree with Neeraj because that this year it has been a tall ask. Next year also the numbers are almost similar if you look into the revised numbers and next year's numbers. So it is going to be, of course, a tall ask. But my belief is that the scheme which has been announced by the government, that could actually act as a cushion. But I agree with Neeraj that this is going to be a tall ask next year also, because if you are moving to a new tax regime and that will actually further, and with no changes in the capital gains, I think that will further incentivize the households to continue moving to the financial markets. So my sense is that yes, that will be a challenge.
Okay. Just that one more addition, Neeraj, and then I'll go to the other aspects of CapEx. Do you think insurance will not deliver this time? I think they gave you all 2 lakh crore of bonds, right? Bankers were warehousing some 2 lakh crore of bonds this year for insurance companies. You think that may not come next year?
Yeah, there is some downside to that number. I think one of the reasons was that last year, now after doing 2 lakh crores and whatever that number is that you talked about, all banks are in terms of limits, they are kind of full, right? So there is less incremental demand. There is also this issue of accounting between the cash and the derivatives, which impacts the bank balance sheet. So it limits the ability of the bankers to, warehouse these kind of transactions and then give it to insurance as a derivative product. So there are some of these technical issues that are at play, which make me believe that potentially this year you could have a lesser number on account of bond FRAs to support the borrowing program.
Okay.
But the fact of the matter is that fundamentally insurance is in a very secular uptrend, right? So it's not just about the tax. So there is a sustained upside, not just from insurance, but also provident funds.
I take your point. The market is telling you that message which you are telling me now. Today, the bond yields have closed at 7.27. When we started the day before the budget, it was 7.39. So, the market is loud and clear saying that, oh, this is the borrowing program, we can handle it with our left hand. That's what the bond market seems to be saying. I was expecting even Mridul Sagar to join, but we're having some connectivity issues. But we have another economist joining us, Aditi Nair, the chief economist at ICRA. Aditi, all the budget assumptions have got a big green tick from Neeraj and Soumya over here. They believe the growth assumptions, the tax growth assumptions, and the deficit assumptions are exactly what the doctor ordered. Would you agree?
Thanks, Lata. Well, certainly, I'll tell you where we are very positively surprised today is seeing a capex number which is much higher than what we had expected. And therefore, the fiscal deficit number for FY22 is also a little bit higher than what we were penciling in, as is the gross borrowing number. But given the fact that the increase is coming on account of capex, we're happy to see that. On the tax side and on the nominal GDP side, our nominal GDP growth assumption is 10% for FY24. And we think there's a little bit of overhang from the excise side, which will continue for the first 2 months. So, the base effect of the excise cut will continue for a couple of months. So we had actually expected the gross tax revenue growth number to be a little lower than what the government has penciled in. So just a minor sort of quibble on that front. I agree with you. Yesterday, the December tax numbers were below what we were expecting. So we kind of, the revised estimates we think are appropriate. But I totally agree with you that the December tax numbers underwhelmed to some extent. Okay. And that leads us to believe that there is a little bit of optimism in the gross tax revenue number for FY24. We would also...
I just want to add one point over there, Aditi. The finance minister herself said that the giveaways because of the extra, raising of the limit on the personal income tax is going to lead to a 35,000 crore of revenue loss. Now, if you take that as well, then I'm wondering if, there's just a wee bit of overestimation on tax revenues. We could be pleasantly mistaken, but even if it is an overestimation, it's extremely minor, so perhaps can be overlooked. But I want to flag off what you just started off, CapEx. And that's the big point of this budget, the flagship slogan of this budget. Soumya, do you think it has enough spunk, enough force in it to push the growth? Do you think this can spur private capex?
No, I think, Lata, the capex numbers are very aggressive, but just a small point of caution. Yes, the overall numbers, as I said to you in the beginning, if you look into the budget estimates, the creation of capital asset, the CPSE, the number comes at 18 trillion. There was some downward revision in the FY23 revised estimates. I think around 1 trillion crore less capital expenditure in the revised estimates. So we have to look at that perspective. But having said that, I think even if we are able to do 90% of what has been achieved, what is projected in the budget, I think that will itself will be a very good growth multiplier. Because I think all of us were expecting that, given the fact that private investment is still continuing to show just nascent signs of recovery, it will be worthwhile to push capital expenditure for the crowding in impact. And I think exactly that has been done in the budget. So my sense is that it will be growth positive and actually it will be growth accretive. And one final point regarding the nominal GDP, I think as we have discussed earlier also, I think given the fact that global economy is poised for a soft landing, lower commodity price cycle and maybe a lower crude prices could actually be growth accretive. So from that point of view also, I think we could see some surprises on the real GDP numbers. But as a whole, 10.5% is a reasonably fair assumption on the nominal GDP growth rate.
Fair point. Let me get the capex part, and now pleasantly we have got Mridul Sagar on the line. We had a problem connecting with him. Very important voice. He has made policy, was member of the Monetary Policy Committee until recently. Mridul Sagar, you had very strongly asked for a fiscal deficit even below 5.9%. I think even below 5.8 when you wrote for Moneycontrol before the budget. It's come in at 5.9. Is that a disappointment? And more importantly, capex. Do you think that is a very big stimulus for the economy? So two questions.
I think, so let me start with the capex first. I mean, there's absolutely no doubt that this is a big stimulus in the sense that, it's a 33% rise budget estimate over budget estimate, and actually 37% rise if you see the revised estimates. So this is unprecedented. And now the capex numbers have actually, one is the capital expenditure, but if you see capital outlay out of it, the capital outlays are at a record high. And I think we have to, and all of us should need to give credit to the government on this front.
Okay.
I think the declining trend in capex has been decidedly reversed over the last 3 years.
Got that. Let me ask Neeraj. Neeraj, is the private sector biting? Is the private sector on the verge of a capex outburst?
We've certainly seen an improvement from where we were. There is some initial stages of capex improvement, but I think this 10 trillion intent by the government, specifically in areas which can have a big multiplier effect, can be a good sort of crowding in factor for the private sector in next year. Remember, next year we will also be, hopefully, without any black swan events. Hopefully, I'm saying, because you never know when something will hit you. But coming out of pandemic, inflation settling down lower, monetary policy done with what it had to be done. These are all sort of surrounding factors which could actually give us that situation where finally private sector starts getting encouraged by the view forward and starts investing. So I think this, in that sense, combined with government's intent and the large outlay and the background factors, I think it could be a year when we could see a bigger impulse on the capital expenditure.
Okay, now let me play again devil's advocate. I'm also very happy with that number. We went cheering when we heard this number. But Aditi, maybe you're better placed because you look at the state's expenses as well. See, the government itself has trimmed its expense the current years from 7.5 trillion to 7.3 trillion. In the 7.3 trillion, from the start, they've also included the NHAI investments. Some 65,000 crore from last year was already included. And within that, they have set aside 1 trillion for the states. It is giving the impression that the center is also not able to find that many projects and put them out to bid all that quickly. They seem to have a problem. The bandwidth to spend. States have shown that lack of bandwidth even more. What have they spent? 38% of their intentions? You tell me, will they actually spend 10 lakh crore, and will the states actually be able to spend what's given to them?
So Lata, the revision downward in the capex numbers for FY23 from 7.5 to 7.3 trillion is basically because the interest-free capex loan to the state governments, the allocation for that has been reduced from 1 lakh crore to about 76,000 crore. And I think 76,000 crore now looks achievable based on what has been approved so far. For a variety of reasons, the pickup of this scheme was quite slow in H1 of last year. And now from the 76,000 crore, which is the revised allocation for this year, for next year, Government of India is stepping it up to 1,30,000 crore. So about a fifth of the incremental capex between FY23 RE and FY24 BE is because of the state scheme. Now, the other 80% is, dominated by things like railways and roads and other sectors where we believe that the government will be able to push through, and broadly, we don't doubt that the number is going to be achievable. But on the state side, we really hope that seeing how large the allocation was this year, now the states will actually build in the 1,30,000 crore into their budgets, and this is going to kick off early. And we're not going to have to see another downward revision next year.
Okay, so you're basically confident that it could get spent. Mridul, I wanted to ask you whether all this adds up to a bigger growth number. There are some who are doubting whether 10.5 nominal growth itself is an ambitious assumption, but they've given such a strong capital boost, stimulus. Do you think this can counter the negatives from global headwinds, and we may actually be able to propel faster on GDP?
I mean, there's absolutely no doubt that the growth will slow down in the coming period. I mean, a lot has been made out that euro area may not go into recession, the markets are gumbo, but overall, I think the growth possibilities for the next year are still very, very big. And it will rub on us, but I think this will help counter to the degree that our growth should not fall below 6. I mean, which would be a pretty good thing to do. So coming back to the earlier question about the fiscal consolidation, yes, and that is linked to what Diti just sort of mentioned. So clearly, the execution of CapEx is lagging behind. So what we need is really a combination that we focus a lot on execution and we focus on downsizing the government. I've been saying this times and again that we need some structural reforms, downsize government, so that we can create fiscal space. And I've been citing the euro area example where fiscal deficit was actually increased to 6.2 and 6.3 after the global financial crisis, 2 years after the financial crisis. But then they ran primary surpluses from 2015, bringing it down to 0.4%. And they were able to increase it to 7% when pandemic struck in 2020. And they are now back to 3.5 this year, 2022. I mean, this is the activism on the fiscal policy. After all, it's not just the monetary policy that works, but we have fiscal policy also has counter-cyclical effects.
That's true. Well, all that has resulted in about 23% of the total expenditure being interest payments. So, I take a point that in several ways, that kind of discipline has to come. Neeraj, coming back to markets, do you think that the rupee is now well safeguarded because one of the macros, fiscal deficit, seems to be firmly on the downward path? Or do you think the events of the day itself, the way in which we are seeing foreign investors march out, probably because of the attraction of China and the fact that crude is not quite falling, we are still in the 85 handle. All this, does it mean that come April, we will again worry about the rupee? I mean, we all know that Jan, Feb, March, the rupee is a strong quarter for the rupee. But come April, will we worry?
Yeah, I do worry about the overall level of balance of payment deficit that we are potentially looking at for next year. The headwinds around the capital flows have not yet receded. Clearly, the month of January has shown us the equity flows, again, approximately 40,000 crores worth of equity outflows in the month of January, maybe the second highest in last 12 to 18 months. Does mean that, the reversal in capital flows that we were all hoping to happen hasn't meaningfully happened. We are optimistic on FDI, but how much of that FDI increase can cushion for the FPI flows reduction needs to be seen. Overall, oil prices are still at the higher end of the range. So in a nutshell, BOP situation still looks that it will be in deficit, which basically means that the depreciation pressure on rupee is likely to continue. Okay. Unlike the last year, this year I'm hoping that the depreciation will be milder. The good thing in this entire event scenario is that the Reserve Bank seems to have rebuilt some bit of their reserves again, right? The reserve numbers have actually climbed up, partly maybe because of revaluation, but also partly because of the fact that they have been buying in the market in the past. So that gives them some more ammunition to manage the pace of depreciation. but I am currently looking at some kind of a minor depreciation going forward.
All right. We could have gone on. I wanted to ask you all about rural demand as well, but the finance minister is starting her press conference with the media. So thank you very much, Mridul Sagar, Aditi Nair, Neeraj Gambhir, and Shaumyo. We lost connection with him. But thank you very much for a very enriching discussion.
Dr. T.V. Somanathan, Secretary Economic Affairs, Sri Ajay Seth, Secretary Deepam, Sri Tuhin Kant Pandey, Secretary Revenue, Sri Sanjay Malhotra, Secretary Financial Services, Sri Vivek Joshi, Chief Economic Advisor, Sri V. Ananta Nageshwaran. I welcome you all to this press conference. Friends, first the Honorable Minister will give her opening remarks. Thereafter, we'll be taking questions from you. Before I request the Honorable Minister, I must request you all to please follow the norm of organization, one person, one question, please. Don't club too many questions together. That will help us give opportunity to friends. With this, I request Honorable Minister of Finance to proceed. Please begin the opening remarks.
Thank you. Good evening, and thank you for being here now after the budget has been laid on the table of the House. As opening remark, I'll just give a few indications of what has been highlighted in the budget. Broadly, I think the 4 emphasis points are on empowering women, giving a lot more attention to the SHG groups which are in the rural areas, trying to scale them up, give them the opportunity to brand and produce and also market their products in a far more scaled up and professional manner. Emphasis on tourism and training of youth for readying themselves for tourism, specific action for 50 destinations where comprehensive tourism action plans will be introduced. Then what is being called as PM Vikas, looking at Vishwakarma, people who create things, make things out of their hands using tools. In some states they are called Vishwakarmas, in some other states some castes are referred to as Vishwakarma, but what we mean here is to cover all those artisans and craftspeople who do things with their hands using some tools, so not specifically only to some particular communities, but to all who create the soft power of India through their craftsmanship. Then the 4 is green growth, the 4th one, which is in every sphere of life we have policy interventions and enabling provisions made so that India moves fast on the transition to renewable energy, the investments made for hydrogen mission, renewable energy transitional facilities which we need, natural gas, and also looking at biogas, also evacuation of power from renewable energy sources located in Ladakh to the rest of the country. So those are 4 highlights which I'd like you to go back to see the scale in which we are approaching these issues and the impact that it will have on large sections of India's population. Then, of course, I gave 7 priorities, which began with talking about inclusive growth, investments in infrastructure, also reaching the last mile so that those who are still left without a house or a sanitary facility or a road which is reaching them, and so on. So the last mile, reaching the last mile for those who desperately need that kind of a link are all being covered. Then we are also looking at a very futuristic fintech financial sector for which we have brought in some specific ideas. We are looking at also improving the industrialization of this country, where people will be trained for Industrial Revolution 4.0, which means they're going to be trained for AI, IoT, using Web3 in other words. So training manpower to ready themselves for industries which are rapidly becoming industrialized in the Web3 context. Then digital economy, unleashing the digital power of India in various walks of life, setting up an artificial intelligence research center, Center for Excellence. So all these are in Part A. There's a lot of increase in the agriculture credit availability, 20 lakhs being made available for agriculture credit. Also a sub-scheme under the PM Matsya Sampada Yojana, making sure that people living in the coastal areas are going to benefit from it, fishermen are going to benefit from it. Now, if largely the Part A has looked at these, Part B has aimed at rationalizing the customs duties, also making sure personal income tax, after a very long time, has had substantial changes which will benefit the middle class. And also because this country has been waiting for direct taxation to be simplified, also waiting for direct taxation to be a lot more easy in compliance, and therefore the new taxation regime that we brought in for direct taxation 2-3 years ago has now got greater incentives, greater attraction, so that people can unhesitatingly move from the old to the new. Of course, we are not compelling anybody. Those who want to remain in old can still remain there for enough justifications that they can have. But the new one, obviously, is now attractive because it gives greater rebate. It also provides for a simplified and smaller slabs, lower rates of taxation, and also slabs which are nicely broken down. So with all this, I think the budget, I've not gone into specifics, but I thought as an opening remark, this much will be sufficient to say this is a budget which is beautifully balanced. Both growth considerations, because the capital investment has never before seen double-digit investment announcements. 10 lakh crore, which includes 1.3 lakh crores being given to states, is going to give a big leg up for capital investment from government. So the balancing that I'm talking about is looking at public sector investments, continuing that good tradition of capital investment in infrastructure, and also attending to MSMEs, because they are the engine of growth. We've given them relief, we have also given them new access, we have extended and widened the emergency credit liquidity guarantee scheme, also given them back their securities, 95% of it, even if they fail to deliver on contractual promises which were during the COVID pandemic. So the balancing is, one, we could sustain the capital infrastructure expenditure from the government, simultaneously in the private sector give a lot of push and impetus for the MSME, and not forgetting the individuals, the middle class individuals who needed that kind of a tax breaks and relief through taxation. So the large macroeconomic considerations have also been kept in mind. The fiscal consolidation has not been kept in the back burner. We've attended to it. We are respecting the glide path we gave ourselves 2 budgets ago. 6.4 this year fiscal deficit, and the forthcoming year for which the budget is presented now, 5.9% fiscal deficit. So broadly, I leave it at this. I suppose when you ask questions, we can answer the rest. Thank you. Thank you for coming here today.
Good afternoon, ma'am.
Good afternoon, ma'am. Shishir here from Hindu Business Line. Ma'am, my question is that when there is an announcement for 7 lakh rupees under new tax regime, that will no tax to be paid, and then you are talking about rejigging the new tax regime, does this mean that this is the end of exemptions for various incentives, exemptions for investment and savings?
Well, I've already addressed this, I think. We want to make the new tax regime, which is without exemptions, attractive enough for people to think that this will be the best option for them because it gives them better rates. It doesn't also make the compliance a burdensome exercise. If rates are so low, you're going to benefit net by paying lesser tax. Even those exemptions that you would have otherwise gained from would have resulted in probably net amount being the same. So we made this a lot more attractive. But if there are people who still think that being in the exemption regime, which is the old regime, benefits them, they're welcome to continue where they want. But yes, the ultimate interest is to make the simpler regime more attractive. And that is why we've come up with this.
Ma'am, firstly, many congratulations on that fiscal consolidation, because I keep asking you that question. But the issue today is about people in terms of, there is a big gamble in terms of capital expenditure. When you do that, does it actually trickle down to the people? Does it create jobs? I know you've been doing this for the last 2 years. Are you sure that this will really trigger off job creation, one, to, money in the hands of the poor people? The second, of course, is about inflation, which, again, you, like last year, you haven't really touched about it, but you have had the letter from RBI. Your chief economic advisor yesterday says we are in uncertain times, but we hope that it will be under the check of 4 to 6%, hopefully the lower band of RBI. What is your answer to both these points?
First of all, on the inflation, I think, yeah, you're right in saying RBI wrote a letter and what. But in the meanwhile, you've seen inflation come down, both the CPI and WPI. Action is being taken by the government. We take inflation-related steps as and when things develop in the ground and in response to it. And that has borne result. So inflation is not something which we are looking the other way while it is changing up and down. We have kept attending to it, and as a result, you find the result. On fiscal consolidation, you asked me the question, and I've already explained that we've attended to it with all earnestness, having respected the glide path we gave ourselves earlier. Jobs. Yeah. See, first of all, I find it a bit odd you may want to ask this question like this. Capital expenditure. I would have appreciated if you asked me, you said something in the BE, but you have not really exhausted what you put forth. You have not really used it in the ground. It is unfulfilled in the sense targets are not achieved. I would have been happy to answer if that were to be the case. But you're asking me a question about, in the sense you are implying that we have fully utilized what has been kept for capital investment. Therefore, it makes me feel odd that you're asking a question of actually have jobs been created or not. When projects are undertaken and money is utilized, and that it is utilized is coming through from the budget statement, how would the projects get completed without manpower, without jobs? Not all projects can be completed, even 1%, without human intervention. So obviously jobs are happening in the ground. So
Ma'am, I want to ask you, ma'am here. Ma'am, I want to ask you what percentage of taxpayers had moved to the new tax regime in the last assessment year? And is there a number that you expect, 50%, 60%, whatever? And number two, ma'am, there's a specific mention for expenditure towards MSMEs. Now, is there an estimate of how much, what was the dues that companies had claimed as expenditure and which has not actually been paid to the MSMEs?
Sanjay, you want to answer on?
On your second question, that is on the MSMEs, well, we don't have that data. Certainly we don't have that data. And it's not, I mean, we don't take that data from the taxpayers in their returns, so that data we will not have. But certainly, you know, we are all aware of this huge problem of timely payments not being made to the MSMEs. So in that direction, you know, this is certainly a positive step. Coming to your first question on the exemption-less regime, let me say that for companies, the 22% tax regime that we got, 61% of our tax now, the corporate tax, more than 60% is actually coming from the exemption-free tax regime. Individuals' data we will not have, but we are very hopeful that this particular scheme for individual taxpayers, the PIT, I think the majority would prefer. I mean, all of you, if you all do your own calculations, I think majority here would be now wanting to shift irrespective of their incomes and the deductions and exemptions that they claim. They would be finding it more attractive to shift to the new tax regime, majority of them.
Ma'am, very good afternoon. Congratulations on a great budget. It's very clean, simple, nicely done. Ma'am, one quick question on capex and one more on petroleum subsidy. Ma'am, your capex for RE is lower actually in terms of the spend as of now. But the target is, you know, greatly stepped up for FY24. So what gives the confidence that it will be all utilized? That capex RE is lower, ma'am. 7.28 versus slightly lower. And a big jump for FY24. So what gives the government the confidence that all of it is going to be utilized and well spent? That's one, ma'am. And second, ma'am, on the petroleum front, the LPG subsidy has been kept pretty low. You had announced certain additional measures last year in May, along with the deep cuts in excise on petrol, diesel. So what happens to those announcements regarding LPG subsidies? They have not been rolled over. And plus, ma'am, there is a demand coming in from oil cores now after LPG losses that you have made good by giving them money. That something needs to be done on fuel also. So would the government consider?
The last bit, something has to be done for who?
Basically, demand coming in from oil cores in terms of
oil marketing companies.
Yes, cash compensation.
The money which is now being given is not for that.
Not for that, ma'am. So, all of it.
So, on your first question on capital expenditure. So, yes, the revised estimates are about 97% or 98% of the budget estimate. Yes, there is a slight deviation. It's mainly on the state capital expenditure, which is falling short of the 1 lakh crore. Actually, the central capital expenditure is going to exceed the budget estimates. State capital expenditure is not expected to reach the 1 lakh crore figure because some portions of the state capital investment scheme have reform conditions. So some states have not been able to meet some of the conditions. Therefore, we expect, I think the figures are there, about 76% of the state capital expenditure scheme is likely to be spent. That's the revised estimate. So the shortfall is actually on the state side, not on the central side. Point number one. What gives you the confidence for next year? I think if you look at the allocations that have been made, they've made in actually the increments are in 4 clear areas. One, railways. The railways has enough projects to absorb the additional capital expenditure. The second is highways. They have adequate projects running to absorb this capital expenditure. The third is states, 30,000 crores. Now, yes, there will always be a challenge, but I think the states are gearing up now. This 2 years of this experiment has helped them to improve their spending capacity. And we are also seeing an uptick in the second half of this year on the state capital expenditure. So I'm reasonably confident that the states will absorb the 1,30,000 that has been provided. And the other big item on the central side is the petroleum capital expenditure, which is for retrofitting of refineries to meet emission standards and pollution standards, and partly for augmenting our strategic reserves. So I'm quite confident that we'll meet the expenditure targets.
Please.
तरुण शर्मा फ्रॉम जी बिजनेस। मैम, जो डिसइन्वेस्टमेंट का जो टारगेट है वो 65,000 से 50,000 किया है और नेक्स्ट ईयर का 51,000 किया है। तो मैम इससे हम ये समझें कि जो दो गवर्नमेंट बैंक का जो प्राइवेटाइजेशन होना था और जो दो इंश्योरेंस कंपनीज का जो प्राइवेटाइजेशन होना था वो अब 2024 के बाद ही संभव हो पाएगा, उससे पहले नहीं हो पाएगा, क्योंकि मैम जो टारगेट ये कर रहे हैं। दूसरा सवाल मेरा संजय सर से है। ओके।
जैसा कि आपको विदित है कि डिसइन्वेस्टमेंट तो मार्केट कंडीशंस और कई चीज़ों से निर्भर करता है, तो उस हिसाब से जो प्रैक्टिकल और प्रूडेंट टारगेट है वो रखा गया है।
From the New Indian Express. Ma'am, what was the need to lower effective tax rate for high income group at this point in time? And also tax collection at source has been increased from 5% to 20% or on overseas tour package. So what is the reason behind this massive increase?
See, the tour packages are generally taken by people whose effective tax rate is certainly more than 30%. So if we are charging them 20% TDS, I don't think it is high. Our attempt always has been to charge TDS at more or less similar rates, if not exactly the same rates. So that answers your question number one. Question number two on, I think you are referring perhaps to surcharge, which has been reduced. Well, our rates, the highest tax rates in our country were amongst the highest, even more than, some of the developed countries. And so, in any case, it was introduced as an interim measure, and so that has now been reduced, so that the effective tax rate, highest effective tax rate becomes 39%.
I'd just like to supplement that. There is a consistent theme, if you see, both on the new tax regime and on the changes that you're seeing in this budget, that the move is towards lower rates but fewer avoidance measures and exemptions. So if you look at high net worth individuals, there are a number of tax avoidance removal measures in this budget, along with the reduction in surcharge. So if you look at market-linked debentures, if you look at very high-value insurance policies, and a few other measures, so the marginal rate is coming down, but some of the devices used predominantly by those in that highest marginal tax rate are also being rationalized. So it's not necessarily a net reduction, it is a reduction from a high marginal rate inducing certain avoidance devices to a lower marginal rate with fewer opportunities to avoid.
74, please.
One's mind being part of a political party. But consistent with what we believe, we placed our emphasis and priorities on those. And that's what you've seen in the budget.
मैडम, मेरा सवाल है आपसे। मैं संजय शर्मा हूं, लोकमत अखबार से। मैडम, आपके बजट में विपक्ष की तरफ से कोई ज्यादा प्रतिक्रिया नहीं आई है, लेकिन इस बजट से महिलाओं को काफी उम्मीदें थी। घर की महिलाओं को जो महंगाई से पीड़ित थी, रसोई गैस के सिलेंडर के दुगने दामों से पीड़ित थी, कहीं ना कहीं आटे से लेकर के रोटी तक सारी चीजें महंगी हो गई है। तो क्या इससे आपको लगता है कि कुछ इसमें महंगाई पे भी फर्क पड़ेगा और घर की जो रोटी है, जो घर की जो रसोई का जो सामान है, उसमें इस बजट से कुछ फर्क पड़ेगा?
गवर्नमेंट का निर्णय को देखे होंगे कि गेहूं के लिए मार्केट में रिलीज करने के लिए आदेश हुआ है, जिससे गेहूं के दाम कम होने के इतना क्लियर इंडिकेशन है, जिससे सीधा घर में रसोई में फर्क पड़ेगा ही पड़ेगा। सो उसको आप बोलना नहीं है, ये नहीं है कि मैं उसके ऊपर कुछ बजट में नहीं बोले, मगर बजट से बोलने से पहले एक्शन ही हो गया है ना, कि घर की रसोई के लिए गेहूं आटा के लिए मार्केट में रिलीज करने के लिए निर्णय सरकार ऑलरेडी कर चुकी है। एक मिनट।
साथ ही साथ जो है महिला जो है वो भी एक परिवार का सदस्य है, तो जो रिलीफ जो इतना टैक्स पर्सनल इनकम टैक्स में दिया गया है वो भी परिवार के पास में और महिला के पास में आएगा, उसके हाथ में आएगा, जिससे वो अपना घर का खर्चा चला सकती है। सो वो भी एक महिला के लिए, हमें नहीं देखना चाहिए कि महिला के लिए नहीं है, वो भी महिला के लिए एक बेनिफिट है।
गेहूं पुरुषों के लिए भी है और महिला के लिए टैक्स भी है।
Hi, ma'am. Meghna Mittal from ET Now. The fiscal glide path that you have given is 4.5% by 2025-26, which may be considered slightly bold. But does it also indicate your confidence in continuing tax buoyancy in the coming years?
Somanathan has already answered it. Yes, tax buoyancy, as you saw even yesterday, GST collection figures have come. Direct taxation buoyancy is also observed in the current year. That is one thing. I think to the credit of this team, there's been a very robust management of macroeconomics. That certainly bears an impact. So all of us might talk about this particular step or that particular step, but I think together, revenue, expenditure, disinvestment, banking, all of us together have worked in such a way that where you can earn more through tax avoidance related measures, and similarly where you can bring in more people into the tax net, you are taking steps. Similarly, prudent ways of effective expenditure without cutting down expenditure, committed expenditure or other expenditure, are all ways in which you're making money mean more, and for every rupee that you spend, you get a better set of returns. So I think efficient management also has a very big role to play here.
I just wanted to add to your question. The estimates in the budget, the revenue estimates in the budget, do not assume a buoyancy greater than 1 for the coming financial year. It assumes a buoyancy of 1. Gross taxes are expected to grow by the same 10.5% by which we have estimated the GDP to grow, which is slightly lower than the figure implied by the economic survey. And therefore, we are assuming only a buoyancy of 1. But if the experience of this year is repeated next year, then it may in fact be more than 1. But we have taken a conservative assumption. And I think the very fact that the commitment to 4.5% was reiterated word by word in this budget gives you an indication that we feel that we have the means and the ability to reach that target by 2025-26. I would also point out that many of our expenditure increases are on discretionary spends. We have kept a very tight lid on the irreducible types of expenditure, and therefore there is room in the budget, both on the revenue side and on the expenditure side, for us to reach that fiscal deficit target by 2025-26. And it is not likely that the finance minister has reiterated it in parliament today.
Ma'am, Timsi Jaipuria from CNBC TV 18. Ma'am, I have two questions. Firstly, on the TDS reforms, you've come out with two specific reforms. For one, 20% TDS on foreign investments. Why has this been introduced? Is it to curb the flight of capital or investments which was going outside the country? And secondly, on students who are going outside to study, on that also the TDS has come, there's a 5% that has been levied, or it has been it has been reduced.
There is no change on education, or absolutely not. That's wrong. Your facts are wrong.
But what happens to the amount that one spends in staying there as a student?
First correct the thing which you've said, because yours is a very powerful voice, and that can spread among your dosts, and that can go out. No change has been made for education or health purpose, LRS. Please, I hope my voice is audible much more than Timsi's.
Thank you for correcting me, ma'am. But on the foreign capital, on the foreign investment, the TDS of 20%, if you could explain the rationale.
I think this question was asked, and I already answered it, to say that this is actually coming from income, and the income tax rates for those categories of people who are using this LRS to send money outside is much more than 20%. And so they were in any case, to pay for the tax. And in case they don't have to pay for the tax, they can always get a refund.
It is our impression, and there is enough information to indicate that there are quite a lot of people who are able to make these remittances, but whose tax returns are disproportionately low compared to what they send as remittances. Now that means if you don't collect the tax at source, you have to take measures later to catch them. That is much more difficult. If you are able to make remittances to invest in a property in Manhattan, or in a stock brokerage account in Dubai, or if you are going to take a 30-day tour of the world, almost certainly your effective tax rate will be 20%. So, yes.
We have learned from both the economic survey and the RBI report that there's a lot of public investment and private consumption. Are you still happy with the private investment? Are you still expecting it to grow? Or do you think for the moment it is only public investment that will go on?
Hi. Yesterday in the press conference, we answered this question, and we also had a slide up there in the presentation we made yesterday, that private capital investment has been improving every year in the last 3 years. For example, in the first half of 2021, based on quarterly earnings reports filed by listed companies, the capital expenditure was 2.1 lakh crores, which increased to 2.4 lakh crores in 21-22 in the first half, April to September. And 22-23, it has gone up to 3.3 lakh crores. And then you look at the RBI survey on capacity utilization and investment spending plans of the respondents. There is a very clear sign that many private sector companies are looking to enhance their capital expenditure. So both in terms of intent and in terms of actual spend, private capital investment is showing very clear signs of revival. Thank you.
Ma'am, this is Ujjwal Narayan from Newsrise. Ma'am, this is your 5th budget, and when you started in the first budget, you talk about India reaching to a 5 trillion economy by 2025. So just I wanted to know what is the situation, because yesterday CA has put forward another goal post of becoming a 7 trillion economy in next 7 years. So what is happening to that target? That is my simple question.
See, we are moving along to achieve our targets, both mine and his. We'll achieve, we'll achieve.
Good afternoon, ma'am. This is Chetan from India Today Group. Ma'am, while calculating the fiscal match for FY24, how did you assume the disruptive variables like the crude prices and, of course, China unlocking and its impact on commodity prices? What was the benchmark that you were the thinking behind the rationale?
This is a question that keeps coming every budget, and I keep giving you the same answer. That there is no part of the budget mathematics that has a crude price number as an input in any spreadsheet. See, because there is no direct subsidy on any petroleum product. Unlike the fertilizer price or the price of the MSP, these have direct impacts on the budget. The petrol price would have an impact only if it triggers some major change in the tax system. Otherwise, the petrol, diesel, oil prices do not directly affect our budgeting. So it is not that there were days, maybe 10, 15 years ago, when there was a lot of subsidy on these commodities. At that time, a crude price assumption was inherent in the budget. Today, there is no inherent crude. The assumption we are making in the budget is only that there will be no subsidies on petrol and diesel, and that global prices will be such that there will be no subsidies. What the global price will be, I don't need to make an assumption. So no assumption has been made.
Confusion since last year when people referred to what was said in the economic survey as though it was said in the budget itself. The budget didn't say it then, the budget doesn't say it now.
मैं आमिर हूँ न्यूज़ नेशन से। पहला सवाल तो ये कि जब शुरुआत हुई थी एक तरह से मोदी सरकार की, तो कहा था कि अर्थव्यवस्था को बेहतर करने के लिए कड़वे घूंट पीने पड़ेंगे और बहुत ही कड़े मेजर्स लिए गए स्टार्टिंग में। लेकिन आज ये देख रहे हैं कि सरकार ने कड़वे घूंट पिए हैं जनता को खुश देखने के लिए। तो क्या ये चुनावी बजट है, इसको मानती है? और पहला ये, दूसरा ये कि इनकम टैक्स में जिस तरह से जो छूट की सीमा है, जो पहला फेज है आपका जिसमें 7 लाख तक की छूट है, तो उसमें वो फेज आपको लगता है कि इससे राजस्व पर भार पड़ेगा? कितना भार पड़ेगा, कोई एस्टिमेट है इसमें?
We have said it in the budget speech itself as to what is the net revenue foregone. उसका घोषणा ही कर चुके हैं हम, हिडन नहीं रखे। सो वो आ गया है 35,000
direct taxes 37,000 crore, indirect taxes 1,000 crore, additional revenue through indirect taxation measures 3,000 crores, and so net is 35,000 crore.
This is Anuradha from Economic Times. In your budget speech, ma'am, you spoke about the review of financial sector regulators. So can you elaborate a little bit more on that?
Something?
Some of these exercises, when the regulations are brought in, they serve a purpose. Thereafter, the economy changes. So all the regulators have been doing it as part of their exercise, but there's a time now to take up a comprehensive review. And you will recall, RBI had formed a committee. They did it in 2020. They came out with a report in 2021. That is an ongoing process, and other regulators also will travel in that direction, that their regulations are what the economy needs today. Whatever tweaking is required, they will take up that steps. There's their own review, not by them.
Ma'am, congratulations on your penultimate budget. And ma'am, am I audible, ma'am? Congratulations on last full budget, and I just wanted to understand, you have mentioned, alluded to Banking Regulation Act Amendment and Banking Companies Act Amendment. Is it an indication that this year we'll see privatization on that front, public sector banking front? And if you could also throw some light on what kind of amendment it will undertake, apart from, allowing public sector bank for privatization.
These measures are for improving the governance of the boards and then investors protection, etc. These are not to do with any disinvestment or the privatization measures. These are the different set of measures. Over a period of time, the things have changed, and the Banking Regulation Act also fall in line, or not fall in line, has to be aligned with the present day needs, what the directors are, who can be there, what their terms are going to be. So those kind of amendments are there. And one component, of course, is on the investors' protection areas as well.
Good afternoon, ma'am. I'm Rima Sharma from Potibimba Life. My question, my question is regarding MSME sector in the northeast, especially in Assam. During pandemic, that Assam handloom sector and bamboo sector badly affected. many artisans forced to close their work. So in your budget, you have saying something MSME sector, you have given some relief and widen the possibilities. So as Gamusa also getting GI tag this time, so do you have any special relief for the Assam and Northeastern artisans, especially in the handloom sector and bamboo sector?
In the last year's budget itself, I think for sustaining livelihoods and also making sure that the Northeast livelihoods are attended to, we came up with a specific program called PM Divine for the development of Northeast, and that was executed through the Northeastern Council. So that program continues, and that will take care of livelihood related, whether it is in the weavers or in any other such community.
But after getting the GI tag in the Gamusha, do you have any special package for the encourage to the handloom sector?
So that is something which the state government will have to tag along with the existing programs, either through the handicrafts program, the artisan and other things that we are coming up with, for which the rules will come out, either they can use it, or the textile ministries. I'm sure they can always find out from the textile ministry for GI tagged Gamusha, they can ask for a dispensation. So this is possible, but that is for the state government to interact with the respective ministries.
Can you a little bit elaborate what kind of
I can't elaborate more, ma'am. You should ask the state government to deal with it for the respective ministry.
In your budget relief, what kind of relief you have given? Can you little bit elaborate it?
In my budget relief.
The MSME sector.
For MSME or for Gamusha or for GI, what are you asking? I'll send you some information. Ma'am, let's move on with other questions.
Good evening, ma'am. Arup from Business Standard. Ma'am, in this year's fiscal policy statement also you're speaking about unprecedented global headwinds and challenges. And again, you have not given forecast for the two succeeding years, in this case FY 24-25 and 25-26, although you have an internal consolidation roadmap. So are we going to see this as a new normal where you're not amending the FRBM Act again, and you're not giving two succeeding years forecast, but you will continue having an internal roadmap? Yeah. Yeah, but you're not amending for the third consecutive year, you're not amending the FRBM Act, and you're not giving two succeeding years targets.
Yeah, but we have given a glide path, and we are every budget stating whether we are aligning with the glide path given or not, right? So that pandemic was the new normal for 2 years, hasn't it been?
Hi, ma'am. Siddharth from Moneycontrol here. The gross borrowing number is 15.4 lakh crores. Net is the gross borrowing is 15.4 lakh. Net is 11.8 lakh. Especially with real interest rates returning to positive territory in the last few months, with the RBI hiking rates, do you see borrowing costs for companies rising, especially and perhaps the government crowding out the private sector, and could that impact private investments?
So I think the question of crowding out, actually the increase in borrowing over the previous year is 8%. The economy has grown at a nominal rate of 15% over this same period. So this is a level of borrowing which I think will not lead to any incremental crowding out. In fact, as a percentage of the size of the nominal economy, the total gross borrowing is actually going to be lower in 23-24 than in 22-23. So incremental crowding out, I think, is not a significant issue, and that I do not think will lead to any impact on borrowing costs in the private sector.
This is reiterating that point, that expected the required borrowings for the next year are of the same order what they are in the current year. Of course, the size of the economy has gone up. So it is not that the more money is being taken out of the savings which are available into the economy. So we don't see that impacting because it is of the same order. And even if you go 2 years back and just increase by nominal rates, the borrowings are, net borrowings are of the same order.
In fact, they are less than 2% more than the actuals. The figures stated were, I think, for the BE, but actually it will be only, estimates are that it will be less than 2%. Economy is nominally expected to grow at more than 10.5%. So, I mean, that should answer your question.
Ma'am, Ishwarya Paliwal from India Today. Ma'am, opposition parties have been calling this Nil Batta Sannata not good enough budget. Your comments?
Follow your Hindi. Would you say that again?
Ma'am, they said not good enough. Most of the opposition parties for the budget. Ma'am, your comment on that?
For what reasons, if I may know? Not good enough for? What reasons, ma'am? If you would like to repeat their words.
They have said, ma'am, most of the political
I'm
parties...
saying, if you could please repeat their words and say, not good enough, for what reasons per se?
They said nothing for the... they said nothing much for the middle class.
What?
Most of the... Yeah, this is what those parties... Ma'am, do you believe India will remain a bright spot, ma'am?
Please do. Agle mein kya? Next question, please.
Ma'am, my name is Mukesh and I work for Newsrise. Just wanted to know, is there a component of green bonds in the... does it contain green bonds also? I mean, what would be the component of green bonds? Sovereign green bonds.
Repeat your question, please.
You interrupted me. So basically, in this overall gross borrowing that we have for the year, what component of that would be in form of green bonds?
See, for the current year of $2 billion, one installment has already been done 1 week back, another one will be done a week later. So for the next, and the monies which we are going to raise now through these bonds, $2 billion, will be used for the projects which have been identified. And if those projects require in the pipeline that they require more money, then we will raise money through the green bonds, but that will be part of the overall borrowings which have been suggested. Pardon?
There is no target for green bonds for next year. It is something which will evolve as the year goes
on. Ma'am, this is Premanshu from Anandavajar Patrika. You have said that your capital expenditure has reached 10 lakh crore, but the interest payment expenditure that has also reached 10 lakh crore. And the interest payment burden, it is almost 40% of the revenue received. So do you think it is a matter of concern for?
It is always desirable for a government to have its interest payments as low as possible. But you are aware of the reasons for which government had to borrow a lot over the last 3 years. And all that I can say is the borrowings have been used very constructively towards growth-inducing investments and have not been frittered away on unproductive expenditure. Therefore, if the economy keeps growing at the rate that it has started to grow at now, then this is unlikely to be an unsustainable debt burden. We are quite confident that the interest burden will gradually come down as the GDP keeps growing. And to sustain that growth, the quality of expenditure, the quality of government expenditure is increasing. The revenue deficit is falling even faster than the fiscal deficit. So we are actually seeing an improvement in the quality of public expenditure, which will enable us to sustain this higher interest burden, which is a result of history. 2 years of COVID, where the entire globe has seen an increase in interest burden in all governments all over the world.
Good afternoon, ma'am. This is Karishma here from Business Today Television. Congratulations to you and everybody for yet another successful budget. Ma'am, you did talk about simplification of the tax regime. So my question is on the capital gains tax regime that was also expected. It was not a part of the budget announcement, but it's expected that a simplification could be done in the coming months. Is that something on the cards? And also, ma'am, secondly, no big bang announcements on cryptocurrency in this budget. What is the kind of update with the consultation paper that had to be submitted also to the FSDC?
For your question, first question, I have no answer because it's your expectation. You kept about it for the last few months and then you want me to answer on that? Oh, have they been? They've not told me about it. No. to say now. That's all right, but even then there's nothing to say now.
मैम मैं आलोक सीएनबीसी आवाज से हूँ सर। मैम मेरा सवाल यह है कि जो टीडीएस को लेकर क्लैरिफिकेशन आई हैं और उसमें खास तौर से जो 10,000 का जो थ्रेशोल्ड लिमिट है कई सारी चीजों पर खत्म कर दिया गया है, खासतौर से ऑनलाइन गेमिंग को लेकर। इसके पीछे क्या रीजन है? ऑनलाइन गेमिंग को लेकर अभी भी क्या सरकार काफी कॉन्शियस है या ऐसा लग रहा है कि अभी भी टैक्स लीकेज है वहां से, या बाकी चीजों पर भी जो खत्म किया गया है ये टीडीएस के लिए जो 10,000 का एग्जम्पशन, उसके पीछे क्या रीजन है?
देखिए, टीडीएस जो ऑनलाइन गेमिंग पे है अभी प्रत्येक विनिंग के ऊपर में था, लेकिन जो ऑनलाइन गेम्स हैं वो कई सारे गेम्स मिला करके एक सेशन बनता है। एक गेम कोई नहीं खेलता है, कई सारे गेम्स जो हैं एक साथ खेलते हैं। तो इसलिए जो टीडीएस अब लागू होगा वो समस्त गेम्स पे सामूहिक रूप से जब नेट जो विनिंग होगा, जो वो अपने पैसा जो उनका जो एक अकाउंट में से वो निकालेगा, तभी उसके ऊपर में देखा जाएगा कि कितना उसने प्रॉफिट कमाया है, कितना उसका विनिंग हुआ है। उसके ऊपर में टैक्स जो है लगेगा और उसी के ऊपर में टीडीएस भी लगेगा। और यदि वो 10,000 रुपए से अधिक है तो टीडीएस पहले लगता था, अब वो 10,000 की लिमिट हमने हटा दी। तो लिमिट तो हटा दिया है, लेकिन ग्रॉस पे लगेगा और नेट पे लगेगा और प्रत्येक विनिंग के ऊपर में नहीं लगेगा। ये हमने बदलाव किया है। So 2 changes have been made. One is that the taxation will be on the net winnings, because in online games generally you play a series of games over days. You don't play it, just one game and, like, you would be doing, say, race horsing would be, maybe once in a while. But this is over a period of time. So whatever are the net winnings, when you take that money from your account that you have made with the online gaming platform, the tax will be on that. So this is one change. The other change is that the TDS previously was on each winning, irrespective of the amount, on, 10,000 and more. If the winning is 10,000 and more, so some of the online gaming companies were keeping winnings lower than 10,000, say 9,999. So that we have removed. So there is no now threshold on TDS. That is the second change.
Hi ma'am, this is Priyashmita from Informist Media. Ma'am, I wanted to know that there has been an upward revision in the small savings estimates for FY23. However, data suggests that there is a shortfall. So how do you plan to achieve it?
Yeah, it's a good question, and I mean it shows good awareness of our numbers. I'm happy to see people read our deep statements with so much attention. It is a good question. What I can say is the market borrowing number is completely firm. That will not change. The remaining numbers have a little bit of fluidity, whether it is small savings, state government provident fund is a very fluid number. See, because if state governments change that number, it affects the overall balance of our funding plans. The market borrowing number is firm. The small savings number is, there is traditionally a seasonality where a lot of small savings comes in the last quarter because people plan their taxes in the month of February and March. So there is usually an upsurge. Will it reach this number or not? You see, these numbers are subject to a number of assumptions. But we are confident that in aggregate, the other sources except market borrowing, the aggregate of them will be close to what we have estimated. And therefore, I don't think this will have any impact on markets. Now, in terms of small savings, again, the date from which these new schemes come into operation is yet to be decided. So there are a number of factors on which the small savings number could fluctuate. But I repeat, it will not affect the market borrowing numbers. No, she's talking about FY 22-23 is my impression. Current financial year. Yes, I'm also talking about that. Again, the next year, 14 months before the end of the year, I cannot be firm on next year's numbers, but they are as firm as we can make them 14 months ahead of time. Well, I mean, if there is a shortfall somewhere, there is an increase somewhere else. We have shown you all the numbers as to how we meet the deficit of this year. How is it going to be funded? I have the statement, you have the statement too, since you've obviously read it, so I don't need to tell you. So that's how we will fund it. So this is a big budget in which something goes up, something goes down. Revenues have gone up, expenditures have gone up, some things have gone down. But in aggregate, as I said, we are confident of being within our market borrowing numbers. We are confident that the deficit that we have projected for the revised estimate is reasonable and will not be exceeded significantly. It will not be exceeded significantly. Beyond that, I cannot give you a pinpoint. You cannot land a Boeing 747 on a helipad. So, it's a huge thing. There will be minor, fluctuations here and there. But at a macro level, our numbers are good. I am confident about our numbers.
मैम नमस्कार, मेरा नाम महावीर सिंह है, फ्रीलांसिंग करता हूँ। दो छोटे से स्पष्टीकरण चाहिए थे। एक तो 7 लाख रुपए तक की आय जो आपने कर मुक्त की है, वो दोनों उसमें है, पुराना और नया, या सिर्फ नए में है? ओके। और एक आपने घोषणा की कि जो गाड़ियों के स्क्रैप के लिए सरकार कोई सपोर्ट कर रही है, उसके पीछे क्या मंशा है सरकार की? क्यों इस तरह के उसको बढ़ावा दे रही?
मंशा यही है कि एनवायरनमेंट के लिए पुराना गाड़ी को हटाना चाहिए, मगर वैसे बिना इंसेंटिव हटाना भी मुश्किल है, क्योंकि लोगों को लगेगा कि हटाने में से मुझे क्या फायदा है। सो इंसेंटिवाइज करना उसके लिए।
Scrapping of vehicles and replacement of vehicles as well. What is the kind of outlay that will be there and that we'll see in the coming fiscal?
I can see there are two parts to it. For the central government, all central government vehicles that are beyond the 15-year age limit will be scrapped. Those of them that need to be replaced will be replaced. This money is provided for in different departmental budgets because it is not a macro number that is planned centrally. The number is significant. It exceeds 1,000 crores. What it exactly is, I also don't know. I'd have to add it up from several books. For state governments, we are making this part of the scheme for state capital investment. If they need to replace old state government vehicles, then that support will come from this scheme. And they have to meet certain conditions on meeting the national scrapping policy.
साथ दूध और मछली उत्पादन के क्षेत्र का विस्तार होगा। किसानों, पशुपालकों और मछुआरों को अपने उत्पाद की बेहतर कीमत मिलेगी। साथियों, अब हमें डिजिटल पेमेंट्स की सफलता को एग्रीकल्चर सेक्टर में दोहराना है। इसलिए इस बजट में हम डिजिटल एग्रीकल्चर इंफ्रास्ट्रक्चर की एक बहुत बड़ी योजना लेकर आए हैं। आज दुनिया इंटरनेशनल मिलेट ईयर मना रही है। भारत में मिलेट्स के अनेक प्रकार हैं, अनेक नाम हैं। आज जब मिलेट्स घर घर में पहुंच रहा है, पूरी दुनिया में पॉपुलर हो रहा है, तो उसका सर्वाधिक लाभ भारत के छोटे किसानों के नसीब में है। और इसलिए आवश्यक है कि नए तरीके से उसको आगे ले जाया जाए। इसकी एक नई पहचान, विशेष पहचान आवश्यक है। इसलिए अब इस सुपर फूड को श्री अन्न की नई पहचान दी गई है। उसके प्रोत्साहन के लिए भी अनेकविध योजनाएं बनाई गई हैं। श्री अन्न को दी गई प्राथमिकता से देश के छोटे किसानों, हमारे आदिवासी भाई बहन जो किसानी करते हैं, उनको आर्थिक संबल मिलेगा और देशवासियों को एक स्वस्थ जीवन मिलेगा। साथियों, ये बजट सस्टेनेबल फ्यूचर के लिए ग्रीन ग्रोथ, ग्रीन इकोनॉमी, ग्रीन एनर्जी, ग्रीन इंफ्रास्ट्रक्चर और ग्रीन जॉब्स को एक अभूतपूर्व विस्तार देगा। बजट में हमने टेक्नोलॉजी और न्यू इकोनॉमी पर बहुत अधिक बल दिया है। एस्पिरेशनल भारत आज रोड, रेल, मेट्रो, पोर्ट, वाटरवेज, हर क्षेत्र में आधुनिक इंफ्रास्ट्रक्चर चाहता है। नेक्स्ट जनरेशन इंफ्रास्ट्रक्चर चाहिए। 2014 की तुलना में इंफ्रास्ट्रक्चर में निवेश पर 400% से ज्यादा की वृद्धि की गई है। इस बार इंफ्रास्ट्रक्चर पर 10 लाख करोड़ रुपए का अभूतपूर्व इन्वेस्टमेंट भारत के विकास को नई ऊर्जा और तेज गति देगा। ये निवेश युवाओं के लिए रोजगार के नए अवसर पैदा करेगा, एक बहुत बड़ी आबादी को आय के नए अवसर उपलब्ध कराएगा। इस बजट में ईज ऑफ डूइंग बिजनेस के साथ साथ हमारे उद्योगों के लिए क्रेडिट सपोर्ट और रिफॉर्म्स के अभियान को आगे बढ़ाया गया है। एमएसएमईज के लिए 2 लाख करोड़ रुपए के अतिरिक्त ऋण की गारंटी की व्यवस्था की गई है। अब प्रिजम्पटिव टैक्स की लिमिट बढ़ने से एमएसएमईज को ग्रो करने में मदद मिलेगी।
Managed a tough balancing act.
All right then, you just heard the finance minister and the finance secretary over there detailing, going through all those big highlights from the budget today, and what a budget it has been. It had something for everybody, for small income people, for women, for older people, some big cues on economy, some big push on how the government is looking at expenditure in the coming days. So there was something for everyone, but the happiest people today is the Aam Janta. The happiest people are those who are saying, well, finally something on income tax. Well, one could say one was really hoping it will happen because it comes right before the final general elections take place. It comes at a time when inflation has gone up. It comes at a time when cost of living has gone up. So this is a huge relief for the Aam Aadmi. And as the Prime Minister also said that this is a budget that had something for everyone. And even those in the rural sector, let's not forget that. So while we look at that, we thought, since throughout the day you've been looking at a non-stop coverage of Moneycontrol. We've got you experts, we've got you guests, we decoded things for you. But what about people? Isn't that the whole, the beauty of this digital medium, that we get to interact with them, one-on-one? And that's where we are here, joined by the Youngistan, and we'll be going to them, taking questions from them. And answering all of that is thankfully not me, but Pranjal Kamra. Pranjal, you've had quite a full day in the newsroom, and now it's time to give all that gyan that people love you so much for.
Looking forward to it. And with budget, there's so much happening. No matter how much you read, it's never enough.
It's never enough, really. So just to recap for you, this entire show, Pranjal will be answering your questions live. All you have to do is log on to your social media. The hashtag is very simple. It's Ask Kamra. Go to any of the social media platforms, send in your questions. I'll be reading them all over here, and Pranjal will be answering them for you. It doesn't happen every day, so get on your phones right now and we'll get started straight away. So, But before we begin, in case you missed out on the big highlights of the day, so we have done a capsule for you. Over the next few minutes, you will see how the new tax regime versus the old tax regime is actually panning out. A lot of us have been talking about, and even before the budget came in, we said that there were very few takers of the new tax regime, and that has completely changed with the new announcements that have come in budget 2023. Also, big announcements coming in for women, and the most happy of the lot are the senior citizens. Here's how. Garib, Kisan, middle class, women and older people. There is something in this budget for all of them, and he's rightly really put it, like we've been underlining from morning, that this is a budget which has come, the last full budget which has come before the elections, and there is really something for everybody in this. We've got now some live examples for you. We'll go through people's personal income tax and look at 10 lakh bracket, 15 lakh bracket and the 5 lakh bracket, and break it down to you on what difference and how much money you've actually ended up saving, which is very interesting. So Pranjal, let's get started. We've got budget 2020, the big tax relief over here. Let's first look at the 10 lakh bit, right? Now, in the old regime, it was about a lakh. In the new regime, before the budget, you were paying about 78,000. And after the budget, you're now paying 62,400. Significant relief, but remember, this is not really significant. Why? Because we've not accounted for the deductions just yet, right? So let's go to the next screen where you actually look at deductions. With the deductions, under the old scheme, if you were earning 10 lakh per annum, you were paying 75,400. Now, the big number. Under the new regime, you will end up paying only 62,400. This is the first time the new regime actually trumps the old one.
Absolutely. So, you see these two figures here. This was the reason why people were reluctant to shift to actually the new regime. This was the reason. Now there is incentive enough for people to actually shift to the new regime. So yes, this makes new regime not just de facto government-wise, but de facto good for people as well.
Good for people, because this is a significant cut down, right? Now, that is 10 lakh. Let's look at 15 lakh. Again, without taking any deductions under the old regime, if you were earning about 15 lakh per annum, you were paying a tax of 2,57,400. Under the new regime now, after the budget, there is of course a deduction. It's 156. But again, even after accounting the deductions, if you are earning 15 lakh rupees per annum, you will pay much less under the new regime, which is 1,56,000, much lower, Pranjal, from 2,10,000 over
so
here.
PM sir was definitely right when he said that this will benefit everyone, specifically the middle class, the lower income. This budget with the new tax regime is going to benefit maximum amount of people. So yes.
Right. So now let's look at the next one as well. And this is under 5 lakh. These are the people who were very happy till now. We were talking about how they want it to be raised. Of course, before the budget and even now, if you've been earning about 5 lakh rupees or so, you pay 0 income tax. Now, if you're earning 7 lakh as well, the old regime, you would have paid 54,600. Now, 0, no tax for you. That doesn't mean you don't have to file your taxes, by the way. You still have to file your taxes. You get a rebate back.
And there's this big confusion here that if the slab says 6 to 9 lakhs, 10% tax, then how come 7 lakh people who are earning 7 lakh are actually paying 0 tax? It's because it's rebate. So only if you earn below or till 7 lakhs is when you are eligible for the rebate. So if you earn 7 lakhs 1,000, then you don't get any rebate at all, and your taxes are as per the slabs. So you will be charged 5% between 3 to 6 and 10% between 6 to 7, and you are not eligible for rebates because your income exceeds 7 lakhs. So this is 0 only if it's below or till 7 lakhs.
Only if it's below or till 7 lakhs. Okay, let's move on to the next one. The big theme that he's spoken about, 2 other themes emerging. One about women. There is a new scheme that has been launched. We'll decode that, and also on pensioners, which is a huge relief. I'm so happy. Everything we discussed in expectations right in the morning before budget has actually now come out. But let's talk about this Mahila Samman Saving Certificate a bit in detail, because there's a lot of confusion about that. Currently, the certificate that has been launched, it has 7.5% interest, 2 years tenure, 2 lakh. Now, This means that you can invest up to 2 lakh rupees
in this account.
In the course of 2 years.
Correct.
And the interest that you gain out of that is 7.5.
That's right. That's right.
Okay, so that means about 4 lakh rupees in 2 years. If
No, this is the total limit.
This is the total limit. Okay.
Across 2 years.
Okay,
Yes.
right. So total limit of 2 lakh rupees across 2 years, the return that you get is now 7.5. Compared to FD, it would be?
Slightly higher. I mean, some banks are offering 7%. The safer banks, slightly smaller banks are also offering 7.5%. But this scheme is safer than smaller banks. But SBI, HDFC offers 7% interest. So yeah, 0.5% of benefit.
0.5%
Correct.
from, say, your FD
From the
figures.
safest of banks.
Yeah, considering how the, how the inflationary environment is, how the returns are going. So this at least locks it at 7.5.
Yes.
Definitely does that,
Yes.
right? Now the second one is on the senior citizen savings scheme as well. Now this is slightly tricky. Now the deposit has been increased from 15 lakhs to 30, but give me details on the tenure and the interest on this one.
So the tenure as such is 5 years. But once the 5 years expire, you can file a form again and increase it to 3 years. That's optional. How do you deposit? You can deposit once every year. The amount is flexible. Minimum is 1,000, and you can use the entire quota in 1 year itself, or you can split it across 5 years. So you can invest now with this change all 30 lakhs at one go, or you can split it the way you want. Minimum is 1,000. The problem here is the interest rates that these senior citizens will get is actually 7.4%.
Okay.
And on FDs, usually banks offer from 0.25% to 5% extra returns to senior citizens. So we mentioned how the safest of banks are offering actually 7% interest. So for women it's great because they don't get extra returns. But for senior citizens, even SBI and HDFC would offer somewhere close to 7.2 or 7.3, 7.4. This is similar to that. So
Okay.
the increase...
So not really a gain, frankly,
Right.
over there, if you
Right.
were taking a couple of other schemes also into account.
Absolutely.
That's an interesting bit. Let's go to the same point related to this is that maximum deposit for monthly income account scheme is also enhanced. Tell us, talk us through this, please.
Again, the limit is being enhanced, but the problem here is the interest on this is actually 6.7, whereas most FDs or recurring deposits are also giving anywhere between 6.5 to 7.2. So it's again similar or inferior to some of the safer schemes. The point here is because it's done mostly through post offices, it gives that extra reach and people who are underbanked or non-banked to be actually able to benefit
So
from
this is primarily for rural India then?
Correct.
Yeah.
Correct.
Right? All right. But let's come to this one. And this is a huge one, right? The limit of 3 lakh for tax exemption on leave encashment on retirement of non-government salaried employees now increased to 25. So far you were getting a rebate, complete exemption, beg your pardon, of 3 lakh of non-government salaried employees, and now it's gone up to 25. This is going to make
Now
a
this
lot
is
of...
what you call change. This
Yeah.
is big
Yeah.
because you know, if we go by the new tax regime, 15 lakh and above, there's 30% of tax. If I only consider between 15 lakhs to 25 lakhs, those 10 lakh rupees, you're saving 30% on that. So 3 lakh rupees on those incremental 10 lakhs, you're clearly saving. And that's just from 15 to 25. If we do the calculation between 3 to 15, there will be additional savings. So I am expecting anywhere close to 5 lakhs of additional savings in terms of tax outflow.
All right, so the middle class, that's what we started by saying, the middle class ended up gaining a lot. Women have got a slight edge, 0.5 we discussed compared to the FDs that are there currently. And the senior citizens, though on the schemes it doesn't seem like much, it's almost at par or perhaps in certain cases lower than what they're getting in safe government banks. But the exemption that they've got, that itself is a huge, huge one. And senior citizens are going to get very happy on that front. All right then, so you saw what women got out of this budget, you saw what senior citizens got, you saw what even those, unless you are earning more than 15 and less than 5 CR, except you saw what everybody else also got in this budget. But what about Gen Z? India is now the most populous country in the world. India is also now the youngest democracy in the world. What was it that this budget had to offer them, the biggest vote bank in the country, which will be keeping its eye, and in fact I'm sure kept its eye on this budget very, very closely in the run-up. So let's look at the top 5 things that according to us was a bit of a sort of giveaway for Gen Z. Number 1, lowering of income tax slabs. Now the income tax rebate under the new regime has been increased, as we just spoke about, from 5 to 7. That means your first time employees, your first salary people, you know, Pranjal, they had a bit of a relief, right?
Oh,
So anybody who got into the workforce for the first time is feeling a little relief today.
Definitely, this is something that directly impacts the Gen Z. I think I'll go back to my office and reduce CTCs proportionately because those were revised pre-budget, decided pre-budget. But this is something that, yes, directly impacts the people who have entered their first job. And yes, I think a huge plus, something that everyone wanted, something that was overdue.
Right. Also the number of tax slabs rates which have been reduced to 5 now under the new tax regime, it's simplification as well.
Simplification. I think going forward this should reduce even more, but this is a step in the right direction.
Step in the right direction. So that's number 1 point. Let's go to the second point here, which is about financial literacy of youth, now a priority, and the Prime Minister made a very specific mention of that. He says that the Kaushal Vikas Yojana to skill lakhs of youths within the next 3 years. These are digital skills, an ecosystem he says he will be providing to ensure and align higher education courses with the standards of Industry 4.0. Another point he made was SEBI to develop and regulate education in NISM and award degrees and diplomas and certificates to boost financial literacy. This is directly related to getting jobs.
Absolutely, and I hope just some part of this financial literacy budget goes to you and I think directly, indirectly, but I think the focus was on 2 things. 1, skill enhancement, and second, self-reliance. So self-job creation rather than government subsidizing jobs. So I think this is something employability. This is again something we discussed pre-budget, and I think this is really important. Be it nursing colleges, be it accelerator funds, be it Skill India, a lot of steps in the right direction, because there's only so much and only so far you can take the youth on your shoulders, specifically when the number of youth is the highest in the world. It has to be skill related, and it has to be how they can stand on their own feet. So easy access to credit, seed funding, again a step in the right direction. So I think all steps in the right direction.
We'll come to seed funding in just a bit, but I want to go to point number 3, and that's really interesting. It talks about AI, artificial intelligence, to get a boost. 3 centers of excellence for AI will be set up, and government will train lakhs of youth in AI, drones, coding over the next 3 years, clearly riding the wave on global demand as well.
Oh, absolutely. And you know, India has been known to be sort of outsourcing the IT of the world. The entire world outsources its IT requirements to India. Now when that's shifting to AI, suddenly there's this fear that what will be the future of our IT employed youngsters. So which is why upskilling them, ensuring them that they stay in compliance with what the market demands. So again, I think very, very important. It ensures that India's IT sector actually continues to grow.
It does, but I was hoping when it comes to AI, when it comes to coding, games, etc., there is also a flip side over here, right? We did a full video on Moneycontrol on Let's Talk Jobs, where we spoke about the different kind of avenues that are opening up in the gaming sector, right? There is so much demand and so few people who actually know. Are we missing a gap over there? Was gaming sector a good opportunity that has been missed?
You know, if I take a broader perspective, I would say that the government has always, all governments historically, has always lagged the cutting edge technology. Government always sort of wakes up to what's happening 5 years, 10 years down the line.
Yeah.
And it's after a huge lag. In this case, at least I'm positive in the sense that the lag is not that much. The opportunity is not gone. So, you know, gaming, if they have woken up to AI this year, to gaming, if they wake up next year, still it would be fine. So the opportunity is not gone forever. I'm glad they are waking up to AI and things that
they
are
woke up to AI but completely slept on crypto. How come there was no mention at all? And for me, that was a huge headline. No mention of blockchain. This at a time when I believe last year the biggest headline of the budget was the taxation that came on crypto.
Right.
Last 1 year, we've seen such massive adoption of blockchain by government organizations on highways, on certificates, IITs, IIMs, all developing it. This vacuum was very, very, it was difficult to not notice.
Specifically in terms of cryptos, I think this was government's moment of saying, we told you so. So, they don't want to ignite that because they're in a very good position right now. Sort of, now they can look back and say, last year by introducing taxes, we protected the retail investors by discouraging further investments. So we were taking a step in the right direction. And although conceptually blockchain and crypto are two different concepts, and crypto is a very, very small part of blockchain, but for a layman, those two concepts are very, very closely related. So by invoking blockchain, they might fear that the debate around cryptos and the losses that retail investors are suffering could rise up again. They want to avoid that conversation specifically on a budget day, probably.
I actually also think there is a gap between how the government internally looks at crypto and blockchain as well. While we've seen the Prime Minister's office be very proactive, talk about how there will be adoption, we've seen RBI take a very hard stand, and then we've seen Supreme Court give some relief. So internally, I think we are not there just yet. Even the last few sessions, we did not see the bill actually be tabled in Parliament. So there's some time before regularization takes
I think 30 years of liberalization, privatization, globalization, but I still think we suffer from this mindset that anything new, first the government will do for 10 years, then we'll see if we can open it for the private players. Probably that mindset still exists.
10 years, you're scaring people by saying that. 10 years, we don't know. We don't know. I saw some happen in the audience over there that don't say that. Okay, let's come to point number 4 then for Gen Z. This is ease of filing ITR, and I think this is a good one. The aim is to reduce ITR processing time from 93 days to just 16 days. Grievance redressal forum to be introduced to ease ITR filing, and a simple common income tax return form for all taxpayers to be made available soon.
I'm sure the chartered accountants are not too happy about the third point though. But yeah, I mean, again, a step in the right direction. Doesn't incentivize directly in terms of your cash tax outflow or inflow, but increases convenience, which is always good.
Which is good. I also think that a lot of the new force that gets into the job market, the first time, once they're all going to be wondering at this time, कि हमें tax तो देना नहीं है पर भरना है. That's the whole mindset that the first time salaried class people actually feel, right? That you have to still file your taxes and wait for a rebate and get into the whole game.
I think, more than the government trying to simplify its platform, a bigger simplification would be if their APIs are improved so that private players can build tax filing platforms in a much better and wider way, and then individuals can benefit from those private platforms and file taxes in a much easier way. So if APIs are simplified, that will in fact make it much more easier rather than these steps.
Right. And then that brings me to the last and final point, and I'm sure Pranjal will have loads to say on that. This is about increasing employability through startups and MSME sector. Now, the government has allotted 283.5 crore for the Startup India Seed Fund scheme. It has extended tax holiday for startups till March 2024. There is lots to say about that one. And then MSMEs get 9,000 crore corpus for revamping credit guarantee scheme to promote financial inclusion and employability growth. 3 points there, but first let's go to the Startup India Seed Fund scheme. What did you make of that? 283.
It's nothing. I mean, 283 crores, it's nothing. It's there for the name. The government ticked a checkbox, but it's absolutely nothing. I think one good startup would take all of that, theoretically. So it's nothing.
It's nothing, especially in the startup, in the funding winter that we're seeing right now.
It's absolutely
okay.
nothing.
Extended tax holiday for startups till March 2024. Now, tax holidays is a hugely debated subject because a lot of startups today say that we are registered, but we don't qualify. There's a certification. It's a complicated process. We did a statistic also earlier in the day where 80,000 plus startups are known in the government register, but some 400, some 400 of them, 0.5% of them actually end up getting any benefit out of this. That's worrying.
Absolutely. And I think more than that, I think the ecosystem will be fine if it's 0.5, but the ecosystem also needs to know what's the eligibility criteria and on what basis it's decided. So if transparency increases, I think automatically more startups will align themselves to what's required and will be eligible. But I think one good point here is the extension of the deadline by an year. Apart from that, earlier you could claim any 3 years for tax exemption. Now that is enhanced, that out of 10 years you could actually claim in 3 years. So your overall lifeline through which you can claim is increased. So that's slightly beneficial. But again, startups that can benefit are right now 400.
Only 400 out of 80,000. So that's another point that one must look at on how to make that process a little easier, right, to make that happen. The last point, of course, has got to do with job losses. It's got to do with employability. I'll just repeat it for the benefit of our viewers. MSMEs to get 9,000 crore corpus for revamped credit guarantee schemes to promote financial inclusion and employability growth. Your take?
This is definitely good. I think this makes it easy for the MSMEs to actually go for a loan, because part of it is actually guaranteed by the government and reimbursed by the government to the lender if the MSME defaults, which means it's easier for an MSME to get credit, which directly, indirectly improves employment. So this is a good step.
All right. So this is a good step, but I want to, sort of go in a little bit more detail about employment, about job losses and layoffs, since that's the word that's really scaring a lot of Gen Z right now. And for me, again, there was a big vacuum on that. In the expectations that were sent out, Pranjal, one huge point was that what is the government doing? Any sort of safety net that can be provided for those who've been laid off, especially those who perhaps lost their jobs abroad, now were on working visas, have to come back, have families to feed, have kids to feed, and now you see what's happening. The biggest of the tech firms have laid off people. It's happening here in India and abroad as well. Disappointed or not really, or weren't really expecting something, something government could have done?
Actually, I am happy with the approach of the government. So when such a situation arises, the government has two options. Either provide some SOPs now and provide short-term relief, and your allocated funds for the sector go down in sort of shock absorbing mechanisms, versus build a pipeline or a process through which this problem is solved in the long run. Now, what approach is government taking? One, in the last 9 years of the NDA government, one constant theme has been privatization and disinvestment, which mean the private sector and self-employment has to take the onus to employ the youth, which also means that our youth actually needs to be higher skilled. The education policy needs a reform. Credit needs to be easily available. And if credit support is needed, there are schemes like MSME credit guarantee scheme. So I think there are two focuses. How can the youth employ themselves, and how can self-employed entities, smaller entities, get access to easier credit and then give jobs to the people? And third, how do we modernize education so that our youth can actually get jobs globally? So this is a long-term fix, which I think is better.
Which is better. But how can we talk about job losses and youth and not engage with the youth? So it's time to bring in our audience and engage with them as well. Hello, everyone. Thank you so much for joining us here on Moneycontrol. Why don't you go ahead with your question? Introduce yourself first, please.
So my name is Dhruv Asher and I'm from Anil Dalmia Institute, currently doing PGDM. So I have two questions. The first one would be, do you really think that the budget is morely focused on agri, tourism and infra, and there were a bit other sectors which should be more focused on? And secondly, being a MBA student, I would say how much would the whole budget impact on my cost of living being a Mumbaiker?
Right, okay.
Second one is tricky.
Considering I am not a Mumbaiker. Okay. So the first question, yes, I mean, the focus was on agri, be it, the accelerator fund that is specifically assigned. Also, the loan limit for agri is enhanced from 18 lakhs to 20 lakhs, so 11% rise there. So that's the focus. But we have to also notice that still 55-60% of employment comes from that sector. So not just this budget, but any budget I think it's due that agri sector and the number of people it employs, it's the government's duty to actually support that in every budget. One disappointment for me was actually the rise in the budget for the education ministry, which was 8%, which means out of India's total GDP, still only 3.12% actually goes towards education, whereas for more developed countries, it ranges from 6% to 15%. So I think it was time to, increase it even further, maybe make it 4%, 3.5%. That's a real miss in my mind. But focus on infra. I think again, infra has been a constant theme in the 9 years of this government, and I would say it's showing its fruit, because ultimately, if you want to invite, again, this is linked to the government's agenda of bringing in FDI, disinvestments, self-employment, because all of this could only happen if infra keeps on getting better and better. The government could open up units, provides jobs with or without infra, because ultimately the government is paying salaries out of the taxpayers' money. But if you want to move away from that, you have to give good infra in order to allow FDI to come in. So, and regarding the second part,
before you answer that, can you first tell me what is the current status, right? You are studying right now, right?
Yeah.
Yeah. You have a loan on you, or how does it happen? How much is your current cost of living? Give us an idea about that.
So I live with my family presently.
Huh.
So my cost of living doesn't have much, but around 10 to 12K is usually my cost of living, apart from rent and other things. If I include rent, which I don't pay presently, it would be 25 to 30K.
Yeah. That's a...
So unfortunately, I don't know about your family income and how much your family earns. They would definitely have certain benefits. Their tax outgo should reduce slightly, and if you are from an ultra SNI family, substantially. But directly, someone who's dependent on their family and whose monthly expenditure is 10 to 12 lakh, 1,000 rupees a month, not much for you. Not much. Yeah.
Not much for you over there.
Nothing changes for you.
But
basically.
don't you stay with your family now? You should be chilling. What about your friends over there who are on rent? Can we... Yeah, please, next question.
Yeah. So I am Siddhesh Dharmadhikari from NL Dalmia Institute of Management, Mumbai. And my question is how well the government has played, how well the government has played their ACE card when it comes to upcoming elections. And how is it going to affect our startup ecosystems?
Dude, that's for you to answer. You guys are voting. This is a highly political question, but you tell me, what did you
When it comes to voting, I'll certainly think about how employment is going to get affected.
I see. And what was, let me throw that back at you. What do you think you got out of this budget on employment?
Something, being a first-time taxpayer, I guess 7 lakh is something that I'll be happy about.
Yeah, see, that's a ticking point with everyone, no?
So, I would say on the first part, whether this was a politically motivated budget, I think if it was, they would have taken more short-term measures rather than going the long-term approach that I talked about. They would have provided more direct incentives to all affected classes, which they've not done. So skill enhancement, additional funds for skill enhancement is not something that you do if you're looking for a politically motivated budget. So no, I think they went brave, and I think this has been a constant theme with budgets of this government, that they don't listen. They don't listen to the public. Mostly they haven't, ATC, if we keep talking, nothing has happened over the years. Tax slabs.
Come on, you can't say that. Look at our wish list in the morning that we had. If you just go by that, on basic income tax, I think they've delivered more than people expected, right?
But having said that, and I'm saying this in a positive way, that most governments actually, the last full budget before the election, they do things which harm the country in the long run. Nothing much of that sort has been done. They've still taken the long-term approach. So I honestly like it. Of course, some measures that the government takes actually pinches the common man, because if you allocate more funds to how MSME can get loan, to the infra sector, to the agri sector, most of us sitting here don't notice that, and the government knows that we won't notice it. So in that terms, I would say it's brave and not very populist.
Okay then, let's go to that lady over there. Yeah.
So I just want to conclude you. So you just wanted to say that
a good politics is bad economy. Apart from that, we know that what are the effects of budget on unemployment, and us being the MBA aspirants, should we be worried about the same?
Right. Oh, good questions. Good questions. So your first question was,
It's just a conclusion that a good politics is bad economy. Apart from that, I just want to know that what are the effects of unemployment on budget, and us being the MBA aspirants, should we be worried about the same?
Right. So, honestly, since the last 5 years, I am sitting on the other side of the table, wherein I am an employer. And when I meet students and I hear that there are no jobs, and you ask me about my hiring costs and my turnaround time to fill a position and my rising CTCs to attract the right talent, I think India, in my mind, at least in some sectors, at least in IT, finance, some sectors, there's no unemployment, but there's a huge gap between what the industry needs versus what our education system provides. So I'm not saying the fault is of the students, but the education system is structured that way. And thereby, I feel what's been announced in this budget, say you talk about digital libraries, access to quality education to everyone, things like that, focused institutes, AI centers, things like that. I think government has finally recognized this, that our current education system is actually not able to complete or feed the demands of the industry. Again, this is an approach which will not solve the problem in the short run. It will solve it in the long run, but hopefully it will solve it permanently. So this is an approach that I really like.
I think what you're trying to say is that there is no lack of jobs at the moment, but there is a lack of talent.
Absolutely.
There is a lack of finding the right person and a good fit for that job.
Correct.
There are specifically sectors that people are still looking, like I said, especially the new age sectors that people are looking, but people like you are finding it hard to fill in those positions and find the right person for a right fit over there. I think that's a very important point. Let's take some online questions here. This one is slightly tricky. It's on cigarettes.
Okay.
So there was huge duty that has been imposed as well, but this person, Pranjal, I don't know how to ask this question, but he just wants to understand how will this impact his per cigarette cost?
Well, so it's not that straightforward, because the duties that are imposed are actually imposed on the already existing GST and other taxes. So it's like a cess on the income tax that you are paying. So 16% duty hike, how much will that increase the final price of the cigarette? I'm not aware of that. We are waiting for the details. And anyways,
you're a good man, you're a healthy man, you're a non-smoker.
Yes.
And this is just to, let me take 2 minutes to remind everybody, cigarette smoking is extremely injurious to health. This is what government is also trying to say, so please hear that very clearly. And Pranjal doesn't smoke, so he doesn't have any answer on that. We'll take the next question on that. And this one also has come on our Twitter, it says, if my income is 5 lakh, how much will I pay plus? If my income is 7 lakh, how much will I pay? There is still some confusion over how much do you end up qualifying under the 10 lakh bit or not. So I think if you can just clarify that.
So if someone is at a 7 lakh salary right now under the new tax regime, after the rebate, the actual outgo will be 0. But I think the confusion here is if the slab says 6 to 9 is actually 10%, how can you say that 7 is for someone who's earning 7 lakhs, it's actually 0. That's because the slabs per se are for someone who's earning above 7 lakhs. So if your CTC is 10 lakhs, then you pay straight away as per the slabs, and you don't get any benefit out of the rebate that's available. Anyone who's earning up to 7 lakhs can actually, so the total rebate would be around 25,000 and you are eligible for that rebate. So whatever tax you have to pay according to the slabs, if you are at 7 lakhs or below, whatever that amount is, you don't actually need to pay it because equivalent rebate is available. But the cruelest HR would be someone paying 7 lakh 1,000 as the package, because that completely disqualifies the person from all available rebate, and he or she has to straight away pay as per the slabs.
Right. I hope no HR person, no company is watching this program right now and these dangerous ideas are not getting
So
fed
giving
over
an
there.
increment of a few thousand right now is the cruelest punishment.
Yeah, anybody applying to Pranjal's company now, please take note of this. I don't know where this devilish brain is going to go after this. Okay, one more question. This is an interesting one on insurance. We haven't talked about insurance much all day long. This one says, what happened to life insurance company? Is there any regulatory change or new regulation introduced in the budget? All of life insurance companies were down 10%.
So what has happened is, I'm forgetting the exact amount, but what's happening is often these insurance policies are clubbed with cashback, endowment and ULIP, all these kinds of structures. And in that case, the premium goes really high. So these insurance companies are down because their bread and butter is actually selling these fancy policies. And what a new announcement has come is that if your yearly premium, I think the limit is 5 lakhs, if your yearly premium outgo is 5 lakhs or so, then you are not going to get exemptions and tax benefits available that's normally available if you're paying income tax premiums. So insurance premium. So this is a good step because it incentivizes pure term life insurance.
I see.
So in that way, it's a good step.
I see. I have more questions coming in and lots of them actually, but let's just break it up a little bit. Yeah, you had a question. Go ahead.
Actually, I wanted to talk about the rentals. Basically, I'm staying here in Mumbai, and with the increasing rentals being one of my major concerns. So, is there any rental saving schemes or related to rent in the budget for the Yangistan this time?
Nothing. Nothing.
Good one.
Nothing changes for that, unfortunately. So yeah, nothing for you.
I see rental is such a recurring theme. Cost of living for the students is
but
always...
you know, when the answer is this, but you know, when I say there's nothing, you probably are a student?
Yeah, correct.
Yes, so it's not applicable to you, but someone who's living in a rental home and is actually earning, their tax outgo has reduced slightly, so indirectly there is a benefit, but for students also, considering your family's tax outgo will slightly reduce, so probably that compensates.
That could be savings for us or for the family.
That you take it up with your daddy, man.
That depends on how close you are to your family.
Probably start for me for the next year. I'll be going for my first job from the next year.
Good
so
luck,
that can be.
Good luck.
Thank you.
That. Okay, there's one more question, and this is Ask Kamra. Sir, now no TDS will be deducted if income tax is less than 7 lakh. That's a good question. No TDS?
I am yet to go on this. No clarity on this.
No clarity on this. We must read the details carefully.
Sure.
I'm sure, keeps logged on to Moneycontrol because I'm sure there'll be lots of articles on this coming in as clarity, but too close to time to actually answer this question just yet. All right, I think we have time to take a couple of more last questions. So yeah.
So sir, in budget 2023, we heard that government has increased MIS from 4.5 lakhs to 9 lakhs. So what do you think? With less riskier option, with fairly good return, will it demotivate people from investing in share market?
Not at all, not at all. I think the interest that it's currently offering is close to 7.1%, 7.1%. A lot of the safer banks, I was going through the FD yields of SBI, HDFC, the safest of the safer banks are close to 7%, 6.9, 7, 7.1 in some cases. So it's comparable to that. Also, we have to look at the convenience factor. It's much more convenient to invest through HDFC Bank through an online FD. So you know, just the doubling of actual top ceiling, how much you can invest, taking money out of the stock market, very, very unlikely. One good thing that always there is when you know these monthly income schemes bring in incremental incentives is that their reach is unmatched. So it directly benefits absolutely the last and the remotest corners of the country. So reach wise they are unparalleled, thereby any benefits it reaches to the last man. But I don't think the yields are attractive enough to cause any kind of disruption.
Okay. One more question? Yeah.
So as government focus on a lot more issue in this budget, but as we being a student, what about education loan?
Education loan?
Yeah.
Again, education loan, see, rather than, you know, government trying to subsidize education loan or providing greater access to education loan, the focus is on ensuring greater reach of education through digital mediums. So be it, you know, skill enhancement centers, AI centers, National Digital Library. I think National Digital Library could go really big It's again something that makes education really, really democratic. But I don't think there's any announcement regarding subsidizing the cost of education around that. Nothing on that.
Nothing on that just yet. Also, another point, Pranjal, I wanted to pick up was on filing of taxes. I think lots of queries are still coming in on how the new tax regime has now become the default tax regime, and people are not getting the difference. Can we shed some light on that?
So I think the exact way how it's become default will actually come when the new tax filing form comes into existence. Probably there you will have to opt out of the new tax regime and then opt for the old tax regime. And it's mentioned by the finance minister to give this clarity to everyone that this cannot happen, that you file taxes as per the old tax regime without explicitly telling it to us, and then if dispute arises, you tell that, you know, I have invested so much in ELSS, so much in NPS, so much in other factors, thereby I am paying low taxes. So this is a cautionary statement more so for intentional tax evaders.
All right. There's another question. Let me take that online. It says, hi Pranjal, I'm currently working, but my parents do not own a business right now. They're looking forward to a business. Can I really look into the budget to identify sectors to look for business? Are there any benefits that the budget has made towards businesses, especially for women entrepreneurs?
You know,
lots of questions there.
Right.
Yeah.
Right. But I wouldn't get into the budget specifics on this question. I think this is a fundamentally wrong approach, honestly, to start a business, because you start a business in which you think there's passion, there's interest, there's competency, and there's team around that. So I think, because budget, every year the budget would come, it would have different focuses, the government has to balance out focus, but you can't keep changing your existing business every year based on what the budget has announced. So I think this is the wrong way to identify which sectors to look at to start a business.
All right. On that note, I think we've got lots of questions answered right there. We've got lots of queries there also answered. Thank you so much, Pranjal. I have to ask you, you spent a full day inside a newsroom for the very first time.
So one takeaway I'm taking is I am never saying anything bad to journalists from now on.
That's lovely. Please explain why.
I mean, you know, it's so much. So we don't make real-time content, and somehow we felt it's the same. It's just that you guys make real-time content, but it makes a world of a difference. You know, ensuring that everything goes right every time, day in, day after, and breaking news can come in any time.
Yeah.
So, you know, I just saw the team, the size of the team, how much organized chaos there was. Huge respect to everyone.
Just keep going on. I can just go on and on about this, and I'm going to request all Pranjal's followers now to ensure that they follow Moneycontrol and also pester him to make a video only on journalism as a career.
I actually will.
You're making a commitment online.
Yeah, I actually will.
Chalo, this is now gone on record and we'll hold him to that. But before we wrap, we've got a bit of a surprise for everybody. Since we were discussing Youngistan, we were talking about Gen Z, and they all do spoofs, right, these days. We thought, why not bring in on Moneycontrol some funny control. Now, introducing to you, we've got Vikram Poddar. He's an ex-investment banker turned corporate comedian. Come on, Vikram, join us. His career changed and is not just into comedy. He writes a financial humor sort of column on Moneycontrol as well. And he clearly no tax on humor, but but you have your own take, the boardroom take on the budget. So take it over.
Thanks. And guys, before we start, can we have a round of applause for Smurul and for Pranjal Kamra? Can we do that? Yes. I mean, it was very great sitting with him in the room. I learned a lot of things, but I really felt a lot of sympathy, because I think for Pranjal Kamra, a lot of time must be spent on, you know, fighting with people online, telling them, I am not Kunal Kamra, stop leaving abuses on my timeline, right? Like he's telling people, you know, I teach financial independence. I'm not asking people to declare total independence.
So, you know, right? I get comments stating, आप समझाते तो बहुत अच्छा हो. अगर आप कुणाल कामरा के भाई हो, तो I am unfollowing.
Well, guys, it's great to be here. Very nice to be here. I understand somebody had a question about layoffs. There was a lot of concern in that. So I just wanted to tell you guys, I got laid off from a consulting firm in 2009.
Oh.
Yeah. And then 6 years later, I did a stand-up comedy show for the same audience.
Woo!
ताली बजा सकते हो, कोई problem नहीं. So that's a bit like dancing at your ex-girlfriend's wedding. And also getting paid for it. Now in this budget, I'm sure there have been a lot of questions. There's one question everyone's been asking over and over and over. I'm like, what is there in this budget for the middle class, right? Middle class के लिए इस budget में क्या है? So today I'm going to tell you something. I am also middle class from South Bombay. अरे बोलना पड़ता है यार, India, everybody wants to be middle class, right? Like nobody says, oh, we're not poor, okay, we are lower middle class. No, we're not rich, we are upper middle class. And I'm sure we have like a side upper and a side lower as well, right? So I've been wondering, okay, somebody asked, what is this middle class? I think the middle class is an illusion. I think the middle class is like that person who's a part of your project group who never does any work. You have never seen them. But somehow their name is always there on the project group. देखो जो लोग इस जोक पे नहीं हंस रहे ना, they are the ones who do all the work. Now speaking of work, I understand there was a lot of discussion also about this tax on cigarettes, right?
Yeah.
I can see the sadness in some people. I don't even have to ask who is a smoker. दुख से ही मुझे पता चल रहा है. ये दुख के अलावा और बात करने की ज़्यादा मतलब. And I understand it's called that the calamity, national calamity cess has increased to 16%. Which means, quite frankly, if you're a smoker, the cess is the calamity. It's so challenging, man. Like, अगर ये पहले बताया होता मुझे, तो instead of investing in shares before the budget, I would have invested in cigarette packets. Yeah, I stepped out. So before the show, I went to the cigarette guy and I asked him, ये budget में भी जो change announce किया ना, ये कब implement होएगा? He said 3-4 दिन में. तो said, अच्छा ये 10 रुपए की इंडीमेंट अब 12 रुपए की हो जाएगी. इसलिए मैंने शो के पहले ऑलरेडी 10 सिगरेट मार लिए. In case you see me fainting or falling here, there, don't worry, that's just nicotine poisoning. There's a good chance I might collapse altogether in the middle of this segment. Don't worry, the producer is concerned. I've told the producer if I collapse in the middle of the show, na, उस टाइम पे Nicotex का ad चला जाए.
No smoking ads on Moneycontrol, please.
नहीं, Nicotex is the product to quit smoking. तो brand plug भी हो जाएगा, right? मतलब MBA करने का कुछ तो फायदा होना चाहिए, guys, right? And then we have this whole thing about layoffs, right? It's so challenging, you know. And sometimes people be thinking, यार, मैंने IT की नौकरी की, और उसके पहले इंजीनियरिंग की डिग्री की. I don't know आप हंस क्यों रहे हैं? मैं सिर्फ फैक्ट स्टेट कर रहा हूं. अब वहां लेऑफ चल रहे हैं. अब मैं फाइनेंस में MBA कर रहा हूं. अब 2 साल बाद जब प्लेसमेंट्स होगा तो अगर वहां पे भी ले ऑफ हो जाएंगे तो क्या करेंगे? मतलब हमारे लिए कुछ है इस बजट में? ओवर एजुकेटेड, ओवर क्वालिफाइड बेरोजगार इंसान के लिए कोई स्कीम है? एंड देन यू रियलाइज, हाँ, HR में नौकरी अभी तक मिल रही है. See, I can crack the HR jokes because I'm not working anymore, as you can imagine, right? It's a pretty challenging time, right? I also read some very interesting provisions. The government said that we want to promote AI now, you know? Like make AI in India, okay? Make AI work for India. I was like, sir, ये India है. We can make AI stop working also. We can make artificial intelligence also sound unintelligent. Like I think 50% of Indian men are using ChatGPT for what purpose? To generate opening lines on dating apps. इसमें से almost कोई मर्द नहीं हंसा, guys. Because you know what the other 50% are doing? They are writing those lines, pretending to be ChatGPT. Because India, इतनी बेरोजगारी है, AI will not lose any jobs to AI. That's not going to happen, guys. So India, it's not like make AI work for India. Indians will work for AI. That's how it is going to work. Because there was also a scheme that said we want to promote mobile production in India, right? And is there mobile production अगर India में promote कर रहे हो ना, then the phone should be a true Indian mobile phone. It should have a true Indian app that every Indian student and young person needs. It should be called Jhoot GPT. It should have automated responses anytime your parents ask you a question. कहाँ हो? हाँ, आज रात को मैं अनन्या के यहाँ पे घर पे रुक रही हूँ. हाँ, हम पूरी रात एग्जाम्स की ही पढ़ाई करेंगे, as you can imagine, right? We should have those kind of responses. I think that's the kind of system that we really need, you know. There's also this whole thing about long-term, you know, capital gain tax on equities. अब मैं बोला यार, जो उसके लिए पहले क्या प्रॉफिट होना चाहिए? प्रॉफिट ही नहीं है तो क्या फायदा? Because there was this whole provision, you know, that now we have done this extension of carry forward of losses on startups from 7 years to 10 years. Sir, I said that's fantastic. But वो तब फायदा होएगा जब मेरे startup का profit हो. Because today for most young startup entrepreneurs, the goal is not profit, the goal is to figure on Shark Tank. It's like almost Shark Tank has now become the roadie for startup entrepreneurs. ऐसे कोई बोलता नहीं तू प्रॉफिट में जाएगा. Nobody is actually saying that line. You know, it's really very ridiculous. You know, the way this whole thing works. But before I go, there's one thing that I wanted to ask you guys, right? Okay, what do you think about financial independence? What comes to your mind when you hear the terms financial independence? I love the silence.
Really nothing.
Okay, guys, see, there's two concepts. Okay, एक होता है finance, दूसरा होता है independence. Okay. Now understand, as an Indian youth, थोड़ा बहुत मारपीट के अब फाइनेंस तो हो जाता है, इंडिपेंडेंस हमें कभी नहीं मिलती पेरेंट्स से, राइट? You know, right? Like for example, when we have this whole provision, somebody is asking about rental. So somebody will ask in your company, do you have house rent allowance? But see, when you come to Bombay, you know what HRA stands for? It says, yes, you will have a house and you will be allowed to stay in it. As long as you pay rent, which you cannot afford. And the broker will tell you that you will have three ways. You will have a view which will be garbage dump view, slum view, or no view. That's pretty much is what all that you're going to be left with, right? Because I get very confused, you know, when people ask me questions like this. Like I was reading this, you know, that the finance minister said in this budget this year, increase the capital, expenditure outlay to 10 lakh crore. And the whole parliament cheered, everybody cheered. And I don't think it was because of the measure. I think it was just because of the number. वो सुनकर 10 लाख करोड़ मतलब ऐसा फील आता है ना. ऑन फिशरीज द आउटले 6,000 करोड़. मुझे भी लगा क्या फील आएगी ना, मैं भी ऐसा अगर कुछ बोलो, यस दिस ईयर आई एम प्लानिंग टू स्पेंड ऑन केमिकल इंडस्ट्री 50,000 करोड़. बट रियल लाइफ कैसी होती है? व्हेन आई एम बुकिंग माय फ्लाइट टिकट, आई एम लाइक यार ये एक्स्ट्रा लेग स्पेस के लिए 500 रुपए मैं क्यों खर्चा करूं? थोड़े पैर सिकुड़ के चला जाऊंगा, थोड़ा एल्बो स्पेस के लिए झगड़ा कर लूंगा. उससे लिए कम से कम माँ बाप से तो गालियां नहीं मिलेगी ना कि फालतू के खर्चे. देखो आपके साथ ऐसा ही होता है कि फालतू के खर्चे क्यों करते, तुम्हारे पास पैर तो है कम से कम. This is how Indian parents talk, right? And I think that's how the finance minister also talks. Have you seen how she'll speak to the Indian industry? You know, they'll say things like, you guys are rich, why are you not investing? You guys are not investing, that's why the economy is facing a problem. Right? That's how they talk. And I think that's how Indian mothers talk in general. Like, you're 40 years old, why are you not getting married? All the problems in your life are because you're not getting married. I will petition the finance minister to impose a bachelor surcharge. And यहाँ पे जिसने भी, any Indian guy here who's tried to get a house on rent, you know that Indian society already has a bachelor surcharge. In most cases, we are not even allowed inside. See, there are no cheers on this because most of these guys have gone through it. Right? कि मतलब bachelor is like as being some sort of tax deduction. बोला उतना तो दे दो हमको कम से कम. मायूसी के लिए हमारे लिए उतना तो कर दो, guys. Yeah? Now, before I leave, there's one more question that I wanted to ask you. Like, when you heard the terms budget, what came to your mind? The first time you heard the term budget.
It's as usual, महंगाई.
Mahንगाई, right? Yeah. Inflation.
Yes.
Right? Inflation has risen so much. Like, you know, they have something called inflation-linked bonds, and said if you invest in inflation-linked bonds, then you will be beating inflation. But I'm like, यार, मैकालू टिक्की बर्गर के प्राइस पिछले 3 साल में 3 गुना बढ़ गए. Which means once again, if instead of investing in inflation-linked bonds, I'd invested in मैकालू टिक्कीs. At least I could have looked at my own balance sheet and said, I'm loving it, right? Yeah, मतलब. So guys, that's it from me. I hope you guys enjoyed this segment. Yes, अगर पसंद आया हो, you can also follow me on Instagram. Okay, Vikram Podar Comedy. Just saying, follow करने में कोई taxes नहीं लगते हैं. Okay. And once again, can we have a round of applause for Moneycontrol? Guys, we put this whole show together. Thank you.
On that note, Vikram Pradar, Pranjal Kamra, thank you so much for joining us. Pranjal is not interested in shaking his hand with me at all. Pranjal is like, I'm done with the newsroom. I want to go back home. I can't take journalists anymore. All right, that's it from us. We're going to toss back to the newsroom where more analysis on the budget continues right here on Moneycontrol. We've been going non-stop from 7:30 in the morning and the schedule will continue. Stay tuned.
A tough balancing act of meeting the priorities of growth through capital spending while keeping the fiscal deficit under check. At the same time, very strong focus on inclusion to ensure prosperity for the masses, a bold agri and rural thrust to address key concerns of farmers and improve efficiency and productivity is very evident. We have also seen attention and beneficial provisions for the MSME sector. An effective capex of 13.7 lakh crore would have a multiplier effect on the economy, creating jobs and facilitating private sector investment. Attention to sustainability is equally laudable. For instance, 35,000 crore has been allocated to green transition. The budget has also made a welcome provision to promote Atmanirbhar Bharat by rationalizing customs duty on inputs. And beneficial income tax provisions for the middle class to provide security and boost consumption have been announced. Let me take you through some of the key recommendations. The 10 lakh crore capex, public sector capex, a 33% increase from last year, is a welcome move, a key CII recommendation. Further, the support to state governments with the 50-year interest-free loans for another year is most welcome, along with a focus on urban infrastructure improvement as well as facilitating the development of a strong municipal bond environment. We believe that this increase in infra allocation will boost growth, create jobs and further private investment. On railways, a 2 lakh crore allocation will help create many more stronger transport infrastructure projects. With the railways opting for private sector participation, we will see true PPP happening in this area. 50 additional airports for regional air connectivity will further improve infrastructure-led growth. On housing, the PM Awas Yojana outlay has been increased by 66% to 79,000 crore. Again, another welcome move. A significant focus on healthcare and capacity building for healthcare, including 157 new nursing colleges, ICMR labs being made available for private sector for collaborative research. Again, another significant move.
I think clearly this is a budget which is growth-oriented, with a focus on the agri sector, with a focus on inclusive growth. And I would say that especially the focus, tourism to be seen as under mission mode and public-private partnership projects, I think will be a great moral booster for employment generation in that sector. Also, one of the things which I picked up was on the 47 lakh youth who would be given money, direct benefit transfer for skilling in the tourism sector. And clearly that would enhance domestic tourism on the back of the airports which have been revived in the tier 2, tier 3 cities. 50 additional airports and heliports have also been brought up under the revival project, and that will help domestic tourists to reach into the areas where it used to be very difficult, or you had to travel long hours, spending long hours to reach your destination. I also believe, given the robust investment in the infrastructure in the last over a decade, religious tourism and medical tourism, these are the two big opportunities which India should see. On the affordable housing, another 80,000 crores have been earmarked under the PM Awas Yojana. And I think this is something which will make sure that affordable housing becomes available to the people who need it the most. In addition to that, on the tax slabs, relief on the income tax, personal income tax, and the corporate income tax, or the company's income tax, is something which is a great step forward. This was something which we have been asking for a long time.
Overall, I will say it's a very balanced budget, not specifically not only for the election budget, I will say, because the amount of increase it has given for infrastructure, it has given for railways, it has given for farmers, it has given for education, is overall going to be very good for the entire country.
Okay, what in this budget we the Karnataka pupils will get?
See, we were expecting about the Upper Bhadra project. It was a big demand from Karnataka for increasing the layout, which has been given in this budget. Then the special amount sanctioned for all the cities as such, I'm sure the state government will take advantage, at least the Bangalore infrastructure.
Hello and good evening. I'm Karunya Rao, and with me in the studios is Kaizad Adajania, and we are here to decode personal income taxes and budget 2023's impact on your personal finances. Kaizad, lots to talk about today. A lot of interesting points raised by the finance minister in the budget. And of course, 3 years after the new IT regime was announced back in 2020, the finance minister has finally made the much needed revisions, the much needed changes to this new IT regime to make it more popular, more acceptable, more robust as well. So definitely there's a lot of interest there.
A lot of interest and too many changes.
Yeah.
1 year before we go into elections. Yeah. But this was a big ask by many taxpayers that and experts also that the new tax regime hasn't possibly picked up as much as it ought to have. And Homi can basically throw more light on that.
Oh yes, let's introduce our guests then. We have Homi Mistry joining us from Deloitte, Mr. D.P. Singh of SBI Mutual Fund. Radhika Gupta of Edelweiss is also with us via Zoom. So great guys, thank you so much and a very good evening to all of you.
Good evening. Good evening.
Homi, I want to start with you first. I mean, overall, when you look at the announcements made, the tinkering that has been done in a lot of domains, what do you make of the budget overall from a personal finance, from an Aam Aadmi standpoint?
Yeah, I think the main focus of the finance minister this time is that in the past there has been some kind of discussion and criticism that when the new regime had been introduced about 3 years back, it had not really taken off in the last 2-3 years. So she has made some important changes to the new regime. For example, she has increased the slabs. Not only has she increased the slabs, the amounts of tax, the rates of tax also have come down. And she has also now brought in the standard deduction for the new tax regime, which was not there earlier. She has also said that I will reduce the tax rate for people earning over 5 crores and who opt for under the new tax regime. So their taxes also would come down from 42.74% to 39%, So there have been some important changes. In addition to that, she has now also increased the exemption for leave encashment. And that's to be notified by the government from an amount of 3 lakhs for the non-government sector to 25 lakhs. So there have been some important changes, and there have been changes in the right direction. And the whole idea is that more and more people now should start adopting the new tax regime. In fact, she mentioned in her speech also that it will be the default tax regime.
Yeah.
So which is what I wanted to ask you, Hobi, going a little bit deeper. So what is the big implication when the finance minister says that, the new tax regime will be the default tax regime? Because most of us, when we file our returns, we have to choose our IT form. And by default, it was an old tax regime unless and until we notify our employer that we are going for a new tax regime.
Right.
So can you explain in layman's term how this change of default regime is going to impact the individual, and what should they do about it going forward? How should they, choose?
Right. So again, it would depend on case to case. As I said, if a person is earning a substantial amount of money, let's say over 5 crores, obviously they will have a substantial saving because the tax rate would come down from 42.74 to 39% if they go under the new tax regime, which makes sense for them.
The highest tax slab actually goes away.
Yes,
so
correct.
Down to what was earlier the second last slab, now that becomes the highest slab.
Correct. So basically it'll become 39%. So there'll be substantial savings for them. Also for people who don't have substantial exemptions or deductions that they were claiming, this new tax regime should also benefit them. She had also mentioned that now people who go under the new tax regime, the tax, they would not have to pay any tax up to an amount of rupees 7 lakhs because they'll claim a higher rebate, etc. And if you claim the standard deduction of 50,000 rupees for salaried employees, if their income is 7.5 lakhs also, and then they claim the standard deduction of 50,000, even there they would not be liable to pay any tax. So, in a nutshell, people who are at the lower end, who don't have a very substantial income or who are claiming lower exemptions or deductions or have got very high income would definitely benefit. Of course, you can go under the old regime. There is no bar under that. That continues.
But now you have to specifically choose the old regime. Otherwise, if you stay quiet, then it's like your new tax regime is assumed.
Right. So you'll have to opt for that. We'll have to wait for the modalities. What is the procedure? What kind of declarations or forms might come out for that? But there will be people, Kaizad, who will also continue under the old regime. People who have been claiming deductions or exemptions, let's say for housing allowance or for leave travel allowance. You've been claiming deductions, let's say under ATC for payments made for life insurance or public provident fund. You're claiming deductions for NPS, etc., maybe for medical premiums, even for donations, deductions, etc. People who have been claiming big amounts might continue under the old regime.
You know, I was reading the finance. I was not only hearing but reading the commentary later. But you know, she said that individuals with the income of up to 7 lakhs will not have to pay any tax under the new regime, and they will be eligible for a rebate under Section 87A. That's currently available to individuals with an income of 5 lakh rupees. Now, just for the benefit of our viewers, if you could clarify what exactly does it mean to get a rebate vis-a-vis some kind of an exemption?
Right. So what will happen, there is a tax on the amount, let's say up to 7 lakhs, there is a tax. But that tax, in reality, there is no tax because the government says now if you go under the new regime, up to 7 lakh rupees, whatever is the tax on that, that entire amount will be sort of reduced from your tax. So you get a full rebate of 100% of the tax up to 7 lakhs. So in reality, you're not paying any tax.
So that is only for people whose income is up to 7 lakh.
Up to 7 lakhs.
If there is more than 7 lakh of income, then the rebate doesn't work, right?
Yeah, then the rebate will obviously not kick in. Yeah.
Okay, Ms. Singh, I want to understand, I mean, not only from a personal standpoint, but also from a market standpoint. I mean, what did you think of, the budget this time?
I think there has been an attempt to not only take care of the financial part, but the behavioral part. And the behavioral part is they want more and more people to come into the new regime. And see, old regime is going to be redundant. In any case, if they don't do anything, after 1 or 2 years, as Mr. said, some people will still do that. But over a period of time, it will get redundant. And today, the benefit of old regime and this is getting reduced day by day.
Do you ever see us reaching a point where the old regime will be eliminated totally?
Of course. I see a matter of maximum 3 years.
Okay.
Then it will be. But today, when we say that the old regime, new regime will be the default regime, then it's kind of getting a negative. By default, you are into new regime. You have to specifically say that you want to be into the old regime. So see, people at the highest level also, the difference is hardly anything. And it's so simple in the new regime that you don't have to take care of so many things. Because the universe of deductions is also coming down day by day. Because when you talk about 150,000, which has been there for years and years, so the universe has come so low, except for a few people who are entering the new job markets now because of the provident funds and the HRAs and interest on the deposits and the tuition fees, so on and so forth. So when you don't have to do anything, actually it's happening automatically. But the benefit is so small, so most of the people will go into the new regime. And the second attempt has been with the, if you look at the number of income tax returns which are filed, almost 30% of the total returns are filed at the lowest level, where people are not paying any tax. Below the, today if they were filing below 5 lakhs, now they will start filing below 7 lakhs. So that 2 lakhs extra multiplied with the total number of such returns will get into the formal economy. And you add to the formal, the multiplier impact of that. I think 20 to 30 lakh crores of the money will come into the formal economy from cash economy, which we can't shy away with. This exists, though it has come down, but still exists. So that will be a big benefit for the whole investment ecosystem.
Okay. I would like to welcome Radhika Gupta also.
Hi, Kezad.
Hi, Radhika. Welcome to Moneycontrol. Just wanted to bring you in and seek your opinion on, one big miss from the budget and one big ask, by a section of the mutual funds industry and even financial planners and experts in capital markets was the capital gains tax. Different in financial investments have different thresholds to determine whether they're long term or whether they are short term. So, what's your reading of it? I mean, before every budget, this debate comes up that, capital gains tax has to be standardized, streamlined. But even this year also, we didn't hear the finance minister saying anything on that.
So I think this is a two-sided coin, to be honest, Kezad. There is one side that is, fairly saying that, there are too many tax rates out there. Equity is different, debt is different, real estate is different, you need to standardize it, and all that is well and good. The brighter side of it, however, is I have personally been a big advocate of tax consistency. And too much change is also not good. So, it's been some time since we've had this 10% LTCG in equities, a few years, and it continues. At least there is a recognition, because the worst that could have happened, I'm an optimist. The worst that could have happened is, you made equity taxation sort of worse, not 3 years, but tinkered with the rates, etc. At least you're realizing that equity investors are important in nation building. Domestic capital is important. So while a change is sometimes desirous, I think stability of tax regime has its own pros, and there are already a lot of changes going on personal slabs. I would say, though, from a mutual fund point of view, the mutual fund industry has reason to cheer, because some of the tax arbitrages, have been closed. For instance, in insurance industry above 5 lakhs in certain products, taxation rules have changed. Market-linked debentures have changed. So real estate has changed. So there are material changes in competing products that I think should make the mutual fund industry very happy.
Okay.
I just want to shift gears a little, since you've asked about, the taxation part. Radhika, I want to also understand from a market standpoint, are you happy with the slew of announcements made? Because clearly the push has been towards growth, towards firing up private investment, towards, attaining the long-term targets of, of the government that they've set for the next few years. So do you think it's the move in the right direction?
I think unequivocally yes, and two reasons I would say. One is that the equity market wants to see growth. Over the last 3-4 years, we've embarked on a path of growth, capital expenditure expansion, which you saw in this budget. So you have ticked the boxes of growth, capex, and infrastructure, while keeping the bond market. I haven't seen my bond CIO as bullish as he was today in quite a while. So while maintaining your sense of fiscal prudence and committing to that, and you've done whatever you could on consumption by putting more money in people's hands to consume and invest. So I think, one, you've checked that box without saying too much. You've actually done quite a bit. Second, which is an overarching point I would like to make, is you have established that we are a little more long-term in thinking, which is very important to the market. The market looks for stability. The market looks for long-term. You haven't gone into the temptation of being populist 1 year before an election. You've provided a consistency of tax regime, and sort of the vision you've laid out for over the last 2-3 years, is continuation. So what I like is that this is not a dramatic budget. Budgets are not becoming dramatic. There's a larger vision and it's a constant execution and enhancement towards that vision. So I don't think the market has any reason to be unhappy. There were no negative surprises. You continue down the path that you were committed to, which is a path of growth. And India is coming off, a tough decade, as the economic survey highlighted, and potentially sort of going to lead the world in growth. So I don't think the market has any reason to be unhappy. I don't look at today's market move as a determinant of whether it was a good or bad budget, by the way.
So, Homi, coming back to the old tax regime versus the new tax regime. Now, realistically speaking, Mr. D.P. Singh gave his views about where he sees the old tax regime going practically. But what are your views about it? And I'm asking specifically in context to two of the most popular deductions which people in the old tax regime have taken over years. Section 80C, mutual funds are also a part of Section 80C, and then Section 80D. Now, before the budget, there were a lot of expectations that to make the new income tax regime more popular, they might introduce Section 80C or Section 80D in the new income tax regime. But practically it was not going to happen, but still there was an expectation. So, these are the popular deductions. Many people go for them. I don't think that, I don't know what you feel, but realistically speaking, do you see these deductions surviving in the future with the old tax regime, or you think we are going to a stage where even these most popular deductions are also going to go as well as the old income tax regime?
What I feel, Kaizad, is that yes, definitely the focus of the government is to go under the new tax regime. But I think the government might continue with this, giving the option to go under the old regime, because people are claiming also under 80C, the other important section that people also claim a deduction, and a lot of people claim it, is when they pay interest on these housing loans up to 2 lakhs. So that's also an important deduction in addition to insurance premium or to interest on savings account. That's a smaller amount, So I think I'm expecting that the government will continue with the old regime, and plus you can claim standard deduction, etc.
But they'll continue to make the new regime even more and more.
They may make it more attractive. That's possible. They may make it more attractive.
You still have 5 tax slabs that have come
under the new tax. From 6 it's come down, yes.
Yeah.
But they've slightly expanded the slabs. The amounts have been expanded by 3 lakh rupees. It's 3 instead of 2.5. It's like 3 lakh rupees each.
Okay.
So these tax deductions, exemptions, do you foresee that they will be eventually introduced to the new tax regime to make it more attractive? Could that also be a possible step?
It's possible, because if you see in this budget, they've extended the standard deduction for salaried people, which is 50,000 rupees, plus an announcement has also been made for this family pension deduction, which is 15,000 rupees. So it's possible in the future there could be some more deductions or exemptions available, which are under the old regime, which may go to the new regime.
So the standard deduction for the new regime, just to make it clear, how much is it? 50,000 or 52,000?
No, it's 50,000. The standard deduction that one can claim is 50,000.
Okay.
50,000.
Okay.
Under the old and under the new regime for salaried employees.
For salaried employees. Yeah. Okay. So practically, when this would have an implication even on how you plan your taxes from now on, as in, because for salaried employees, when they have to start planning their taxes earlier in the financial year or even during Jan, Feb, how you plan your taxes would also now change. Your approach will change, because since the new tax regime has been made more attractive, you will have to now figure out whether you will invest in, let's say, an ELSS fund, or whether you need an insurance policy.
That could also be a factor. Tax could also drive that, But again, it depends, as I said, Kaizad, from case to case. Some people may say, irrespective of tax, they may want to continue with the existing investments. For example, let's take Public Provident Fund. Okay, the deduction is capped along with the number of investments and expenditure up to 1.5 lakhs. But it's an avenue which gives you a good rate of return, 7.1%, and your money is also secure. So some people, irrespective of that, may want to continue. And that could be there for other investments also. For example, you've got insurance policies on health. You may not want to discontinue something like that.
Obviously.
So those factors also have to be borne in mind. There could be people investing in this NPS who may be wanting a good return in their retired life. That also you get deduction up to 50,000. So some of these investments will still continue, maybe irrespective of whether one gets a benefit or not.
Because your tax planning is always a subset of your overall financial plan.
Correct.
I mean, it's
That,
not the
that is
only
absolutely correct. Yeah.
Mr. Singh, what about, what do you think? I mean, of course, your ELSS schemes in the overall scheme of mutual fund industry is a small percentage. But I just thought of asking you, what is the future of ELSS schemes when the whole tax regime is shifting towards the new?
There are two parts of it. One is ELSS, people who are investing, as Mr. is also saying, that the people are putting money not only for the tax purposes, but otherwise also. Because there is a segment who wants to put in money and they want to fire and forget kind of thing. They want to lock in for 3 years. If I take care of my own ELSS, it's not very small, it's around 12,000 crore fund. Okay, it's not, we are around 9%, 10% of the market share in that category. But still, when we look at the ticket size, there are ticket sizes much more than 150,000. People are investing money and intermediaries are also pushing those funds. If it's a good performing fund, they would like to push it for 3-year lock-in for two reasons. One, discipline for the investor, and second, the continuous income for the distributor, the intermediary. Both work together. If you look at the largest of the ELSS and you look at the data, the people who are investing without claiming the tax rebate is much more than the people who are claiming the tax rebate.
But do you get investments more than 1.5 lakh?
Of course.
In ELSS?
We do.
In ELSS.
The number of such transactions are more than the number of transactions below 1,50,000. So ELSS is a category. Okay, so that's one category where we continue to get fund. But of course, the newer people who are just joining the bandwagon, this is very, very good way for them for investing in a disciplined way. So when we are talking to them, we always say, whenever you are in a habit of buying the depreciating assets, why not to balance it with the appreciating assets? So depreciation, appreciating assets. So we are pushing that as a marketing tool also. So this is a good scope. For everything, this is a big niche. And there are a number of investors which are good enough to put money in these funds.
Okay.
Do you also see investment in gold also go up, especially electronic gold, because that also there was an announcement with respect to that where the conversion of physical gold to EGRs will not be there won't be a capital gains tax.
Yeah, I think that's an important announcement. People have not taken notice of that. So going forward, more and more people will put in money into the electronic format, and now in the younger generation especially, there's no craze of jewelry or there's no craze of keeping so much gold at home. So as a hedge against other investments, people will definitely go into the electronic mode. It could be either through ETFs or there are other forms also available. So I think that will definitely grow from here on.
Radhika, one of a couple of asks from AMFI, from the mutual funds industry, from the budget, was also something around debt passive funds. I know you've been a big proponent of debt passive funds, and also funds investing in fund of funds that invest in equity ETFs. So the finance minister again has been silent on both those asks by the mutual funds industry. What's your reading on it? I mean, debt passive funds obviously is not, it's a virtually new area of investment. But, do you think with more tax incentives, the segment can become more and more popular with the retail investors?
So I think debt as a segment and fixed income passives need to become more popular as a consumer product because, in an environment with the most popular competing product, that is FDs are fully taxable, tax-free bonds are in limited supply. I genuinely think they are a good consumer product, and 3-4 years into this, with the oldest in the game, people have had a good experience. Now, it's unfortunate that we haven't got what we want in terms of announcements. But I think, one of the asks was, of course, DLSS or debt-linked savings scheme. In light of the fact that a lot of action is going to move into the new regime, perhaps that ask may be a less relevant ask. So tax swaps are always welcome, but net-net, Kezad, I would say two things. One, the debt mutual fund industry, by virtue of having this 20% with indexation structure, already actually has a very good tax structure compared to competing FDs. I think we just have to speak more. Secondly, I think, just to repeat the point I made, we did compete with products like market-linked debentures, insurance to some part, and at least we are at parity from a taxation point of view, if not better. So, while we've not got everything that we've asked for, I think the status quo is also not bad, and the asset class still continues to grow.
Right, right. Homi, one question I wanted to ask you. Any big misses from the budget that you wished you could have seen today as far as the individual taxpayer is concerned?
So I think one of the things was pertaining to the capital market, that there was an expectation and there was discussion that the government would try and reduce the holding period for various types of capital assets and maybe even try and restructure the tax rates and make it simple. So that's not there in this budget,
So that is something that we'll have to see if it gets corrected in the next budget or so.
Yeah.
But next is also a vote of account, as we were discussing earlier.
Yes.
Okay. Okay. Anyways, thank you, Homi, for joining, and we are very glad that you could join us for this discussion.
Thank you. Thank you.
I want to get in your perspective on the market as well, just to understand, because yes, I mean, intraday also we saw a fair amount of volatility come by, but the markets or investing is not about day-to-day movement of the market. But overall, do you think the finance minister, the government has done enough to spur growth, to really uplift the sentiment? Because we've seen a lot of gloom and doom in the last 1 year, a lot of turbulence. There were highs as well, but there were lows as well. So talk to us about what do you think from a market standpoint, how would you rate it?
No, I'll rate it very, very high. Actually, if we look at the intraday, as you rightly said, we can't read too much into it. And we know there are so many other reasons. And the market is down because of one particular share, and there has been reasons for that to happen. And these are some things to worry about. But overall, whatever, government could do, they have done. If you really look at the same point which I was talking earlier, to look at how much money is coming into the market, so it's going to be almost 30-40 lakh crores which will be coming into the investments and the other consumption, which is a big. When you are talking about 5 trillion economy, and out of that, by just one step, you are getting almost 2.2 to 0.3 trillion by just one go. It's a big thing, right? And then most of the money finding way into savings, because we are, as a country, we are worried about the savings rate coming down also. And with these more and more money coming into the formal market, I think saving rate will also get pushed. The savings and investment are bracketed in any case, right? Some money comes into savings, some money, because even banks need more deposit. Banks need more deposit to take care of the credit growth, which is very, very robust as of now. So overall, from banking point of view, from mutual fund industry point of view, from capital market point of view, everything is good. As far as markets levels are concerned, those are different ballgame. Valuations are also very, very important. We know that valuations are stretched. So it's not that, but one thing is there, the global money doesn't have any other alternative but to come to India. That's very clear. It comes today, it comes tomorrow. Or whether we bring in more businesses, more companies getting into this capital, more NFOs coming, more IPOs coming. We are used to using NFO, it's IPOs. So more IPOs coming, I think we are into good times. Very, very happy about overall whatever has happened today.
But you're not particularly concerned about valuations being high, which has repeatedly been flagged by several people when it comes to Indian markets vis-a-vis other EMs.
No, see, when you talk about the valuations of the market and valuations of stocks are two different things.
Yeah.
And today, even if the valuations of the market are stretched, there are very, very good opportunities. If you look at what happened during the last 3-4 days, some of the stocks have become really, really attractive. So through the vehicle of mutual funds, I think if retail investors put in money, the mutual funds will be able to create alpha for the people, for sure. I'm very much sure that the active funds will definitely create much more value for the investors over the long period. Whatever the levels are, the opportunities are always there. And we are not only into equities, we are into debt also. And as Radhika ma'am rightly said, the status quo itself is very good for strengthening the debt products. Even today, when we look at the overall debt AUM, 80% is coming, 85% is coming from either corporates or the ultra HNIs and HNIs. We need to retailize that. We need to educate people. The tax efficiency is huge. Only thing is the responsibility is on the industry and the financial education for you and me put together. I think we can take this to the next level.
Simplified products also.
No, products are simplified. The education becomes technical. The people who are into the business, they need to be educated to educate the investors, because all said and done, capital markets are mostly intermediated markets. These are not something people are coming on their own. If they are coming on their own, they are making more mistakes than making money for themselves.
Right.
So that's something. This is a responsibility of media and the companies like ours to educate more and more intermediaries and more investors.
Right, Radhika, one more question to you before I introduce our next guest. Overall, where do you think the direction is for the markets after this budget for the rest of the year?
So I don't think a budget shapes market direction, for the year. I think it has a short-term impact, but we've got past the point where the budget is a dramatic event. There's always some risk around rumors, etc., LTCG, etc. But once that's out of the way, I think finally markets react to where earnings growth are. Now, as a house, our belief is that the short term will remain volatile. Last year was volatile, as Karunya said, and I think this year will continue to be volatile, not just because of where valuations are, but we are in a globally tricky territory. So I don't want to rule that out. But over the next 3 years, and I think DP also pointed this out, can the Indian economy sort of come back? Are we a part of a large earnings revival? Is domestic manufacturing picking up? Absolutely, all those things are happening. So over a 3-year, horizon, we are constructive on domestic equities. We do believe domestic equity investors will make money, but it's very hard to talk about 1 year. And I still think the next year will continue to be a volatile one, because you have recessionary conditions abroad. You have inflation that is a major problem in developed markets. So our theme for the year continues to be recession before returns.
Okay, right. At this point, let me introduce you to two of our guests. Manoj, hi. Manoj Nagpal is the Chief of Outlook Asia Capital, and Vishal Dhawan, our financial planner, and he's the head of Plan Ahead Financial Planners. So, Manoj, let me start by asking you, just give us an overall view of the budget. Too many changes, positive changes, of course, in the personal tax regime. But do you think more could have been done, or do you think at this point in time it meets your expectations?
Yeah, so there are two aspects that investors should look at. One is, as you rightly said, the personal tax regime. There is clearly a shift, and a favor shown towards the new tax regime, and there is a push by making the new tax regime a little more favorable for people who are earning in the lower tax brackets. And secondly, it has also made it more favorable for people in the extremely high tax brackets, that is 5 crores and above, by reducing the cess from 37% to 25%. So that's a big change. So clearly there is a direction that the new tax regime, both on the higher end and the lower end, is more positive or more beneficial for savers today. The middle of the pack still, that is, if you were to take anywhere from the income tax or the income range from say 10 to 15 lakhs to 2 crores kind of thing, there is actually no significant change for those people to shift. So the higher end will shift, the lower end will shift, but the bulk in between will still remain the same. And that is primarily because the deductions in that old tax regime still make sense for that category of people who are in that income bracket. The other side, what it has done for investors, if you were to look at the savings and investments, what the government has done in that it has pulled down a lot of loopholes that were existing into the same. So whether it was insurance, whether it was market-linked debentures, they have tried to curb down those loopholes and make investing the same across the plane. So now investment decisions will be based not on the tax arbitrage that is available, but on the efficiency of the instrument. I think that's a very positive thing that this budget has done for investors.
And that's also consistently that I think the finance minister has been doing, right? I mean, the EPF voluntary contribution was taxed beyond a certain point in time.
Yes.
Even your ULIPs were also taxed. Now, this time, today, she's talked about, insurance policies, but non-death benefits.
Yes.
And, non-ULIPs. So even where the premium exceeds a certain amount, then, your redemption proceeds will be taxed.
Yeah, so that was a loophole, and that was being used by some of the insurance companies by selling policies, and predominantly it was in the endowment policy space, wherein in the future income that was getting generated from insurance policies was peddled as tax-free income, especially in the higher end of the bracket. So I think that was a misuse of the insurance product to certain category of investors. I think that has been rightly been plugged.
Vishal, do you concur with Manoj's view on the announcement made for insurance premium to be taxed if it's over 5 lakh?
Well, certainly. I think, there are two provisions effectively that have come through. One is that the death proceeds will continue to be tax-free. And the second part is, if you're putting large premiums in, then whatever is the excess of income generated over 5 lakhs will start getting taxed. Now, what we have to do is, very clearly, if you look at insurance as a vehicle, its primary role is to actually cover death. And what ends up happening is you had tax benefits that were suddenly making insurance plans an investment vehicle as well. And I think any step which helps people simplify their investment strategy, separate out insurance and investments, ensures that tax arbitrage doesn't become the reason why you club your investment and insurance together, I think is a very, very welcome sort of move.
Vishal, two more investments options have come into spotlight thanks to today's budget. One is the senior citizen savings scheme, where the limit was stuck at 15 lakh for a long, long time, and the monthly income scheme also. Now, these are very popular instruments, especially with senior citizens. So how big is this move, and what's your reading on it?
So I think the senior citizen savings scheme doubling of limit, effectively making it 60 lakhs, is a very large and positive move, because very clearly it is one of those instruments that do offer you much better than market returns. And for senior citizens, there are very few vehicles where you could have actually bought into longer term instruments and get a guaranteed sort of income coming to you every quarter. So very, very clearly, that's a positive move, I think, for senior citizens who were using up the 30 lakh rupee limit earlier between themselves and their spouse. I think it's great that they can now look at a larger number.
And the rates have also gone up recently.
Yes, and the rates at 8% are very attractive relative to all other sort of tools that are available. Of course, the income from there is taxable. So, what will end up happening is that it may not still compete against tools like the PPF, for example, which is 7.1% tax-free. But there you can only put away 1.5 lakh per person. So very clearly, the senior citizen savings scheme is doubling of limit is excellent news. I think as far as the post office monthly income scheme is, relatively, I think that's maybe not as attractive, because what happens is interest rates there are at about 7.1%. And what ends up happening is, if you look at a lot of fixed deposit rates today offered by banks also, which, for say 5-year deposits, which is the tenure of the MIS as well, you will find that they're going up to about 7.5%. So I think the use of the MIS, one has to be a little more careful as compared to the senior citizen, because the rates are not as attractive as what you get on the senior citizen. Additionally, I think for a lot of people, especially as they get older, operational ease is a very, very important part of what they need to think about. And maybe they could find that the monthly income scheme is not as simple to administer and operate as compared to, say, a bank deposit for them. So I would say SCSS, big plus. MIS, think about it carefully before you do something.
Vishal, I want to ask you a very basic but important question, something that, we've repeatedly seen all day on our feed, on our social media. Which tax regime to choose now? And, it's something that we've, a lot of newsroom chatter has also gone around all day today. I don't know if people have already started reaching out to you and, started asking you that. But after the revisions and the changes that have been announced by the finance minister, which regime do you think is actually more prudent for the Aam Aadmi?
So unfortunately, there is no one answer on this. That's very, very clear that, while the default system is changing to the new tax regime, one could still find that depending on the income that you have, as well as the deductions that you're already taking advantage of, whether it is under Section 80C or 80D or, the NPS sections, HRA concessions, etc., you might still find that the older tax regime might work for a lot of people. So what will end up happening is one of the clear things that will need to happen is, unlike earlier, where for most people you found that the new tax regime did not work. This time there will need to be a lot more detailed analysis and a lot more projections, because a lot of this is about, making decisions about what you expect your income to be next year when you're trying to make some of these decisions. It's not a past decision, it's a forward-looking decision. And therefore, I think that for people who are above 5 crores, I think that decision is much easier to take because of the way that the surcharges have got reduced. I think for a lot of lower income people as well, I think it's an easier decision to opt for the new tax regime. But I think for a very, very large number of other people, one will actually have to crunch the numbers and then figure out what actually works well and what doesn't work well for a specific person.
Manoj, this, with so many changes have happened in the new tax regime, and the thrust to go to the new tax regime now certainly on the finance minister's mind. Most of the times there is a rush of people during December, January, February to do a lot of tax saving investments just for the heck of it. Now going forward, especially for somebody who's joining the workforce, this year, who's joined workforce, let's say 2 or 3 or 4 years before, obviously their income would be at a certain level, not at a very high level. What is your suggestion as to how should they start their financial planning, and should they necessarily keep any tax saving investments in mind, or should they just now completely ignore that?
Yeah, so the way I look at it is that, if a person saves something, so, very simplistically at this point of time, the thumb rule is that if you are planning to save anything, during the year, the old tax regime will work for you better. And if you are a person who's maybe in a lower income tax bracket, or who cannot save because of other commitments that are there in the family or your other, and the amount of money that you have left over as disposable income to invest is not there, then the new tax regime is better. Okay, so what this tax, earlier the gap between the new tax regime and old tax regime, as Vishal rightly pointed out, was clearly tilted in favor of the old tax regime. So it was a no-brainer that 99% of the people would find the old tax regime better. So what the finance minister in this tax budget has done is slightly moved the needle and made the new tax regime more closer to the old tax regime. But at this point of time, still, if you are a saver, and for example, if let's look at the total exemptions. So what the finance minister has done is that brought the standard deduction also in the new tax regime. So that's an addition she has done. But all other deductions, which are in the range of around 5 to 6 lakhs, which you can claim in the old tax regime, that is still available in the old tax regime. Even if a person cannot utilize the entire, 5 to 6 lakhs, it will still be around 2.5 lakhs. And at that point of time, if you to say a person is going to utilize the 80C limit of 1.5 lakhs, maybe invest a little, take a medical insurance, which I think even if there is no tax benefit, one has to still take a medical insurance. Or
and your EPFO is also by default in many cases as salaried employment.
As salaried,
you actually use your EPFO or not, you already, it's a saving benefit for you.
It's a benefit, yes. So it makes, so if you're going to a little bit, save a little bit also, around a lakh or so also, even then the old tax regime stays better at this point of time, especially if you're in the tax bracket of 10 lakhs plus. And given that fact, I think most of the people in that income slab will continue with the old tax regime. The counterpoint to that is that most of the, in India, most of the taxpayers are in the income, that is the number of taxpayers, are in the tax bracket of 5 lakh to 10 lakh of, annual income. And for them, it may be quite, wise to shift over and not save tax. But again, as a, that's not a very prudent advice to give, to not save. And hence,
well, also Section 80C and there is so much of tax reductions also came by people who take a housing loan. So that's an expense. That's not really an investment. I mean, you invest in a capital asset, and for that you need to take a loan. Now, whether that gives you a tax reduction or not, it doesn't really make that huge a difference, right? I mean, if you have to buy a home, you buy a home.
Yes. So I completely agree. So those are the things. So it's 1.5 lakhs of 80C benefit. 50,000 of the NPS benefit, 2 lakhs of housing interest loan, 25,000 of medical insurance for self, 50,000 rupees for your medical insurance for your parents, and HRA, that if you're staying on rent, HRA benefits. So all put together, that's a basket of around, as I said, 5 to 7 lakhs. Some people, obviously, if you're using the HRA, you won't use the housing loan component, but both are replaceable in the same, almost the same bracket. So effectively, it's still 5 lakhs of exemptions which one has to leave on the table. If you were to calculate backwards taxes on that, if you're 30% bracket, if you were to leave out the 5 lakhs, then it's around 1.5 lakh of tax foregone there. So it has to compensate there. So that's why I said it's better to stick in the tax, old tax regime. If you intend to save and you're in the bracket of 10 lakhs plus kind of income, most probably the old tax regime still will make sense for you.
But more and more over the years, I think more and more focus would now shift to financial planning rather than, tax planning being the overall main
motive.
Motive,
I also want to get in your perspective on the threshold changes that have been made for presumptive taxes for eligible businesses, for even specified professions. What do you make of the revisions, firstly, that have been announced, and what are the points or what are the factors that one should consider before opting for this PTS scheme?
Yeah, so the presumptive taxation scheme essentially allows a 15% set off of expenditure for your total professional income. Predominantly, it's in two parts. One is the manufacturer trading income or the professionals. We are more focused on the professionals, whether it's doctors, lawyers, in that category, and there are specified professions in that. It's not that all professionals can take it. So there is a set of certain specified professions which are allowed to take presumptive taxation. Earlier the limit was 50 lakhs, and honestly, for example, if you look at the the legal, the law firms usually, hence most of the people, if you see in a law firm, are on contract. Because of this reason, they are not full-time employees. Because if you, as soon as you become a full-time employee, it becomes salary, and you cannot take presumptive taxation. So most of the law firm takes graduates as, on contract, which allows them to take this. So even if you have to take today a law graduate from the top tier law school in India, their starting salary is in the range of 15 to 20 lakhs, and within a couple of years, law is obviously a higher paying profession. So it's not a normal salary, but typically in 2 to 3 years they move to the range of 40 to 50 lakhs salaries, and that was causing a little bit of concern, because anybody who's got more than 3-4 years of experience could not avail of this tax regime that moving there, and hence they have increased the tax regime, and I think rightly so. The whole purpose of and this specific government is focusing on making filing taxation simpler. So rather than telling people to create more paperwork, it's better that they increase the slabs. And I would also exhort the government that more professions should be included in this kind of rather than the current set of limited professions which are there. So since Mr. D.P. Singh is also here, the mutual fund industry should advocate that even mutual fund distributors come into that professional presumptive taxation.
No, for sure. But one point which I think all of us are missing out, the specific thing which Finance Minister said, that not more than 5% should come in the form of cash. In all these presumptive limits, when they have increased it, They have said no. And today, whatever the presumptive income, if you look at the income tax returns, most of the inflows are into the cash. So that what I earlier said, the attempt is to get more and more into the formal this thing. Now the digital UPI is there. Everybody has the digital apps. So why somebody going to doctor, why should he pay in cash the fee? They want everything should come through digital mode, so that more and more money come into formal, so that the size of economy increases, and the tax governance also comes into form. So that's the attempt. Attempt is not only to get into to give the benefit, but rather to incentivize them to get into the formal economy.
Right.
Clearly, all the steps seem to be pointing to the right direction.
Yeah, and I don't know what about you, but maybe I'm thinking of becoming a lawyer now.
Yeah, I mean, thanks for rubbing it in. Yeah, well, but I guess we'll have to see how things pan out over the next few years, whether or not Mr. Singh's predictions will come true. He says in the next 3 years, perhaps the old regime could be phased out.
Yeah.
So let's wait and watch.
Let's wait and watch. So thank you so much, Manoj. Thank you so much, Mr. Singh. Vishal, Radhika, thank you all so much for joining. And for our viewers, thank you so much for joining. And please log on to moneycontrol.com for more. We are still dissecting the fine print of the budget. And over the next 2 or 3 days, you will expect, we will give you more and more analysis on how the budget has panned out. Thank you so much.
Hi guys, I'm Karunya Rao and you've tuned into Money Control. Hi guys, I'm Karunya Rao and you've tuned into Money Control. Every year after the budget speech, the biggest talking point, or the biggest question rather, is what becomes expensive and what becomes cheaper for the consumer, for the Aam Aadmi, for you and I. So here I am with the latest update of what becomes more costlier and what becomes more cheap.
Hello and welcome to this budget special from Money Control. We are looking at budget and the economy. In the next half hour, we are going to be joined by top-notch economists and bankers to decode what the budget means to the economy and to the financial sector. I'm joined by Soumya Ghosh, the Chief Economic Advisor at State Bank of India, Mridul Sagar, who is former member of the Monetary Policy Council, former Executive Director of the Reserve Bank, and in a bit we'll also be joined by Aditi Nair, Chief Economist from ICRA. To give us the banking perspective, Neeraj Gambhir, the Group Executive and Head of Treasury, Markets and Wholesale Banking Products at Axis Bank, will also be joining us. Soumya, let me start with you. From the looks of it, everything you economists asked seems to be there in the budget. The deficit is down below 6%. The assumed GDP at 10.5% is not all that ambitious. I mean, when I did a poll, I got 10%. So would you say this is a good budget, prudent budget based on realistic assumptions?
No, I think, Lata, thank you. I think this is a prudent, pragmatic budget. The numbers are actually possibly underestimated because with a 10.5% nominal GDP growth rate, the tax parency is actually coming just below 1. And which is actually lower than the historical average of 1.1. And at 1, this tax parency is lower than the for the decade ending 2000. So it is actually estimated at the lowest level from the 1999-2000. So in all sense, these numbers is likely to be achieved. This is point number 1. The point number 2 is that the borrowing numbers are also lower than the market expectations. The market was expecting any number at between over 16 trillion. Now the net borrowing is at 12 trillion and the overall gross borrowing is around 15.4 trillion, so which is lower than the market expectations. And finally, the most important thing is that if you look at the capital expenditure, which is there in the budget, plus the creation of the capital assets, plus the capital expenditure of the central public sector undertakings, that number comes at 18 trillion, which is basically a 14% jump over last year. So all said and done, it's a budget with a thirst on capital expenditure. It's a budget with numbers which are reasonable and pragmatic and will be mostly achieved. So my sense, it's a good budget, and that if you look through the numbers.
I take your point. I will come to the capex part and the stimulus that it may provide in just a bit. Shaumya, let me get initial comments from the other guests as well. Mridul Sagar, your contribution to Moneycontrol, your excellent piece. Mridul, you can hear me? Okay, I think we'll get to Mridul in just a minute. Let me get the banking perspective. Neeraj Gambhir is with us. Neeraj, Shaumya ended his analysis by saying that the borrowing number is below what the market was expecting. Market would have been prepared even for 15.8 perhaps, maybe even 16, but 15.43 trillion rupees to be borrowed is something the market can take with both hands. You agree?
Yeah, I tend to agree that the borrowing number is in line, broadly in line with the market, not below, I would say. But in line is also a bit of a relief because the worry was that this being a full budget ahead of the election, there could be tendency to sort of spend a little bit and maybe compromise on the fiscal deficit. But the fact that the finance minister has continued with the glide path on fiscal deficit, stuck to 5.9, reiterated the fact that we will get down to 4.5 by 24-25. I think these are all assurances being given to the market that the borrowings will be well controlled and the fiscal deficit numbers will be maintained. And coupled with the fact that states have borrowed less last year and we need to still see what state numbers are going to look like for this year, I think there is a bit of a relief rally in the market to say that it is not all that bad.
Okay, Neeraj, let me just play the devil's advocate. Last year, or I should be saying this year, the states did not borrow as much as you correctly pointed out, and that gave more elbow room for you bankers to gobble up on central government bonds. Now, it's quite possible that in the coming year, the states will exhaust their full borrowing. Last year, for a better part, they have been maimed by the Omicron backlash as well. It's possible that there is more elbow room now and more bandwidth to go in for capex. If the states were to borrow their full length, and now they've been given a 3.5% fiscal deficit room, and if insurance doesn't come in, that's the big one. There are a lot of negatives for insurance companies. Premium over 5 lakh will not get tax benefits. So, it's quite possible that the guaranteed products, which led to a lot of buying of bonds, may not be that sumptuous this time. Do you see a problem?
Well, there are obviously a number of assumptions and there are a number of variables at play. The two of them you counted. I can count one more negative, which is basically that if the small savings increase that the government has budgeted for next year, if that doesn't play out, then also we will have a challenge. On the flip side, I think that is, and this is something that will play out through the rest of the year, is that if liquidity in the system continues to remain so tight, and there is a need for Reserve Bank to then do OMOs to support the liquidity in the system, right? That is something that we need to be also mindful of. There is obviously this whole question of at what point in time we will see FPIs return to the domestic bond market and whether there is going to be an index inclusion. So I think there is a bit of a variability at play here. We need to take one variable at a time. I think the main important variable for today's conversation was whether the fiscal deficit number and the intended central borrowing number is in line with what the market is asking for. And I think it was indeed the case, which is why there is a sigh of relief.
Okay. Well, actually, I was preparing for this discussion with Shaumya, and he was also pointing out about the small savings expectation that they can take 4.8 is it 4.8 trillion rupees from the small savings. Shaumya, would you agree that is difficult? See, the thing to say on behalf of the government is that there is this Mahila Samman Bachat Patra, which is a 2-year period with a deposit facility of up to 2 lakh for women. I intend to take benefit of that. And then there is also a senior citizens enhancement of maximum deposit limit. Won't all this help the government in getting more money from small savings? Shaumya?
There are two parts to this discussion. The first part is the assumption in the current year. If you actually look into the numbers of the small saving collections till November, the government had budgeted, I think, around 4.2 trillion. I think around less than 50% of that has been achieved till November. But the target has been actually hiked to 4.3 trillion for this year. So I think there could be some, struggle in achieving that numbers. For next year, The 4.7 trillion numbers, however, is achievable because I think that will come on the back of that scheme for the women which the government has announced. So my overall sense is that given the fact that government has the small saving collection numbers have actually been revised significantly upwards, even as the collection till November are less than 50% of the earlier budgeted estimates, my sense is that the tax numbers could see a further revision upwards given the traction. So whatever you were saying seeing in the budget in terms of the revised numbers, that could see a further upgradation when the final numbers are announced.
Why do you say that? Actually, I was looking at the tax collections in November and December.
Yes.
Both these months, the tax revenue is lower than what it was in the November and December of 21. So why are you assuming that the revised estimates could be revised further up?
See, I'm not assuming that. This is basically based on the small saving number collections.
Okay.
If the saving collection is significantly lower than 50% today, and that has been increased in the current budget, that means there has to be, this gap has to be fulfilled from somewhere. So if the market is able to give out this number in the next 3 months from January to March, it's fine.
Fair enough.
Otherwise, the tax numbers could come as handy as has been anticipated in the budget today.
Fair enough. No, but I'm just asking you whether next year this getting from small savings 4.8 trillion, as Neeraj says, could be a tall ask.
No, I agree with Neeraj because that this year it has been a tall ask. Next year also the numbers are almost similar if you look into the revised numbers and next year's numbers. So it is going to be of course a tall ask, but my belief is that the scheme which has been announced by the government, that could actually act as a cushion. But I agree with Neeraj that this is going to be a tall ask next year also, because if you are moving to a new tax regime and that will actually further, and with no changes in the capital gains, I think that will further incentivize the households to continue moving to the financial markets. So my sense is that yes, that will be a challenge.
Okay. Just that one more addition, Neeraj, and then I'll go to the other aspects of CapEx. Do you think insurance will not deliver this time? I think they gave you all 2 lakh crore of bonds, right? Bankers were warehousing some 2 lakh crore of bonds this year for insurance companies. You think that may not come next year?
Yeah, there is some downside to that number. I think one of the reasons was that last year, now after doing 2 lakh crores and whatever that number is that you talked about, all banks are in terms of limits, they are kind of full, right? So there is less incremental demand. There is also this issue of accounting between the cash and the derivatives, which impacts the bank balance sheet. So it limits the ability of the bankers to, warehouse these kind of transactions and then give it to insurance as a derivative product. So there are some of these technical issues that are at play, which make me believe that potentially this year you could have a lesser number on account of bond FRAs to support the borrowing program.
Okay.
But the fact of the matter is that fundamentally insurance is in a very secular uptrend, right? So it's not just about the tax. So there is a sustained upside, not just from insurance, but also provident funds.
I take your point. The market is telling you that message which you are telling me now. Today, the bond yields have closed at 7.27. When we started the day before the budget, it was 7.39. So, the market is loud and clear saying that, oh, this is the borrowing program, we can handle it with our left hand. That's what the bond market seems to be saying. I was expecting even Mridul Sagar to join, but we're having some connectivity issues. But we have another economist joining us, Aditi Nair, the chief economist at ICRA. Aditi, all the budget assumptions have got a big green tick from Neeraj and Soumya over here. They believe the growth assumptions, the tax growth assumptions, and the deficit assumptions are exactly what the doctor ordered. Would you agree?
Thanks, Lata. Well, certainly, I'll tell you where we are very positively surprised today is seeing a capex number which is much higher than what we had expected. And therefore, the fiscal deficit number for FY22 is also a little bit higher than what we were penciling in, as is the gross borrowing number. But given the fact that the increase is coming on account of capex, we're happy to see that. On the tax side and on the nominal GDP side, our nominal GDP growth assumption is 10% for FY24. And we think there's a little bit of overhang from the excise side, which will continue for the first 2 months. So, the base effect of the excise cut will continue for a couple of months. So we had actually expected the gross tax revenue growth number to be a little lower than what the government has penciled in. So just a minor sort of quibble on that front. I agree with you. Yesterday, the December tax numbers were below what we were expecting. So we kind of, the revised estimates we think are appropriate. But I totally agree with you that the December tax numbers underwhelmed to some extent.
Okay.
And that leads us to believe that there is a little bit of optimism in the gross tax revenue number for FY24. We would also...
I just want to add one point over there, Aditi. The finance minister herself said that the giveaways because of the extra, raising of the limit on the personal income tax is going to lead to a 35,000 crore of revenue loss. Now, if you take that as well, then I'm wondering if, there's just a wee bit of overestimation on tax revenues. We could be pleasantly mistaken, but even if it is an overestimation, it's extremely minor, so perhaps can be overlooked. But I want to flag off what you just started off, CapEx. And that's the big point of this budget, the flagship slogan of this budget. Shaumya, do you think it has enough spunk, enough force in it to push the growth? Do you think this can spur private capex?
No, I think, Lata, the capex numbers are very aggressive, but just a small point of caution. Yes, the overall numbers, as I said to you in the beginning, if you look into the budget estimates, the creation of capital asset, the CPSE, the number comes at 18 trillion. There was some downward revision in the FY23 revised estimates. I think around 1 trillion crore less capital expenditure in the revised estimates. So we have to look at that perspective. But having said that, I think even if we are able to do 90% of what has been achieved, what is projected in the budget, I think that will itself will be a very good growth multiplier. Because I think all of us were expecting that, given the fact that private investment is still continuing to show just nascent signs of recovery, it will be worthwhile to push capital expenditure for the crowding in impact. And I think exactly that has been done in the budget. So my sense is that it will be growth positive and actually it will be growth accretive. And one final point regarding the nominal GDP, I think, as we have discussed earlier also, I think given the fact that global economy is poised for a soft landing, lower commodity price cycle and maybe a lower crude prices could actually be growth accretive. So from that point of view also, I think we could see some surprises on the real GDP numbers. But as a whole, 10.5% is an reasonably fair assumption on the nominal GDP growth rate.
Fair point. Let me get the capex part, and now pleasantly we have got Mridul Sagar on the line. We had a problem connecting with him. Very important voice. He has made policy, was member of the Monetary Policy Committee until recently. Mridul Sagar, you had very strongly asked for a fiscal deficit even below 5.9%. I think even below 5.8 when you wrote for Moneycontrol before the budget. It's come in at 5.9. Is that a disappointment? And more importantly, capex. Do you think that is a very big stimulus for the economy? So two questions.
I think, so let me start with the capex first. I mean, there's absolutely no doubt that this is a big stimulus in the sense that, it's a 33% rise budget estimate over budget estimate, and actually 37% rise if you see in the revised estimates. So this is unprecedented. And now the capex numbers have actually, one is the capital expenditure, but if you see capital outlay out of it, the capital outlays are at a record high. And I think we have to, and all of us should need to give credit to the government on this front.
Okay.
I think the declining trend in capex will be decidedly reversed in the last 3 years.
Got that. Let me ask Neeraj. Neeraj, is the private sector biting? Is the private sector on the verge of a capex outburst?
We've certainly seen an improvement from where we were. There is some initial stages of capex improvement, but I think this 10 trillion intent by the government, specifically in areas which can have a big multiplier effect, can be a good sort of crowding in factor for the private sector in next year. Remember, next year we will also be hopefully, without any black swan events. Hopefully, I'm saying because you never know when something will hit you. But coming out of pandemic, inflation settling down lower, monetary policy done with what it had to be done. These are all sort of surrounding factors which could actually give us that situation where finally private sector starts getting encouraged by the view forward and starts investing. So I think this, in that sense, combined with government's intent and the large outlay and the background factors, I think it could be a year when we could see a bigger impulse on the capital expenditure.
Okay, now let me play again devil's advocate. I'm also very happy with that number. We went cheering when we heard this number. But Aditi, maybe you're better placed because you look at the state's expenses as well. See, the government itself has trimmed its expense the current years from 7.5 trillion to 7.3 trillion. In the 7.3 trillion, from the start, they've also included the NHAI investments. Some 65,000 crore from last year was already included. And within that, they have set aside 1 trillion for the states. It is giving the impression that the centre is also not able to find that many projects and put them out to bid all that quickly. They seem to have a problem. The bandwidth to spend. States have shown that lack of bandwidth even more. What have they spent? 38% of their intentions? You tell me, will they actually spend 10 lakh crore and will the states actually be able to spend what's given to them?
So Lata, the revision downward in the capex numbers for FY23 from 7.5 to 7.3 trillion is basically because the interest-free capex loan to the state governments, the allocation for that has been reduced from 1 lakh crore to about 76,000 crore. And I think 76,000 crore now looks achievable based on what has been approved so far. For a variety of reasons, the pickup of this scheme was quite slow in H1 of last year. And now from the 76,000 crore, which is the revised allocation for this year, for next year, Government of India is stepping it up to 1,30,000 crore. So about a fifth of the incremental capex between FY23 RE and FY24 BE is because of the state scheme. Now, the other 80% is, dominated by things like railways and roads and other sectors where we believe that the government will be able to push through and broadly, we don't doubt that the number is going to be achievable. But on the state side, we really hope that seeing how large the allocation was this year, now the states will actually build in the 1,30,000 crore into their budgets and this is going to kick off early. And we're not going to have to see another downward revision next year.
Okay, so you're basically confident that it could get spent. Mridul, I wanted to ask you whether all this adds up to a bigger growth number. There are some who are doubting whether 10.5 nominal growth itself is an ambitious assumption. But they've given such a strong capital boost, stimulus. Do you think this can counter the negatives from global headwinds and we may actually be able to propel faster on GDP?
I mean, there's absolutely no doubt that the growth will slow down in the coming period. I mean, a lot has been made out that euro area may not go into recession, markets are gumbo. But overall, I think the growth possibilities for the next year are still very, very big. And it will rub on us, but I think this will hit counter to the degree that our growth should not fall below 6. I mean, which would be a pretty good thing to do. So coming back to the earlier question about the fiscal consolidation, yes, and that is linked to what Aditi just sort of mentioned. So clearly, the execution of capex is lagging behind. So what we need is really a combination that we focus a lot on execution and we focus on downsizing the government. I've been saying this times and again that we need some structural reforms, downsize government, so that we can create fiscal space. And I've been citing the euro area example where fiscal deficit was actually increased to 6.2 and 6.3 after the global financial crisis, 2 years after the global financial crisis. But then they ran primary surpluses from 2015, bringing it down to 0.4%. And they were able to increase it to 7% when pandemic struck in 2020. and they are now back to 3.5 this year, 2022. I mean, this is the activism on the fiscal policy. After all, it's not just the monetary policy that works, but we have fiscal policy also has counter-cyclical effects.
That's true. Well, all that has resulted in about 23% of the total expenditure being interest payments. So, I take your point that in several ways, that kind of discipline has to come. Neeraj, coming back to markets, do you think that the rupee is now well safeguarded because one of the macros, fiscal deficit, seems to be firmly on the downward path? Or do you think the events of the day itself, the way in which we are seeing foreign investors march out, probably because of the attraction of China and the fact that crude is not quite falling, we are still in the 85 handle. Does it mean that come April, we will again worry about the rupee? I mean, we all know that Jan, Feb, March, the rupee is a strong quarter for the rupee. But come April, will we worry?
Yeah, I do worry about the overall level of balance of payment deficit that we are potentially looking at for next year. The headwinds around the capital flows have not yet receded. Clearly, the month of January has shown us the equity flows, again, approximately 40,000 crores worth of equity outflows in the month of January, maybe the second highest in last 12 to 18 months. Does mean that, the reversal in capital flows that we were all hoping to happen hasn't meaningfully happened. We are optimistic on FDI, but how much of that FDI increase can cushion for the FPI flows reduction needs to be seen. Overall, oil prices are still at the higher end of the range. So in a nutshell, BOP situation still looks that it will be in deficit, which basically means that the depreciation pressure on rupee is likely to continue. Unlike the last year, this year I'm hoping that the depreciation will be milder. The good thing in this entire event or scenario is that the Reserve Bank seems to have rebuilt some bit of their reserves again, right? The reserve numbers have actually climbed up, partly maybe because of revaluation, but also partly because of the fact that they have been buying in the market in the past. So that gives them some more ammunition to manage the pace of depreciation. But I am currently looking at some kind of a milder depreciation going forward.
All right.
Hi guys, I'm Karunya Rao and I'm here to answer the biggest and the most important question that each and every Aam Aadmi asks after the budget speech. What becomes costlier versus what becomes cheaper? How you and I stand to get impacted by the host of announcements and initiatives and measures taken by the government and by the finance minister. So let's start with the first slide. What gets cheaper? Of course, that's something we all want to know. So the first thing that is going to get cheaper is crude glycerin. So the custom tariff on crude glycerin